And other dynamics that are affecting markets this morning. Let's look at where the futures picture puts us. US futures have stabilized a little bit, and it's important to say that. So perhaps we are going to draw a line in the sand around this a little bit, although Mark Cudmore, our colleague, didn't sound all that convinced on that moments ago. So European futures are pointing down by 1.5%. FTSE futures could be a little cushioned, though, by higher oil prices. Tensions in the Middle East, more than tensions, a real testing of the ceasefire by active kinetic attacks between Iran and Israel. What will the markets do with that? DAX futures then, Lizzie, down by 1.5%.
Well, Anna, apart from oil and tech, we should specifically be watching Italian banks this morning after the M&A speculation over the weekend. Both Banco BPM and Intesa making separate offers to acquire banker Monte de Paschi. We also watch French telecoms, this on the consortium of French telecom companies agreeing to buy SFR, and Tate & Lyle in focus on Ingredient agreeing to buy it. Both, Tate & Lyle significantly higher on Treygate this morning, Anna.
Yeah, so plenty of M&A to talk about on this M&A Monday. Will any of that cut through? It might for the individual names involved, but for the broader markets, we are going to be focused on those bigger themes around tech selling, around response to the higher energy prices coming out of the Middle East. All of those things very alive and relevant when it comes to what happens on these European equity markets this morning. So futures suggesting some downside. We are out of the gates and we are weaker, down by 0.3% on the stocks 600. The FTSE 100 down around 0.25%. We don't have any of the other major markets open just yet. And Lizzie, with all of the news flow that's been hitting us over the weekend, perhaps it will take a little time to get some of these markets open. The DAX springs to mind when I say that, of course. The CAC 40 then is open and it's down by 1%. The AEX down by 0.9%. Thinking about what happens to big tech, we'll keep an eye on what's going on with ASML. IBEX down by 0.75% on the Spanish market there. So the DAX not yet open. Might it be there that we see the worst of the selling? There we have some tech exposure, and if we have another day of tech negativity, maybe it's expressed there as well as on the AEX. Lizzie, what are you seeing when it comes to the individual sectors then, as we wait for the German market to get into its stride?
Well, Anna, exactly as expected, at the bottom of the sectoral basket this morning is technology, down 2% on the nose. This following what we've seen in the Asian session, what we saw in the American session on Friday, and so tech down 2%. Some of the individual names within that sector suffering this morning. I'm looking at the likes of BE Semiconductor down 4.8%, ASML down 3%. But at the top of the basket, as we expected, energy at the top, so more than 1% higher, as we have seen oil prices higher, 5% for Brent at 97.75 a barrel, off the back of the geopolitics, the strikes exchange, as we say, between Iran and Israel. Then if we look to banks, they're kind of in the middle of the basket, near the bottom. You've got about 3/4 of sectors in negative territory this morning, 1/4 in the green, but we have been watching some of those individual banking names in Italy. So Banco BPM down 2.4%, Intesa down 2.5%. We'd seen at the open significant losses for Sivers Semiconductor, this off the back of the French telecoms M&A. They're now only down 2.4%, but Worldline down 3.4%. Interesting on Tradegate, we'd expected Worldline to be up off the back of the SFR, the agreement to buy SFR, but in fact to the downside. So a real slew of negativity across much of Europe this morning, Anna.
Yeah, very thorough. I'll only add one in there then, and that's Orange, and that is up by 1.6%. So that is part of the consortium consortium, of course, of that are going after SFR and trying to consolidate within the French telecom space. So we'll see how that one plays out. But we are seeing some areas of positivity then for the European markets. But the overall message is one of weakness, down by 0.9% on the Stoxx 600. Let's get some analysis with Maria Weitmeier, who's head of equity research over at State Street Markets and joins us on set this morning. Maria, really nice to have you with us. Now, you are and have often been for such a long time such a fan of big tech, big US tech, and I wonder how that sits with you, given the NASDAQ sell-off that we saw on Friday, 4%. NASDAQ futures are actually stable this morning, up by 0.2%, so maybe that's the line in the sand you want to draw. But what are you thinking about your substantial exposure to US big tech right now?
Yeah, I mean, tech sector, absolutely, and absolutely right. It's been our favorite sector for a very, very long time. And the reason we like tech sector, because it's really the only sector with a strong and secular earnings growth and stable and predictable. And I think right now, I mean, day like today probably is like a real test for that, because, I mean, there are so many negative headlines, and where do investors run? And okay, so you run to cash. That's probably like one place to go. But within equities, you want to go in a place where you're somewhat certain about future earnings. And it's not defensive. Mm-hmm. Defensive sectors have a very low margins, and higher inflation is really painful for them. It's not cyclicals, because, I mean, we have demand destruction. It's not financials. Yield curve is flattening. So tech kind of remains the only place where you can be certain about earnings. Okay. And that's what investors are doing.
So it's still TINA, in your view. It's still TINA, the tech sector. Okay, so it's interesting to get your perspective as such a tech enthusiast, evangelist almost. So maybe that's going too far. But as to why you think tech is selling off, because then we can ask if the sell-off is sustainable or if it's a buying opportunity. Jensen Huang saying it's a buying opportunity, of course. So is it because we've just come too far too fast, and this is just some sort of, just a sense check? Do we really want to move quite so quickly? Is it about higher rates, and can those higher interest rates really damage the tech trade, do you think? Or is it about all of the capital raising that we're seeing, the equity capital raising that we're seeing from the sector, from the hyperscalers and the new entrants coming? What do you think is driving this negativity?
I mean, if you go through kind of your three options, I mean...
You can add more.
We can add, valuations, people often bring concentration, positioning. I mean, to me, it's positioning. We know that investors have gone into tech very, very substantially. I mean, we'll track large institutional investors through our custodial database. They double the size of the off-benchmark holdings in tech since the start of the Iran war, right? So that's what they did. Since the start of the Iran war, hostility started, we don't want to be in cyclicals, we don't want to be in defenses, we don't want to be in financials. The only place they wanted to be were tech. So holdings really, really increased. Positions are high. I mean, you get any negative news, and performance has been fantastic, right? So a little bit of profit taking, a little bit of position adjustment, that's really sensible thing to do. So, I mean, to me, that's, and we've seen quite a few of like those episodes where, I mean, tech was doing amazingly well. You have a few days of sell-off, and then by the end of the week, we have to higher levels than we started. So, I mean, that's our speculation. I mean, nothing fundamentally changed since Friday.
So you're buying this dip, Maria?
Yeah, I'm buying everything.
What if we do get peace in the Middle East? I know that it looks a long way off, given all of the headlines that we've been breaking this morning. But if you do get an end to the war, do we see a rotation out of AI leadership into EM and Europe?
I mean, parts of EMs are doing well, or like tech-related EMs. But, I mean, the way I'm thinking about rotation into Europe, the way I'm thinking about rotation into, I mean, small cap value, I mean, you can put lots of cyclicals in it, is it's all about earnings, right? So what we had at the end of last year, and it looked like there was this idea of rotation, is, I mean, prior to that, all earnings were in tech, and it looked like earnings were about to broaden, right? So we had earnings expectation in small caps, in tech, in like cyclical areas doing a lot better. And then investors, okay, we don't have to pay high multiples for tech, we can go and get better earnings somewhere else. So that's real question. So if you say the scenario is that war ends and we get like lasting peace and oil price goes down and kind of cyclical recovery picks up, yes, that's when you buy Europe. Are we close? Probably not. And even if we get like some announcement that war is over, I mean, oil price will probably stay fairly high for some time. We need to have adjustment. So I think that's a scenario we're looking for to rotate into Europe, but it needs to come with a cyclical earnings recovery, and we're just not there yet.
Well, what about European tech? How do you play that? Because we've got Tom McKenzie at London Tech Week this week. Everyone very excited about UK tech here. What do you like?
I mean, we love tech anywhere, anywhere and everywhere. And I think that was partially kind of the straight this year is that we saw, or like middle of last year, is a rotation out of like US software into Asian hardware or European hardware. Anywhere you see tech, that's for us kind of an interesting place to be, because it's secular earnings, right? No other sector has that. So yeah, no, we love European tech. We wish there would be more tech in Europe, and that's why it would be a better trade.
Can we link the oil price and tech, or higher energy costs and tech? I mean, to your question, Lizzie, about we could at any moment see a deal. It doesn't seem, and we do kind of have a peace deal, sort of a ceasefire hanging by a thread, but it's still supposedly in place. But we've seen higher energy prices being priced in by a lot of people, even if we do get peace in the Middle East. And the tech sector is a very energy-intensive business. Certainly the AI part of it is. So when do these two things come together? When does the higher energy cost undermine tech enthusiasm, Maria?
So the way I think about like energy and how it affects like various sectors is through margins pressure, right? So we were thinking, okay, higher energy costs, higher energy prices increases your costs. Who can kind of pass those costs to consumer? Who can tolerate those costs? And you think, okay, I don't know, NVIDIA, HK Hynix, Samsung, their margins are about 70%. Walmart margins are about 3%. So you say higher energy costs, who does it hurt more? And then you kind of get, okay, it hurts like others, particularly defensive sectors, retailers and like food producers. So that's where the margins are the tiniest. They hurt far, far more, and their kind of pricing power probably a lot less, like the end consumer is unwilling to take higher prices, right? So that's the way we're kind of thinking about margins. And in that world, I think tech is probably in a better position to kind of withstand those kind of pricing pressures. So again, Tina.
Well, of course, oil feeds into this rate hiking story. Anna touched on it. Are you factoring into your view more than one ECB rate hike? Does that make you like banks, for example?
Yeah, no, very concerned about. I mean, Europe is a really difficult position, right? So you have, we had like a nascent recovery in kind of economic and earnings momentum at the end of last year. A lot of it came from lower interest rates from ECB, and we got this momentum coming. And now we have, okay, high inflation, and the interest rate fighting central banks, so they have to hike more. And that damages growth. So from equity investor point of view, that's really, really challenging scenario for Europe.
What about M&A, Maria, and the role it plays right now? I mean, we're dealing with a host of M&A stories this morning. Tate & Lyle jumping, Monte Paschi jumping 10% to the highest since 2022 on M&A proposals. We've seen a couple of different banks in Italy trying to go after that very old bank in Italy, French telecoms. I mean, are you playing that as a theme, the M&A theme?
I mean, I think the way we kind of like generalize this M&A, I mean, outside like kind of picking winners and losers, but the way you generalize it is that there's still money around, right? And I think that's really, really important point to understand kind of current market dynamics, because news flow is horrible, right? You worry about growth, you worry about inflation, you worry about wars, there is, I mean, valuations, positioning, so everything. But we have a lot of money in the system, right? We see this M&A, the companies have money, financial system has ample liquidity, and that supports equity valuations overall, that pushes credit spreads lower, and that kind of maintains this rally. And we're just picking winners and losers, and that's your earnings, and that's your tech, Tina.
Okay, that is Tina. Back to Tina. Maria, thank you very much. Thanks for joining us. Maria Weitmeier, Head of Equity Research at State Street Markets. So Tina is still in effect with regards to the tech sector for Maria. Let's have a look at the core six then and see where we are. There's a bit of a tech theme in the core six. We've got Schneider Electric as part of Europe's tech push, of course, ASML. Tech not looking too hot this morning, but we do have some negativity around that sector, but there's plenty of it to go around. There's negativity around Novo Nordisk as well. Chloe was talking about that earlier on. Nestle, perhaps there's a bit of a relatively defensive play on some of those food producers, but everything is in the red. Let's get a check on the individual stocks that are on the move then. Chloe Melly has a breakdown. Chloe.
Good morning, Anna. Let's start here with Italian banks, which of course are very much in focus after Monte dei Paschi received offers from both Intesa Sanpaolo and Banco BPM, and we could see that really boost the stock this morning while the bidders are actually here in the red. And a potential deal between Paschi and Intesa Sanpaolo would create the most valuable finance firm in Italy, actually going beyond what in UniCredit. And so we are seeing UniCredit getting a little bit of weakness there on the back of that as well. This could really trigger a new wave of deal making in Italy, so let's watch out for that. Moving on to tech, which is seeing this continued weakness that started last week as we're seeing this pullback in the AI trade and some of this sentiment around AI reversing and waning a little bit. And we are seeing in particular BE Semi in the red, more than 3.5% this morning. On the other hand, on the flip side, we are seeing oil majors doing very well this morning, all in the green after Iran and Israel exchanged fire. And so, of course, this really is really thinking about how fragile the ceasefire is in the Middle East. And of course, as we've seen over the last few months, whenever peace is fragile, oil jumps, and therefore oil majors do much better. And we're seeing Equinor in particular up in the green this morning. Moving on to Airbus, which is down after it is said to have told some customers to expect some delivery delays on some jets. And so, of course, this now widens that performance gap that we've seen between Airbus and Boeing, its closest rival, which is actually really doing much better now and accelerating that output. And finally, let's go over to Orange, which is the French telecom company that is part of this consortium of companies that have agreed to buy the telecom business SFR in a deal that values it at about 20 billion euros. This is a deal that was in the making for a long time. It's happened, and so we're up slightly this morning for Orange.
Okay, Chloe Melly, thank you very much for that. Ending on a bright spot with Orange, but it is a red picture across the screen for European equities this morning. The Stoxx 600 down 0.7%. We will focus on another sector that's in the red next. Airlines selling off on higher oil prices as industry leaders gather at the IATA summit in Rio. Guy Johnson's on the ground there. We'll go to him next. This is Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show.
We've already talked this morning on your show. As you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. To the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back to the opening trade. We are 17 minutes into a session that is pricing in further selling of technology. So the DAX is down by more than 1%. We seem to be off earlier lows then. The Stock 600 is down by 0.7%. And the FTSE 100 cushioned a little bit by the fact that we have oil prices higher, negative for risk sentiment generally, but positive, of course, for energy stocks. Let's talk about a sector that is not in positive territory, and that is aviation. Because of that higher oil price, we have those airlines under pressure this morning, the likes of Air France, IAG, Lufthansa, all down by more than 2% as the oil price has a 97 handle on Brent. Now, the world's top airline bosses have been meeting in Rio de Janeiro for the annual general meeting of the International Air Transport Association, or IATA. Bloomberg's Guy Johnson is there for us and has been taking the temperature. Guy, good morning. Very early where you are, I know. What are the key things then that airline executives are thinking about then as they gather for this event? There's a lot going on.
Unsurprisingly, Anna, as you just said, fuel is absolutely the #1 topic. That's what everybody's talking about. The sense is at the moment that we have probably enough fuel. The airline industry has enough fuel for the next few weeks, but beyond that, nobody is certain on what price they're going to be paying for their fuel going forward, and nobody, to be honest, is looking too much further forward. The line you get is, we're okay for the summer. And I was talking to Ben Smith. He runs Air France KLM. And he was very clear. We cannot rule out at this point in time further fare hikes. We've already seen some. There's the possibility of more.
If the fuel significantly spikes, we're going to have to raise ticket prices to compensate for that. And when you raise ticket prices, there'll be less demand. So the need for the full capacity that we had planned is probably not going to be the case.
So, Guy, once we get out of the summer and fuel's still expensive, are all the airlines actually going to make it?
That's the question that everybody's asking, and that's the kind of the puzzle that some of these CEOs are trying to put together at the moment. Lizzie, you've already seen Spirit go in the United States. Everybody's trying to figure out what the EasyJet future looks like. Could there be a breakup story there? Certainly that's been a big topic here as well. But certainly you've got Castle Lake circling that business. And the expectation is that basically you get through the summer, demand's strong in the summer, and as a result of which the weak airlines are probably likely to survive throughout the summer. Demand's going to be good enough, the bookings are good enough, they could probably pay the higher fuel fares, even though they're not hedged. But you get into the autumn, and that's where life starts to get really tricky for some of the weaker airlines. And you have to say, you talk to the big groups in Europe, certainly, and this is maybe a similar story over in the United States and in Asia, and they are looking for opportunities to maybe come out of this. And that's interesting. So I was speaking to Luis Gallego, who is the CEO of IAG. He's already got he's already got British Airways, he's already got Aer Lingus, he's already got Iberia in his stable. And he thinks post the Draghi report, actually consolidation is going to be easier. And he is looking at the autumn, and he is looking for opportunities.
I think we are taking advantage in some routes that now the people, they cannot fly through the Middle East. We put more capacity to some destinations from London in Asia. But I think it's something that is going to finish soon. I think as soon as the Gulf carriers
recover. So it's not structural?
No, I don't think so. No. I think some of them, they are flying now 80% of the capacity they were flying previously, and I think we are not going to have a structural change.
Do you see a price war out to Asia? Do you think the Gulf carriers need to do that? They're already signalling they're kind of okay. Do you think they're going to need to manage prices?
I suppose they will try to stimulate demand. Price is a tool that they can have.
When we get to the end of the summer, there's a possibility that a number of airlines are going to be struggling.
Yes.
Do you see an opportunity for M&A coming up?
We always say that this crisis can help to consolidation because we started this in a very good position with a very strong balance sheet, 15% of margin. So with the hedging, others, they don't have all that. So at the end, they are going to have problems. And what we want after this crisis is to be stronger, to show again that how resilient is IAG. And I am sure we can have opportunities, and we are going to.
Any targets you're looking at? Any areas that you're looking at? Would it be domestic Europe? Where were you looking?
No, I think you know that we tried, for example, to do the Europa operation before. It was not possible because of the European competition. And I think now Europe, they are trying to change the approach to consolidation, and maybe that can open the door again.
It's going to be easier to consolidate in Europe, you think, going forward?
I think they realize that after the Draghi report that we need to be more competitive, and we are not today. So I think if they have a different approach, maybe some operations that were not possible before can be possible now.
Any ideas of what that could look like?
No, I think...
Come on, Luis, there's got some names out there. That what's on your shopping list?
We always have a department following opportunities. The International Airlines Group is a platform for consolidation. So it's our role to try to find out who can join the group, if we can improve the performance of that company with the model that we have.
And there are airlines in Europe that could fit that bill?
Yes. And I think a lot of airlines also, they would like to belong to IAG because of our model, that the different airlines, they have their brands, the customers, the network that we said before. So it's a model that is attractive.
So, Guy, clearly M&A is very much a theme, very much on these executives' minds. And logically thinking about that, the big Gulf-based carriers, Qatar, Emirates, Etihad, might they be the ones that are really struggling on the other side of this? And if that's the case, does somebody come after them?
I think it's unlikely that nobody's going after the Gulf carriers. They are largely state-owned, so nobody's going to go after them. But they see also, ironically, Anna, they see an opportunity, which is amazing when you think about what is happening, even the news flow over the weekend. So they definitely see an opportunity. Now, Emirates is much bigger. It is an amazing airline in so many ways, but it's going to be interesting to see how it comes back. Etihad is maybe a little bit smaller, maybe a little bit more nimble, and it definitely sees an opportunity to come out of this. And what is really interesting is I caught up with the CEO yesterday, and he was saying, we are on the phone every few days to Airbus and Boeing, and what we're asking for is earlier delivery slots. We want more aircraft. We think this is over, and we think we get stronger from here. So what we want is more airplanes. So amazingly, they're ringing up Airbus and they're ringing up Boeing and going, is anybody cancelling? Is anybody cancelling? Can we have those slots? And what he told me yesterday was, and take a listen, is that is now starting to happen. So the weaker airlines are beginning to give up some of those really valuable delivery slots.
We're ordering planes right now to be delivered between 28 and 2032, and we're getting positions of airlines that are giving up. These ones that we're getting right now are old, are new, are not secondary, but we're open for secondary planes.
Guy, thanks very much. Bloomberg's Guy Johnson, of course, on the ground for us in Rio de Janeiro. He gets all the tough gigs, so as he did point out to us earlier, it is very early over in Rio. More from Guy as we go through this week. Lots of that's the M&A story when it comes to the aviation sector, where it is, and crucially, is not going to be a focus for the European aviation space. We've got plenty of M&A to talk about this here in Europe today as well. The banking sector in Italy, the French telecoms sector. It is interesting that we are getting all of this coming together at a time where we are worrying about higher interest rates in Europe.
Yeah, and double-digit moves for Tate & Lyle off the back of their M&A moves, up 12% as things stand. So really interesting. We said that Guy gets a good assignment. Tom McKenzie's out at London Tech Week. I'm a little jealous of that because there's a big buzz around it this year. Live at London Tech Week all week, and we will be looking ahead to the key gathering of tech bosses. Judith Dada from Visionaries will be speaking to Tom. I'm glad they're excited because European markets are not this morning.
Well, we'll see whether that enthusiasm for European tech, can it withstand the stresses that we're seeing in the global tech trade? You know, the Nasdaq down by 4% on Friday, heavy selling in the Asia session, Samsung, SK Hynix and the like. Is that all just in the background for these tech executives as they gather, or is that something that's very much front and centre for them? We'll get an update on the vibes in the tech space. That's coming up next. This is Bloomberg.
just wanted to say, Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg. Welcome back. This is the opening trade for Monday. We are 30 minutes into today's session, and things are weaker across these European equity markets. We're continuing to sell technology. We are concerned about higher oil prices and the damage that does to the European economy. It seems all of those coming together to create negativity for European stocks. But we are off our earlier lows. We're down by 0.6%, so certainly we are seeing selling. But the DAX, for example, was down by more than 1% earlier on, now down by 0.8%. The FTSE 100 has been hit by, like other markets, but is cushioned by that exposure to big oil and big energy. And we're seeing oil prices much stronger this morning as a result of what is happening in the Middle East. So despite all of the headlines, and there are plenty of them, Lizzie, we are paring some of the losses, but still heavily in negative territory on these European equity markets.
A positive spin on a miserable Monday. Thank you, Anna. Let me just illustrate how miserable it actually is. 440 members of the Stock 600 down this morning versus 149 in the green, but bigger volumes today. We're up nearly 60% across the Stock 600 compared to the 20-day moving average. Let's just flip over, though, and look at some of the particular leaders this morning. We've talked a lot about the M&A Monday story. Some of it comes from the Italian banking space, but the leaders this morning all from that space. We've had both Banco BPM and Intesa making separate offers to acquire Pasky gaining nearly 10% at the moment. BPER up 4.5%. Generali up 1.6%. But on the flip side of the deal making, let's take a look at the laggards, because we have got Intesa in the red this morning, down nearly 4%. Zealand Pharma, a different story here. It's down the most in more than 3 months, 21%. Analysts highlighting disappointing data on a weight loss drug trial. And we've highlighted that theme going around the world, AI. And we've seen the losses in Korea and Asia. We've seen losses on the NASDAQ on Friday. We're seeing it where there is tech in Europe this morning. ASML is one of those names to watch, down 1.1% this morning, Anna.
Lizzie, let's get an update on the other news flow. And in fact, we'll start with one of the stories you were just referencing there. Intesa Sanpaolo has launched a 31 billion euro bid for Monte dei Paschi just a day after rival Banco BPM proposed its own merger deal with Paschi. A takeover would create one of Europe's most valuable banks and boost Intesa's position as the largest lender in its home Italian market. Oil has jumped after the Israeli military said it struck what it called military targets in Tehran. This after Iran launched missiles towards Israel, threatening the fragile ceasefire. And President Trump said the Federal Reserve would be wrong to raise interest rates as his nominee, Kevin Warsh, prepares to chair his first Fed policy meeting. Lizzie, we will see whether the rate setters at the FOMC agree with the president or not.
Well, let's go back to that tech sell-off going around the world, driving Asian markets lower at the start of a busy week for the sector, but also driving us lower here in Europe. And, well, we had Nasdaq futures lower before, but they're now up 0.7%. But it's a busy week to come. We've got the record-breaking SpaceX IPO. Earlier on, we were hearing from the NVIDIA CEO, Jensen Huang, signing a partnership agreement with SK Hynix. So loads to dive into with Matt Bloxham, Bloomberg intelligence analyst, who joins us around the desk now. Good morning, Matt.
Morning.
So, loads to come. Let's start with the NVIDIA SK Hynix deal. Didn't seem to help markets in Asia.
No, it didn't really, and I think to some degree, this was previewed last week when Jensen Huang said that he'd, kind of cleared all of the big three chip makers for high bandwidth memory for their next generation of AI accelerators. So, I think this is just kind of really the crossing the T's and dotting the I's on that. I think there was some sense that maybe kind of volumes on Vera Rubin, which is the big platform that these high bandwidth memory chips will go into, were perhaps a little bit softer than expected. But yeah, I think there's clearly kind of broader issues at play here.
Matt, it's a really big week. As Lizzie was saying, we have the SpaceX IPO coming. Yep. To the extent to which that is an pure AI story, I'm still not sure, but that's certainly how it's being talked about a lot. We've got that happening. We've got a developers conference taking place at Apple, and all of this coming at a time where we see continued selling of tech globally, certainly on Friday in the US, into Asia, into Europe. Now, Nasdaq futures point a little higher. Is all of this latest news flow, are these events of this week going to change the mood, give us a more positive story to tell then, do we think?
Probably not, if I'm honest. I mean, and you're coming to your point about what is SpaceX. I kind of personally think it is very much an AI-first story. There are clearly lots of other bits to it, but it's really all about the opportunity within AI that they're going for. I wonder to some extent whether some of this selling pressure in tech is people making room for a bit of SpaceX in their portfolios, because $75 billion of fundraising doesn't just kind of come from nowhere.
It's interesting because some investors talk to us about that portfolio effect and say it will matter, and others say no, actually we can digest this. Yeah,
I mean, I think inevitably there's going to be some people making room for it in their portfolio. I think interesting, with the Apple Developer Conference, obviously the last one for Tim Cook. Now, this is the software conference, so this is where you kind of get updates on the operating systems, and it's quite often people start to kind of look in the weeds of what's coming with the operating system updates and make kind of guesses or kind of speculation about the next wave of hardware. And obviously in September, we're expecting Apple to launch its first foldable phone, which could be quite a game changer in terms of that part of the marketplace. I think also what's going to be very big in that conference is the overhaul of their AI offering. We've been probably talking about this for 2 or 3 years. I think finally there's going to be a much bigger kind of reimagination, if you like, of the Siri assistant, trying to make it a kind of much more broader product, maybe using agentic AI to kind of like weave together different parts of the Apple ecosystem. So if they get that right, it could be quite a powerful kind of rebirth, if you like, of their AI proposition.
I could really do with a flip phone. I'm always smashing my screen.
Yeah.
Sounds like a good idea, Matt. Thank you very much. That's Matt Bloxham from Bloomberg Intelligence.
Okay, lots of food for thought then at London Tech Week, which kicks off today as leaders in technology and business converge at the UK capital. Tom is there for us, of course. And Tom, we've got, of course, tech selling, very topical right now. The AI, the forefront of AI, really exciting. Lots of listings coming this summer. Many people worrying, though, are we in bubble territory? I wonder how all of these themes are coalescing into Tech Week this week.
Yeah, and Anna, we're going to start on that question with Judith Dada, General Partner at Visionaries Club. Judith, good morning. Anna was posing the question, of course, the focus of the markets right now is the sell-off that we're seeing in Asia, the US as well, particularly when it comes to those semiconductor stocks. And question marks really about whether we are in bubble territory and whether we're getting closer to a moment where this AI bubble bursts. Where do you stand on that debate?
I think we're right to scrutinize the investment that is going into AI. And I do think, like in any big technological shift, parts of the market get carried away. I think what we've seen over the last couple of months is companies just spending on tokens like crazy. And now a lot of people, and especially CFOs, asking the question, where is the ROI? And if we look at the current CapEx build-out, I think there's one really important message. The current CapEx build-out is nowhere near showing up in the current economy. It's capacity that's currently being built, and we're going to need to wait a couple of years to actually see, kind of the capability that data center capacity has on the actual market. I think when it comes to AI, the much better view is always kind of a cohort-based view, right? So the kind of current impact of AI that we're seeing are really investments that we've made over the last couple of years. And so my TLDR would be, I don't think we're in a bubble. I do think there's massive underlying value in this technological shift. But there was parts of the market that did get carried away in this current wave. And so I think we're right to scrutinize that investment and really find the ROI for companies to actually...
And you're convinced that ROI and those productivity gains do come through, not just for small companies and startups, but also for the larger corporations as well that are investing so heavily in this technology?
Absolutely. Again, I think it's a question over time. I think right now we're still in early AI adoption territory where we're trying to shape the size of this new technology in the right way. Everyone's trying it out, kind of people are firing up their code agents, and it takes time for us to actually figure out what are the systems and what are the ways in which we can make use of AI, but also change organizations in order to find the biggest productivity gains. So have P&Ls of most companies been definitively positively impacted by AI today? I think not yet. I think we're still seeing, kind of a lot of the actual trickle down of how the AI is actually going to lead to ROI. But I'm fundamentally convinced that we're going to get there. I think there's just one important message. AI is developing at exponential speed, but humans develop at human speed, which is quite slow most of the time, especially humans working together in complex organizations. And so the diffusion of AI in society does take time. We do need to have patience to really figure out how to have humans working with AI agents in the best way. And so I think there's patience required in terms of actually seeing the ROI impact, even though I'm fundamentally convinced that we're going to get there.
And I guess that raises the question as to whether or not investors have the patience, at least investors in publicly listed companies have that impatience to wait the 2-3 years before the return on investment comes through. That is your time horizon, around 2 to 3 years before we see material ROI?
Yeah, I don't think it's going to take all that long, but right. I do think, in terms of really shaping AI correctly, it will take a little bit longer than what we're currently seeing. I do think we're currently still in the early territory of everyone's kind of using frontier models. Just to give you one example, yes. Everyone's right now using the most expensive frontier models, the kind of thinking models. And there's a lot of alternative options. There's a lot of smaller models, open source models that are vastly cheaper. We're often talking a cost reduction of 10x. But today it's very hard for people to actually use those models. We're still in a market where model routing and actually giving and showing you the different capabilities that AI has, like the expensive version, the cheaper version, is not something that is made super easy for businesses or consumers, but I do think we're going to get there. And so there's just a lot more that we need to do in terms of building the actual enterprise platforms, the actual consumer product platforms that optimize for the most intelligence at the cheapest cost for end consumers. And that's, I think, when we see a lot of ROI.
That's really interesting. So open source is a choice, and to your point, open source is cheaper. So that leads me to a question about whether or not you think the valuations of Anthropic and OpenAI, whether you're comfortable with those valuations. Do you think they're fairly valued right now, close to $1 trillion?
I think what is a fair valuation? People asked the same question about NVIDIA, a couple of years ago when they hit, I think, $3 trillion valuation. And I said back then, I don't know if NVIDIA is, correctly valued at this specific moment in time, but I know that they're going to be worth a hell of a lot more than $3 trillion over the course of the next 10 years. And so I would say the same about Anthropic and OpenAI. I do think, sometimes there's overhyping in the short term, but I do think we're still undervaluing the total transformation potential, including the potential of those companies in the mid to long term.
Europe is not going to win when it comes to large language models. Seems to be a consensus. Where can Europe win? Where are our strengths?
There is a really important next paradigm that we're currently seeing, which is robotics, embodied intelligence, and world models. So the ability for AI to actually perceive the real world and take action in it. And there's a couple of really, really promising companies in Europe. We have, for example, AMI in France. We've got Black Forest Labs in Germany that are really building this paradigm. Interestingly enough, these companies also need industrial data. So, data from actual robotics, industrial manufacturing companies. It turns out that Europe actually has a massively important industrial base of companies who have that data. And so in that next paradigm, we already know that this is going to be the looming bottleneck on the horizon. I think now is the time to really double down and to really make sure that we win on that front, because the US and China are in a race to win AI, and that race in the short to midterm will lead them through robotics. And it's a way for us to have more weight at the table and to thereby strengthen our geopolitical position if we play a really, really important role on that frontier.
Do we assume that more jobs are lost than created, at least in the short and medium term, as AI is adopted? What is your view on how disruptive this technology will be for the labour market?
I think what we're now seeing is we're seeing the kind of nuance that is required in trying to understand how AI affects jobs. This idea that AI is going to put everyone out of a job is absolutely ridiculous and false. The idea that AI is not going to disrupt jobs at all is equally false. It is likely going to lead to the full automation of some roles and people who will be very exposed. In Europe, thankfully, we have the kind of social welfare systems that provide for people, even in the event where that will be the case. Then there's jobs who just need to change, right? A job is a bundle of tasks at the end of the day. It's a couple of things that you do to get to the end output. AI is now able to do some of those tasks really well, better than humans, but it's still not able to do all of those tasks. And so those remaining tasks, economists call them weak links. That's where value is going to accrue, because those tasks are going to become the bottlenecks that AI can't do yet. And so humans will need to figure out how they can do a lot more of those tasks. A lot of them are relational, right? It's conversations like these. It's humans actually going into conversation, into contact with one another. So figuring out how we can do a lot more of that is part of the middle bucket. And then there's a new category of jobs that we're not even able to give a name yet, because they haven't been created yet, that will become possible because of AI. And so I think what we're going to see is we're going to see jobs change in those different ways. And I do think, by and large, in Europe, we have the kind of social system that actually does give people at least some protection, especially the most vulnerable people, to kind of engage in that transition in the best way. I think what is not an option whatsoever is just shutting our eyes and saying, AI is causing me to change, I don't like change, and therefore I'm just going to ignore this trend, because I think that is just a recipe for not being able to win in the race at all.
Is Europe and the UK's dependence on US AI and tech a vulnerability? And how should it be addressed, if so?
It absolutely is a vulnerability. Today, Europe hosts about 5% of global compute in AI, and the US hosts about 80%. That means for a lot of the inference that we use, for a lot of the prompts that we use with AI, we're dependent on US data centers. That puts us in an extremely vulnerable position vis-a-vis the US. We've seen the White House executive order as kind of a first step of the geopolitical hardening, and kind of the White House enforcing more control over AI. And I do think as the technology progresses, we're going to see a lot more of that. And so I want a world in which Europe can make use of the amazing capabilities. I think this is something that also gets lost in AI, is kind of the very positive story of how it can really benefit society, benefit individuals, benefit organizations. I want all of that to be available to Europe, but in order to do that, we need to be at least partly self-reliant. That doesn't mean we need to own everything in the stack. That doesn't mean we need to own LLMs, own everything, but we do need to own important bottlenecks that allow us to build leverage that we can then basically exert with weight at the table in terms of keeping access to the most amazing technology that humankind has ever seen. And so that's what I'd like Europe to focus on. And I think what we need to embrace is that it needs for some really hard trade-offs that we're not engaging in today. I do think it calls for the most ambitious political agenda that we've ever seen Europe engage in peacetime, in order to build the kind of leverage and have a seat at the table.
Okay, that's the level of ambition that is needed, and those are some of the trade-offs that are needed as well to make the most and position Europe and the UK at the forefront of this technological change. Judith, fantastic, really, really valuable insights. Thank you very much indeed. Judith Dada, of course, General Partner at Visionaries Club. Anna, Lizzie, back to you.
Yeah, really interesting conversation there. Tom McKenzie, thank you very much. Of course, at London Tech Week, much more to come from Tom, and he'll be talking through the AI theme from many different angles throughout the day at London Tech Week. He'll be speaking with the Multiverse CEO, Ewan Blair, so that's the opportunities in AI. The regulation also gets a mention. The UK Minister for AI and Online Safety. Back to the opportunities. Brookfield's head of AI infrastructure will also be speaking to Tom. Coming up, though, we haven't lost sight of some of the geopolitical challenges that Europe is certainly dealing with. European leaders join President Zelensky to call for an immediate ceasefire in Ukraine. More on that next. This is Bloomberg.
called an ideological lunatic or a bunch of left-wing nut jobs?
You know, I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it, you know, when you're hot on the trail of something, you know that it's very exciting. What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca? Maybe somewhere in the middle.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome back to the opening trades. 8:50 in London, 50 minutes into a European session that is definitely negative, so down by 0.6% for the Stoxx 600. We've seen some weakness coming through in technology, but construction materials actually is the weakest sector this morning, down by around 1.5%. We do have a bit of upside. That's coming through in the shape, Lizzie, of just energy and insurance stocks, pretty much the only sectors in positive territory.
Well, let's turn to the geopolitics now. European leaders calling on Russian President Vladimir Putin to agree an immediate and complete ceasefire that allows talks to begin on a lasting peace deal. The joint statement came after Putin rejected a ceasefire proposal by Ukraine last week and an escalation in military action over the weekend. Let's go straight to Tony Halpin. He leads Bloomberg's Russian economic and government coverage. He joins us now from Dubai. Morning, Tony. Is this even worth looking at seriously? When you've had Putin rejecting a meeting and negotiations with Zelensky himself, what's to say that these 5 demands of Putin made by these European leaders are in any way realistic?
Yes, it was a very strange sort of shopping list of demands from Europe's leaders, really, because, as you say, these were ones that Putin has already rejected as recently as Friday. He said for quite some time that he's not interested in the ceasefire while peace talks take place because he thinks that gives Ukraine a chance to rearm. So he was going to continue fighting until a deal is on the table. He doesn't want, for example, European troops in Ukraine as part of any multinational force. And he doesn't think the current line of fighting is where peace talks should start. He wants to take part of Ukraine's eastern Donetsk region that he doesn't yet possess. So most of those points have been rejected by Russia. There was nothing in the statement that showed any increase in pressure from these European governments. So as a declaration, really, it was sort of dead on arrival.
Right, and so that's important to know then, Tony. And so with that said, what happens next? Just more of the same, continuation of the war in Ukraine?
Well, I think different elements of the statement actually were quite more important because they were looking forward to the G7 meeting that's coming up. They were looking forward to the NATO summit that's coming up soon in Turkey. And I think the Europeans were basically setting out their stall to say, look, we need to continue supporting Ukraine. We need to continue providing military aid. And in some ways, that was an argument directed not so much at Vladimir Putin as Donald Trump, because he will be at both those meetings, of course. And they've had some concerns about his willingness to continue supporting Ukraine. And the Europeans are basically saying, look, there's no chance of really any peace talks with Putin, so we do have to continue supporting Ukraine in its defense.
Okay, Bloomberg's Tony Halpin in Dubai. Thank you very much indeed. Well, taking a look at what else we've got on the docket through the week. Today, we've already been there with Tom McKenzie, London Tech Week getting underway. And today we'll hear from Tim Cook as well at Apple's annual Worldwide Developers Conference, that happening in tandem. Tomorrow, we get German industrial production data. Before on Wednesday, we get CPI data out of China and PPI due as well. And we'll have US inflation data, of course. A big day here in Europe on Thursday, the ECB releasing its rate decision, hike expected by traders. SpaceX shares also expected to price after the bell stateside, plus the FIFA World Cup kicking off in Mexico. Friday, we will end the week with UK industrial production data.
Let's get to Skylar Montgomery-Koenig then from the Markets Live team, who is here to help us look ahead to the rest of the week then, Lizzie. Skylar, good morning. So do you want to start with US CPI or do you want to start with the ECB? Because both of these seem to be like really big events of this week. Where's your focus?
I mean, definitely US CPI. I think that's much more interesting from a market perspective. What we saw at the end of last week was US equities in particular coming under a lot of pressure. Now, it started off because Broadcom's guidance was a bit weaker, which tells you that it's not really a fundamental shift, right? You're not seeing earnings turnovers. So that points to more of a correction than something more bear market-y. And then on Friday, we got non-farm payrolls very, very hot. Now, the worry for equity markets is you get higher yields from that. It doesn't usually come along when you have higher growth. Usually that higher growth outweighs the outlook for equities, but I think it's telling of an equity market that's gone too far too fast. Now, as we get US CPI this week, the worry is that because you have strong growth, the Fed's going to primarily focus on inflation, and that inflation print's expected to come in very, very hot. So US CPI at something like 4.2% is the expectation, and I think that's still worrying for the market, and I think it'll firm up those hike expectations, even though we have gone a long way since the end of last week.
Yeah, so we are now pricing in a hike this year, aren't we?
Well, let me take you to the subject that you're less interested in, the ECB, and try to make it more exciting. Yes, we're expecting a hike on Thursday, but are you in the camp that says we're going to be one and done after Thursday?
I'm definitely leaning more towards that. I think the issue with any kind of central bank expectations right now is that we still have the conflict in Iran waging on. I think I lean more towards that way for Europe because I see a lot of growth downgrades in the pipeline in terms of, yeah, you do a hike and you're still kind of within neutral, but you have higher commodity prices for such a long time, and they're expected to still be high at the end of this year, even though there's a lot of optimism around the Strait reopening, and that's very negative for growth. So they're doing this hike more as an insurance hike, saying, look, we're working to fight inflation. If we don't do this, that's an easing of monetary conditions. But I don't think it's necessarily a worry as much there as it is, say, in the U.S. that you get inflation persistence.
Okay, Skylar, thank you very much. Worth noting, I was just about to ask you whether we're going to keep talking about tech weakness, but actually, I mean, NASDAQ futures are now up 0.8%, which is a little bit firmer than they were at the beginning of the programme, so it does seem as if we are looking ahead with tech in mind to something a little bit more positive, Lizzie.
Yeah, quite a turn of events for the NASDAQ futures, but our coverage from London Tech Week is going to continue throughout the day. Tom McKenzie will be joined by the Multiverse CEO, Ewan Blair, so that conversation coming up at 9:15 a.m. London time on The Pulse. But that does it for the opening trade. Anna and I are off. Francine's coming in. The Pulse up next. This is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anim, only on Bloomberg.
Iran and Israel exchanged fire, threatening a fragile ceasefire in the Middle East as talks to end the war falter. Oil surges. The tech trade fades, but the NVIDIA chief executive calls the sell-off a buying opportunity, saying the build-out of artificial intelligence has just begun. Plus, banking M&A, back in focus. Intesa Sanpaolo launches a 31 billion euro bid for Monte Paschi just a day after rival Banco BPM proposed its own deal. So there is a lot going on in the markets. Of course, it's also Monday, so we look at geopolitics, just because it looks like it's going to be a busy week, also with many conferences across the world. Now, stocks and bonds are falling somewhat. Again, investors are still grappling with rising oil prices, but also mounting bets on U.S. interest rate hikes and this pullback in the artificial intelligence trade. If you look at what investors are looking for, look, there's quite a lot of negatives, including doubts whether the rally has run too far. Still, S&P futures getting some 0.2%, but I would really look at euro dollar 115.17, Brent 97.63. Now, let's also look at the European markets map. There's quite a lot of, again, this concern that we saw playing out in the U.S. in Asia is, this renewed fighting in the Middle East and inflationary pressures. Again, that means that we could see interest rates go higher, not only in the Fed or in the U.S., but also with other central banks in Europe. The CAC, the FTSE, and the DAX down between 0.4 and 0.9%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Israel Defense Forces say it has struck what it calls military targets in Iran after the Islamic Republic earlier launched missiles towards Israel. Iranian media report explosions in Tehran and other cities, while President Trump had urged Israeli Prime Minister Benjamin Netanyahu not to retaliate against the Iranian attacks in a phone call on Sunday. Our Horizon anchor and Middle East correspondent Abir Abu Omar joins us from Dubai. Abir, what do these tit-for-tat strikes actually mean for the peace talks?
So look, I mean, the ceasefire talks or the truce talks towards a broader deal were already fragile. And what we're seeing now is these new hostilities complicate the picture even further. And don't forget that this follows a week of hostilities that we saw in the previous week with Kuwait's main airport being targeted. And then those attacks between Hezbollah in Lebanon and Israel continued into the weekend. So on Sunday, Israel attacked southern suburbs in the capital of Lebanon, Beirut. Hezbollah attacked northern Israel. And then a phone call took place between President Trump and Benjamin Netanyahu, Prime Minister of Israel, where President Trump told him not to retaliate. And then he went on in an interview and said that he calls the shots when it comes to the trajectory of the Iran war. But then what we happened to see a few hours later after Trump's comment was that Israel not only attacked Lebanon and the southern part of Lebanon, but it went on to attack Iran itself. So cities like Tabriz, Isfahan, and then a petrochemical plant in Iran was attacked, leading Iranian officials to evacuate personnel there. The latest we know is that the foreign ministry spokesperson, Ismail Baqai, came out and said that these new actions complicate the peace talks further, and they bring this distrust between the United States and Iran more into the picture, really.
So, President Trump said he calls the shots in a Financial Times interview. How will this latest attack affect his relationship with the Prime Minister Netanyahu?
Yeah, so look, I mean, we reported earlier, and other outlets had reported that this relationship was in a slightly sensitive place over the past few weeks. Axios reported last week a phone call that was expletive-laden between President Trump and Benjamin Netanyahu because President Trump essentially wants a deal to happen. He's been saying he wants a deal to happen, but I alluded to this a little bit earlier, and it's the fact that, you know, this phone call happens between President Trump and Netanyahu, and then again, a few hours later, what we see happen is attacks from Israel's side, complicating the MOU, as we've been calling it over the past few months, that would lead to the gradual reopening of the Strait of Hormuz and then an extension of the ceasefire for 60 days. So Israel's actions, again, bring this distrust to the table. And then Iran also reserves the right to respond, as it always says. Now the Houthis in Yemen have said that they will issue a ban on all Israeli shipments in the Red Sea. And now remember, the Red Sea has been so far immune from the disruptions that we've been seeing in the energy market. But now it comes to the picture as yet another waterway that's at risk, possibly bringing those energy prices further higher, Francine. So something to keep an eye on. The situation is evolving very, very quickly this morning. So we'll be keeping an eye out on this story.
Abir, thanks so much. Abir Abu Omar there in Dubai with the very latest. Now to the markets, and fears of overheating in the AI trade have hit global tech stocks, investors pulling back from the record rally. But the chief executive of NVIDIA, Jensen Huang, says the sell-off that began last week is a buying opportunity.
With respect to the stock price, everybody should be very excited. They can now buy stock at a cheaper price. And it's absolutely true that the future of AI is very bright. It is a foregone conclusion that AI will be infrastructure for the world.
Well, joining us now is Lindsay Rosner, head of multi-sector investing at Goldman Sachs Asset Management. Maybe we're a little bit wary of chief executives saying now is the time to buy, which is why we get the experts in Lindsay like you. Thank you so much for joining us. Let's start with central banks overall. Sure. I mean, the picture for inflation, there's still many question marks given there's no end in sight in the Middle East.
Yeah, I think there are question marks of the duration of how long this is going to be impacted, but I think there's a lot of clarity out there. For example, we have the ECB this week. We think that is absolutely a hike. And it's pretty interesting when you think about what's happened in this past year. This is on the one-year anniversary of the last cut for the ECB. And really the difference here, what's at play, is oil.
Is it one and done for the ECB? Because we're hearing also from small and medium-sized enterprises that are worried about this hike. They understand why the ECB has to do it, but does it put Europe in a tricky position growth-wise?
It is not one and done in our view. That being said, we think they'll be data dependent. What's happening right now is about credibility. So the ECB has said we are going to go because of the conditions that exist. Certainly growth is softer, but it's really important to curtail inflation, so we think they must go. We don't think that the next meeting will also be a hike, but we do think there's a high likelihood that there could be a hike by the end of the year again.
Lindsay, where do you see opportunities in Europe?
Sure. So it's actually not necessarily on the rate side of the picture, but we actually think that there's some opportunities on the credit side. We're seeing metrics move in a good direction in the credit markets, and in particular, we like securitized product. So CLOs in Europe, as opposed to the U.S., give you about 20 extra basis points of spread, and we think that the technicals there are positive.
And this is across Europe, or are there countries that look more attractive than others?
It's really across Europe and understanding the underlying collateral. Europe is in a better place than the U.S. in terms of software sensitivities. You started at the top of the hour talking about, is it a buy opportunity when a CEO of a tech company tells you now's the time? We do think that the AI trade is definitely in train, but there is sensitivity in some pockets of the market, and European loans are in a better place than U.S.
Lindsay, talk to me a little bit about the U.S. I still haven't caught my breath after that payrolls number. It's like,
yes,
what is happening?
It was a monster blowout number. We are seeing a 3-month moving average there well above 100,000 jobs. That is something that would typically mean that the unemployment rate is actually going to be moving lower.
Yeah.
So the labor market, we think, is strong. We don't think that it's overheating or tightening, but it definitely took off the table any chance of cuts this year. We've pushed off our expectations of cuts to mid to next or late next year.
And again, is this really the AI play? The fact that, you know, because of the capex investing, equities are going up, people feel richer, so the spending continues?
Yes, that's right. AI is a huge boom to the U.S. economy. We're already starting to see some things coming through in terms of productivity, but the big productivity we think is yet to come. There is absolutely AI euphoria in the U.S., and it is really driving the economy. That being said, the jobs that were part of this monster number on Friday, they were in hospitality and leisure. Just to be clear, they weren't in AI.
Yeah. So we also heard from President Trump on the Fed, or at least on interest rates. Here he is.
Nowadays, when you have good reports, the market goes down because they think they're going to raise interest rates. There's no reason to raise interest rates. I don't want to kill success. We should actually lower interest rates. Now, I would like to see rates get lower because we could build this into the greatest machine that the world has ever seen. But you can't do that when everybody immediately raises interest rates.
So what happens, again, very difficult to cut rates in this kind of environment. What happens from now until the end of the year?
So we think from now until the end of the year, the Fed is on hold. Back to Europe, we don't think that that will be the case for the ECB or the BOE or Bank of Japan as well. U.S., we think, will be on hold. But to be clear, to go off of what President Trump said, we don't think the Fed is looking to derail success. Let's be clear. They're very focused on the economy. They have a dual mandate, labor market, inflation. Where we are right now with the different undercurrents, we think that it's a hold.
The UK seems to be the trickiest, right? Because, I mean, if you look at some of the macro backdrop, it's weakening. There's political kind of instability. What happens to the bank? Is there a danger actually that they have to hike and then cut very quickly?
So we don't think that they're going to go so aggressively. And I think that's the important thing. What's being priced in right now in all the different regimes across the world aren't more than one hike or what's typical. If you remember on the cutting cycle, we had these monster cuts where it was more than 25 basis points. We'd see these just big safety moves because there was a concern about the perils of the economy. Back to the UK, I think you've got two things that are working. You've got, as you mentioned, a softness in the economy that is concerning. You've got inflation that's persistent. It's a net importer of energy, and we're in an energy issue right now. However, the base rate is at a high place to begin. And that's different when you compare what the Bank of England is looking at and what the ECB is looking at. And those two things is really going to drive the difference between why the ECB is going in June and the Bank of England is not.
I mean, do you find less opportunities in the UK given all of these complexities?
Yeah, I think it's hard to be super excited about the economy, right? Growth seems to be pretty low. When we look at the whole world, though, we're looking at macro backdrop where we think right now that the U.S. is in a better stead. But back to what I mentioned before about specifically CLOs or finding an investment grade or a high yield corporate deal, we're looking across the whole globe to find those opportunities. And just because maybe a macro backdrop is softer doesn't mean that there aren't places to invest.
Lindsay, thank you so much for joining us. Lindsay Rosner, they're head of multi-sector investing at Goldman Sachs Asset Management. Now, we also look at banking, and shares in Monte dei Paschi have jumped to their highest since 2022. This as Intesa Sanpaolo offered to buy the Italian lender for 30.6 billion euros just one day after rival pitch from Banco BPM. The moves are likely to spur a new phase of deal-making in Italian finance. Well, let's bring in Tommaso Ebhardt, our Southern Europe managing editor. Tommy, as always, thank you for joining us. More consolidation in the Italian banking sector. So why isn't Intesa making its move now, and how many hurdles will there be?
Buongiorno, Francine. This is the big move we have all been waiting for years. Intesa Sanpaolo's Italy's biggest bank has said for years we can't move anymore in Italy, but we all knew a little bit that if something really big was coming, it had to come via Intesa Sanpaolo. Why now and why Monte dei Paschi? Now because the moment of consolidation is here. The banks are very solid. After the latest move, Monte dei Paschi just acquired Mediobanca. So what Intesa is doing? Intesa is making a bid to get control of Monte dei Paschi and then gain control of the precious asset Mediobanca and of the stakes that Monte dei Paschi has in Assicurazioni Generali, Italy's biggest insurer. Intesa will keep half of the branches and sell the others to Unipol, who is going to do a deal with its bank, Banca Popolare dell'Emilia Romagna, and call the new bank Monte dei Paschi. So essentially, Intesa is getting control of the jewels that Monte dei Paschi has now, which are Mediobanca, and the stake in Generali. Again, Generali is at the center of this deal too, and again, Generali is now has different shareholders, and Intesa is going to be one of the biggest after this deal.
Yeah, just having you pronounce Italian names makes me happy. But Tommy, Banco BPM also proposed its own deal for Monte Paschi. So how do the bids compare?
So Banco BPM didn't make a proper deal so far, but just an intention to merge with with Monte dei Paschi. They sent a letter yesterday at lunchtime. Maybe someone had understood that Intesa was coming with a bid and then tried to do something before Intesa arrived, like to keep open the field for a potential deal between Monte dei Paschi di Siena and Banco BPM, which is a deal we have been discussed for years to create the third largest bank. Banco BPM has a big French investor, Crédit Agricole. So on one side, we have a proper offer on the table with cash and shares. On the other, we have a proposal to do a deal. Monte dei Paschi di Siena, we know the board should be meeting today. They will say something, but clearly, as things stand now, we see Intesa Sanpaolo as somehow the top candidates to get Monte dei Paschi at the moment.
Tommy, thanks so much. Tommaso Ebhardt there with the very latest, of course, on Italian banking. Now, coming up live from London Tech Week, we'll discuss AI adoption in Europe with the Multiverse founder and chief executive, Ewan Blair. That exclusive interview is up next, and this is Bloomberg.
up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
happened was you were out.
So London Tech Week kicks off today as leaders in technology and business meet to discuss how the UK can be a success in the world of AI. Well, our very own Tom McKenzie is there for us with a guest. Hi, Tom.
Francine, thank you very much indeed. Yes, I'm here at London Tech Week. We can hear the Prime Minister speaking. And of course, standing by right now for a view on what is happening in the tech ecosystem is Ewan Blair, co-founder, CEO of Multiverse. It's a company that helps corporates globally to upskill their workforce with AI tools. Ewan, thank you for your time. Let's start on the topic of the day, which is, yes, we're here at London Tech Week, the Prime Minister speaking, but investors are concerned about a sell-off that we're seeing in AI-related stocks right now. How do you think about the question marks around an AI bubble bursting risks? Are you concerned about the build-up we've seen, the run-up that we've seen in some of these AI-related names?
So you're seeing this kind of massive bifurcation in the market. Basically, the market is splitting into AI victims and AI beneficiaries. And the race is kind of, do you position yourself as one of the AI beneficiaries, or are you put in the category of AI victims, like a lot of the software world is at the moment? I also think it's always easy to say we're in a bubble, and there are lots of bubble-like behaviors and everything else, though this one, unlike others, is backed by pretty extreme revenues.
Does it feel bubbly and frothy to you?
It does a bit, yeah, in terms of the excitement. Look, we're dealing with a transformative technology that people realize could change everything, but at the moment, it is delivering quite limited value to most organizations' P&L. And so for us, right, this is the bat signal for how do you actually drive AI adoption and get workers doing their jobs differently and make sure this turns into the kind of great productivity revolution it should be.
Are you still convinced that we do get those productivity gains? And what is the lag between investment and getting that ROI?
So it is basically not really a technology problem. You're seeing organizations spend millions, in some cases billions, on AI tools, AI tokens, and yet kind of getting your workforce using and playing around with AI is pretty trivial in the grand scheme of things. The big question is, how do you get workers rebuilding their workflows around AI, positioning those tools as central to how they work, and measuring it against what are the three things every company cares about? Revenue generation, cost avoidance, and cost reduction. And that requires skilling and training on the job, which is really what we're doing. We're saying to organizations, you know AI can give you incredible opportunities, you're not yet experiencing them, let's train your workers so you take advantage.
And it's not as easy as saying, you have a budget for token use on inference, go do it, and then you realize they've blown through their budget or they haven't used it.
Well, the Uber example, of course, is pretty front of mind at the moment. You are seeing a lot of those, and the reality is, as we start to see kind of repricing in the cost of tokens, the question will be, how do I make my AI use purposeful rather than how do I get people using AI? Because one is basically directly beneficial to a business, the other can end up costing them a lot of money.
You recently raised another $70 million US. How are you deploying that capital? What are the expansion plans at Multiverse?
So we're spending it on a lot of European expansion. We just acquired, at the end of last year, Germany's largest data upskiller, a company called Stackfuel. So we're on the ground in Germany. We're looking at other European markets. We're also investing very heavily into our own internal agentic capabilities. And Europe is such an incredible opportunity for us because Europe has this really robust social contract between employer and employee. It is quite difficult to fire your employees. That provides some kind of ballast against this kind of potential jobs apocalypse. But Europe will end up in a state of structural decline if we have workers on the job with no more capabilities than they had previously. So this is kind of compelling European governments to really try and drive mass reskilling and retraining on the job, and that's very exciting for us.
What is the TAM, or the total addressable market, of the market that you're targeting?
Well, so look, you've got 450 million people in Europe as a kind of first pass. We're dealing with nearly every kind of worker in every sector and industry. Nuclear, energy, retail, financial services, government, public sector, and all of them have workers that need retraining. And our message is, if we're going to make sure that humans are benefiting and maintaining human agency in the wake of AI and automation, we've got to train those frontline workers on the job who have the thing that AI struggles with the most, which is context, right? If you don't have easy reads on context, which your frontline workers do because they're literally doing the jobs at your company, your AI efforts will stall.
As I've said, you are on the coalface of this, particularly when it comes to the labour market. Which jobs, Ewan, are most vulnerable, do you think, and which can be preserved and reinforced?
So There are two things I always think that we tend to get very wrong. One is when we say, these are the exact skills you're going to need in the next couple of years because it's changing so fast. It was not that long ago everyone was saying, we need everyone trained in prompt engineering. This is the most important thing. It's barely a flicker in the kind of AI revolution. It is going to be every job, and the organizations and workers that are going to benefit are the ones who basically figure out, with this technology, how do I make it purposeful? How do I apply it to solving business problems? And how do I make sure that this isn't just a kind of top-down board mandate, but my workers are doing their jobs differently? And that requires pretty intensive on-the-job training, because you cannot learn about this stuff through a series of YouTube videos or even in a classroom. You have to learn about it by deploying it in your environment, because the risks, benefits, and challenges to deploying AI within a defense company versus a large multinational financial services company versus a small local authority are just wildly different. And again, your workers have the ability to kind of do that. You've got to unlock it within them by investing in their training.
You're obviously based here in the UK. You've raised significant capital. Can the UK compete and win without data centers, without energy? How much of a vulnerability are those aspects to our potential ability to grow and scale?
So it is a challenge. Look, I don't, you know, it's not, everyone knows this. The UK has incredibly high industrial energy costs. It is not realistic that we're going to build a plethora of data centers and kind of win the AI infrastructure battle. I don't see that happening. I do think, though, with a highly educated workforce and the sort of third way we're taking between kind of complete lack of regulation in the US and pretty heavy regulation in Europe, we've got a chance to chart a course where we can become the most AI-adopted nation in the G7 with the most and fastest AI-adopted workforce.
And we can do that without significant job losses?
Yes, if though, we're prepared to retrain people. Because the reality is, of course, jobs will decline. But humans, we spend a lot of time trying to make sure that we can build T-shaped individuals. They might have deep domain expertise, but AI is commoditizing expertise. So how do you give them the broad horizontal skills that allow them to start to transition into different areas?
And you're leaning into agentic AI. Does that mean your customers and clients will be using your agentic products to help train their workforce?
Yeah,
Does that
absolutely.
mean you at Multiverse will need lower headcount going forward?
Not really, because we're still hiring. I mean, we're adding another 200 or so jobs this year. We've just opened an office in Edinburgh. We're really excited about that. We don't see ourselves needing fewer employees, though we can scale much faster without just having to add heads. And interesting, the kind of AI story so far has been humans training machines to get smarter. We're spending a lot of time using machines as well as our human coaches to train humans to get smarter, and we think that's a better way around. Because basically, when we end up reading the history books on this period, the big question will be, did we maintain human agency in the face of incredibly intelligent and powerful technology, or did we just trade it away?
Very briefly, one thing that you would do if you were the government to accelerate the growth of our AI and tech ecosystem?
So there's been a lot of talk about workers' rights and various other things from governments on the... I think the single most skill retrained on the job. Not only would we unlock the kind of productivity gains that we just haven't seen, right? 20-year relentless march of software tools, and yet productivity stagnated because we haven't trained people. We'd also help prevent this jobs apocalypse.
Ewan Blair, thank you very much indeed. Co-founder and CEO of Multiverse. Fran, back to you.
Tom, thank you so much. Great interview. Tom McKenzie there with the Multiverse Chief Executive at London Tech Week. Of course, Tom will be back a little bit later. The UK AI Minister. Coming up, the fallout from the Middle East conflict has been front and center at the IATA annual meeting. We'll have more on the future of the airline industry next. This is Bloomberg.
the Vivian Tom clientele.
Yeah, power women, like the dragon women. They're lawyers, they're CEOs, they're all important decision makers, women in the world.
Why do you position your products for this group of women?
When I started, designing, I always want to do something that is empower women.
When you take a look at your store, there is something for everyone. Take a look at the T-shirt, for example.
My customer growing, like 30 years already, so they become more powerful. I also want to grow my Gen Z audience too, They are like in the 20s, so it's a more affordable price for them. And then, my powerful women's daughter wearing their mom's dresses, and they feel that the power, the energy. So now they come back to the store and they buy more.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Guerrero.
I'm Lisa Mateo. And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London, and these are your top stories. Iran and Israel exchanged fire, threatening a fragile ceasefire in the Middle East as talks to end the war falter. Oil surges. The tech trade fades, but the NVIDIA chief executive calls the sell-off a buying opportunity, saying the build-out of artificial intelligence has just begun. Plus, banking M&A back in focus. Intesa Sanpaolo launches a 31 billion euro bid for Monte Paschi just a day after rival Banco BPM proposed its own deal. So oil jumping on escalation in the Middle East. Now, the Houthi group says it will impose a complete ban on Israel in the Red Sea following retaliatory strikes against Iran. The flare intentions come as the Strait of Hormuz remains effectively closed, choking off crucial energy supplies to global buyers. Well, I'm now joined by our Middle East energy correspondent, Anthony Di Paola. Anthony, good morning. So what reactions are we seeing with the price of oil?
Good morning. Yeah, the price of oil is rising because we did see some actual exchange of fire between Iran and Israel overnight, the two countries launching missiles one against another. So that's going to obviously lead to a jump in the oil price as traders react to that escalation. Then we did see this morning, on top of that, the news that the Houthis will be targeting Israeli vessels. So far, we have seen the Houthis remain out of this phase of the war. They haven't really gotten involved, and there have been some points where they have engaged, against Israel with some other attacks. But we haven't seen them fully get involved in the war and targeting shipping in that crucial Red Sea area. They can and have in the past targeted vessels in the Bab al-Mandab, which goes between basically the Indian Ocean and the Red Sea, and is a vital link for trade, even more so now because we've got Hormuz blocked, and none of those vessels or very few vessels coming through Hormuz compared with normal traffic under normal times. So that Red Sea area is really important particularly for Saudi Arabia's crude exports, which are going from the ports around Yanbu on the Red Sea coast. The Saudis have a large refinery just to the north of the Yemen border there, which is producing products, refined fuels that are going to markets. So that Red Sea area really remains key for markets, particularly with Hormuz shut. So we're really going to be watching that. But so far, no impact on shipping yet, Francine.
Anthony, thank you so much for the terrific update. Anthony Di Paola. Now, the world's top airline bosses have also been meeting in Rio de Janeiro for the annual general meeting of the International Air Transport Association. Now, IATA Director General Willie Walsh says air travel demand remains strong despite the economic headwinds.
I genuinely don't believe what we're seeing is a crisis in the industry. I think this is going to be a bit of a challenge. But the general economic environment, I think, although weaker than it had been, is still positive. Demand for flying continues to be pretty robust, to be honest with you, despite everything we've seen, and I would expect that to continue through the year. So, personally, I see this as a challenging environment, but by no means is it a crisis for the industry.
Bloomberg's Guy Johnson is there for us. Guy, good morning or good afternoon. What are key things on airline executives' minds at the moment?
Well, they're talking about what you've just been talking about, Francine, with Anthony, what is happening with the fuel price. That is absolutely front and center for all these airline CEOs. Willie Walsh talks about it not being a crisis. It may not be a crisis yet. So far, the oil price has gone up, demand has held up okay, but nobody is looking too far ahead at this point in time. They say they've got enough fuel for the summer, but that's only kind of the next few weeks. And nobody is ruling out a big price hike from here in terms of the fuel price. And as a result of which, I caught up with Ben Smith of Air France KLM to talk about this very subject. He will not rule out the fact that we could see further fare hikes from here.
If the fuel significantly spikes, we're going to have to raise ticket prices to compensate for that. And when you raise ticket prices, there'll be less demand. So the need for the full capacity that we had planned is probably not going to be the case.
So, Guy, once we get out of the summer and fuel is still expensive, are all the airlines going to make it?
Well, that's the big question. So is everybody going to make it is certainly one of the other topics that people are talking about here. And that takes you on to the idea of consolidation, Francine. The big airlines with the strong balance sheets are probably the best positioned to survive this. But there are plenty of airlines out there around the world, certainly around Europe. They've got slots and they've got aircraft that they could potentially be taking deliveries from. They're valuable businesses, but they may not survive because they can't hedge. They don't have the balance sheet. They don't have the capability to survive this kind of a crisis. So the big groups are starting to get ready. Air France, KLM, Lufthansa, and IAG, Iberia. It's got British Airways. It's got Aer Lingus in the stable already. And I caught up with Luis Gallego, who is the CEO of IAG, and he is already starting to look maybe at the autumn and maybe looking at opportunities for consolidation.
We always say that this crisis can help to consolidation because we started this in a very good position with a very strong balance sheet, 15% of margin. So with the hedging, others, they don't have all that. So at the end, they are going to have problems. And what we want after this crisis is to be stronger, to show again that how resilient is IAG. And I am sure we can have opportunities.
So, Guy, logically, the big Gulf-based carriers, Qatar, Emirates, and Etihad, would also be amongst those struggling. Is that really the case?
Well, I think, no, they're not going to be, so potentially they are going to be looking at opportunities here. They're going to be looking at some of these struggling situations and maybe looking to take some of the opportunity out of it. In theory, they should be struggling. You're absolutely right, Francine. In theory, these are the airlines at the epicenter of the action right now. They've had to close down their airspace. They've been obviously seeing fewer and fewer people coming in to the region, certainly at the corporate level. Tourism maybe start to pick up a little bit. So in theory, they should be struggling. But in reality, what they're looking at is a situation where they think they can actually do better out of this. And it's really fascinating that they think they're going to come back. They think they're going to come back stronger. They're going to be able to get through this crisis. They've got super strong balance sheets. So logically, they would be the ones that are struggling. But they don't see it this way. And in fact, I caught up with Etihad's CEO. And what he said is, we are on the phone every kind of few days to Airbus and Boeing. And we're asking them, do you have slots available to give us actually more aeroplanes rather than less? We want more aeroplanes because we see the expansion coming. And what they're now starting to see is that the weaker airlines, some out of Asia, some from elsewhere around the world, are giving up those really super valuable delivery slots that Airbus and Boeing has. And Etihad is saying, we want those and we'll take those. Listen to what the CEO had to say.
We're ordering planes right now to be delivered between 28 and 2032, and we're getting positions of airlines that are giving up. These ones that we're getting right now are old, are new, are not secondary, but we're open for secondary planes.
Guy, thank you so much. Great work there on the ground early in the morning. I said good afternoon, but actually it's very early in the morning. Our Guy Johnson, the trooper, of course, in Rio de Janeiro in Brazil. Now, HSBC Chief Executive Officer Jorge Alhedri says the GCC has emerged from recent turmoil with its resilience strengthened, boosting confidence in the region's long-term growth prospects. Now, he spoke exclusively with us at the HSBC GCC Exchange Conference in London.
The region has gone through testing times. Inevitably, we wish for better times to come. But what we could see is that the core activities carried on, and more activity should and would be expected as things normalize. I think what's most important, Francine, is that the resilience of the GCC has been revealed following these testing times. And, you know, this is years and years, if not decades and decades of preparation, economic transformation, pro-reform policies, wealth accumulation, great partnerships that have been built, technology that's been utilized, which has been revealed now. And that resilience being revealed is just another driver of confidence in the long-term opportunities that the region offers.
What happens if this gets unresolved in the next couple of years? Again, does it suddenly pick up when things are resolved, or will companies find ways to do business, IPOs and M&A, despite everything that's going on?
I mean, what we've been observing already over the last 3 months, first is the strong resilience that have been built, and that's now been revealed. But we're also observing a lot of investment in additional resilience in the region. We're seeing investment, in infrastructure capabilities, in policies and the business environment to support the long-term opportunity that this region brings to all these investors, and of course us as a main partner for all of them.
George, you've also just come back, I think, from 6 months actually in Asia. So your commitment there is unwavered as it grows bigger and more important. Have you seen any activity move from the Middle East to Hong Kong?
Well, we're very pleased to see that Hong Kong now has become the leading cross-border wealth management center in the world. And we've been calling this out for now a number of years, and we've been hoping that this happens and expecting that this happens before the end of the decade. And look how fast this has happened. This is clearly very encouraging. We see a number of Asian hubs also pick up in, be it a wealth hub role or be it regional treasury centers for our corporates. The region, the wider Asia regions remains, a massive structural growth story. And if you believe that the world globalization has been reconfiguring, where we're moving away from large point-to-point corridors into more of a multi-nodal network of connections, then a number of these economies, certainly the GCC economies, but also a number of Asian economies, ASEAN, China, India, become even more central to how how economic growth can be delivered.
Well, that was the HSBC Chief Executive Officer, Jorge Alhedri, speaking to me earlier this morning. Coming up, as the legal and regulatory landscape of AI and tech evolves, we'll discuss how the UK is approaching the topic with the government's AI and online safety minister. That's coming up next, and this is Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. close, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, you've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Now, the head of the IMF says the world needs to build foundations that can withstand more frequent shocks. Since taking the helm in 2019, Kristalina Georgieva has navigated one global crisis after another. On the latest episode of Leaders with Me, Francine Lacroix podcast, Georgieva also told me that the AI revolution should not repeat the inequalities created by globalization.
We collectively did not appreciate the backlash against globalization that came from the fact that, yes, the world economy is doing better as a whole, but many communities were held out because their jobs disappeared and there was not enough attention to them. I'll tell you what I'm very keen not to see repeated is the same with artificial intelligence. I hope we will have learned this lesson, and as we move very rapidly into this world of artificial intelligence, we will pay attention of who benefits and who doesn't. So
whose job is that? Because it's very difficult. It's going so fast.
I can tell you how we define our job. Number one, impact of AI on productivity. Number two, impact on labor markets. Number three, impact on financial stability. And in these three areas, we offer very sound analysis, and we offer signals of what may be coming for everybody to use.
So if you just focus on leadership and AI, this is a very tricky situation because you're either an optimist and you think that politicians are here for the good of the people or trying to make a difference. You're either a pessimist on politicians and you see, okay, they just want to be popular and be reelected. But now you've given the power of AI to companies that are here to make money.
So it's hard to say we have given them the power. The honest assessment is that they have moved very rapidly. We need to have more attention to the fact that three different regulatory models are emerging with regard to artificial intelligence: the European, the American, the Chinese. It has to be the responsibility of the United Nations system to bring these three models so they can coexist and we can run the developments in artificial intelligence more responsibly.
But does it change, you think, the leadership of countries or the leadership of prime ministers and presidents? Because they don't have any control over it. They don't have the levers even to do anything about this.
They actually do have levers. We should not give them a pass. They have regulatory authority over data. They have regulatory authority over how the profits from AI can be distributed in society. So exercise it. One thing that excites them and gets them to move is risks to financial stability, something that we have responsibility to identify and then offer solutions. What can we do?
And the full interview has a global release on Bloomberg TV later today, and that's at 10 p.m. UK time. Now, the UK government says it's determined that the country will not be left behind in the AI race. The future of the sector is under discussion as technology leaders gather for London Tech Week. Our Tom McKenzie is there for us today. Hi, Tom.
Fran, thank you very much indeed. Very pleased to say I'm joined by Kanishka Narayan, the UK Minister for AI. Sir, thank you for your time. Francine was just outlining some of the announcements that you and the government have made this morning. Top of mind for me really is what you've announced around hardware and supporting UK semiconductors. What are the details? What money are you putting into play? What are the potential opportunities?
Tom, it's an incredibly exciting start to London Tech. We have announced a major hardware plan. And the crux of it, we are going to reindustrialize Britain to make sure that Britain's got a place in the AI chips world. So in particular, the Prime Minister has announced just now 400 million for the British state to buy top-tier chips made by British companies. That's going to be really critical. Alongside that, we're expanding the Scaling Inference Lab, a facility that validates chip quality quickly so that British startups are first in the queue when they're coming to sell as well. And so real money, but also real capability.
That is a big ambition, the reindustrialization of the UK, and you will hold to that commitment. You'll be tested on that in the years ahead, and you're confident that that's going to happen.
I am very confident of it, and not only because it's a promise for the future, but because it's grounded in our heritage and our past. The fact that a Labour government under Callaghan backed Inmos, spawned the semiconductor cluster in Wales, and led to the creation of companies like ARM, GraphCore, the entire cluster in Bristol, Isambard AI. This is in our past, it's in our heritage, it's going to be in our future.
We have, on semiconductors, we have to pick our spots, don't we, Minister? We're not going to be producing an NVIDIA or an AMD in terms of GPUs that dominate the training and inference of some of these large language models. Where can the UK play? Where can the UK have an advantage and create material growth and scale in semiconductors?
Tom, you're totally right, which is over the last 15 years, this country fell behind in terms of reviving its heritage in chips for the future. What we are doing is saying, of course, today we have to partner with NVIDIA and AMD. They're great partners for us. We're announcing a series of things with them today. The bets we're placing are for the future. And for the future, we're placing two types of bets. One, we think inference is going to be critical. Companies like Fractal are going to have a great future. We want to be right behind them as well. But two, we also think we want to play some big bets for the longer term. Things like photonics, which are the next generation of bets that you make, which if they take off, will mean that Britain is right at the frontier as well. They're great companies, great academic strengths in those areas as well. Companies like Olix, for example, we're placing both of those bets.
The 400 million commitment doesn't sound like a significant number when you're thinking about an NVIDIA with a market cap of north of 4 trillion, just for one single company. What do you hope that 400 million does? Do you hope that private capital gets led onto that? What are your conversations with private capital, with long-term growth funds that could help accelerate that shift?
Well, Tom, that's the first crumb we're laying at the start of the trail in London.
It is a crumb. It's a crumb.
And so there's a lot more to come in the hours ahead.
There are more crumbs to come
on hardware in particular, and so you should watch out for that. But look, there are two core principles. One, Britain's got absolute frontier ambition when it comes to chips. We understand the scale of the requirement there. But the second thing to say is we want public value for money. The conversations I've had with private investors, almost $500 million raised by Fractal and Olix in just the last few months. So there's a lot of money pouring into this in British chips. We want the British public sector to play its role appropriately, but in a proportionate way to make sure we're reaching the frontier.
How can we win if we don't have the infrastructure or the energy?
Well, we can't, and that's why we're building them.
Our energy costs are 3 times that of the US. How do we solve the energy piece that will power the data centers and the infrastructure?
By being very, very focused on the deals that we need to land, rather than the kind of big picture concern that people bring up on this question.
But we have to bring down energy costs.
Of course, that's the case.
North Sea oil could play a role?
Well, I actually think if you speak to anyone trying to build a data center over the next 12 months, the idea that the North Sea oil turning on might do something or not in a few years' time is frankly not here nor there. The big picture thing is we are making reforms that accelerate data centers. AI growth into this country get first dibs on the queue. They get savings shared back if they build in the northeast and Cumbria in areas of excess generation. There's plenty of demand in this country, and the crux of it is getting people onto the grid quickly, rather than thinking about the long-term political debate on North Sea or not. And so from my point of view, the deal is roll up our sleeves, get these deals done today so that Britain can secure its future.
Talking of politics, when I speak to people in this ecosystem, they do interface with you, they interact with you, and broadly, people are very positive about what you and the team have been doing to try to help this ecosystem. But the question is, will you be in place in 3 months or 6 months, given the political volatility here in the UK? I mean, the political instability is a challenge, isn't it? How much of a headwind is that?
Well, the big picture, Tom, is that I think over the last 18 months in this government, we have had a very clear execution. We have delivered 75% of the AI plan that we set out. We're going to get to 100% and get it over the line. And from my point of view, every day I'm in this job, I'm rolling up my sleeves with the team, getting as much done as I can.
Andy Burnham says he would take a tougher role or a tougher look at regulation around AI. Should we be regulating more?
I think the crux of it from an AI point of view is how do we build trust and keep our people safe. This morning, his Prime Minister's announced a major plan on device-level support to make sure that children are protected from child abuse. We have acted to make sure that when Grok was nudifying women and children's images, we acted fast. We were one of the first countries to get that overturned. And so again and again, we're focused on outcomes. The mechanism of delivery, people can debate in the context of elections. What I'm focused on is delivering outcomes to the British public.
An EU approach to regulation would be the wrong prescription for the UK around AI.
Well, look, I think one of the things I've most valued is the British public's appetite for pragmatism. And I think that is the defining philosophy for this government. We want the best security trust for the British public when it comes to AI. We will pursue the mechanisms that make that deliver, rather than looking at obsessively the mechanism for how we get there.
How much disruption in the jobs market should we be bracing for at this point?
Well, look, here and now, I think we're running ahead of our skis a little bit on the jobs concern. Frankly, the biggest thing is how many jobs can we create here and now, and how can we support young people in every part of the country. Long term, I think there is a big question to be asked, because AI is transformational, and I think the speed and scale of this will be very, very significant. The task for us is how do we get on that bus and turn the steering wheel in the direction of British values and support for the British.
What specifically does that mean? What policies are you putting in place around jobs and the labour market?
Well, a really critical thing the Prime Minister's announced this morning is a new tool to bring frontier technology to the dignity of people in every part of this country. So we will now match millions of people every quarter in this country who look for new jobs. They will be better supported into the best paid jobs by using AI. Young people outside of education or at risk of dropping out before GCSEs, they will be supported because the frontier of technology under this Labour government will be put to the dignity of Labour in every part of this country.
Minister, you were a former venture capitalist yourself. Concerns again about an AI bubble and AI bubble bursting. We're seeing that in the public markets today with a significant sell-off. Is this a bubble? And is there a risk that it could burst? Is it looking frothy to you, Minister?
Well, the caveat is this. A bubble is a dispersion of price relative to value. What I'm focused on is delivering value for the British public, regardless of where the pricing is in terms of the equity markets. But look, the second thing is, of course, we're continuing to look at whether or not the equity context is one where there are financial concerns for the wider British public. We will continue to do that. From my point of view, it's a kind of constant chaser of the tail. Sometimes
do you think valuations are looking stretched? $1 trillion for OpenAI, $1 trillion for Anthropic?
I change my mind on this like the markets do on a pretty 24-hourly basis. I think the crux of it is the new normal is volatility. Whether the price is the right level or not, I think is an open question. We're all trying to figure that out. The volatility of it, I think, is an enduring feature. And so we want to make sure that Britain and the British public in particular rise that volatility in a stable way from a public point of view.
Minister, thank you very much.
Great to be here.
Indeed, for your time. Kanish Kanarian, the Minister, UK Minister for AI. Fran, back to you.
Thank you so much, Tom. It was a great interview with, of course, the online safety and AI Minister of the UK. Now, there's more to come from London Tech Week in the next hour. Tom will also be joined by Sikandar Rashid, Brookfield's head of AI infrastructure. That's at 10:40 a.m. London time. In the meantime, we're hearing from the Intesa Chief Executive, Carlo Messina, saying the Paschi offer is not a response to the Banco BPM bid. Mr. Messina also saying we had no interaction with larger Monte Paschi holders. He has ruled out acquisition of Generali, and he says that the 3% of Generali is aimed at avoiding counter moves. Up next, we'll have plenty more on the markets, on banks, and geopolitics. Bloomberg Brief. This is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Is there anything that humans today can do?
Yes.
That will change the lives of the humans currently on the Earth?
Well, first of all, people who switch over are getting the benefit right away. But coming back to the point about the fossil fuel industry and our debt to them, there's an old saying that came from the king of Saudi Arabia years ago. The Stone Age didn't end because of a shortage of stones. It ended because something better came along. Something better has come along now to replace fossil fuels, which are dirty and polluting and threatening humanity's future. The cheapest electricity in the history of the world is solar energy. Second cheapest is wind energy. and now batteries. The only thing that's come down in price faster than solar is utility scale batteries, doubling every single.
Why are we ending the wind farms that are now being built off the coast of the United States? We're ending them.
Because Trump is insane.
On another subject,
you don't want to explore that, but let me add one point on the solar. If you look at all of the new electricity generation installed worldwide last year, I often ask people what percentage of it was renewable, and people say, you know, they're looking for a high number, say maybe 30%, 35%. Correct answer is 93%, because it is taking over the electricity generation industry.
Is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
In New York City, 10 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. War tensions flaring up once again. Israel and Iran exchange missile strikes threatening peace prospects. Oil jumps on renewed tensions. Brent soaring, hovering near $98 a barrel. Bull market test. U.S. stocks stage a modest rebound after AI concerns weigh on investors and after that jobs report. So it has been a brutal session in some areas across Asia. The yen above 160 and the Kospi just seeing a massive sell-off, a little bit of a catch-up trade. Let's get to it all now with Winnie Su for the latest from Asia. Winnie.
Good morning, Bonnie. It's been a pretty bad day for Asian markets. We're looking at the MSCI Asia here down more than 3%, its biggest intraday loss since March. And also it's headed for 3 days of declines already. Now, several factors in play, including the expectation for the Federal Reserve to raise rates and also higher oil prices amid the escalating geopolitical tensions. And hence we have the tech-heavy gauges in Japan and Taiwan both losing more than 3%. Now you flip aboard and take a look at what's really driving declines today in our region. It's in fact in South Korea with the Kospi closed down more than 8%, and that's being dragged by the two chip makers, Samsung and SK Hynix, both down more than 7%. Now we do have the South Korean won in fact strengthening by about 2% and outperforming Asian peers as authorities unveiled a new set of measures to support the weakness of to support the strength of the currency.
For sure, a fantastically busy session. Winnie, thank you so much. Winnie Su there. Now let's get to London for a look at Europe with Justina Lee. Justina.
Good morning, Vonnie. Now, with the move higher in oil, of course, it's no surprise that the Stoxx Europe 600 is in the red today, with the energy sector basically the only positive sector today. Now, of course, when it comes to the bond market, we're also seeing a reaction to that higher oil price, with short and bond yields rising kind of all across Europe. And of course, that's also coming after that move higher in treasury yields. Now, what I find interesting about the move today is that we're seeing the German 2-year yield up 3 basis points, but actually the UK yield up 6 basis points. And the reason for that is that we're seeing a bigger reaction in the pricing of kind of where the BOE is going to go next. And if we flip the board here, we can see expectations of where the UK policy rate is going to end up by year end. And we can see a pretty big move higher to the extent where basically traders are now expecting a 50 basis point hike by the end of the year. And that's kind of coming up from the end of last week.
Justina, thank you so much. Justina Lee there in London. Let's begin with oil here in the United States because we are seeing that grind higher. Even just in the last couple of hours, we've moved to above 97 on Brent, but that is the front month contract. Partially, this is thanks to the Houthis coming back in, their voice now being heard once again, saying that they will not tolerate any Israeli-linked ships in the Red Sea, which is a different theater from the Hormuz Strait, and the possibility is that that could escalate on that side of things as well. And of course, the renewed volleys over and back. Important to note, though, that if we look at the December contract, we're still trading below $90 a barrel. Let's move to equities because we had that massive sell-off that accelerated into the close on Friday after the blowout jobs report. We are seeing a little bit of a risk rebound today. Stephen Englander of SocGen saying that the risk negative sentiment after the jobs report is perhaps unwarranted because unit labour costs are being held down. As you can see, listen, it's not massive at the moment, but we'll see how it progresses throughout the next few hours, and given what's happening with the renewed tensions in the Middle East as well, this might change. For the moment, though, that almost 5% sell-off on the Nasdaq 100 might be being arrested. Jensen Huang, of course, adding his comments to it. We are still up more than 14% on the Nasdaq 100, I should point out, year to date. Let's take a look at the bond universe, though. That is fascinating. We're seeing a massive move at the front end, so we're up another 4 basis points, having risen 10 basis points on Friday. Not so much, though, when it comes to the middle and back end of the curve. We're only up about 3 points here on the 30-year yield. That's about a total of a cumulative 6-point move there. 2-cent spread at 38 basis points. So we are seeing a little bit of flattening. Let's get to some individual movers now. Back over to London and Chloe Melly.
Good morning, Bonnie. We are seeing the electronics company Flex and the semiconductor company Marvel Technology move higher this morning, as they will be included in the S&P 500 later this month. This, of course, comes at an interesting time because SpaceX has just been denied this accelerated path to index inclusion that it was asking for. But those two will be included, and we can see that reflected in those shares in the green this morning. Moving on to Nurex, which is seeing a huge boost this morning, soaring in pre-market trading, more than 54% after a $2.3 billion deal with Roche. Getting access to a experimental blood cancer drug from Nurex, and that will really broaden its cancer portfolio. We're seeing a huge boost there for that stock. And finally, staying in pharma, we are moving on to Eli Lilly, which is also in the green today because a potential competitor, Zealand Pharma, came out with some clinical results that were seen as slightly disappointing from investors. And then also at the same time, Eli Lilly has its own clinical trial results, which mean that it might be able to expand beyond weight loss, beyond diabetes, and towards things like sleep apnea, for example. And so we're seeing this positive sentiment around Eli Lilly this morning, and we're up about 4% for the company.
All right, Chloe, thank you so much. Some stocks to watch there with Chloe Melly. Coming up this hour, an exclusive interview with Sikander Rashid of Brookfield. That'll be live from London Tech Week. So, Israel and Iran exchanging missile strikes on Monday, despite President Donald Trump's calls for both sides to stop fighting. Israel says it struck what it calls military targets in Iran after the Islamic Republic earlier launched missiles towards Israel. Bloomberg's Abir Abu Omar joins us from Dubai. Tit-for-tat strikes, potentially even worse than that at the moment. Abir, what do they mean for any peace talks ongoing?
Good morning, Vani. So yeah, look, the situation is evolving pretty quickly since the morning. What we saw happening overnight is Israel hitting Lebanon, hitting the capital of Beirut, the southern suburbs there, Hezbollah retaliating by hitting the northern part of Israel. And then what we're seeing happening in the early hours of the morning is that Israel has been hitting Iran directly, some western cities in the capital Tehran, including Esfahan and Tabriz. It also hit a petrochem plant where Iranian officials had to evacuate personnel out of that. We saw comments coming out earlier from the foreign ministry spokesperson of Iran, Ismail Baqai, saying that these attacks and the latest round of hostilities ensues a sense of distrust between Iran and the United States and casts a shadow really over the broader peace talks that we have been talking about over the past 2 months that are going to lead to the MOU that opens the Strait of Hormuz and then extends the ongoing ceasefire for 60 days before discussing some other concessions. But then when you talk about the ceasefire itself, it's already been fragile over the past 2 months. And today marks the 100th day of the war in the Middle East, Vani. So when we talk about a ceasefire and a truce that is ongoing, that is really in question this morning as these hostilities escalate to levels not seen since April 8th.
Yeah, 2 months ago, I mean, these are serious tests of that ceasefire. Also, the Houthis back in the fray now. Abir, that was something that markets had been worried about. What have they come out and said?
Yeah, and look, you're seeing Brent prices in particular kind of react to those headlines about the Houthis. So what they came out and said a few hours ago is that, and the Houthis are backed by Iran, of course, in Yemen. They've been active in those regional hostilities for years at this point, but they haven't been active during this war as much. But they came out a couple of hours ago and said that they will have a ban on all Israeli movement in the Red Sea. And Vonnie, remember that the Red Sea has been immune kind of from the regional hostilities. It was the Strait of Hormuz that's been bearing the brunt of the lack of movement in tankers and ships across the waterway. But now, with the Red Sea being in question, that brings the escalation of oil prices getting higher into question even more. And so something to keep an eye on, and a development that's dangerous, and we're definitely keeping an eye on for the rest of the day and the week, Fonny.
Yeah, and that's where many Saudi ports are as well, Abir, and even these new pipelines that were going east-west would have unloaded and loaded in ports on the Red Sea. Abir, thank you so much. Abir Abu Omar in Dubai. NVIDIA CEO Jensen Huang says the global stock sell-off is a buying opportunity. Here's what he said during a trip in Seoul.
With respect to the stock price, everybody should be very excited. They can now buy stock at a cheaper price. And it's absolutely true that the future of AI is very bright. It is it is a foregone conclusion that AI will be infrastructure for the world.
Joining us now is Bloomberg's Skylar Montgomery-Koning. So Jensen Huang giving us nice investment advice there. Skylar, will markets or traders for that matter listen?
Yeah, I mean, I think the fundamental question is whether or not you've really seen a change in what's been supporting the market, and that's really been earnings. And I think the answer is probably no. So what we saw at the end of last week was tech was under the pressure. That started off because Broadcom had some negative earnings guidance, so certainly that doesn't speak to earnings in general for the tech sector, which are still pointing to very strong seasons ahead. And then that was made worse by, on Friday, we had a very strong non-farm payrolls report, and that fed into higher yields on the back of this expectation that the Fed would hike at least once this year, if not maybe 2 times or more this cycle. Now, what I will say is that typically when you get yield rises, yes, they're bad for equities because you have financial conditions tightening, because it makes borrowing costs more expensive, but they typically don't weigh on the equity market for a sustained period of time if the reason they're moving higher is because of growth. So we know that growth is still quite strong from a non-farm payrolls perspective. That doesn't mean we won't have these kind of wobbles along the way, particularly when we have U.S. inflation data later this week that's expected to come in very, very hot. But it does mean, I think, generally this is more of a correction than it is a kind of sustained bear market that would require a big turn in the earnings expectations for these companies to be sustained.
And of course, the SpaceX IPO later this week, I mean, what do these conditions portend for that? Could it save this dip in some ways?
Yeah, I mean, I think certainly we're getting a little bit more worried about yield rises. I think that there's a different reaction function that you'd expect in terms of the U.S. than you would for Europe and the U.K. Because what you've seen is the AI trade is supporting growth quite significantly in the U.S. right now. You also have Iran happening with oil prices being sustained at a high enough level for long enough that you will get a growth and inflation impulse. Now, that is growth negative for the U.S., but not as necessarily so as it was previously. The Boston Fed put out a paper at the end of last week that essentially says that they see no unemployment impact from higher energy prices that we've had so far, but you still get an inflation impact. So that means there's more of a worry of inflation persistence if growth is strong in the U.S. than there is in Europe and the U.K., where I think there's an underappreciation of how much kind of demand destruction is already in the pipeline.
President Trump saying over the weekend the Fed would be wrong to raise interest rates. Is there going to be a concern pretty soon in the market that he is getting involved with the Kevin Warsh Fed, even though he had said Kevin Warsh could do his own thing?
I think we have largely moved away from that story, and that's because conditions have shifted so much from an inflation perspective in the U.S. that it would be very, very hard for Warsh to say that his base case is a cut. I think, too, because you have Powell staying on the board, there's this recognition that you do have 12 members that are all voting, and they've all shifted more in a hawkish direction as you've had inflation come in hotter. That's not so much a concern anymore, and I think particularly if you look at what's driven the move higher in yields, it's largely been real yields. So if you're more worried about inflation de-anchoring, you'd see that long end rise because of term premia or because of break-evens, but because you've had that kind of flattening that you were just talking about, that's an expectation that the Fed will hike and keep it under control from an inflation perspective.
All right, Skylar, thank you so much. Bloomberg's Skylar Montgomery-Koning. Now, two other top stories trending on the terminal this morning. Shares of Monte Paschi surging after Intesa offered to buy the bank for $35 billion. A takeover would create one of Europe's most valuable banks and boost Intesa as a leader in the Italian market. Intesa's offer comes a day after Banco BPM pitched a merger of equals with Monte Paschi. HSBC CEO George El-Hedary says people will remain central at banks even as AI becomes widespread. He spoke to Bloomberg from an HSBC conference in London.
I need human judgment. I need human decision-making. I need human accountability at the core.
IMF Managing Director Kristalina Georgieva says the world needs to build foundations that can withstand shocks that have become more frequent. Speaking on the Bloomberg podcast, Leaders with Francine Lacroix, she also said that organizations must reorganize and recognize inequalities rising from AI. Coming up, airline executives grapple with soaring jet fuel prices. We'll bring you the latest from the IATA gathering in Brazil. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Lower growth, principally as a result of the negative impact in the Gulf.
We start to see futures in jet fuel go down, right? It's going to take longer. It's not going to be quick, right? But things are coming back on track.
Supply will get very tight because it's been impacted by the crude supply and then by refining capacity.
If the fuel significantly spikes, we're going to have to raise ticket prices to compensate for that.
We are finding that our consumer has an insatiable appetite for premium experiences.
Time will tell. It depends on what's happening with the economy, what happens with oil prices.
Those were some of the airline executives speaking to Bloomberg from the IATA General meeting in Rio de Janeiro. Bloomberg Opening Trade co-anchor Guy Johnson joins us now from Rio. So Guy, we heard some of the concerns there. What would you say are the key priorities? What's on executive minds right now?
So what they're talking about, Vonnie, is the fact that they've probably got visibility over the next few weeks. They think they've got fuel for the next few weeks, maybe months, but weeks certainly is what they're talking about. After that, things get really tricky. Nobody's really kind of prepared to commit to the fact that prices are going to come down. They do worry, as Ben Smith was articulating there, that you could see further spikes. You've just been talking to Abir about kind of what is happening in the Gulf today. We could see prices going higher from here. So that's the risk at the moment. And at the moment, demand is holding up. But you raise prices further, does demand continue to hold up? The last few years, demand's been super strong, and it's proving resilient now. But you keep pushing prices up in order not to squeeze these kind of quite stressed businesses' margins. Do you start to see maybe the consumer pulling back? At the moment, the situation in the US looks fairly strong. The jobs report, as we saw Friday, looks fairly good, as a result of which maybe the consumer holds up for now. But there is there is little expectation that actually we know what's going to happen next. The next few weeks, yeah, sure. After that, we don't know.
Sure, and of course, many people would have already been anticipating summer vacations. They may have already booked, or they may have booked anyway because we were so close to the vacation time. But once we get through the summer and fuel is still expensive, assuming it is, will all the airlines make it, Guy?
Well, that's the big question now. And the answer probably, Vonnie, is no. Not everybody's going to make it. The big groups, and we've talked to plenty of them here, Air France, United, kind of what's happening with Air France, KLM, IAG, Lufthansa, those kinds of groups will make it. They have the balance sheets to be able to survive it. But the smaller airlines that don't have the balance sheets, that can't hedge in the way that the bigger airlines can, they are going to be the ones that maybe start to struggle as demand begins to drop as we go into the winter. But as you say, fuel prices remain high. That's just going to squeeze the margin. That is just going to be really tough for those kinds of businesses. And then the question is, what happens? Because those airlines still have good airport slots. Those are valuable. They still have delivery slots coming from Boeing and from Airbus and from GE and Rolls-Royce, and those are valuable. So the big groups are thinking, you know what, come the autumn, maybe there's going to be some opportunities here. Maybe actually this crisis produces consolidation, quite significant consolidation within this industry. And that's certainly been one of the conversations we've been having with a lot of CEOs here in Rio.
Well, and certainly equipment. The Ryanair CEO telling Surveillance just a couple of weeks ago that he'd be interested in buying airplanes, right? Just from an order flow perspective, is it too presumptuous to expect that airlines will still take delivery of, airplanes ordered?
I think some will. And you're already starting to see evidence that some are beginning to give them up. These slots at Airbus and Boeing, because of the shortage that we've seen of aeroplanes and engines over the last few years, are super valuable. So as weaker airlines maybe start to give them up, other airlines are going to be looking at them and potentially looking to take those on. I was talking to the Etihad CEO, and he was saying he's on the phone every few days to Airbus and Boeing. Do you have any slots? Can I get extra airplanes? Can I get them earlier? He believes that actually the Gulf carriers are going to come out of this okay, and as a result of which he's preparing for that and is looking for those aircraft that others potentially are going to be giving up, Vonnie.
Fantastic interviews, and looking forward to hearing some more. That is Bloomberg Opening Trade anchor Guy Johnson. Thank you. Coming up, a frontrunner emerging to challenge LA Mayor Karen Bass in November's election. A look at that and what else is making headlines in your front page news. This is Bloomberg.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the New York Times, a race to watch in California. Nithya Raman, a progressive member of the Los Angeles City Council, pulling ahead now of reality TV star Spencer Pratt in the LA mayoral primary. The Times points out it's still officially undetermined who will face Mayor Karen Bass in the November contest, with more votes to be counted, but late returns are trending heavily in favor of Liberals, who make up a majority of the city's electorate. Next up, the Wall Street Journal reporting SpaceX's years of courting the national security establishment are paying off, with the U.S. government SpaceX's largest single client. The Journal says revenue from the government will climb sharply over the next few years. And on the Washington Post front page, President Trump walking out of a Meet the Press interview when challenged about claims around the January 6th, 2021 riot at the U.S. Capitol. The Post said Trump appeared agitated when asked about the $1.8 billion fund he has sought to pay, claiming they were victims of politicized prosecutions. The exchange lasted about 4 minutes. Coming up, oil soaring as Israel and Iran exchange fire. We'll have more on renewed tensions in the Middle East next. This is Bloomberg.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history. and you're seeing it. You're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers, and it's hard to pick the winners and losers now. And certainly, a lot of the capital that's being deployed will not produce adequate returns, and a bunch of the capital that's being deployed will actually not produce any returns. But it's hard. It's hard to call the timing on these things. And the thing I'd point to, just from a historical lens, is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. War tensions flaring up once again. Israel and Iran exchanging missile strikes, threatening peace prospects. Oil jumps on renewed tensions. Brent hovering near $98 a barrel. Bull market test. U.S. stocks stage a modest rebound after AI concerns weigh on investors. Let's take a look at those markets then, because oil, as you can see, Brent above $97 a barrel. Now, if we look at the December contract, we're still pretty calm out there. We're under $90 a barrel still. Nevertheless, the prompt month contract up a good 4.5%, not just on the renewed strikes on both sides, picking up momentum now as the hours go on, but also on the Houthis re-entering with some rhetoric to the effect that they are banning all Israeli-linked ships in the Red Sea, the Bab el-Mandeb. Another theater for this war. We have index futures in the U.S. pointing to a rebound today after that sell-off picked up massive steam towards the close on Friday following the blowout jobs numbers. The Korean exchanges really showing the catch-up effect today. The Kospi triggered the circuit breaker, was down 8% today. Russell 2000 and NASDAQ 100 futures, though, pointing to nice gains at the open. Perhaps it's Jensen Huang saying, everybody buy the dip. Who knows? We also have a massive move in bonds, particularly at the front end, as you might expect. We're up another 3.5 basis points after that 10 basis point move on Friday. Little bit less of a move further out the curve, particularly at the 30-year end of things, but we're still well above 5% right now on the 30-year. Let's get to some individual movers now for some stocks to watch. Here's Chloe Melly.
Good morning, Bonnie. Let's start with the two companies that are set to join the S&P 500 later this month. And so we have got the electronics manufacturing company Flex and the semiconductor company Marvell Technology, which has been one of the big beneficiaries of the AI boom. And so both of those companies will be joining the index a little bit later in the month, and we are seeing them both jump on the back of that. Moving on to another massive mover this morning, and that is in the pharmaceutical sector. We've got Nurex, which is up almost 50% this morning on the back of a $2.3 billion deal with the Swiss pharmaceutical company Roche. And Roche will essentially get access to an experimental blood cancer drug, and that will help it expand and broaden this cancer portfolio. And we are seeing investors in Nurex react very positively to this massive deal this morning. And finally, let's go over to Italy, where Monte dei Paschi is up after receiving two different offers from Intesa Sanpaolo and Banco BPM. And so this will trigger a wave of deal making in that banking space in Italy, after what's already been a lot of different deals there, including Monte dei Paschi's own acquisition of Mediobanca, which happened last year. So definitely a space to watch going forward.
All right, Chloe, thank you so much for the update. Chloe Melly there in London. NVIDIA CEO Jensen Huang saying the global stock sell-off is a buying opportunity. Here's what Huang said during a trip in Seoul.
With respect to the stock price, everybody should be very excited. They can now buy stock at a cheaper price. And it's absolutely true that the future of AI is very bright. It is completely, it is a foregone conclusion that AI will be infrastructure for the world.
Joining us now is Bloomberg's Morwenna Conium. So Jensen Huang giving us a little financial advice, Morwenna, but is it enough to put to bed some of the fears that we saw around Broadcom's earnings and how obviously there's a sentiment out there that there is some frothiness, if not more, going on here?
Well, we're looking at US futures this morning and we are seeing a bit of a recovery, but that was after a big AI-driven sell-off on Friday. And that continued through Asia, particularly overnight, with the Korean Kospi ending up down about 8%. Really quite significant sell-off there. And there is a lot of questioning still as to how far the AI rally can go. Is it running out of steam? And there's concerns about capacity as well here in the UK, as well as just investor appetite. A lot of dependency on a few names we're seeing in, all around the world. And I think that those concerns aren't really going away anytime soon, even if we see a bit of a recovery today.
Well, and of course, it wasn't just the Broadcom earnings, right? Then we had the blowout jobs report, which put it into everybody's mind that perhaps we'll get a hike by the end of the year, maybe even potentially more than one. Now, obviously, nobody knows what's going to happen. The first meeting under Fed Chair Warsh is going to be next week. So, I mean, is one hike by the end of the year enough to arrest this rally, even if we do get it?
Well, it's certainly... it is not going to support the rally. And I think what we're seeing is those rate expectations being felt around the globe, which saw Asian bond yields rise a lot overnight. And this morning in Europe, bond yields are rising. I think a lot of that is actually down to the energy shock, particularly in the UK's case. We're seeing those rate hike bets being ramped up for the European Central Bank as well as the Bank of England. But the overall sentiment and concern about Fed hiking, after that stronger than expected payrolls report on Friday, ahead of inflation this week, I think that's where we might see whether it's going to keep going in that direction or not.
Morwenna, thank you so much. Bloomberg's Morwenna Conium there. Oil surging after Iran and Israel exchanged fire, threatening that fragile ceasefire in the Middle East. Yemen's Iran-backed Houthis also announcing a blockade of Israeli ships in the Red Sea. Joining us now is EMEA News Director Will Kennedy. I want to start there, Will, because the Houthis are back in with some rhetoric, at least. How much had there been any Israeli activity in the Red Sea anyway?
Yes, it's an important statement of intent from the Houthis, who have largely been absent from this conflict so far. And the Red Sea has become absolutely key to keeping oil markets as well supplied as they can be in the situation, because Saudi Arabia is exporting millions of barrels from its Red Sea ports that it can't get through the Strait of Hormuz. What matters now is how widely the Houthis follow through and what they mean by Israeli-backed shipping. In the past, they've taken quite a broad interpretation of what's linked to Israel. So the market will be very on edge, but I think it's important to say at this stage that this is a rhetorical intervention and we haven't seen any action by the Houthis in the Red Sea yet.
Have the Saudis capacity to defend themselves at those ports? I mean, these are the ports the Saudis are depending on for the new pipelines that are being built as well, right?
That's right. They are, and it is a critical piece of infrastructure, and they will be very worried by any Houthi threat. But I think it's important to bear in mind that they have been quite explicit about saying that they will target Israeli-linked shipping and not a broad-based effort. That said, of course, in the minds of ship owners, if there are attacks in the Red Sea, it will make them think twice about sailing through that waterway in the very narrow passageway that runs between the Red Sea and the wider Indian Ocean. But as I said, right now this has been a rhetorical intervention and not anything more dramatic.
All right, Will, thank you so much. Bloomberg News Director for EMEA, Will Kennedy. For more on how these renewed tensions could affect peace negotiations, Bloomberg's Kasia Klimashinska joins us from Washington. Kasia, can you summarize what's happened in the last couple of days? You had President Trump basically saying Netanyahu is going to do what I say because we're deciding the outcome of this war, but yet it doesn't seem like that's actually what happened.
Vonnie, yes, in fact, I have some breaking news for you. President Trump just put a new announcement on Truth Social. He urged Israel and Iran to stop shooting. That's interesting. Obviously, it shows what's at the top of his mind, that he's concerned about these renewed attacks, just as the markets are, as you mentioned. We have this move up in oil, in Brent oil, particularly, because otherwise, President Trump stayed relatively quiet throughout the weekend. There has been some actions from the U.S. Central Command, where the U.S. was trying to allow some movement through the Strait of Hormuz, and Trump gave a couple of interviews which kind of had the same theme that we have now in this Truth Social. He urged Iran to keep talking. He still hopes to have at least a tentative deal with Iran, and he also urged Israel to not retaliate. Trump doesn't want those attacks to continue. He also Trump gave this interview to Financial Times, where he said that Israel will basically have to agree with the deal that he himself, Trump, strikes with Iran, and Israel will just have to follow.
It's interesting, though, he also said that there was going to be no unfreezing of sanctioned money and so on. So we'll see what he says later on today. As for the new Fed chair, he really has his first meeting next week, and everybody will be curious as to what he has to say. Trump did say that a rate increase would be wrong, even though he had just said a couple of weeks ago, after the confirmation ceremony, that Kevin Warsh could do whatever he wanted.
We all know that President Trump wants interest rates to go down. So he was very upset when we had this blowout jobs report on Friday that showed that the job creation in May exceeded all the expectations, and markets went down. We had a very significant decline in S&P 500. So President Trump took to Truth Social and urged stocks to go up instead of going down. And then he continued on this message. He also gave an interview to NBC in which he said, good news should be good news. So the good jobs jobs numbers should not lead to decline in stocks. And yes, Trump addressed this concern that investors now have, that the very strong U.S. economy will lead the Fed to increase interest rates instead of cutting them. Trump said that this is not fair, that there shouldn't be increases in borrowing costs when the economy is strong, that in fact the Fed should lower interest rates, even as he also said that he will let his new Fed chair, Kevin Warsh, do what he thinks should be done.
All right, Kasia, thank you so much. Kicking us off this Monday, Bloomberg's Kasia Klimashinska. Now to other top stories trending on the terminal this morning. Cracks in Asia's regional risk bellwether. South Korean stocks plunged as investors pulled back from AI bets, threatening the world's biggest rally. The Kospi index tumbled as much as 8.8%, triggering a 20-minute trading halt. The sell-off was driven by chip makers SK Hynix and Samsung. Some investors see the move as a technical correction rather than the start of a prolonged bear market. Chinese President Xi Jinping received an elaborate welcome in North Korea for his first visit in 7 years. Kim Jong-un personally greeted Xi before a military ceremony, highlighting what both sides say is a, quote, unbreakable friendship. The visit comes as China attempts to reassert its influence over North Korea. Over 500 Ebola cases have now been confirmed in the Democratic Republic of Congo. A report released Sunday confirmed 27 cases in the last 24 hours and noted 117 suspected cases. The effort to contain the virus has been complicated by armed conflict and medical supply shortages. Coming up, Sikander Rashid of Brookfield joins Bloomberg's Tom McKenzie from London Tech Week. This is Bloomberg.
Technology is embedded in every aspect of our lives.
and laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars, Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Let's now take a look at AI infrastructure demand. Brookfield Asset Management seeking to raise around $50 billion for AI infrastructure. Sikander Rashid, Brookfield's head of AI infrastructure and head of Europe, is live now at London Tech Week with Bloomberg's Tom McKenzie. Tom.
Bonnie, thank you very much indeed. Yes, very pleased to say that I am joined by Sikander Rashid of Brookfield Asset Management, head of AI infrastructure, as you said, and head of Europe. Sikander, thank you very much indeed for joining us. You join us at a moment when there is anxiety in the public markets about AI, the AI bubble, and whether or not we're getting closer to that moment and that bubble, if it is a bubble, bursting. As you sit with your view on investment around infrastructure in AI, that long-term view, how concerned are you, how anxious are you about this bubble, if that's what it is, and the risks around it?
Well, firstly, Tom, thank you so much for having us. Look, last week was quite eventful. S&P was down 2.5%, NASDAQ was down 4%, and more importantly, the Philadelphia Semiconductor Index was down 10%, its worst performance since 2020. Now, having said all of that, I would say part of this was expected. There are pockets within the market that are getting a bit exuberant, right? And over the course of this year, the semiconductor index was up 80%. So a 10% pullback is not bad. I think what's more important is the underlying demand for AI and AI infrastructure remains very strong, and we have a lot of bottlenecks, whether it's the wafer, the semiconductor manufacturing, or power. These are genuine bottlenecks. And the last thing I'd say, Tom, is whilst the technology firms are building the brain, Brookfield Asset Management is building the body. And the body is land, power, real estate, data centers, and compute. And we're seeing unprecedented demand across the board in all of those categories.
How convinced are you, as you make those investment commitments, that the end user is going to see that return on investment, and on what time frame?
Yeah, look, it's a great question. I would say two things. The first is we have strong conviction, because we are building the backbone of AI for some of the best technology firms in the world, for some of the best sovereign governments in the world that have the best credit ratings in the world. So we're not spending capital speculatively, and in fact, are investing capital with these counterparties over the long term, where we get a return on and off of our capital over the contract term. So we feel very confident that our investments and our capital remains insulated to any AI bubbles. The second point, which is the technology firms themselves that are spending all this CapEx, that are signing up to these long-term commitments with Brookfield, these companies have stepped up their CapEx spend, whether it's Microsoft, Amazon, Google, Meta, you name it, from $400 billion just 5 years ago to $800 billion. And I would say...
That continues next year.
Yeah, probably we'll hit $1 trillion at some point in the next couple of years. We have to remember, Tom, these are some of the best companies run by some of the smartest people in the world. And if you heard their earnings from last week, almost all of them are starting to report positive ROIs, which is very encouraging.
Are semiconductors or chips still cyclical, do you think?
Yeah, look, the chips or semiconductors in general have always been cyclical. There's been GDP linkage, and GDP's, there's ebbs and flows. I would say what's different now compared to what happened in 1993 or the late 90s or a few times during the 2000s, what's different is the underlying demand. AI is expected or will be the most transformational general purpose technology that will require $10 trillion of CapEx in the next 10 years, and semiconductors, wafer, etc., are a fundamental piece of it, and we will probably see quite strong demand in the next few years.
How attractive is Europe as an investment destination, and the UK, given the energy costs and constraints that we're seeing here?
Yeah, look, over the last 3 to 4 years, it's been fascinating to watch the US-China AI race, and it was predominantly driven by the fact that all the AI models, which have been the primary driver of capacity or infrastructure capacity, are either American or Chinese. UK or Europe, for that matter, does not have a large-scale LLM. It does not have a hyperscaler. Having said all of that, I think UK and Europe remain really interesting investment destinations for AI infrastructure, because the next wave of AI will not be training. It will be inference. And training is research and development. Inference is revenue. Inference is application. And given the local data sovereignty laws, it is very critical for Europe to have its own local compute. And I believe UK and Europe will have an enormous runway ahead of them to basically build capacity for inference and applications.
How much of a potential constraint are higher interest rates? If we think about the ECB, expectations they hike rates, the Fed, expectations 25 basis points comes through this year, to what extent could that curtail or factor into your investment decisions?
Look, I don't expect it to have a material impact, because the reality is interest rates are still relatively low compared to where they've been historically, right? And because of what's happening in the Middle East, there's an expectation of slightly higher inflation, and that will have some impact on the interest rate, short-term interest rate curves. But when we're investing capital, we're investing in assets for 15, 20, 30 years, and therefore we take a long-term view and usually look past the noise, whether it's short-term inflation or short-term interest rates.
How much are you looking to invest in Europe, in the UK, over the next 2, 3, 4 years? Can you give us some numbers in terms of your investment commitments for this region?
Look, we are one of the largest international investors in the UK. We have over 70 billion pounds in assets under management across real estate, power, infrastructure, credit. Going forward, we remain bullish on the UK, and we expect we probably will double the size of our business in the next 5 years.
Double the size of the business in the UK over the next 5 years, and political uncertainty is not a headwind to that?
Look, when we invest in a country, the focus normally is, does the country have rule of law? Is there respect for capital? UK has both ingredients. We've been here for multiple decades, and the expectation is we'll continue to look past these political cycles, because again, when we're investing over the longer term horizon, and our views on UK have not changed at all. Because
what are the most attractive investment destinations in Europe right now? France, Germany, Italy, who stands out?
Look, depends on the vertical, but I would say across the board, some of the larger economies in Europe continue to be really interesting as it relates to AI infrastructure. We're here in London at the UK Tech Week, so let's talk AI infrastructure. I think for AI infrastructure, probably France is one of the best destinations. And the reason for that is France has abundant power. It has abundant nuclear power. It has an administration that is quite focused on ensuring Europe is independent and Europe is self-sufficient, both in terms of technology as well as the AI infrastructure. And we just last week increased our commitment to French AI infrastructure from 20 billion to 30 billion for all those reasons, and I believe France has an important, really important role to play for all of Europe as it relates to AI infrastructure.
Sikander, thank you very much indeed for your time. Really appreciate it. Sikander Rashid, Head of AI Infrastructure, Head of Europe at Brookfield Asset Management. Bonnie, back to you.
Fascinating, Tom. Thank you so much. That is Bloomberg Tech Europe anchor Tom McKenzie there bringing us that interview. Coming up, SpaceX's potentially record-breaking IPO will get you set up for your trading week. This is Bloomberg.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
The world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead this week, and boy, is it a big one. We get some inflation reads. We'll get U.S. CPI data on Wednesday, PPI on Thursday. We'll be watching the details. The ECB delivering its rate decision on Thursday, widely expected to raise borrowing costs by 25 basis points. And then SpaceX is expected to debut on the NASDAQ on Friday in what may be the largest IPO ever. Let's take a look at some macro movers. This is your setup as we head into the Monday trading session. So Brent crude, at least the front month contract, up quite substantially above $97. We're backing off just a little bit. We're seeing a rebound, so it looks like the dip buyers may emerge again today. Bear in mind the Kospi played catch-up was down 8% in the session, and that 2-year yield continues to climb, but just another 2 basis points there, up about 12 basis points since Friday.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders.
Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market. Let's go to Scarlett Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space. Excellent reporting.
I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
The market is strong because the economy is strong overall. Ultimately, what's going to drive this market higher is going to be the AI trade.
I think that the entire market is one trade, and I think right now we're in the boom part of the trade.
Certainly tech or AI has soaked up all the oxygen in the room here.
We're forgetting that there's a lot of other industries.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Monday, facing down a triple threat. Tech stocks looking to bounce following the worst day of losses this year as another round of strikes between Iran and Israel is sending crude higher. Rates are staying elevated. Heading into the latest read on inflation, investors pricing in a hike.
They're pricing in a hike because, Jonathan, we had a very strong jobs report on Friday. At the same time, we have elevated inflation. Potentially, we're going to see even more of that as the conflict in Iran continues. Now, you even have Goldman over the weekend saying they do not expect a cut. A lot of banks are going to have to shift how they think about this market. Interesting, though, I was with the president over the weekend. He still is pushing for a rate decrease when it comes to the Federal Reserve.
The president's pushing back. The market's pricing it in. Goldman's dropping his call for rate cuts this year. BNP Paribas making a call for a rate hike starting later this year. We'll spend some time on that. We'll spend some time on this. Crude bouncing back. WTI and Brent. Brent crude this morning edging higher by 4%, $97 a barrel. Iran striking Israel. The president saying, don't strike back. Israel striking back.
Right, the president told FT when it comes to Netanyahu that he wouldn't have a choice. I call the shots, he doesn't call the shots. This could be incredibly frustrating for this White House because now they don't really have a say in what Iran is doing, clearly, and they don't have a say right now with what's going on in terms of Israel and how they're going to react. Jonathan, we are more than 100 days into this conflict, and with Iran, they've always said that Lebanon was one of their red lines, but that's just been rhetoric. What we've seen the past 24 hours is now they've taken that rhetoric and they turned it into action.
That's unsettling the bond market as well this morning. That move in crude. Yields up across the curve. 10s this morning up by 3, 456. 2s this morning up by 2, 417 and closing in on 420. Check out equities on the S&P 500 or the NASDAQ on the Russell. On the S&P, worst day of the year. On Friday, on the NASDAQ, the worst day since Liberation Week. For the semis, the worst day since 2020. Futures up this morning on the NASDAQ by 0.6%. Jensen Huang of NVIDIA, you should be very happy because now you can buy at a discount.
So he's saying if you want to get into this market, this pullback looks ripe for you to join in. The problem is, Jonathan, a lot of people are going to be thinking about this sell-off. Is it because of the fact that now the market is pricing in a hike in the United States? Is this potentially just panic selling, or did we just go too far, too quickly when it comes to the AI trade?
We've got a lot to work through this week. Inflation data later this week, and then the Federal Reserve just a week away next Wednesday. Kevin Walsh stepping up and facing down some big calls for maybe later this year hiking interest rates. Coming up this hour, we'll catch up with Cameron Dawson of New Edge Wealth as investors come down from AI euphoria. John Lieber of Eurasia Group as Iran and Israel exchange fresh strikes. And Frank Lee of HSBC as Jensen Wong suggests buying the dip. We begin this hour with stocks looking to recover following the biggest one-day loss of the year so far. Cam Dawson of New Edge Wealth writing, after a 9-week winning streak at a breakneck pace, we should not be surprised to see some come down from the huge gains. Cam is joining us for the hour and joins us now for more. Cam, good morning. Good to see you.
Good morning.
We've been told repeatedly the fundamentals are great, but the technicals are stretched. So the technicals beginning to bite.
Yeah, beta bites both ways. We had been enjoying a massive beta rally where we got to some pretty big extremes come midweek last week. 76% above the 200-day moving average on the SOX. You got the Kospi up to 112% above its 200-day moving average. That would qualify as a classic price bubble. And so we're seeing this unwind just out of these really big overbought conditions. And what's notable is that we're nowhere near oversold. Just to get to your 50-day moving average on the SOX, you would be down another 13%. And yes, the fundamentals are great, but you had seen these stocks get so overbought, move so far so fast. It was sort of like seeing Icarus fly closer and closer to the sun and getting a little bit of that wax melting.
Do you think then at this point there is an air pocket then for further declines from here?
Yeah, look, I think it would be actually a very healthy thing to see. I think the other thing that's really notable to focus on is the fact that you had seen valuations already reset back up to their 2026 highs. So the whole dynamic that had happened at the start of the year is that valuations derated significantly to about 17 times on the SOX just because earnings estimates went up so much. Now we've effectively reclosed that gap where we've seen valuations get back up to 28 times forward. So arguably you could say that the easy part is over, meaning the valuation reset is over. And now the question is, do you still see earnings upside for these semiconductors from here?
Is the next catalyst potentially the inflation data, as Jonathan mentioned, later in the week?
Well, it was certainly for the broad markets, and it'll be fascinating because we could print a 4 handle on headline CPI. We could also print a 6 handle on headline PPI. And certainly if we're looking at the bond market, that would put upward pressure on yields. And you're already pricing in 117% chance of a hike by the end of the year for the Fed, which just suggests that could we even see more upside on that if you get a hot CPI or PPI print?
A 4 handle on this inflation would basically mean what for Kevin Walsh?
Yeah, it means his back is very firmly in a corner, and he has very few ways to argue that the Fed should be cutting rates at this point. Whether you're looking at the labor market, which remains very resilient, or you're looking at the inflation picture. And I think the other important part about the inflation picture is that you're seeing this upward pressure on core CPI as well. So yes, wages remain very subdued, and I think that's a really important point about this employment picture. You're not seeing upward pressure on wages, but you're still seeing things like that super core CPI, core services ex housing, move higher, which just suggests that this can't be something that you completely look through.
Lisa has talked about this, and we'll catch up with Lisa a little bit later this morning. She's found herself in Rio, in Brazil, believe it or not. We'll spend some time on that in a few hours' time. Lisa's talked about the fact that inflation is close to 4, unemployment is close to 4, and here we are having a discussion about dropping and easing bus.
Yeah.
Not hiking rates, but dropping and easing bus. Can you expect anything more than just that at next week's meeting?
Well, I would add one other peculiar factor, which is that if you look at 5-year inflation spreads or inflation break-evens, they remain very contained. So you have a Fed that's not necessarily saying that we're going to fight inflation with a lot of gusto, and yet the bond market says, yeah, but we think you're going to be successful at getting back to 2%. So I think the question will be is as we move through later in the year, if inflation still continues to trend higher, if energy prices continue to push higher, will we start to see the long end of the curve start to become a little bit more dubious of the Fed's willingness to fight inflation? And if that's the case, that really is the thing that forces the Fed's hand to start coming out and talking a much tougher game than just saying, oh, we're not easing.
So 2s out to 10s, we've seen some flattening. Would you expect some steepening to come back into the curve?
I think that's certainly possible this week, mostly if we continue to see resilient economic data. The relationship to watch is the fact that you're seeing economic surprises continue to push higher, that's putting a lot more upward pressure on the back end of the curve. But you've seen a lot more upside on the front end of the curve, which is why you're seeing that flattening. So if you see the hotter inflation data, and if you see things like the NFIB survey, which we also get this week, show some improvement, that could be another reason why we see that back end back up.
This week is not just about the data, it's also about supply, IPOs. SpaceX very much on the horizon. We've seen an upsize capital raise from Alphabet. The FT reporting on Friday that Meta's considering doing something similar. That contributed to this move. Corporate America is telling you it's a good time to sell equity. Why is it a good time for investors to buy it?
Yeah, well, they're telling you it's a good time that they need more money in order to fund this AI CapEx. And this whole bull market is built on the idea that the Mag 7 would take their incredible, formerly very strong balance sheets and use them to fund this massive CapEx spending. And the question is, how do we get to that next leg higher? We've already gone from expecting 10% growth in AI revenue or AI CapEx spending this time last year to up to 80% growth for this year. People are expecting that now to go from $1 trillion up to $1.2 trillion. To fund that gap, you need more capital. And what this could be a sign is that maybe we're running a little bit long and thinking that maybe we can't turn to debt markets as much. And so it certainly suggests that in order for this to keep running, you have to have a continued bull market, which just means that there's so much pressure for the AI CapEx to continue to deliver.
We spoke about this last time you were on. Where are people taking capital from to then make sure they can get in on these IPOs?
I mean, it certainly seems to be in areas of other risk assets. People have been thinking maybe that's where some of the selling pressure is coming from, things like Bitcoin, in order to make room for it. But we still come back to the point that there are a lot of investors that don't have a choice in order to make room for some of these names and these IPOs, simply because they're being forced into indices at a much more rapid pace. I think the turn last week, though, from S&P 500, S&P Global, of effectively saying that they are not going to relax their profitability rule, was a very important potential sentiment shift in how quickly these things could be included in that big index. But I think at the end of the day, that's a really good thing for index investors when we think about long-term quality.
Let's bring up Bitcoin. Cam, you mentioned Bitcoin. Bitcoin took out the lows of the year in Friday's session, down 50% from the start of October. We caught up with Lisa Shallard of Morgan Stanley recently. You asked the question about whether we're seeing signs of things tightening up a little bit. Bitcoin is a liquidity-oriented asset. When financial conditions are beginning to tighten, it falls back. Over the next 12 to 18 months, Lisa's words, as everyone is issuing debt, as everyone is issuing stock, we're going to start to see things tighten up here. Would you expect to see further signs of that in the year ahead?
Yeah, I think the most interesting thing over the course of the last, let's call it 9 months, is that Bitcoin has completely sat out on this risk rally. So if we think about the cohort of things that typically go together in liquidity sensitive areas, it's the least profitable companies, it's the most speculative parts of the market, and Bitcoin. But you've seen Bitcoin sit out on the speculative rally, but you have things like a 60% rally in unprofitable tech over the course of the last 2 months. So the question would be, is Bitcoin effectively a harbinger of things to come for those other speculative parts of the market? And certainly we're starting to see that unwind on Friday as we saw a lot of that beta and momentum come out of the market.
Cam, going to stick with us. I'm happy to say through the air. Cameron Dawson there of New Edge Wealth. Let's get you an update on news worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Good morning, John. Thank you. President Donald Trump demanding that Iran and Israel stop shooting immediately. Trump reiterating his demand in a Truth Social this morning after the two countries exchanged missile strikes overnight. It's one of the most serious tests of the ceasefire that took effect 2 months ago. NVIDIA and SK Hynix are collaborating on designing future generations of memory chips for AI. The announcement comes as NVIDIA CEO Jensen Huang visits Seoul for meetings with his company's Korean partners. If you want to go to Game 3 of the NBA Finals tonight, it's going to cost you. The average price for a ticket, about $8,000. Anne-Marie asked President Trump what he thought of the sky-high prices.
Well, I know, but they can watch it on television. It's sort of semi-free to watch it on television, but that's the way life goes.
Trump will be at Madison Square Garden tonight for tonight's game. Watch parties outside the garden have been cancelled for security reasons. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate the update. Watch parties are cancelled outside MSG. You've got to arrive 2 hours early if you can afford the tickets. I wonder what kind of reception the president might get a little bit later this evening.
You can't bring your bags in after you maybe spent $8, $10, or if you're maybe a little crazy, $250,000 on a ticket to go watch the Knicks play. I don't know. I think it's going to be a mixed reception. I've been to the Yankee game with the president. It was a mixed reception. I think this could potentially be a bit similar.
Looking forward to the game a little bit later this evening. Up next on the program, we'll catch up with the latest in the Middle East, the president's red line.
We have the ultimate blockade. I don't consider that a war. My red line would be if I think I wasn't going to make a deal or if I wasn't going to make a deal fast enough.
John Lieber of Eurasia Group joins us next, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Coming up this week, absolutely stacked with economic data and a big event coming up later this week. CPI dropping on Wednesday. Look out for that. The final read on inflation going into the Fed's next meeting. The Fed's next meeting, Chair Walsh's first meeting. On Thursday, we should price an IPO that's basically already priced. Heading into Friday, where SpaceX is set to begin trading. A week ago, we'd say, what a time for an IPO. Stocks are buoyant, record highs, 9-week winner streak up 20% from the lows. What a difference a day makes. Friday's sell-off, and all of a sudden we start to think about maybe the window's closing for these mega IPOs.
As we just heard from Cameron, potentially, what does it mean if we get very hot inflation before the SpaceX IPO? Does that also put another pressure point on financial markets, because people are going to have to price in, wow, maybe the Fed really does need to hike rates if we have officially a 4 handle on inflation.
Futures bouncing back this morning, up a third on the S&P 500. Friday, pretty dreadful for tech names. The semis have absolutely ripped off the lows of March. They fell back down to earth, down about 10% in a single session. This morning on the Nasdaq up by 0.7. Anne-Marie mentioned the tension in the bond market. Let's talk about it. 10s with the first close above 450 in about 2 weeks. 456 this morning and up another 3 basis points. New high for the year on a 2-year, 417. And much of the move more recently had nothing to do with energy. Now this morning it does. Crude, Brent, WTI pushing higher by 4%. Brent crude 96.85. Under surveillance this morning, the president's red line.
We have the ultimate blockade. I don't consider that a war. My red line would be if I think I wasn't going to make a deal or if I wasn't going to make a deal fast enough. So we're having very good negotiations with the people that are leading the country now. We'll either have something done fairly quickly or we'll finish it out militarily.
So here's the latest this morning. Israel retaliating against Iranian missile strikes, defying President Trump's request for restraint. The president telling the Financial Times that Israel will have to accept any deal between Washington and Tehran because he, quote, calls all the shots. Bloomberg's Tyler Kendall joins us now for more. Tyler, did the president call the shots over the weekend?
Well, John, at this point, it doesn't appear that he was able to keep a lid on the fighting, as this White House and President Trump have directly said that they do not want to see this renewed escalation because it could risk a diplomatic deal. In fact, Axios had reported that President Trump asked Israeli Prime Minister Benjamin Netanyahu directly to hold off on retaliation in a bid to give diplomacy more time. And of course, as the White House faces domestic pressure to get an end to this conflict, but that didn't happen. And the president also went on in that NBC News interview to say that he wants Israel to be, quote, more surgical in its response to the Iranian-backed militant group Hezbollah, because as you well know, Iran has long maintained at this point that a ceasefire in Lebanon needs to be rolled into any broader U.S.-Iran deal, though both sides have said that that operation against the militant group is a separate front. But at this point, it's becoming a huge sticking point in these ongoing negotiations, though we should say that Israel and Lebanon did reach an extended ceasefire agreement just last week, though Hezbollah rejected the terms. But at this point, it's really putting this focus point on how Iran's support of proxy militia groups, not just Hezbollah, but now also the Iranian-backed Houthis in Yemen, could risk derailing a deal. John, new this morning, we got a statement out of this militia group saying that they are going to declare a ban on all Israeli ships in the Red Sea. The statement didn't go so far as to say that this would extend to all commercial shipping, though it does risk derailing this key bypass route when it comes to the Strait of Hormuz, just further complicating these ongoing negotiations.
Tyler Kendall down in Washington, D.C. Tyler, thank you. We'll catch up with Tyler in the next hour. To build on the conversation, John Lieber of Eurasia Group joins us now for more. John, welcome to the program. The president looks committed to de-escalation. Israel and Iran do not. Where does that leave the president's position?
He's in a tough spot for sure. And, you know, like you said, he told Netanyahu not to fire, and he did. Prime Minister Netanyahu's under quite a bit of pressure domestically in order to show that he's not Trump's puppet and that he can continue to stand up to the Iranians, which is going to make him more and more difficult to control as Trump is asking for de-escalation. Now, I think that the two relevant things that happened this morning were, one, the Iranians threatening regional energy infrastructure, which suggests a complete collapse of the ceasefire if that happens, because it would bring the other Gulf partners back into the battle. And then two is the fact that the Houthis are now in this war in a way they haven't been in the past. They've largely sat this out. They're now saying they're going to target Israeli ships through the region. As Tyler said, that doesn't mean they're targeting all ships, but the fact is that they're now, the war is, I think, on the verge of threatening to expand, and Trump has to scramble hard in order to keep that from happening. And it's unclear if he has the ability to sway Netanyahu or have any sway in Iran either.
Do you think the United States has to come in at this point? Do you think this is a red line for them in terms of the ceasefire?
Come in militarily? No,
Yes.
I don't think so. I think that I think the U.S. wants to stay out of this. The U.S. is positioned to continue this fight. They've got still assets in the region, and we think it's possible that this ceasefire collapses altogether and the U.S. and Iran go back to fighting. But with exchange of missiles between just Israel and Iran, if it stays that way, I think the U.S. can stay out of it. It becomes more problematic if the Iranians start targeting Gulf energy infrastructure. And in their statement this morning, what they said was that any attacks that happen are ultimately the responsibility of the United States. So they know that the channel to bring the U.S. back into this is through those energy infrastructure attacks. But in the meantime, if this just remains between Israel and Iran, I think that's sustainable for the U.S., at least for a short period of time.
Well, Iran warned that the U.S. is the one that bears responsibility for Israel's actions. So where does this leave the talks right now? Have they just completely collapsed?
No, I don't think they've completely collapsed. I think we have to see what happens if the missiles stop flying today or not. I would expect that they do. Trump is very incentivized to get a deal. What we've been hearing over the weekend was that a deal is ever closer. Now, of course, we've been hearing that for weeks, And there's been very incremental progress made on this deal coming together. But I do think that they are getting closer. And ultimately, that's what President Trump wants, because a return to the U.S. engaging in the war is essentially driving into a box canyon they can't really get out of, given the Iranian missile capacity.
How serious is this complete and total ban on Israeli shipping in the Red Sea, given that this has been such an important offset for Saudi Arabia's shipping of oil? Is this something that we could see cascade into even higher prices?
It could. The fact that they're only talking about Israeli shipping right now and not all shipping, so the Saudis still seem to have a free pass, I think is a positive sign. The Houthis have been staying out of this, we think, largely at the behest of some of the Saudis and others in the region. That probably continues, and the fact that this escalation is so relatively measured, I think means that this isn't a tipping point into threatening the rest of the shipping lane yet. But of course, shipping is still significantly down from where it was, pre-October 7th.
Let's deal with that word yet. Cam's taken us on to the right question, I think. Anne-Marie mentioned at the moment she walked into the studio this morning, the Red Sea and the Houthis. John, what is stopping them? What does Saudi Arabia have over them right now? Because there's no love lost between those two.
I think it might just be bags of cash. I mean, I think that the Saudis have been very aggressive about keeping the Saudis on their side and keeping them out of this. And the Houthis are weakened, just like every other Iranian proxy group. Iran has not had the ability to support Hezbollah the way they used to, and they don't have the ability to support the Houthis either. And I think that gives the Saudis an opportunity to pay them off essentially and say, don't come into this. We don't. This is not your war, and we can help you if you need it. And I think that's what's going on.
But they are taking baby steps in declaring a total ban of Israeli maritime navigation. If we were to see the Bab el-Mandeb Strait become closed, John, what kind of response could we see from this White House? Because that would be the second choke point closed in the Gulf.
Yeah, great question. I think that ultimately they blame this on the Iranians. If that happens, that could be the thing that brings the U.S. back into the conflict because of its effect on the Gulf shippers, who are the ones who are asking the U.S. to stay out of this and asking for de-escalation right now. But that would put us in a totally different trajectory. And again, we're not there yet. So I think that it is a meaningful sign that the Houthis are now reacting to the latest volley of Israeli attacks when they didn't do anything earlier. So something's changed. I'm not sure we know what yet.
John, appreciate the update. Thank you, sir. John Lieber there of Eurasia Group. The Israelis striking Lebanon, Iran supporting their proxies. Ultimately, the president turning around and saying, don't strike back, and then Israel doing just that. Getting a little messier as the days go by.
And it's even getting messier this morning. The president, 5:36 a.m., he's up. Israel and Iran must immediately stop, quote, shooting, says the president. And now you see these baby steps of the Houthis getting involved, just when it comes to Israeli maritime shipping. But the next question is, well, when does this expand beyond that?
Cam, just quickly, is this starting to become a market event again? It's kind of off to the side for a number of months. Yeah. Is it back on the center table again?
I think the price that matters for markets is the average gasoline price, and it's come down over the course of the last couple of weeks, but given this move higher in oil prices, it's likely to climb higher. We're exiting the shoulder season, going into peak driving season, and this is when it becomes a bigger political issue, potentially bigger economic data issue, and then potentially an even bigger earnings issue.
It will certainly be an inflation issue later this week. CPI dropping on Wednesday. Looking at the bond market this morning, yields are higher off the back of this move in energy. WTI at 95, Brent crude, let's round it up to 97. The chip stocks and equity futures are bouncing back. Coming up, we'll catch up with Frank Lee of HSBC as NVIDIA's Jensen Huang suggests buying the dip following a 10% decline on the semis in Friday's session alone. From New York City, you're watching Bloomberg TV.
Primer is back. We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Equities this morning bounced by 0.3% on the S&P 500 after snapping a 9-week winning streak. We had not seen a weekly loss since the month of March, and since then, we've rallied about 20% off the lows going into Friday's big declines. Looking at the Nasdaq this morning, higher by 0.6%. Big bounce for that particular index, the worst day for that particular index since the Liberation Week mess of last April. For the semis, the worst day going back to 2020. The semis down by something like 10%. This morning, here's your bounce across several single names, NVIDIA included. NVIDIA this morning up by 1.7%. Broadcom up by 1.5%. In the bond market biting as well. Yields higher across the curve once again this morning, up by 2 on 2s to 417, up by 3 on 10s to 456. Jobs came in hot, much hotter than expected going into CPI later this week. Inflation dropping on Wednesday, and the rate hike bets are building. And this move's encouraging here. Crude was actually down for a couple of sessions last week. Energy wasn't a big factor in the backup in yields. It was all about the data. This morning, though, it contributes to the move, up by 4% on Brent, 97. WTI, 94.50.
And you certainly don't want to see oil prices going up as we head into peak driving season, as Cameron was talking about. It's interesting because the AAA national average is $4.16. It's actually been coming down closer to $4, where a lot of people thought by this time we'd be at $5 a gallon across continental United States. The inflation data this week is going to be so telling and so important because already, as you mentioned, going into it, we have the market already pricing in a hike this year.
Kevin Walsh, box office next Wednesday. You've got to put out some forecasts, change the guidance on day one, your first meeting at the Federal Reserve. On our radar this morning, Israel striking back after Tehran's missile attack over the weekend. It's their first direct exchange of fire since April. The IDF saying it hit targets across the country. Iran reporting explosions in the capital. Elsewhere, Marvell shares are rallying, with the chipmaker set to join the S&P 500. The company blowing past estimates in the latest earnings report. Marvell starts trading on the index later this month. And finally, the president heading to Madison Square Garden for the NBA Finals. The president telling Anne-Marie he's unfazed by sky-high ticket prices.
The cheapest price for the Game 3 you're going to is $8,000. Everyday Americans can't afford these sporting events.
Well, I know, but they can watch it on television. It's sort of semi-free to watch it on television, but that's the way life goes.
The president says that's the way life goes heading into this mess. The NYPD cancelling watch parties outside of the arena as a safety precaution, and also telling guests to get there 2 hours early before the game.
2 hours early, don't bring a bag. I think the watch parties is really going to annoy Knicks fans. They've been having parties all weekend in preparation for Monday, Game 3. They are so excited. One thing that would be helping the president is to get in now. I see a 5 handle on StubHub, so it's not the 8 that I saw on Friday.
5,000, just to be clear for people.
Yes, 5,000. Here is the issue. I understand the president's point. The Knicks are kind of idiosyncratic. They haven't been in the finals since the 90s.
Sure.
It's the one New York basketball team, kind of. I mean, the Nets, come on. But it's not just the Knicks. If you look at the average price for World Cup tickets, they're $1,000. The median take-home for an American worker a week is $1,000. Who is affording a family to go out at these sporting events? And I don't think that's the message you want in the midterm elections. That's the way life goes, tough tarts. I'm not sure that's going to land.
The optics aren't great, and I think we understand the context for a lot of this conversation. You look at where energy prices are right now, people are getting squeezed. Cam, you look at where consumer confidence is right now, rock bottom. This has been accumulating for a long, long time. How squeezed is this consumer in America?
Yeah, we talk about tank bottoms when it comes to oil prices. I think we should be talking about tank bottoms for the consumer as well, because you're now in a point where you have real incomes turning negative because wage growth has been subdued. It's running at about 3.8% on a nominal basis, but with inflation moving higher, you're effectively at this point where consumers are continuing to lose purchasing power. Now, they've been dipping into savings, but that's only made possible by the really strong bull market. You typically see lower savings rate as household net worth goes higher. So if you continue to see volatility within equity markets, you effectively have a consumer, both the top and the bottom part of the K, that could hit a wall.
Time is not great. We got rate cuts going into the last election. We might get a conversation about rate hikes going into the midterms later this year.
And how political is the president going to feel if his own pick, Kevin Warsh, actually hikes rates at that October meeting? You know what I was thinking about, Jonathan, as you were talking about how challenging it's going to be for Kevin Warsh? More than ever now, I think he decides to not put a dot anywhere on the plot when it comes to his first meeting, because it's just too challenging.
Let's see if that's the case. That could make headlines. The latest from the president, the comments just dropping. This coming from President Trump just moments ago. Both sides, Israel and Iran, are looking to do an immediate ceasefire. Final negotiations on peace are proceeding, subject to ignorance or stupidity getting in the way. The blockade will remain in place and in full force and effect until a final deal is reached. The president saying things should move quickly. As those headlines drop, and we've got no idea what's behind them and what isn't this morning, but futures on the S&P 500 just taking another leg higher on the S&P up by 0.4%, and commodities just coming off session highs. Brent and WTI down to 94, Brent approaching 96.
The president is trying to inject some optimism this morning. A lot of people are saying because we've seen Iran with these ballistic missiles at Israel, we saw them talk a lot about rhetoric on how Hezbollah, Lebanon needs to be included in the ceasefire, but never actually take that action. It seems like the president with these comments is trying to hold on to that ceasefire and tell everyone, no, he is committed to having this end. As he was talking about at this event I was with him on Friday, he said it's either going to end with a piece of paper or a much harder decision to make, which would basically be more kinetic warfare. He seems to be committed right now to ending it at the diplomatic table with a piece of paper.
Cam, you're in the market. How frustrating is this? You see a headline like that. Do you believe that's actually happening, or is that just a communication tool for financial markets?
I mean, we've always been saying it's impossible to trade a taco, and it just seems like we have this constant put under the market, whether it's coming from buying individual companies or effectively backing off from the most rhetoric when it comes to the war. So it's really hard to fight, and it's really hard to predict, which just suggests keeping that long-term perspective, as unsatisfying as that answer is.
Well, futures bounced this morning, up by 0.4% on the S&P. Tech stocks looking for a bounce also following their worst day for chip stocks since 2020. The NVIDIA boss, Jensen Huang, calling the sell-off a buying opportunity.
With respect to the stock price, everybody should be very excited. They can now buy stock at a cheaper price. And it's absolutely true that the future of AI is very bright.
Frank Lee of HSBC still maintaining a bullish stance with buy ratings on NVIDIA, Broadcom and Intel. He joins us now for more. Frank, welcome to the program. Are you excited following Friday's losses?
Yeah, I mean, I think it was actually, like Jensen highlighted, an opportunity for a lot of people that missed this rally, because we've seen a very strong rally since March. And I think at the end of the day, for people who've been regretting it, this is an opportunity. But, just to bear in mind, I think, every few months or so, you always see this skittishness around AI. We've seen after the last 2 or 3 years. And I think this is another example of that in terms of that skittishness, in terms of, markets run ahead of itself. And I think, there's nothing structurally or fundamentally that we see any problems. If anything, I would say, the proof of concept of AI, as in terms of being used is even stronger than ever.
Well, Frank, let's get into some of that. So I wonder how much of it is about technicals. Clearly very, very stretched, and a lot of people pointing to that. But let's talk about some of the fundamentals right now. Broadcom clearly fell short of expectations. I think that tells you something about how the story is priced. And you can give me your opinion on that in just a moment. But then for the whole complex at the moment, what we've witnessed, for many at least, is a monster wealth transfer from very rich hyperscalers to chip players. And what we've seen more recently, particularly on Friday, the likes of Meta in the Financial Times reportedly considering an equity capital raise and the market pushing back. Frank, to me at least, that's the market, early signs, pushing back against all this spending that the chip stocks have benefited from, Frank. Can we get into those fundamentals?
Yeah, sure. I think to your earlier point about Broadcom and the big sell-off, I think at the end of the day, the market has gotten so used to just beat and raise, not just for the quarter, but in terms of a bigger and bigger TAM in terms of the backlog. So I think one of the reasons the market was disappointed is that they had expected the Hock Tan to raise his backlog order even more significantly for next year, which he didn't, which I don't think he really did on this call. That's not to say that there's not upside going forward, but he just didn't continue to raise that bar. And I think the market had gotten so used to raising the bar on the TAM, and that's been what's driving the stock price more than natural earnings. Is just a TAM opportunity. And I think, that's something that we still believe that the fundamental direction is there. And we still think that earnings will still have to go up. It's just that there's going to be a pause before these managements continue to raise that TAM again. And I think that's what we're seeing right now.
Frank, me and my colleague, Jennifer DeLuy, were talking to the president on Friday about this idea of the U.S. taking equity stakes in these AI companies. And the president said there are concepts where pieces could be given to the American public. What do you make of this?
Yeah, I mean, it's certainly very unusual because that means that, you have government interest in this. If you look at, what so far one of the early examples is the direct stake they have in Intel. It looks to be a brilliant move in retrospect, given how much the stock has gone up. But it does feed on momentum, right? Since the investment by the U.S. government in Intel, you continue to see a lot more positive news on Intel's businesses and clients more willing to engage. And of course, they've run into this fortuitous opportunity where agentic AI and CPU demand has created shortages. But it does, I think, give the market some confidence that they'll continue to see long-term strength and opportunities because of government backing.
Frank, so much of the upside in the earnings for semiconductors this year has been driven by the margin expansion, specifically gross margin expansion at the memory players. You have Micron now at an 80% gross margin. That's historically high, but also historically mean reverting. How cyclical are these margins now?
Yeah, so this is probably one of the biggest debates, especially among tech analysts, is the memory sector moving away from that cyclicality and becoming more of a structural story? If you look at memory in the last couple of decades, every time the memory prices hit a certain point, demand basically self-corrects because of elasticity. But that's because historically, a lot of the memory has been used in consumer products, your smartphones and PCs. This cycle is somewhat different because, even though we've seen significant increases in memory, it's not a consumer-driven cycle. It's been basically driven by infrastructure, CapEx. And so that seems to have a much higher tolerance than on the consumer side.
Frank Lee of HSBC. Frank, appreciate the time. I know it's late into your evening over in Asia. Thank you, sir. Appreciate it. Cam, you asked the question, I think.
Yeah.
How cyclical are some of these stories?
Yeah, I think that they do remain very cyclical names, but we happen to be in the mother of all super cycles, which is allowing them to remain at very high profitability for longer. I think I was looking at the Russell 1000 value. Guess what the largest weight in it now is? Micron. So we've now all become very exposed to all just one trade, and there really is nowhere to hide from it.
I mentioned the pushback to the likes of Meta, the big spenders that the chip stocks have benefited from. Do you think that's the start of something bigger?
Well, what we've seen is this huge divergence between the earnings growth and the free cash flow generation. If you look at names like a Meta, over the last 2 years, you've seen earnings growth between 50, 70%, but free cash flow generation down 80%, 90%, the likes of Amazon, 100%. This is why they're having to tap debt markets. This is why they're having to tap equity markets. And the question is that sustainable? Will investors continue to look and say that's a good use of your capital? Maybe one place to watch as we see with SpaceX that they're leasing out their data centers to Anthropic, and they're leasing them in a way that they could get an 18-month payback. But the question is, are these companies now just turning into mega huge data center kind of REITs, and what valuation should we put on those names?
Nasdaq futures this morning bouncing back by 0.75%. Let's get you an update on stories worldwide this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thank you. Chinese President Xi Jinping is heading to North Korea today. It's his first trip there in 7 years. Analysts say he wants to reassert Beijing's influence over Kim Jong-un as the North Korean leader rapidly expands his nuclear arsenal and deepens his alliance with Russia. Shares of Monte Paschi are surging after Intesa offered to buy the bank for $35 billion. A takeover would create one of Europe's most valuable banks and boost Intesa as a leader in the Italian market. Intesa's offer comes a day after Banco BPM pitched a merger of equals with Monte Paschi. United Airlines CEO Scott Kirby says U.S. demand and capacity still strong. He spoke to Lisa at the IATA conference in Rio de Janeiro.
Time will tell. It depends on what's happening with the economy, what happens with oil prices. But I feel pretty good about where we are right now. We feel pretty good about where the demand environment is, and the consumer's been resilient even with fares, up.
Kirby also said affluent travelers continue to spend on air travel despite a sharp increase in fares. Coming up at 7:30 Eastern, Lisa will be speaking to the COO of Southwest Airlines. And that is your Bloomberg Brief. John.
Vonnie, thank you. Thank you for the update. Who came up with that one? Airline conference. Where should we go? Rio. Let's make that happen.
It's pretty nice, no?
Bramo gets to go to Rio.
And so does Guy Johnson. I saw him earlier, waking up very early to do a bit into his programming in Europe. Yeah, it's pretty good. It's a good gig.
It's a good gig. Bramo's sending me tourist shots over the weekend. Good for Bramo. Not jealous at all. Up next on the program, call in for rate cuts.
There's no reason to raise interest rates. I would like to see rates get lower because we could build this into the greatest machine that the world has ever seen.
The president calling for cuts, the market pricing in hikes. Colin Martin of Schwab joins us next.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The term for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, the network, etc. If, for example, you are not particularly favored in the majority, passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Stocks this morning bouncing back by a third of 1% on the S&P, on the Nasdaq up by 0.7, on the Russell up by 0.8. In the bond market, 2s, 10s, 30s, yields pushing higher again following Friday's sell-off. Yields off the session highs because we're seeing this move unwind just a bit on crude, on WTI and Brent. Had a bounce this morning, taking some of that bounce back. We're up by 3.6% now on Brent, up by more than 4 moments ago. After these comments from the president out on social media, the following post, both sides, Israel and Iran, are looking to do an immediate ceasefire. Now, we haven't heard from either Israel or Iran on that particular issue, but we're hearing it from the president.
Haven't heard from either of these individuals in terms of if they will stop what the president called quote-unquote shooting. We did see ballistic missiles from Iran go over to Israel, something we have not seen. They've talked about how this is in response what Israel did when it comes to Lebanon and Hezbollah. The president is, what I feel, hanging on, desperately hanging on to the idea of this ceasefire and wants this to end at the negotiating table with a piece of paper.
Energy up, yields up, a market pricing in rate hikes under surveillance this morning. The president calling for rate cuts.
Nowadays, when you have good reports, the market goes down because they think they're going to raise interest rates. There's no reason to raise interest rates. I would like to see rates get lower because we could build this into the greatest machine that the world has ever seen. But you can't do that when everybody immediately raises interest rates.
So here's the latest this morning. The president pushing back on rate hike bets, with traders pricing in a quarter-point hike by the end of the year. Colin Martin of Schwab writing, inflation remains sticky. Our base case is that the Fed remains on an extended pause. Colin joins us now for more. Colin, good morning.
Morning.
How high is that bar for rate hikes of this Federal Reserve?
It's getting lower. We've been saying it's a pretty high bar for the past handful of months now. With last Friday's labor market report, the bar keeps coming down. But we're acknowledging that things are moving very fast. There's a lot of uncertainty right now. If we look at it strictly in a vacuum, the case can be made for a hike right now. We have inflation that's been high for 5 years and counting and moving in the wrong direction, and a labor market that, at least for the time being, has shifted maybe from stabilizing to strengthening. That's the good news. But the outlook is very uncertain. I mean, you were just talking about the potential de-escalation in the Middle East. That's a major wild card. We have Warsh coming in. How open to rate hikes will he be? So rather than bouncing around too much, we're focusing on an extended pause right now. We're acknowledging that the probability or likelihood of a hike has risen, but we want to see how the next few months play out.
Well, before you get a hike, you need a hawkish bias, and we don't have one of those. We have an easing bias. And next Wednesday, at his first meeting, we're expecting him to slip into neutral. Not a hawkish bias, but neutral. Some people might be pushing back against that. Do you think there will be some on the committee next Wednesday that will push for a so-called hawkish bias?
Maybe, but there's been a lot of comments we've heard from officials over the past few weeks, and Beth Hammack last week, I think, had some neutral comments where she said right now things are okay, but maybe we'll have to, shift. I'm probably butchering her actual quote, but the idea that the direction is moving to hikes, but we don't need to do anything right now. She's been one of the more vocal hawks. She was the one who dissented the last meeting. So I think that's a nice, reasonable approach. But if we continue to see the conflict go on, which is inflationary, and if we see this labor market strength continue, I think that shift to neutral could become a shift to hawkish, but I wouldn't expect that next week.
Well, do you think anyone next week is going to say we should have a hike at that meeting?
I don't think so. But I think there will be some that are clearly moving in that direction. But given the idea that if we shift the easing bias, knowing that that was what a bunch of the dissenters were focusing on last time, and they at least shift to neutral, acknowledge that there's two-sided risks, including those hawkish risks, I don't know if we'll necessarily see a dissent.
I'm not trying to be cute. Does Kevin Warsh decide not to put a dot on the plot?
He might. I mean, he's been pretty clear about his views about the dot plot. I mean, even Powell himself, I was about to say Fed Chair Powell, former Fed Chair Powell.
Now Governor Powell.
It's been so ingrained in what we say.
I've seen a few people make that mistake in notes by accident.
So Governor Powell, at his last press conference, acknowledged that this is a discussion that committee members have had. So I think there are some, including Warsh, that maybe aren't too happy with how that goes. They acknowledge the uncertainty, and he said they just haven't come up with a better resolution. So it's possible he doesn't throw that out there because he knows, or he's been pretty clear about the downsides to that dot plot.
We now have a 2-year yield that's 40 basis points above the Fed funds rate. We always think of George Soros saying the bond market never lies. What would have to happen with the economic data to make that 2-year yield not lie?
Sure, not lie. Well, let's see. We need, I think, a de-escalation in the Middle East. I think we need to see the hit to oil prices start to show up in the data. Right now, it's not happening. We talk about the savings rate coming down. We talk about and the potential hit to higher gas prices. We're not seeing it right now. I think for a hike to happen, we need to see inflation to continue the recent trend. We used to, if you asked me 2 months ago, I'd say reaccelerate. Right now, probably just continue the trend, and the labor markets continue to strengthen. We're getting a little bit closer to that right now. But I don't think we're at a full-fledged hiking cycle. I think we're looking at 1 or 2, and we're seeing where that 2-year Treasury yield is right now. I think it is getting a little ahead of itself. But I do think a lot of it plays out with the Middle East. It sounds like it's a cop-out, but I think that does matter in terms of how high do oil prices stay and for how long, and is there a hit to consumer spending? So far, not so much, because AI and CapEx have been a key driver. But I think we're going to have to see how that plays out, especially into the summer season.
Let's just build on Cam's line of questioning. So we're talking about the difference between the policy rate and twos. Twos have come up, that's steepened. The interesting piece of this, you look further out, twos out to tens, that piece of the curve, flattening.
Yeah.
What do you think that speaks to?
I actually am a little bit confused about that because we don't expect a full hiking cycle coming up anytime soon. So I think short-term yields have probably gotten a little bit ahead of themselves. We do see more upside risk with long-term yields. So I wouldn't be surprised for a steeper curve right now, given inflation, given uncertainty. The term premium is something that we're looking at a lot right now. Inflation is not just high; it's uncertain. With Warsh as the Fed chair, use of the balance sheet is probably behind us. So I'm actually surprised that the 10-year has actually been somewhat well behaved, and I would expect a steeper yield
So you
curve.
don't want 10s here, you don't like them at 4.55?
Not yet. We're not saying now is the time to be adding duration.
Colin, it's good to see you. Thank you, sir. Colin Martin there at Schwab. Can we get the final word? Where are you on the bond market further out along the curve?
We've just been thinking that the 10-year would be stuck in a range where if you got to the high end of the range, you should be a buyer of duration as a hedge against weaker growth. And if you got to the low end of the range, you should either sell or sit on your hands.
What did you do this morning?
Well, we were nibbling at duration as yields backed up higher back a couple of weeks ago. And so certainly if you do continue to see yields press higher, we think it is a good hedge against weaker growth. Most as we go into the summer, where the last 2 summers we've had weaker growth, weaker economic surprises, and big bond rallies.
And then cut rates 3 times into year end. As simple as that. 4.55 this morning, yields up by 2 basis points. Cameron, good to see you. Thanks for this morning. Thank you. Cameron Dawson there of New Edge Wealth. Coming up next, we'll catch up with Chris Harvey of CIBC, the former US Defense Secretary Mark Esper, Southwest Airlines COO Andrew Watterson, with Bramo in Brazil of all places, plus Erica Nigerian of UBS. The second hour of Bloomberg Surveillance just around the corner.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
The labor market is continuing to hum along quite well.
Job growth in what fuels our economy is always a good thing.
The rates market sort of sniffing out, is monetary policy actually accommodative?
I think ultimately the next move will be a cut or two.
We're right on the precipice of pricing in a full hike.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The second hour of Bloomberg Surveillance starts right now, and your scores, the price action, looks like this. Equity futures bouncing back from the biggest one-day loss of the year so far. The S&P up 1/3 on the NASDAQ, up by 0.7. The first weekly loss on the S&P 500 since the month of March. What a run. In the bond market, yields higher across the curve. 2s up by a single basis point, 10s up by 2 to 455 and 416 respectively, driven this morning by a bounce in energy. On Brent, on WTI, crude looks like this morning, up by 3%, 96 on Brent, 93 on WTI, call it 94, heading into inflation data a little bit later this week.
Because we've seen fresh attacks from Israel and Iran at each other, and the Houthis as well, coming in and saying they are going to get involved, at least when it comes to maritime shipping, when it comes to Israeli vessels. The president clearly is trying his best to hang on to the ceasefire, at least rhetorically, in Truth Social this morning, saying both sides are looking to do an immediate ceasefire. He keeps talking about final negotiations, and you brought this up a million times. How many times have we been here with this president that we are almost at the precipice of a deal and then weeks and months go by? We are more than 100 days into this conflict.
On the face of things, it looks like the president attempting to manage the optics, because the optics this morning aren't great for the president. Over the weekend, Iran striking Israel, the president saying don't strike back, and Israel doing just that.
The president, according to the FT, said that Bibi won't have any choice. I call the shots. That's what the president told the Financial Times when it comes to Israel. I call the shots, quote, he doesn't call the shots, speaking of Netanyahu. Well, then Israel decided to fire back. And it looks like potentially this administration doesn't have control or doesn't have the same sort of push they can have with Israel the way maybe they did in the past.
In the world of tech, it's Jensen attempting to call the shots. Check out equity futures this morning. Across the board, we've got a bounce on the S&P, on the NASDAQ. I said the S&P, worst day of the year so far for the S&P 500. For the NASDAQ, you've got to go back to April of last year and all the stress and tension, all the jitters around the trade story of April 2025. For the semis, the worst single day's price action going back to 2020, a 10% decline. The NVIDIA boss saying this morning, you should be very happy because now you can buy at a discount.
Yep, everyone should be very excited, according to Jensen Huang. This is what he told reporters. He's actually in Seoul. He just did a deal with the SK Group. So he's saying if you have missed out on this massive AI bullish trade, now is your chance to get in. You should be happy. Basically, he's saying, Jonathan, buy the dip.
Well, here's the bounce. Forget the dip. Up a third of 1% on the S&P. Coming up this hour, we'll catch up with Chris Harvey of CIBC, with stocks looking to rebound from the latest AI-driven sell-off. We'll speak to the former U.S. Defense Secretary Mark Esper on fresh strikes between Israel and Iran, and the Southwest COO, Andrew Watterson, as surging fuel prices wound the airlines. We begin this hour with stocks bouncing back following a 9-week winning streak disturbed just Friday, by the biggest one-day loss that we've seen for the year so far. Chris Harvey of CIBC, recently raising his year-end price target on the S&P to 80.20, writes the following: there is still plenty of runway for the market, but that does not preclude aggressive near-term pullbacks. Chris joins us now for more. Chris, good morning. Good to see you.
Good morning.
80.20, where did these price targets come from? 7007, 80.20?
We get a little bit of ability to round, right? We were around 8,000s. 80-20, 80-20 rule, I can remember that. But at the end of the day, we were looking for 17% EPS growth, about a 22 multiple, and that's how we get there.
Fundamentals supportive. You mentioned the earnings. The earnings have been fantastic. Yeah. But anyone who's looked at the technicals have come on the program, and you would share this view, I'm sure. Right. Technicals have been really stretched. Is that what's squeezing us at the moment?
Listen, we had a great run, right? Friday or last week, we had real rates going higher. We had more hawkishness. We have a price hike in the marketplace. You're rolling into the weekend. We don't have anything solved in the Middle East. You're right. We keep hearing all these promises, but we don't have resolution. And people are worried that something bad could happen. And you have a little bit of a meltdown on Friday.
I'm going to borrow your phrase, sleeping on the macro. Yeah. That was a phrase you used at the start of the year, saying this market was too buoyant, bad things can happen. And they did for a moment, and you were right. And then you brought in a much more aggressive, constructive view on the stock market near the lows. Right. Now you look at the stock market now. Can we use your phrase again, sleeping on the macro? Are we sleeping on the macro?
No, I don't think we're sleeping on the macro. I think everyone has their eyes wide open about what can happen, right? What we're doing is we're trying to price in two really diametrically opposed views. One is, can oil go to 125, 150, right? Would the Fed start hiking rates? Or are we in the process of a melt-up where we get resolution in Iran? We can talk about not so much easing, but pricing out that hike. And we have M&A, we have IPOs, storied IPOs, we have incredibly strong fundamentals, and valuation, while not cheap, are not excessive like they were in the 90s.
You say in your note there's more room to run, but it's not free of risk.
No.
What for you are the biggest risks right now?
The biggest risks really are rates and what happens in the Middle East, right? If things get out of control and we're starting to look at 125 to 150 on oil, that's not good, right? And you were talking about it before. We feel like the administration feels like they have control, but then you see certain things where you're like, oh, I'm not entirely sure. So that's probably the biggest issue, and with rates going higher, that could be a big problem.
Well, in the Middle East, what if we just stay in this paralysis till the end of the year?
So we stay in this paralysis, but you start getting ships through the Strait of Hormuz, and we have all other alternatives, that's okay. But if we can't get ships through the Strait of Hormuz and we start to see that step up, that's the real problem.
There were two words that slipped out last week, and I haven't heard much follow-up on it since. The president said Labor Day September. And I just wonder where that came from. Why was the president talking about Labor Day as being the potential spot for these issues to be settled?
Because potentially they're thinking about and strategizing within the White House. Now, I'm just inferring here that it is going to take the entire summer to reach a negotiation and a deal with Iran, which would make sense if you know anything about the Iranian regime, whether or not it has been decimated and we're dealing with new individuals now. It is still the same regime, even though it's changed. It took 20 months to get the JCPOA done, 20 months. So we're talking about potentially a longer road ahead when it comes to this White House and Tehran.
Chris, where does it leave this Federal Reserve next week?
It leaves them in a tough spot. I don't think you're going to hear anything too unusual from Warsh. I don't think he can really go out there and make some strong statements. I think what he's going to do is he's just going to lay the groundwork for the new Fed. Here's what you should expect from communication. Here are the things that we're watching. Here are the things we're concerned about, and here are the things that we're not concerned about, and just really give you a template for the next couple of years.
They're looking to tighten things up, maybe, just in terms of their communication, not the actual policy, and that could happen next Wednesday. Before we get there, we've got a major IPO taking place this week.
We do.
We're pricing SpaceX, should start trading on Friday, and the market's starting to push back against the offering from Alphabet, push back against just the report that Meta might be considering doing something similar and raising equity capital. I asked Cameron Dawson this question in the last hour. I'd love your reaction to it. If corporate America, the very best C-suites on the planet, are telling you now is a good time to sell equity, why is it a good time for investors to buy it?
So it depends on your definition of equity, right? So you have a very broad equity market. There are always good valuations in the equity market. Does that mean that you should be buying the froth and speculation? No, that's not our thing. Are there lots of good risk rewards out there? Yeah, and you can find those in industrials, you can find them in consumer, you can find them in technology. And if you're looking longer term, there's still plenty of opportunities. But this is not the time to light your hair on fire.
Do you think this market can stomach the degree of supply that we could see on the equity side? And on the debt side, we've seen lots of that, but on the equity side in the year to come.
So, John, I always go back to 1998. 1998, you had Global Crossing and Level 3 come public, right? We had a pretty big pullback, but that was related to long-term capital. And then we had 99, where things continued to run until early 2000. So can you handle it? Yeah, you certainly can. And what I would also say is that in 99, 2000, you actually had a tightening cycle, and stocks still went higher. The NASDAQ during that tightening cycle was up 60%. So there is precedent for that.
But you don't think we're there yet?
No, we're not there yet. You have to have a couple things fall. We do need to have some better comfort level on what's happening in the Middle East, and that we can move forward with that. And right now, what we're seeing is, we're seeing a ton of really attractive M&A activity. We are seeing the IPOs. We'll see how they play out. The underlying fundamentals still strong, and consumer sentiment, while everyone wants to talk badly about the consumer's still holding up okay.
Well, the consumer's talking badly about the consumer sentiment, rock bottom at the moment, and doesn't seem to be improving anytime soon.
They're still spending, but they are definitely going into polls and surveys talking about how frustrated they are with higher prices, and you see that consistently.
I think we're all frustrated with talks in the Middle East right now. Chris Harvey of CIBC is going to stick with us through the hour, I'm happy to say. Chris, looking forward to catching up on more topics, including this one. The president, in the last hour, suggesting that both sides, and both sides being Israel and Iran, are looking to do an immediate ceasefire after seemingly losing control of the situation over the weekend, where Iran struck Israel. Israel was told not to strike back and did just that.
They did just that, which is why the president now is putting out this truth saying that they're going to do an immediate ceasefire. The issue is we need to hear from the Israeli government and the Iranian regime that actually they are signing up for the ceasefire, and they potentially means also that they're continuing these talks with the United States. Given the fact that we've had some pretty big escalations the past 24 hours, I would like to know where exactly we are right now in terms of negotiations between Washington and Tehran.
So crude bouncing this morning, but off-session highs following those comments from the president. We've still got WTI around 93, round it up to 94, and Brent crude around 96 this morning. Let's give you an update on news elsewhere with your Bloomberg brief. Let's cross over to Vonnie Quinn for more. Hey, Vonnie.
Hey, John, thank you. The U.S. Centers for Disease Control and Prevention says Africa's Ebola outbreak could become one of the largest ever if control measures fail to accelerate. The Democratic Republic of Congo on Friday reported cases jumping by 71 in a day, with 21 deaths recorded. JetBlue's CEO says travelers continue to pay for premium products as it prepares to roll out domestic first class. Lisa asked Joanna Garrity about consolidation plans at the IATA conference in Brazil.
Companies need to focus on their organic plan, and when we think about all the time we spent with Spirit trying to get that transaction done, we have a great plan. So you can obviously never say never as a publicly traded company, but we really need to be focused on getting JetBlue healthy again.
And coming up in about 20 minutes, 7:30 Eastern, Lisa will be speaking to the COO of Southwest Airlines. Apple's Worldwide Developers Conference kicking off today in Cupertino, California. The focus will be on the company's artificial intelligence strategy. The event comes 2 years after its first AI rollout was plagued by subpar technology and delayed features. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes' time. Up next on the program, the peace deal stalling.
We have the ultimate blockade. I don't consider that a war. My red line would be if I think I wasn't going to make a deal or if I wasn't going to make a deal fast enough.
Up next on the program, the former U.S. Defense Secretary, Mark Esper, live from New York City this morning. Good morning.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm election.
Hear it first on Bloomberg. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance. Let's just frame this stacked week coming up. Wednesday, CPI data, last read on inflation. Going into the Federal Reserve's next meeting, and Kevin Walsh's first as Fed chair. Look out for that. Look out for this. Should be pricing that SpaceX IPO later this week and trading on Friday, going into a market that got a bit jittery. This cut last Friday. Equity futures this morning looking to bounce. We're up across the board, near session highs now, up by 0.6% on the S&P, on the Nasdaq up by 1.2. In the bond market, yields were pushing higher, now up by just a basis point, not even at the front end of the curve, as crude comes way off session highs, up by just 2%, not even on WTI to 92, Brent crude to 95. Just a few comments from the president an hour or so ago, sparking this turnaround.
Yeah, that was about 41 minutes ago. I'm looking at his Truth Social account now. The last we've heard from the president, he's saying that Israel and Iran are looking to do an immediate ceasefire, all caps. He says final negotiations on peace are proceeding subject to ignorance or stupidity getting in its way. Clearly, this president is frustrated with what we've seen in the past 24 hours. And I think that was really highlighted in this phone call we had with the Financial Times, saying that he's the one that calls the shots. And then what did we see? We actually saw Israel decide to call their own shots and fire back at Iran.
Hard to claim he was calling the shots over the weekend. Futures this morning bouncing their session highs up by 0.6%. Under surveillance this morning, the peace deal stalling.
We have the ultimate blockade. I don't consider that a war. My red line would be if I think I wasn't going to make a deal or if I wasn't going to make a deal fast enough. So we're having very good negotiations with the people that are leading the country now. We'll either have something done fairly quickly or we'll finish it out militarily.
So here's the latest this morning. Israel disregarding warnings from Washington, retaliating against Iran overnight. The president calling for the nations to stop fighting, quote, immediately, telling the Financial Times that he calls all the shots, not Netanyahu. Talking to us now, Bloomberg's Tyler Kendall. She joins us from Washington. Tyler, good morning to you. The president suggesting we're close to some kind of ceasefire between Israel and Iran. What do the other sides say about the matter?
Well, John, at this point, we haven't gotten confirmation from Israel or Iran that they are working towards what President Trump called a, quote, immediate ceasefire, as the White House makes very clear that they are trying to maintain that diplomacy is still a viable option and route on the table. Because if anything, we've only seen escalation in the last 24 hours between Israel and Iran when it comes to Israel's front against the Iranian-backed militant group Hezbollah. Now, Iran has long maintained that a ceasefire must extend to this fighting, that is in Lebanon, but at this point, Israel has said that this is going to be a separate front, though we should point out that Israel and Lebanon did reach an agreement last week for an extended truce, but it was Hezbollah which rejected those terms and in part spurred this latest round of escalation. We're going to have to see where these potential negotiations do develop because, again, we haven't really gotten those indications that the White House's calls to de-escalate have been met. Amid reporting from Axios that President Trump directly asked Israeli Prime Minister Benjamin Netanyahu to hold off on retaliation, and President Trump saying publicly to NBC News that he wants to see Israel's attacks against Hezbollah be, quote, more surgical. One thing, though, John, that President Trump has made clear is that until there is a firmer deal in place, the U.S. isn't going to lift its own naval blockade, of course, leaving that threat of escalation on the table, and that has put commercial shipping and the threats there front and center. We should point out that earlier today we saw from the Iranian-backed militant group, the Houthis in Yemen, threatened that they will ban any Israeli ships in the Red Sea, which will just complicate all of these talks even further.
Tyler, appreciate the update. Tyler Kendall, as Tyler was speaking to us, we got this headline just crossing the Bloomberg terminal, the latest from Iran.
The IRGC is declaring an end of military operations against Israel. So this is just an example, potentially, what the president was talking about 40 minutes ago on Truth Social, saying we're very close to a ceasefire from the latest hostilities between Israel and Iran. Here we have the IRGC saying they are done in terms of their operation against Israel. That is good news right now.
That helps to bring down the temperature in the energy market. Yields off session highs as well. Equities taking another leg higher. Equity futures this morning high by 0.6%. The former Defense Secretary, Mark Esper, writing the following: the conflict is in a strategic stalemate with no clear path forward for negotiations. We're now over 100 days into a conflict that was only supposed to last 4 to 6 weeks. Mark joins us now for more. Mr. Secretary, welcome to the program. Let's talk about how much control the president has over Israel at the moment, given the events of the weekend.
Well, he does have some control over Israel with regard to, his relationship through Bibi Netanyahu. But keep in mind, the political dynamics in Israel and the United States are quite different. Both leaders have elections coming up in the fall. Netanyahu directly, the Knesset has an election. But he is fighting a war in which overwhelming numbers, 60 to 70% of the Israeli people, at least, support the conflict, certainly against Hezbollah in Lebanon, but also against Iran. And President Trump's numbers are flipped. So there are different political dynamics here at play. I also think there are different end states that are desired. Obviously, Israel wants regime change, and President Trump wants to get a deal that it says no nuclear weapons or a path to nuclear weapons for Iran. So in some ways, they're just on different paths right now.
Can we just talk about the latest hostilities of the past 48 hours? It doesn't seem like the ceasefire is fully broken. Do you think that these are just countries that are testing each other right now?
Well, first of all, I've been reluctant to say, for at least the last week or so, ceasefire. It seems to me it's more like a cessation or a suspension of major hostilities because, as you know, there have been missiles flying back and forth across the Persian Gulf, from the United States attacking Iranian coastal sites to the Iranians attacking Kuwait and Bahrain and other countries, and now the last 24 hours, this big flare-up with Israel. So, look, I think this is going to continue for a while. What's interesting to me as well is it seems like Iran is putting new things on the table with regard to negotiations, because now they're talking about wanting upfront $12 billion in unfrozen assets, maybe another 12 along the way. There's the threat, of course, of leveraging the Bab el-Mandeb. And we know that they've said, and as your reporter said just prior, that Iran is demanding a complete cessation of hostilities in Lebanon. And I'm not sure that Bibi Netanyahu can agree to that.
Well, and also, how can the president agree to that for Israel, given the fact that, according to the Financial Times, the president said he called the shots, and then Israel actually took their own step to have this response?
Sure. And look, the agreement between, over the last few days, between Lebanon and Israel, which does not include Hezbollah, was that Israel would not attack into southern Beirut, into the outskirts of Beirut, unless Hezbollah attacked into Israeli territory. And we know over the last 24 hours, Israel has alleged that that Hezbollah did send rockets or missiles into northern Israel. They were intercepted. But that's what prompted this latest round of exchanges between with Israel going into Beirut, and then, of course, Iran responding. So this is a big part of this is Iran trying to defend its proxy, Hezbollah, its longest, oldest, best proxy from elimination. And you have this dynamic at play, and they're not going to give that up easily.
As the former defense secretary, the president said in this Meet the Press interview when talking about troops, saying we have a lot of people there, quote, they're very safe. Do you think our troops in the Middle East are safe right now?
Well, you're always at some risk when you're in a combat zone. But I think in terms of the status of the war, and I'm confident in the ability of our commanders to take good defensive measures. I think they're in pretty good shape. But look, war is risky. Things happen. We know, unfortunately, we lost 13 service members already. That's 13 too many. And several hundred have been wounded. So we can't forget about that as well. So, look, it's not risk-free, but we're not in the hot war that we were 2.5 months ago, per se.
So do you think our troops right now are just there to set a deterrence when it comes to the Iranian regime?
Well, it's a combination of deterrence. It's you also are supporting your diplomatic efforts so that the Iranians know that we can back up whatever we say with military force, or if things break down, or if the Iranians lash out again, that we're there to back it up with military force. So there are a number of reasons why we're there. And, of course, for a long time, certainly during my period, we've kept over 40,000 troops in the Middle East, regardless of what was happening. So now we have a plus up there, mostly with regard to Air Force and Navy, and I suspect they will stay there for a while until this is resolved, which doesn't appear to get resolved, won't appear to get resolved anytime soon, frankly.
Mr. Secretary, when you are at the Pentagon, you go through a lot of scenario analysis, without a doubt, and I'm sure this was an event that you spent time on in the past. How does this play out in your mind, and what kind of preparation have we made for this enduring through the summer?
Well, I went through this scenario a few times, or at least this drill with the president in the Situation Room. I talk about it a lot in my memoir, where you'd have folks who wanted to go to Iran, wanted to strike Iran. And I would at least say two things. First of all, Mr. President, a war is easy to get into, but hard to get out of. And secondly, if we want to do this, it's going to take a lot of preparation, weeks of preparation to get all the troops in place, whether it's Army air defenders, Air Force fighter squadrons, or Navy ships. And so it does take a preparation time. And, of course, you always want to bring along as many allies as you can to support you. Preferably some of the European militaries, but certainly the Gulf allies. Obviously we know that the president started this at the end of February of this year when talks broke down in Geneva, and there wasn't a lot of that preparation going on. So obviously they've kind of shored some of that up in the meantime, but you go through at least those steps of preparation when you're looking at a possible major conflict with a country like Iran.
It's certainly difficult getting out of this time around, that's for sure. The former Defense Secretary, Mark Esper. Mr. Secretary, thank you, sir. Appreciate it. If you're just joining us, welcome to the program. Take a snapshot of Brent crude in just today's session alone, around 4 a.m. Eastern time, trading with a 98 handle, up 5% on the session, now back down to about 94 and up by 1.6%, as the latest reports coming out of Iran suggest the operation against Israel, at least for now, is complete. Up next on the program, Southwest COO Andrew Watterson, as surging prices weigh on the airline industry.
weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
The bulls have had it so good, a 20% move off the low on the S&P 500, 9 weeks of gains. We give some of it up, some of it, with the first weekly decline since March and the biggest one-day loss of the year so far. The S&P down by 0.7% on the NASDAQ. We're up by 1.3 and up by 0.7% rather. Used to saying down after Friday's drastic price action and the moves low we've seen. In the bond market, check it out, yields improving, and by improving I mean off-session highs, just about unchanged now on 2s and on 10s. 10-year bond yields up by only a single basis point this morning at 4.54. Crude helping out the move. Brent crude from 98 to 94 in just a single session. In fact, in just 3.5 hours. 94.40 this morning. We're up by 1.4% on the session so far, following a few comments from the President of the United States and then really supported by some reports coming out of Iran.
Yeah, a stunning move by oil. Basically, the president is saying that there would be this immediate ceasefire. The president did say that he was the one that was calling the shots, according to the Financial Times, and that Israel wouldn't respond. Israel did respond, but it does seem like the president is influencing the situation right now. First, his Truth Social saying that this would be the end of hostilities, at least the most recent hostilities we saw in the past 24, 48 hours, and then the IRGC declaring that they are ending their military operation against Israel. So right now, it does seem like we are just back to that feeling of normal, that very fragile, brittle ceasefire.
Futures, session highs up by 0.7% on the S&P. That's the price action on our radar this morning. Israel retaliating against Iran, ignoring warnings from D.C. The president telling the Financial Times that Israel will have to accept any deal between Washington and Tehran because he, quote, calls all the shots. Elsewhere, AI concerns leading chip stocks to their worst day in over 6 years on Friday. The NVIDIA CEO, Jensen Huang, saying the sell-off creates a buying opportunity.
With respect to the stock price, everybody should be very excited. They can now buy stock at a cheaper price. And it's absolutely true that the future of AI is very bright.
The NVIDIA boss adding that the AI build-out is still in the early stages. And finally, the president suggesting the government could take ownership stakes in AI companies, finding common ground with the U.S. Senator Bernie Sanders.
I've been talking about it for the last year. When Bernie Sanders lost, you know that I got many of his people. They voted for me because we are on an economic plan, as far as economics is concerned. We have certain things that aren't that far apart.
Anne-Marie catching up with the president over the weekend.
So he's looking at me and saying, do you know? And I wanted to be like, yes, of course I know. And the most famous one, obviously, is Joe Rogan, who was a Bernie bro and then obviously a huge endorser of the president. This is where the far right and the far left are now colliding. And the president also made news with us reporters on Friday saying that he's going to have the CEOs of the AI companies come to the White House, and they've already had discussions of this. He called it concepts. We're back to concepts of a plan. But basically, it's some sort of partnership with these companies. Bernie Sanders has come out and talked about 50% outright equity stakes, that the government needs to own them. Interesting, David Sachs used to work with the president. He does not like the idea of this. He's saying, of course, we want China and the rest of the world to be addicted to our technology, but we don't want a CCP style of actually owning these companies.
Which one is it? Is it taking stakes or buying stakes? Is it OpenAI selling something or giving it to the US government?
It's unclear right now, and I think it
It's
depends.
a massive difference between the two.
I know, and I think it depends who in Washington you ask what they would be pushing for. I'm pretty sure Bernie Sanders just wants them to give the United States government these stakes, and his argument is that these AI models are trained off all of our collective knowledge, whether it's news articles, our culture, et cetera, et cetera, et cetera.
Chris Harvey's still with us of CIBC. Chris, is this about sharing the gains or preparing to share the losses?
I don't think it's a good idea for the government to get involved in business to a large degree. If you want to share some of the gains, then go out and tax it. Do not get involved in the ownership of it. I don't think that's a great idea.
Why do you think OpenAI is even considering it?
I don't know. You know, that's a great question. I don't have a great answer for you.
Well, that makes me think that, to your question, they want to make sure the U.S. government is backstopping them to share if there isn't any losses, or they're trying to get ahead of what they see on the horizon, which is going to be serious regulation of these companies.
That would be the less favorable way of looking at it. It's about sharing the losses.
Maybe sharing losses, maybe it gives you some credibility, maybe they think it gives you a leg up on others, maybe it gives you, they think it gives it access to certain contracts or other things. Again, not clear to me.
Intel has done very well, though, since the 10% equity stake from the government. So potentially, why wouldn't this be a good idea?
I don't. I think I believe in a separation of church and state. I believe in such a separation of politics and business, and we just don't want to marry the two.
To your point, Chris, why not just hike up corporate tax rates? Why not do something on that front?
Yeah, if you're looking for gains, then that's what you do. That's your government. That's your right to do. And if you think that there's opportunity there, and you think that you can get this legislation through, then that's the path they should go down.
That's a risk factor also for the broader equity market. Is that on your horizon just yet, or is that further down the road?
A tax raise? No, that's not on my horizon. That would be a new risk, and if we start to price that in, I think you would have to see the markets come down to really appreciate a tax hike in some of the areas where they're growing the most, because that could slow things down.
These conversations always start in extreme places, and I just wonder how spicy the Democratic primaries are going to be when this topic comes up in the next 12 months.
It's going to be incredibly spicy, because are you going to be having to chase the most extreme position on this right now, which is Senator Bernie Sanders, which oddly, which is why I asked that question to the president, is it odd for you that what you are saying right now to us reporters sounds a lot like Senator Sanders? And he said, no, because we kind of line up on economic issues. Is this president basically claiming to be a socialist on economic policy?
Feels like a stretch, but I understand the comparison, at least this morning on this issue.
And this is what David Sachs had to say on Twitter. America won't win the AI race if we beat China, but end up with a CCP-style social credit system in the United States. And that is the danger as the government becomes more deeply involved in AI development and assume direct ownership and control. This is going to be one of the biggest issues heading to the midterms, and it will be the biggest issue, I think, for 2028.
Without a doubt, at least as things stand. Futures this morning up by 0.75% on the S&P. Equities doing better. Let's talk about fuel costs and inflation. Surging fuel costs leading to global airlines slashing profit outlooks by nearly half.
With the significant impact to disruption in the Gulf and the very significant impact on oil prices, we're now forecasting lower growth. Fuel bill will be about $100 billion higher.
According to the International Air Transport Association, airlines are expecting to bring in a combined $23 billion in net profit this year, down from the previously projected $41 billion. IATA holding its annual conference in Brazil. Of all places, Bramo joins us now with a special guest. Good morning, Lisa.
Bon dia, Jonathan Farrow. I am here still in Rio, enjoying the beaches, as you can see here, the incredible beach of this conference center. And I'm here with the Chief Operating Officer of Southwest, Andrew Watterson. Thank you so much for being with us this morning.
My pleasure.
So I want to start with the story that Jonathan and Anne-Marie were just talking about, this idea of higher fuel costs. This morning we see another leg higher. We're hearing, yes, people are concerned about oil prices, but that they've been managing through. I mean, how have you managed to offset the increased cost through raising prices, cutting routes, and potentially raising costs on charging for bags?
Yeah, so you can you need to cover the extra costs from higher fuel. You can't do it in a matter of days, but you can organize yourself and do it in a matter of months and quarters. And so we have been taking actions to conserve costs, improve fuel efficiency, but also raise revenue through additional bag fee increases, through fare increases, and other demand generation activities that allow you to move your revenues up to cover that increased cost, hopefully by the end of this year, early next.
Has it impeded your quest to become profitable and your actual ability to do so far this year?
Well, we had the highest adjusted net margin in the U.S. industry in Q1, so we restored profitability before fuel went up, which is better than the other way around. We certainly anticipate that transformation activity driving us throughout the rest of the year from a profit perspective, so we're focused on that and have more to go.
Have you been surprised by how little demand destruction there's actually been, that customers keep flying even as you raise prices?
Well, the drivers of demand are corporate profits really drive business travel, and corporate profits has held up well. And job growth we saw last week is also strong, and that drives leisure travel. So the fundamentals of demand generation are strong, and that really helps the customer overcome, increased prices.
How does business travel this year compared to last year? Is it actually more or is it less because of the higher costs?
It's incredibly strong right now. Last year in the tariffs, there's a lot of uncertainty. Businesses hate uncertainty, and so they pulled back on travel in the uncertain times. Now it's higher costs from fuel. They understand that, they can act on that, and as we said in Bernstein conference last week, we're seeing 25% growth in corporate travel from March on.
There has been some speculation that businesses would pull back on first-class travel, on business class travel, because the costs are going up to such a degree. Have you seen any signs of that?
No, we've not seen any change in business travel. If anything, it's an acceleration in March versus February. So businesses are out traveling themselves, trying to generate the revenue they need for the higher cost environment.
Going forward, do you expect to be able to raise prices further without seeing demand destruction?
Well, you certainly have to organize yourself to have the higher revenue. There's many levers you can do. In general, the higher your costs, the lower your growth rate. So you have to look at your growth of supply versus demand growth. And so as long as demand keeps growing and you can modify supply, even if it's not a direct fare increase, you can get the revenue traction you need.
Southwest was known as the place you could go for the cheapest fares. You would wait in lines in different groups, and then everybody would get on the plane. There wouldn't be seat assignments. There's been a transformation in the identity of Southwest since you took over really as chief operating officer, and in 2024 with some of the activist shareholders. Have you seen a change in your customer base in a dramatic way?
Not really. What we've seen is our customers giving us more of their share of wallet. So we went from a one-size-fits-all to a pay more to get more model. So we still have a base fare product that if you're just very cost-sensitive, that's for you. But we found that our customers really were eager to pay us more to have the exact seat they want, the exact product they want. So it's worked out fabulously well.
Going forward, do you expect that you are going to see increases in demand also from the economy, sort of your rank and file versus just those who can afford some of the perks?
We see a broad base. We talked about a cake-shaped economy. There's actually a very broad middle of people who have the ability to travel, and they're traveling. And so when you give them a multiple price points and they can choose what fits them, you see you can really harvest demand. Economists might call it marching down the demand curve.
Going forward, do you expect that you're going to have to raise prices further?
I think we're going to have a mix of revenue-enhancing opportunities, whether that's on the price side, capacity changes, or other fee changes. And so the big changes in prices, I think, happened in March, and now it's more incremental type changes you have to do to capture.
How much more can you charge for? I mean, yes, drinks, sure, baggage fees, going to the bathroom. I mean, honestly, at what point can you sort of run out of things to monetize?
Well, yeah, as demand growth happens, that puts natural upward pressure on revenue. So you can see as customers get raises, as businesses get higher profits, they can afford a little bit more. They end up paying and budgeting a little bit more. So now we're in kind of the gradual grain of price increases versus kind of the big one we had to begin with.
We were talking to the United CEO, Scott Kirby, yesterday, and he said he wasn't surprised by the jobs report that we got on Friday based on how much he had seen an acceleration in demand into the summer. Did you feel the same way, that you actually see a reacceleration rather than some sort of deceleration in response to higher prices?
Yeah, March saw a big inflection upwards. And so March, even though the war was kind of hot and heavy at that point, we saw a big acceleration of both business and leisure travel demand. So the U.S. economy is roaring, it seems to us.
Do you think that the inflationary inputs and what you're experiencing in terms of the costs that you're paying are also going up at an accelerating pace?
They're modest to us. And maybe if you're the Fed chairman, you think differently. But for us, the changes in compensation, the changes in input costs, ex-fuel are modest.
Meanwhile, there has been an issue with respect to deliveries of planes, Boeing in particular. We've heard of some of the issues and how that's crimping plans. How do you see that resolving? I mean, how much has that put a damper on some of what you're planning going forward?
Well, I give big kudos to Boeing. A few years back, it was not their finest hour, but now they're delivering us a quality aircraft on time. So we're pleased with what Boeing has given us. And the MAX 7, which has been much delayed, is seemingly very close to certification based on what the FAA administrator said. So we're very pleased with how Boeing's moving along.
Meanwhile, we did hear from IATA that you are seeing profits crimped pretty significantly for airlines. It doesn't seem like that's what you're saying at all. It seems like you've been able to offset and recoup all of the oil price increases in terms of your other measures. Have you seen any impact to your growth trajectory? I know you said you've got to pull back some of your expansion and your growth, but with respect to profitability, have you seen any kind of deterioration in that?
Well, higher fuel does lead to lower profits, and so really the question becomes for next year. As we get into the late summer, early fall, and it's business planning season for most companies for the following year, and so where will oil be? What will the trajectory be for next year? That's when you'll be able to understand, well, what's my growth rate next year? How does that impact everything?
Do you think that oil prices need to come down for your company, for the broad industry to be okay? Or do you think that they could stay here in perpetuity and end up with a pretty healthy airline sector because of the demand and consumers' ability to absorb higher costs?
Over the last decade plus, we've seen airlines be able to adjust to high fuel environments. We've also seen the high fuel doesn't last forever. So it will come down. The question is when, and we can organize ourselves to kind of meet that glide slope down of fuel price to restore profitability. So whether it returns to where it was last year or if it stays higher for longer, we can organize ourselves. And the uncertainty is much less than one might imagine.
Andrew Watterson, thank you so much for being with us. That is Andrew Watterson, the Chief Operating Officer of Southwest, talking about how business travel continues to be strong as people send their correspondents, their anchors, to places like Rio de Janeiro. Jonathan Farrow.
I'm not jealous at all. Doesn't it look like Bramo had a nice weekend on the beach?
Yeah, I mean, it looks like Rio's doing her well.
You were well, Bramo. It's good to see you.
Having a good time.
Yeah, let's see if we come back in a couple of days' time.
It's good to see you, too.
Yeah, Lisa, thank you. I get a feeling she's going to take the week off.
No, what a great place for the airline industry to have this. At the same time, they're talking about profits are going to half this year because of full fuel costs having to jump.
Chris Harvey had my favorite phrase of the last 6 years. Do you remember that?
Yes.
Spring break for adults.
Spring break for adults.
Coming out of the pandemic.
Yeah. It was a great one.
Things have changed, haven't they?
A little bit.
The window on that's closed.
Things are getting a little tight nowadays. And you're right. Everyone's talking about higher prices, but they still go out and spend. Everyone you talk to, I can't believe these prices. Can't wait for prices to come down. Are you spending? Yeah, I'm
Nick's
spending.
tickets feels like a stretch, though, Chris.
A little bit, at least
just
for me.
a bit.
The president says that's life.
That's life.
That's life.
But it is life. Some of us can't afford $6,000 tickets to a sports game.
That's life. It's
That is
semi-free, not free, semi-free on television.
Got to pay for TV still. Let's give you an update on stories elsewhere this morning with your Bloomberg brief. Vonnie Quinn has more. Hey, Vonnie.
Hey, John, thanks. Iran-backed Houthis in Yemen have declared a ban on Israeli ships in the Red Sea, threatening a key bypass route to the Strait of Hormuz. The move comes as the Iran war moves into a fourth month and hostilities flare across the region, threatening to derail the fragile truce. OpenAI is planning a major platform overhaul ahead of its IPO as it steps up competition with rivals, including Anthropic. The Financial Times reporting the company wants to turn ChatGPT into a comprehensive super app. In sports, Alexander Zverev has his long-awaited first Grand Slam title. The world #3 player winning the men's singles final at the French Open in a 5-set thriller. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. More from Vonnie in the next hour. Up next on the programme, Wall Street laying out the red carpet for SpaceX.
Why SpaceX public now?
We're embarking on a massive new growth phase, and we need capital for that. Another thing is the revenue, I also feel pretty good about the revenue projections.
Up next, we'll catch up with Erica Najarian of UBS.
take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy. Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Session highs, here's the bounce, up by 0.6% on the S&P 500 this morning. On the Nasdaq, up by 1.2. Under surveillance this morning, Wall Street laying out the red carpet for SpaceX.
Why SpaceX public now?
We're embarking on a massive new growth phase, and we need capital for that. Another thing is the revenue, like I also feel pretty good about like the revenue projections. I mean, like before, like revenue was a little unstable.
Here's the latest this morning. SpaceX set to begin public trading on Friday. Wall Street's biggest banks expecting to rake in about $500 million from the record-setting debut. Joining us now to discuss, Erica Najarian of UBS. You've got buy ratings on these guys. It's good to see you. On JP Morgan, on Morgan Stanley, on Goldman. How much money is going to be made this year?
Okay, before SpaceX, here's how the quarter's shaping up. Equity capital markets is up 65%. Like if you just run rate what's happened since Friday for the entirety of the quarter, advisory's up 20 and debt capital markets is up 15. So I think it'll be a happy holidays for those large bulge bracket banks.
So Erica, quick question.
Yep.
Let's just make believe that SpaceX goes okay, but just okay. Do we have to worry about other deals getting pushed back or scuttled for now? What do we think going forward?
So, Chris, that's a great question. What we're seeing right now is just the top, right? The capital markets activity has been concentrated on large, mega deals. Right. And what's actually happening in the pipeline is you still have a lot of sort of mid-sized companies that are waiting to come out. Additionally, the sponsor community hasn't really tapped the market at its all-time highs quite yet. Yeah. And given that the rate hike that's now priced into the curve, you would think that now would be the time to monetize in the capital market. So there's actually a more broad-based look to the pipeline that I think that if some of these mega deals did just okay, that's not necessarily going to interrupt the flow into the market.
Okay, well, one other question. Can you frame out so the enthusiasm is almost as much as the enthusiasm for the Knicks right now, right? How would you frame this out? Is this the biggest deal you've ever seen? Or is this like, it's at the high end, but I've seen better?
I mean, let me just take a step back. We're kind of at like, the valuations aren't reflecting it, but we're kind of like a peak bank, right? I mean, this is the biggest IPO that we've seen, but the rest of the capital markets activity underneath is good. Main Street is actually great. The direct lending data continues to be superb, right? And nothing is as harmful as rates at zero, right? So whatever happens to the curve, the banks are doing okay. And so, yeah, no, I think it's a good time to be in financial services right now, particularly as a bulge bracket U.S. bank.
It's a good time to be Goldman Sachs. It's a good time to be Morgan Stanley. Both those names are up by close to 20% year to date. But then if you listen to what you've just said and what we've just seen in those two names, you'd expect something different maybe from JP Morgan and Bank of America. They're down on the year. Why are they not keeping up with this rally that we've seen so far year to date in those two big names?
So that's a great question. I think part of it is just that Goldman and Morgan are the purest expression of capital markets, whereas given the war and in the Middle East, you're also worried about the consumer, right? The consumer stocks are down 20%, and obviously, Chase and Bank of America have large credit card portfolios. So in a way, I think they haven't kept up because they're not as pure of a representation of all the activity that's going on. That being said, I do think that JP Morgan, and they're never like underrated, right? Like they're a little underrated here in terms of what they can deliver for the quarter. So sometimes you have to root for the underdog.
Right.
First, Jamie Dimon called Elon Musk Einstein a few years ago. Now he's saying he's the Edison of our time. Have you ever seen Jamie Dimon fawn over another executive the way he has been fawning over Elon Musk?
I haven't seen Jamie fawn over anything.
But he is.
Yeah, for sure. But look, I mean, he knows how his bread is buttered, right? And he is the world's top executive, for a reason.
He's not going to talk to us like that. We're not clients.
No.
Right? And that's the major difference.
Totally. And I have spoken to him before, and he'll be like, oh, reporter? No, thank you.
Right.
But at the same time, have you ever seen him talk to a tech executive like this in public?
It's pretty unusual. Are they lead left on this? Because they're acting like they are.
No, they
Isn't
are.
that unusual?
Yeah.
That piece of it's unusual.
But look, I mean, remember, SpaceX could have, continued needs from here as it tries to expand, beyond Earth, right? And so, the first Mars IPO, who's going to sign up for that one, and the Mars Exchange. But look, I mean, that's the business.
You said bet on the underdog. Kind of laughing because JP Morgan's no underdog.
No.
Strange they've become that, though.
Yeah, but
in that group of stocks.
Yeah, but look, I mean, I think that's an opportunity. Right? JP Morgan is never priced as the underdog, but Goldman and Morgan have literally gone like this for this year, right? So I feel like that's a less expensive way for folks to invest in this capital markets renaissance of sorts.
Going to slide into the DMs. Is that the suggestion here?
Well, that was going to be my suggestion. Jamie Dimon didn't get to Elon Musk's DMs fast enough.
Sign up to X.
I don't think Jamie has to slide into anyone's DMs, to be quite frank.
Erica, it's good to see you. Thank you. Appreciate it. Erica Najarian there of UBS. Chris Harvey, good to see you, sir. Thank you. Chris Harvey of CIBC. Up next, we'll catch up with Sarah Hunt of Alpine Saxon & Woods, Crispin Love of the Piper Sandler Group, Nathan Sheets of Citi Research, plus Abby Yoder of JP Morgan Private Bank. The third hour of Bloomberg Surveillance just around the corner.
Do you mind being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
You'd think she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. When you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it paradise ahead or Gattaca?
Maybe somewhere in the middle.
know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Anything we do in Africa is going to be more risky than the U.S. I think the approach we want to take is how are we being compensated for that risk? And one of those is obviously going to be a valuation question. In our minds, valuation is a lot more attractive in Africa, even if we adjust for some of those Africa risks that a lot of Western investors see. So yes, in a lot of ways, you take some of those models that, as I said, might be more asset medium or asset heavy. There might be some more inherent risks. However, if we're saying we're adding some risk because of that kind of model, but we're now solving a core problem as opposed to maybe a nice to have solution in Africa, that might actually offset it. Where if you're solving something that people really absolutely need and can't live without, in a way that then that's a lot less risky. So again, we'd encourage investors to have a less binary view. In other words, the US isn't risky, Africa is risky. That's going to lead to a lot of complications down the road.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
The market is strong because the economy is strong overall. Ultimately, what's going to drive this market higher is going to be the AI trade.
I think that the entire market is one trade, and I think right now we're in the boom part of the trade.
Certainly tech or AI has soaked up all the oxygen in the room here.
We're forgetting that there's a lot of other industries.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now. Your price action scores look like this. Friday, the losses this morning, the bounce up by 0.7% on the S&P, on the NASDAQ, up by 1.3%. Similar move on the Russell. This morning, things were looking a little jittery in the bond market. Yields were higher across the curve. Things have settled down. 2's unchanged at 415, 10's at 453. Crude was up 5%. 98 handle on Brent, right now 94 and up just 1 percentage point, following some soothing words from the President of the United States.
Yeah, the President entering in terms of the market, in terms of rhetoric, some nice words saying that Israel and Iran are looking to an immediate ceasefire. And then it was backed up by the IRGC, according to FARS, the IRGC declaring an end of their military operations on Israel. So this very fragile ceasefire that we have right now in the Middle East does seem to be holding on, which is kind of crazy to say, even though we did have ballistic missiles heading towards Israel and Israel striking targets in Iran. It does seem like at the moment, all sides want to hold on to this ceasefire.
Taking some heat out of the energy market, bringing yields back in and helping equities rally just a little bit more on the S&P 500 and on the NASDAQ into this. Through this week, tons of economic data, CPI, the headline event on Wednesday, and an IPO set to price later this week. Not just any ordinary IPO, the biggest initial public offering this market has ever seen.
This is going to be huge when it comes to SpaceX on Friday. We were just talking about that with Erica and how all the banks want to get in on this because the fees are going to be astronomical. Something me and Lisa and I have been talking about for the past few weeks. Where are investors taking money from to make sure that they can get in on SpaceX, then on Anthropic, then on OpenAI, and how difficult is the SpaceX IPO going to be potentially for the market if we get a really hot CPI print this week?
I call it the supply monster. We're choking on supply. Alphabet coming out last week with an upsized equity offering, equity capital raise of around $85 billion. And the mere report, I think it's important on Friday, the mere suggestion in the Financial Times that Meta was considering doing the same thing sent that stock into a nosedive into the close on Friday. On top of that, that's just the equity side. Then you've got the IPOs coming, not just SpaceX, but Anthropic and OpenAI potentially later this year. Then you've got the debt side. Talked about this number a few times. Pricing $1 trillion of IG debt in this country in near record times. You've had it on the equity side, on the debt side. And how close are we, how far away are we from some real indigestion here, from all that supply coming into this market on both equity and debt?
And you're right to bring up Meta. I think a telltale. The market didn't digest it the way they originally digested Google. What I found so interesting about Google, 80 billion wasn't enough. They came back and said, actually, we're going to up it and do a little bit more, $5 or $6 billion more. But potentially, there is going to be a point where the market says, okay, we can no longer tolerate anymore.
Doing better this morning, up by 0.7 on the S&P. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods. Following a 10% rout in chip stocks on Friday, Nathan Sheets of Citi raising his policy rate forecast for global central banks, and Abby Yoder of JP Morgan on why the market pullback is a healthy sign. We begin this hour with stocks bouncing back following the biggest one-day sell-off this year. Sarah Hunt of Alpine Saxon Woods writing, June is busting out all over. The market has taken the better data so far as a sign the Fed will, at the very worst, hike rates once by the end of 26. Sarah joins us now for more. Sarah, good morning. Good to see you.
Good morning.
Are we about to go through a period of indigestion here with all that supply coming?
I would not be surprised. I mean, it certainly looks that way. And if you see the way that the reaction was, to your point, on Meta on Friday, and the fact that, you know, they came out so quickly and said, hey, we're going to raise some equity before these big IPOs come, I think there is a concern that there is some question about how much appetite there is for a lot of this.
And on top of that, you might see tighter policy out of the Federal Reserve. That put the squeeze on this market big time on Friday. Jobs came in hard, started to price in a rate hike, not for next year, but for this year. Could that tighten things up too?
Well, I mean, it's interesting because if you look at the WIRP function, I think it's much more a snapshot of what the sentiment is today, because it hasn't actually played out very well. If you go back and look at where rates were pricing out further along the last year and a half, it's been wrong more than it's been right, but it definitely gives you an idea about where people are thinking right this minute. And right this minute, that data combination, plus the inflation and the concerns that are coming this week with inflation, was absolutely one of those moments where everybody was like, oh my God, we're going for hikes, not cuts.
The Federal Reserve, so far at least, up until then, has been a reason to be bullish. This Fed seems to be behind the curve compared to other central banks. The ECB is gearing up for a hike later this week. The Bank of England might follow. We're still talking about the removal of an easing bias and a Fed going to neutral, not shifting to a hawkish bias, but a Fed going to neutral that wants to articulate to this market there is equal chance of a rate hike or a rate cut as our next move. Is that still constructive?
Well, I think it's reality, right? Because hiking rates here isn't going to solve the problem of oil supply shocks. And that's one of the reasons that inflation is so high. So do we have a big demand problem? Well, high prices tend to cure demand issues, right? So that is going to shift on itself. And cutting rates at the moment, you don't have a labor supply that's in terrible shape. You don't have an economy that's in terrible shape. The data's been pretty good. I think neutral's not a terrible place to be fair. But I also think that it's one of those things where it's a fine line between neutral to, oh, maybe it's this way, or oh, maybe it's that way. And I think that there's still a lot of cross currents.
How important is going to be this CPI report this week, given how the market reacted to Friday's jobs number?
I think it's going to be very important, and I think it's going to be grim. I mean, I think that there's no way that you're not starting to see some of this bleed through, because energy prices bleed into everything eventually, and the fertilizer prices bleed into food prices. There's a lot of things that are happening because
fertilizer prices are up big time. I mean, it's why the president went to the 3rd Congressional District in Wisconsin. Yeah. I mean, these farmers are dealing with incredibly high prices.
Right, and it's one of the things that doesn't get talked about enough in the scheme of things about what else is bottlenecked within the strait. But those things also take a long time to work out, because if your prices are much higher this year to plant and to a whole lot of other things, including diesel prices, which are very high, then that doesn't resolve the minute the prices come down, because you're spending that money today, so you have to recoup it tomorrow. So I think that there's an issue there.
What does a grim inflation print mean for the equity market? Also grim?
You know, I don't know, because you would think that it would be, but at the same time, the equity market is showing an enormous amount of resilience. I'm surprised to see that it's showing some resilience this morning, given the fact that the Kospi was down over. I mean, I'm surprised at how we're looking green already, and there's still some stuff going on.
You're expecting some negative follow-through from Friday this morning.
Well, I was looking at the Kospi and thinking that there might be. So, I think that there is. I mean, that was also a very stretched situation. I mean, even more stretched, you could argue, than the semiconductors in the United States. But I think that there is, I mean, I don't disagree that a pullback is healthy. The question is, Did we get a pullback, and do we now have some calm? Do we have a lot of chop for the next few weeks? Maybe we do. That would not be so bad. I think the concern is that you get something where things start to go down and it spirals on itself.
What do you think was more important this morning? The president saying there's going to be immediate ceasefire, or Jensen Huang saying you should be excited by this dip?
Well, I mean, they're both talking their own book, right? I mean, and to the extent that they would like a ceasefire, absolutely. I think it's been very clear that this is something that they would like to see calm down a lot. And I think that Jensen completely believes in NVIDIA and thinks it's a great stock and thinks that it's a great opportunity. I don't think that either one of those things are necessarily wrong. Whether or not they are meeting what's actually happening on the ground is, up to...
Well, let's talk about what's happening on the ground. We've been talking about this for the last 2 hours now. The Alphabet capital raise last week, and the mere suggestion that Meta was considering the same in the Financial Times, sending the stock lower. I just wonder how much weight I should put on that price move, because that price move to some might signal, hang on a minute, this market's starting to push back. And these companies have raised a lot of money that have funded the gains in the chip sector, and now the stock market's pushing back. Shouldn't I pay a little bit more attention to that?
I think that there's a lot of things that are coming up that are going to be either positive or negative evidence in that direction. I'm not quite sure we're there yet. I mean, Meta's had its own issues with the market and the way the market looks at what they're doing. So I'm not sure that they are the canary in the coal mine, but I do think that people are raising a lot of money, and all of this CapEx that we're talking about is coming from a no longer cash flow situation, and it's coming from a debt and equity situation. And can they afford to do that? Is that going to be the bottleneck? Forget memory, forget some of the capacitor situation. Is it going to be, can we raise the money fast enough? And I don't know what the answer is. Yeah.
The capital constraints, the potential for them, the pushback in both debt and equity. You're seeing signs of it emerging, signs of it building.
I think, well, I think that is, as we see what happens with the SpaceX IPO, as we see some of these other massive equity raises come to market, can they be absorbed? Because I think that, you wanted to get first out of the gate, which is why that 80 went to 85. It's like, well, people have a lot of appetite, so we managed to upscale it. But there was also a yield involved, so there was two different things going on there. I think we're going to see, as we move forward, how the market absorbs all of these, and it is a good question. And the fact that S&P pushed back and said, you're not getting into these indices, I think people thought that there was a natural index and passive big demand coming because of that, and now they have to recalibrate that a little bit. And I'm not sure that was the biggest thing, but you just added that to what was going on Friday.
I asked this very same question to Cameron Dawson at 6 a.m., to Chris Harvey at 7 a.m. I'll ask it of you at 8 a.m. C-suites in corporate America, the most advanced, sophisticated C-suites on the planet, Alphabet, Meta, talking about these up-and-coming IPOs, those C-suites too, SpaceX, Anthropic, OpenAI, have decided that now is a good time to sell equity. What is the argument for investors to buy it?
You have to continue to buy the story that AI is going to continue to be the most important dominant theme over the next 5 years, that this is still a good time to be looking at that. I think the big question exactly is, now we're raising debt and equity to fund something that we were funding out of cash, which people were very comfortable with. How comfortable are they, and how far can that be pushed? And we don't know the answer to that yet, but I do think that there is an enormous amount of enthusiasm. I mean, look at the space stocks and look at what they're talking about doing. It's easy to get caught up in a story of, this is just the beginning of a long tail, and so you don't have to be so worried about valuations here. It's really exciting. But there's always a push, and there's always a pushback, and then there's always a question of, okay, well, what does that actually mean, and when can I actually see the return on that if you're coming to market 20 years after you've actually been in business and we're still looking for profits?
And got to pick your price for the IPO, basically, before the roadshow even started. Sarah's going to stick with us. Sarah Hunt there of Alpine, Sexton & Woods. Equity futures near session highs, bouncing back from Friday's losses, up by 0.7% on the S&P. With an update on stories worldwide this morning, with your Bloomberg brief, Vonnie Quinn has more. Hey, Vonnie.
Hey, John. Thank you. Iran declaring the end of military operations against Israel. The two countries exchanging missile strikes overnight. President Donald Trump telling the Financial Times Israel will have to accept any deal between Washington and Tehran because he, quote, calls all the shots. NVIDIA and SK Hynix are collaborating on designing future generations of memory chips for AI. The announcement comes as NVIDIA CEO Jensen Huang visits Seoul for meetings with his company's Korean partners. And traders fully pricing in a rate hike by the end of this year following Friday's blockbuster payrolls report. President Trump weighing in.
There's no reason to raise interest rates. I don't want to kill success. We should actually lower interest rates. Now, I would like to see rates get lower because we could build this into the greatest machine that the world has ever seen. But you can't do that when everybody immediately raises interest rates.
President Trump's comments coming ahead of Fed Chair Warsh's first policy meeting next week. And that is your Bloomberg Brief. John.
Ivani, thank you. Appreciate it. Up next on the programme, we'll get you some morning calls. Plus, we'll catch up with Crispin Love of Piper Sandler on what could be the next domino to fall for private credit. That is next from New York City with a Knicks mug strategically placed, no matter where you sit in this studio.
It's a big game.
Game three. Later this evening from New York.
I'll be there.
You're watching Bloomberg TV.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
We're seeing this unwind just out of these really big overbought conditions. And what's notable is that we're nowhere near oversold. Arguably, you could say that the easy part is over, meaning the valuation reset is over. And now the question is, do you still see earnings upside for these semiconductors from here?
It never feels easy, that's for sure. Cameron Dawson there of New Edge Wealth on this equity market. This equity market this morning, a good morning to you, bouncing back on the S&P 500. On the NASDAQ, here's the bounce, up by 0.7 on the S&P, on the NASDAQ up by 1.3. Friday was awful. If you think about how bad it was, moments of stress in this market, think of April last year. Worst day since April of last year for the NASDAQ. Think of the pandemic, spring 2020. Worst day for chip stocks since spring 2020. And it follows a massive run-up in this equity market.
And that's why the president was so frustrated on Friday with the stock market declining, because he said we just had a great jobs report. The market should not be pricing in this hike. He still wanted to see a cut. Interesting this morning, we had two important individuals. First, Jensen Huang saying, stocks are down, buy the dip. You can get in. Exciting time for you. And then second, the president really, as you mentioned, soothing the market, saying there's going to be this immediate ceasefire between Israel and Iran, and then the IRGC coming out and saying they're ending their military operation, current military operation when it comes to Israel.
That helped bring yields off session highs. 2s on Friday, new highs for the year. 10s, the first close we've seen above 450 in about 2 weeks. 454 this morning, up another basis point on 2s at 415. One more read on inflation ahead of the Federal Reserve's next meeting and Kevin Walsh's first meeting next Wednesday, this coming Wednesday, CPI.
CPI, this is going to be incredibly important. After we had a very good, strong labor market report. I mean, it was what, triple of what people were expecting. The highest was, you know, nothing close to what we got. On top of that, now people are saying potentially we're going to see a 4 handle on inflation. If you're the incoming Fed chair, and basically many people believe that you were picked for this job because you expressed an interest in lowering interest rates, how do you do that in this environment? You can't.
It's going to be a tough ask of Kevin Walsh, a weak Wednesday. That's the price action and the setup for the Federal Reserve. Let's get you some morning calls. First up, Wells Fargo, more than doubling its price target on Micron to $12.20, seeing continued upside driven by greater confidence. Your second call from Mizuho, raising its price target on SanDisk to $2,200, seeing potential for an 8-fold increase in TPUs by 2028. So many balls out there still. That stock is up by 4% in the pre-market. And finally, KPW downgrading Blackstone's secured lending fund to market perform, citing the company's setback in credit quality. Let's stay on private credit and private equity too. Redemption requests ramping up as investors remain uneasy. Crispin Love of Piper Sandler writing, we're not surprised by the continued redemptions. Private equity needs to be wiped out for private credit to take losses. Crispin joins us now for more. Crispin, good morning. It's good to see you again.
Great. Thank you for having me, Jonathan.
Welcome back. Let's talk about what happened last week and sort of set the stage for why this conversation has started again. Partners Group. How different are the redemptions there compared to the redemptions we've seen elsewhere?
Yeah, so they're very different, where what we've seen over the last couple of quarters has been all on the direct lending side, all private credit. And Partners Group last week, a Swiss-based firm, they had nearly 10% of private equity redemptions in their semi-liquid product. So that's going to be the big focus, I think, over the coming weeks when we start to see more of the redemption data from Blackstone and others, where is it just direct lending or is it breaking into private equity as well? We think direct lending, that's going to be several quarters of elevated redemptions, but the other areas have been pretty strong, but private equity will be a key area to watch.
What do you think it is, the former or the latter?
So I think you could see a pickup in private equity redemptions, because what we've been writing about for a while is if you're worried about private credit, private equity needs to get completely wiped out in order to private credit to take losses. On the private credit side, a lot of these loans are 30 to 40% LTVs, senior secured, so you need private equity valuations to come down materially.
Where is the demand for liquidity coming from? Where's it coming from and what's driving it?
Yeah, so a lot of it is coming from international, it's family offices. I do a bunch of channel checks with a lot of financial advisors, and it's really not coming from them. From everything that I've been seeing there, they're getting tons of questions from their clients, and a lot of what the financial advisors are saying is stay where you are, stay the course right now, but a lot of it is that international family office side. Blue Owl made a comment several weeks ago that 50% of the redemptions are from 1% of their investors. So it's not something that's completely broad-based, but more focused. And then what you're seeing as well, a little bit of a gamification of it, where similar to an IPO, where if you want 5 shares, you're going to ask for 10, knowing that you're going to get scaled back.
Is there a loss of confidence in the asset class?
I don't necessarily know if there's a loss of confidence. I think there's a lot of uncertainty. Since September, there's been just a ton of press on it. People have been worried, and you've seen these redemptions drive up. And one thing that we look at is you saw BCred's, Blackstone's largest product, which we use as a good proxy for the industry as a whole. If you look at where you have to break out between sentiment and performance, and on BCred, a lot of the stress or a lot of the headlines started last September, so that's 8 months ago, and we look at the monthly data. Returns in that private credit product have been positive 7 of the last 8 months, and then positive the last 2 months.
If these vehicles, though, continue to have this redemption pressure, could this be like a snowball effect where it just gets much worse and broadens out?
So I don't think it can get much worse, because the key issue are the 5% caps. And that's something that we're probably going to see over the next few weeks, where you saw Blackstone last week, 10% redemptions requests being scaled back to 5%. You're going to see that over the next several weeks. But one thing that Blackstone also talked about last week is the redemptions that they're actually paying out, they're 160% covered by just repayments and inflows to the fund. So people will talk about it and compare this to a GFC scenario, which doesn't make sense in our eyes, because there isn't a liquidity issue or a liquidity crunch because of those redemption caps.
So I have a question, and you mentioned 2 things that I thought were interesting. One was the 1% and 50%, and also calling it semi-liquid, right? So that's one of the issues that I think is part of the problem. And I can understand why the first wave came on the fact that there was so much software in some of these private credit places. It's interesting that 1% owns that much, so they must be pretty big players in that if they're the big part of the redemptions. But what do you think is driving this, if it's not that the underlying companies, at least on the private credit side, are no longer in as much concern that they were going the way of the dodo, which is what was happening with software for a little while.
Right, and so right now, yeah, the returns have been good, and just looking back the last 5-6 years, it seems every year we've had an issue where you had COVID, you had the Ukraine war, you had kind of supply chain problems, and now the Iran war. So you're having all these big macro events. Rates went from 0 to 5%, and a lot of these private credit funds reacted very, very well. But what these investors are looking at is there's plenty of uncertainty out there, and taking the software point, it's not what returns are or what credit quality is today, but it's looking at what's going to happen 12, 18 months down the road. And the one area that we're worried about and watching very closely are going to be these software refinances that are going to happen 2027 to 2029, because there's going to be some tough conversations where is private equity going to inject more capital into these, or are they going to walk away and hand these companies back to the lender? So I think that's going to be the key thing to watch down the road. So unfortunately for investors right now, it's not going to be resolved over the next quarter or two. You're probably going to get results going to be probably pretty good from the alternative side, but people are looking farther out, and that's where a lot of the stress and the worry is coming from.
Well, and I think that's also something that's very hard to game out, because you get these pop-ups of flares of concern. And I would argue that if we didn't have the other things that were going on, like the Iran war and what's going on with energy, this would be a bigger conversation, because people would get upset about it. But then it just went away, and now it comes back up, and then we'll see if it goes away again. Right. Where do you think the concern level settles in, or do we stay at an elevated level?
Yeah, well, it's interesting how the concern level has ebbed and flowed, where you had last September with Tricolor and First Brands, and those were bank syndicated loans. So we're away from the private credit players, but then you had companies report results, everything's fine. Then you get the redemptions, everybody's worried, and now you're kind of rinse and repeat, where you had pretty good earnings coming out of the first quarter. Now we're going through the redemption wave again. So it's going to ebb and flow, but it's just going to be something that we're going to be watching over the next kind of several months and several quarters.
Crispin, you're not alone, that's for sure. We're all watching. It's good to see you. Thank you, buddy, as always. Crispin Love there of Piper Sandler. As we're having this conversation, this headline crossed just moments ago. It came from Amazon, kicking off a 5-part Canadian dollar high-grade bond offering. Amazon, you remember Alphabet went on a 4-month, $60 billion debt binge not so long ago, and included in that debt binge was an offering in Canadian dollars around early May, just looking for pockets of liquidity in different currencies and different pools of capital to raise more money. And we're seeing this on the debt side. Again, this morning, you're seeing it on the equity side as well.
It's like you manifested this. You were saying that we continuously see these offerings, and we're seeing it in both debt and equity. And at some point, is it going to be just too much for the market to digest?
Waiting to see if Meta follows through on that FT report that we saw on Friday. Coming up next, we'll catch up with Nathan Sheets of Citi on the economic risks that could lead to a global rate hiking cycle.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is open interest.
Only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Live from New York City this morning. Good morning to you all. Your price action 60 minutes out from the opening bell, shaping up as follows. On the S&P 500, following the worst day of the year, bouncing back 0.8%. On the NASDAQ 100, following the worst day since April last year, bouncing back 1.5%. On the Russell this morning, doing better, up by 1.4%. Heading into a monster IPO later on this week. From SpaceX, in the bond market, 2s, 10s, 30s, 2s, new highs for the year. Yields at the moment settling down 2 basis points now. Better news, 413. Yields were higher earlier on in the session. A new high on a 10-year, at least for the last 2 weeks, closing back above 450, 452.24. Yields again down by just a single basis point this morning, so doing better on the bond market front. Supported by this move in crude. Crude was up to 98 on Brent. It's back down to 94. Was up 5%, now up just 1. There were fresh strikes over the weekend between Israel and Iran. The sequencing of events sounds a little something like this. Israel going after Lebanon, Iran going after Israel, the president telling Israel not to do anything, Israel doing something, then the president saying we're going to have a ceasefire, and then Iran saying the operation is over.
Okay, yeah, that's the exact timeline of what happened, but I think it's important to note that the president, according to the FT, said he was calling all the shots, and then Israel decided to make that strike. And that is why it felt like, for a moment there, the president was losing some of his influence on Israel. Everyone has a say in this war. This is why this feels so different than last year's Liberation Day, when the president had full control of them on the lever and can dial up or dial down the rhetoric. There's 3 and many more parties, and some even now are joining when it comes to the Houthis and them not allowing Israeli vessels. Does this stretch potentially to more vessels that the Houthis are going to potentially go after Bab el-Mandeb Strait? A lot of risk, but at the moment, the president saying Israel and Iran looking to do an immediate ceasefire, IRGC basically confirming that, and that has smoothed over the concerns for this morning.
Things were looking a little bit fragile at one point earlier on this morning, around 4 a.m. when crude topped. We pulled back since those levels. We're getting these headlines now from Amazon. Wanted to share this with you once again, just in case you missed it. The headline dropped just moments ago that Amazon is going on a 5-part debt offering in Canadian dollars. It stretches from anywhere between 3 years out to 30. This debt offering follows Alphabet's effort earlier on this year. They had an offering in Canadian dollars around May. They went on a $60 billion 4-month debt binge. That was on the debt side, and then Alphabet, of course, followed that up on the equity side of things with an $85 billion equity capital raise. So put it all together, massive offerings on the debt side, big offerings on the equity side, more IPOs coming up on the horizon. That's some crowding out we need to think about. This came from Jim Zelter of Apollo on this program just last week. You are seeing potentially long-term crowding out of this massive, long-duration capex boom around the globe and the impact on, guess what, on government debt yields. Sarah Hunt, still with us. Sarah, your thoughts on that? If we're going to see some crowding out, it's the sovereign that might be vulnerable here.
It's a very big market, and it could be one of the sources of cash. The question will be, I mean, it ties into a couple of different things. Where do rates go? Because people feel very comfortable still with U.S. sovereigns, right? Other sovereigns, it might be, you saw in the last couple of times we had any kind of sovereign problem, it wasn't usually in the U.S., it's usually outside the U.S. So I don't think it's so much the U.S. I think, but there is room to say, you're looking to raise a whole lot of money and a whole lot of debt. Where is that going to come from? And, you know, the ECB may be hiking rates. Maybe they're also, maybe that will help a little bit. I don't know. We'll see how that goes.
How accommodative is this Federal Reserve going to be? Investors gearing up for a key stretch of economic data, inflation coming on Wednesday. Mike McKee has a preview. Good morning, Mike.
Good morning, John. It is going to be a very big week. I was thinking when you were looking through the market boards, I wonder how much the markets are going to look like today's numbers when we get to Friday. We've got inflation week ahead of us, which is going to be the key week for Fed policymakers. We don't get to hear from them, but we do have the New York Fed expectations today and the University of Michigan expectations on Friday, and the Fed keeps a close eye on inflation expectations. In between, we get CPI and PPI, and the CPI on a year-over-year basis expected to jump over 4%. If we get something like that, it's certainly going to catch people's attentions in the market, and maybe one reason that we're already seeing bonds go up because they're anticipating Fed rate increases and they're looking ahead to this CPI number. As I mentioned, no Fed speak this week. You talked about it, blackout week ahead of the Fed decision, but we have had a number of Fed speakers express concern about the way we're going with inflation. Beth Hammack, Mary Daly, Tom Barkin even, who usually is very neutral, says AI may be pressuring the neutral rate. In other words, moving it higher as a lot of investment goes into AI build-outs. And Lori Logan, who is definitely a hawk, saying a hike may be necessary before the end of the year. So we're going to keep an eye on that. I might mention one thing that's not on the calendar is another Supreme Court decision day on Thursday. We're still waiting for that Trump versus Cook decision, and that could have a major impact on what people think about the Fed. And of course, the first Fed meeting with Kevin Warsh as chair comes up in about 10 days on the 16th and 17th. We'll get the decision on the 17th. They're not going to do anything, but how is Kevin Warsh going to portray the economy and the outlook for rates going forward? A lot to layer on top of the SpaceX, on top of the war, and on top of the New York Knicks.
What a crazy week the next week might be, on top of the New York Knicks, of course. Mike McKee, thank you, sir. Mike mentioned Governor Cook. Governor Cook might have some implications for Governor Powell, who's still on the committee.
That's exactly where my mind went. Depending on what the Supreme Court does, what does this mean in terms of how Jay Powell thinks about whether or not, or for how long he's going to stay as a governor? Because remember, this is not forever. He wants to leave at some point. He wants to wait for all these loose ends to be tied up, and that is a key one.
Nathan Sheets of Citi writing the following: markets now see almost a full hike from the Fed by year-end, nearly 3 hikes from the ECB and 2 hikes from the Bank of England. We've raised our year-end forecast for policy rates in 16 of the 27 central banks that we forecast. Nathan joins us now for more. Nathan, welcome to the program. Does that sound a little bit like 2022 to you?
I think there's some remarkable similarities here where we're seeing distinct upside pressures on inflation. And central banks around the world are debating about what to do about it. Now, where it's different than 2022 is that they have that previous experience of miscalculating those inflation pressures. And I think what we're seeing in the markets, and as we write down our expectations for central banks, is we think they're not going to repeat those mistakes that they made in the previous episode. And central banks are likely to be more aggressive. And you're not going to hear that transitory word uttered, I think, by a single central bank over the coming year.
Conditioned to make a different mistake, perhaps, Nathan. I'll ask you the question more directly. The risk last time was a dovish policy mistake. Do you think the risk this time might be a hawkish one? I'm thinking more about the ECB with that question in mind.
Well, I think as a general proposition, where the markets are pricing and where the markets are seeing the balance of the risks is about right. But there are some important exceptions there. And I think the ECB, as you point out, is a key one. And it's one that we're quite concerned about. And it's kind of a deeper examination of that previous episode. And you may recall in 2022, early in the year, we at Citi were getting very pulled up on European growth. Europe was coming out of the pandemic. We were expecting the reopening trade to prevail. There's a lot of underlying domestic demand in the economy, and we see that as a key for driving the inflation in Europe that occurred. And we do worry that there may not be as much underlying momentum in the euro area economy in this episode, and that the ECB, at a minimum, we think they need to be pretty cautious here with rate hikes. We penciled in a couple because we think that's what they're most likely to do, but we're pleading with them, please be careful here and not over-extrapolate, so to speak, those previous lessons.
Well, Nathan, what do you think of the fact that the ECB, at least one member is talking about that, forget June, we're going to hike again. They're talking about 2 in a row.
Well, that is our call. And again, it's a positive call. It's not a normative call. That once they've moved in June and they've declared that the conditions are necessary for rate hikes, we think that that argument is likely to prevail again at their following July meeting. So we do have 2 in a row. We're worried that the ECB, in particular, may be overly aggressive, and as Jonathan said, overlearn those previous lessons.
So Nathan, you've got the ECB hiking, but our friend Andrew has got the Federal Reserve cutting, which feels like quite an unusual moment. How tense are the meetings at Citi right now when you discuss the outlook for rates at the Fed?
Well, let me put it this way. When I was at the Federal Reserve, Ben Bernanke used to say that if 2 people agree all the time, then one of them's redundant. And we certainly don't have that problem at Citi Economics, where we do have a variety of views. And as you point out, our European team is a little cautious on the underlying growth dynamic, but definitely sees the ECB moving. And our U.S. team is arguing for the United States that in coming months, we're likely to see some kind of a deal on Iran. And in parallel, we're likely to see some easing in the labor markets that's going to trigger a pivot from the Federal Reserve. I think there are a lot of conditions that yet need to fall into place for that U.S. call to materialize. But as Kevin Warsh takes the helm of the economy and the consumer is a little bit softer than before, our U.S. team is quite concerned about where rates may head.
Nathan, that dovetails really nicely into my question, which is, what do you think the communication policy changes may be as we look forward to a different chair? And we look forward to, do we get a dot plot? Do we not get a dot plot? Where's your dot? All that sort of stuff. How do you see that playing out in the near term?
Well, I do believe that deep in Kevin Warsh's DNA is a belief that the Fed talks too much, and that through its over-communication, if you will, the Fed creates volatility for the market rather than understanding by the market. And I think that you'll see him at least seek to take steps to reduce the number of speeches, maybe simplify the SEP. I think another meaningful possibility is, as you recall, Ben Bernanke and Janet Yellen had press conferences only once a quarter, not after every meeting. And Jay Powell instituted the every meeting practice. And Kevin Warsh may roll that back. I think there could also be some changes in the way that the Fed talks about the inflation target. I think 2% is a noble objective for inflation, but maybe you'll see Kevin Warsh try to fuzz up a little bit which target, which inflation index is precisely the target, and instead talk about 2% in underlying inflation. And I think he's done that already, at least a bit, with his references to trim mean inflation.
Inflation, after all, is a choice. Nathan, it's good to see you. Thank you. Nathan Sheets there of Citi. Appreciate it. Not trying to start a fight between Nathan and Andrew Hollenhorst. Andrew looking for cuts still later this year. How high is the bar right now? Is the bar higher for hikes or cuts in 2026?
I still think it's higher for hikes. I don't think that we're going to get a cut, but I think it's higher for hikes because that just the regime change alone, as opposed to just saying we don't know which direction we're going, seems like a big move or a bigger move than we're going to stay in this middle ground or maybe towards the let's make sure the labor market's okay kind of thing.
The argument I've heard, I heard this from Matt Nazari at Deutsche Bank, now the base case over at BNP Paribas, is that you can basically say something like this. I'm not here saying that I'm worried about inflation pressure coming from the labour market. I'm here saying the labour market's no longer a reason to worry, at least to the downside. And we cut rates 3 times last year. That was insurance. Let's take it back. Let's take back some of that insurance. We didn't need those cuts. Now we can hike a few times. What do you make of that argument this morning?
I think it would be an easier argument to make if wage gains were keeping up with inflation, and the fact that there is a little bit that you don't see that kind of labor inflation that you might see, that you don't necessarily need to take those emergency or those, insurance cuts off the table. I think it's harder to make that argument at this moment. If wages start to move, I think it's a different game. And there's, the labor numbers are also really hard to parse because they keep changing some of the formulations, and it's hard to say what's normal now versus what's normal a year ago. So I think that that's really going to be, it's going to end up being more about where wages go and how people are keeping up with inflation, because that's part of the problem too.
Kevin Walsh, over to you. The Fed chair, his first meeting a week away. Let's give an update on stories worldwide this morning with your Bloomberg brief. Bonnie Quinn has more. Hey, Bonnie.
Hey, John, thank you. Big tech continuing its massive debt binge. Amazon kicking off a 5-part Canadian dollar bond sale this morning. Back in March, the online retailer raised about $37 billion in the US and nearly $17 billion in Europe. Apple's Worldwide Developers Conference kicking off today in Cupertino, California. The focus will be on the company's artificial intelligence strategy. The event comes 2 years after its first AI rollout was plagued by subpar technology and delayed features. If you want to go to Game 3 of the NBA Finals tonight, it'll cost you. The average price for a ticket is about $8,000. Anne-Marie asked President Trump what he thought of the sky-high prices.
Well, I know, but they can watch it on television. It's sort of semi-free to watch it on television, but that's the way life goes.
Trump will be at Madison Square Garden for tonight's game. Watch parties outside the garden have been cancelled for security reasons. And that is your Bloomberg brief. John.
Bonnie, thank you. Anne-Marie will be there too.
Yes, for work. I'm
Not
covering
bad.
the president.
Sure.
But you know what I'll be reporting on and be able to see who paid these insane prices for tickets, which Josh Hart, by the way, called them crazy and ridiculous.
For work, which is Bramo.
It is for work.
She goes to Brazil for work.
It is for work.
Yes, sure.
It is for
With
work.
the Knicks tonight for work. Bramo's in Brazil for work. I'll be in bed getting ready for work. Up next on a program, setting you up for the day ahead. Plus, Avi Yoder of JP Morgan Private Bank raising her target on the S&P.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
You have a very broad equity market. There are always good valuations in the equity market. Does that mean that you should be buying the froth and speculation? No, that's not our thing. Are there lots of good risk rewards out there? Yeah, there's still plenty of opportunities, but this is not the time to light your hair on fire.
Chris Harvey of CIBC on this equity market following the biggest one-day slide, biggest one-day sell-off we've seen so far this year in Friday's session. This morning, here's the bounce going into the cash open, about 40 minutes away. Equities higher by 0.8% on the S&P, on the Nasdaq up by 1.6. Abby Yoder of JP Morgan Private Bank writing, the stalling in the AI infrastructure trade is a healthy reset, underpinned by extraordinary earnings. We have revised up our mid-year target from 7,800 to 8,200. Abby joins us now for more. Abby, good morning. Good to see you.
Good morning. Good to see you.
Let's get into the difference between healthy and unhealthy.
Yes.
What makes this healthy this morning?
We have to keep in mind the run-up to this, right? Like, this was a really torrid, rebound from the lows in March, right? Which is a very, shallow pullback considering what was going on in the Middle East. But I mean, semiconductors were up 75% year to date and 95% since the low, right? So to have this pullback on Friday, is somewhat healthy. Again, it's also their performance is underpinned by really, really strong earnings growth, right? Even the Mag 7, technology grew 50% year over year in 1Q. That's the fastest growth rate since the global financial crisis. That is going to do in terms of their outlook. We have them on hold for the year, so that's kind of,
But the market is pricing in now a hike.
Yes, right. And the market's kind of digesting it. I mean, not really. Obviously, last week was a bit of a momentum unwind, but for the most part, I think if you do, obviously, we have a very important inflation print this week. What happens with that and what happens with the volatility of interest rates is very important too, because that's actually been rather subdued, even though you've seen interest rates move up the way that we have. The volatility of interest rates has been relatively benign, and that's why I think the market was able to digest it over the last month.
To your point about the memory stocks and some of those places that we think of as more commodity-like in the tech space and things that used to be tied much more to the consumer, I think there's a big question now about what does that mean? Yeah. Because normally when commodities are over-earning, nobody gives them credit for it because the assumption is that that's going to change. Mm-hmm. So then it becomes, where do we go from here? And have they become a different part of the tech stack than they were when you were banking on personal items for that memory cycle to happen?
Right. I think the big question for memory, not to get into the weeds of it, is are they becoming more foundry-like, right? Mm-hmm. Where they're making these bespoke things for this build out. And I think it really just argues it's an all hands on deck type of situation, whether it's power, energy, the inputs that go into the infrastructure trade. And again, why that trade continues to work 3.5 years into this build out, right? Since we had the launch of these chatbots, I think is part of the question, right? Now we're reaching this new phase with agentic AI where you need the coordination between these agents, and that's really where the memory starts to come in. And this has all just come to fruition really over the last couple of months. So that's the big question.
Another big question we've been asking throughout the whole of this morning is whether this market can handle the amount of supply that's coming. the IPOs, the equity capital raising, not just at Alphabet, but reportedly maybe even coming from Meta in the next few weeks also. Watch this space, we've got no idea. But Abby, from your perspective, can we stomach that?
We can stomach it. I want to acknowledge, though, that it is a step function change different from what we've experienced over the last several decades, right? Like, I can't imagine how many people have been on the show talking about how there's scarcity in terms of public equities and it's a declining...
Shrinkage.
It's a shrinkage, right? And that was overtaken by private markets. And this is a very, very different scenario than what we've experienced since, like, the 90s, for example. However, obviously, the float percentage that they're floating is very important. And you also have to think about just from the demand side, like, what's the demand side, right? Buybacks, supposed to be, projected to be north of $1.5 trillion this year, right? That growth is slowing, but it's still a huge nominal amount. You have consumer demand, you have M&A, right? So there are all of these different things that make it digestible to a certain extent, but it is, again, different from a sentiment perspective.
Was Friday the dip? Is that it? Is it over?
It looks like it this morning, right? Even with these headlines around Iran. I think that's the thing, though. I think that's something to keep in mind that we've learned pretty much in size since COVID, is that these dips tend to be short-lived, particularly when you have earnings that are driving that.
We'll see if this one is. NASDAQ futures this morning up by 1.6%. Abby, good to see you.
Good to see you.
Thanks for being here. Abby Yoder there of JP Morgan Private Bank. Special thanks to Sarah Hunt of Alpine Saxon Wood. Sarah, thank you. Quote of the weekend. I think it was Sid Prabhu out on X. Remember all the fears that AI were coming for jobs, and then jobs came for AI? Do you like that? I thought it was a fantastic quote over the weekend. A blowout payrolls report, taking a bite out of this equity market.
And some people are saying how it's actually cheaper to hire humans than to run these AI models. And potentially that's the environment we're in right now. A blowout jobs report. The inflation print this week is going to be so important.
CPI on Wednesday ahead of a massive, the biggest IPO we have ever seen. SpaceX on deck at the back end of the week, heading into the Federal Reserve meeting, Kevin Warsh's first meeting. Chair Warsh down in Washington, D.C., a week away. Coming up tomorrow, Jack Caffrey of JP Morgan, George Salavatos of Deutsche Bank, David Seif of Nomura, Nisha Patel of Parametric. From New York City this morning, good morning to you all. This was Bloomberg Surveillance.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996, Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
Look at the more successful economies in the region. The key to their success is continuity. But the way our Constitution is written, it actually encourages a lack of continuity. And that's a problem. The terms for local government is 3 years. When I first became a congressman, it takes you a few months to learn the business and to make your connections, to network, etc. If, for example, you are not particularly favored in the majority,
Passing a law in a year and a half is not that easy to do. After about a year and a half, you already hear that there's somebody in your district beginning to campaign and is going to oppose you in the next election. So you have to go back to your district to take care of that. And how much work do you get done?
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
What a buying opportunity. 30 minutes till the start of trading. I'm Matt Miller.
And apparently Jensen Huang this morning, too. I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, stocks shake off Iran tensions as Mike Wilson and Jensen Huang reinforce the bullish case.
Apple's reset, investors are betting an AI overhaul could power the next leg higher for the iPhone maker.
And ready for liftoff. The countdown is underway as SpaceX gears up for the biggest IPO in history this week.
So Friday was a very painful day for tech stocks, the worst run for the NASDAQ since Liberation Day, and a nice little bounce back this morning. They're listening to Jensen Huang. NVIDIA up 2.5%, Micron up nearly 8%. Marvell's in there too. It has an extra buying power behind it. It's going to be included into the S&P 500 later this month. So when that happens, you get all the passive flows, yada, yada, yada. So good morning for tech stocks.
Fully seasoned.
Fully seasoned,
and
correct.
Profitable. Okay, energy and fertilizer stocks are climbing as the tensions in the Middle East flare up. You can see Devon Energy, Chevron, CF Industries holdings all higher in the pre-market. But of course, this is not our focus on a day like today, is it, Danny?
It isn't. It is the rebound after that very ugly Friday. And strategists have come out, including Morgan Stanley's Mike Wilson, saying that it was a healthy pullback. NVIDIA CEO Jensen Huang is calling it a buying opportunity.
With respect to the stock price, everybody should be very excited. They can now buy stock at a cheaper price. And it's absolutely true that the future of AI is very bright. It is it is a foregone conclusion that AI will be infrastructure for the world.
Joining us now is Bloomberg macro strategist Michael Ball, sounding a little bit Trumpian in that call that everyone should be buying the market. But look, this started out as something, okay, it was payrolls, higher rates, but because it was so concentrated in semis and AI names, doesn't that tell us something maybe about the exhaustion of this trade?
Yeah, I mean, 10 stocks were responsible for about 60% of the rally from basically the end of March lows there. So this was overdue. When we looked at the options space, people were really reaching for upside, and eventually you just have to keep having positive catalysts. So earlier in the week, last week that is, we had Broadcom come out and kind of temper its outlook and basically, say this is not an unlimited upside game. So there we go. And Friday came, payrolls was better than expected. No, you don't have to be paying up for AI exceptionalism anymore. You can kind of rotate, and that's what we saw. Financials did quite well comparably. We saw staples, we saw healthcare, we saw just a general healthy rotation on the equal weight. Now, it looked bad on the index front because everything in the AI trade is taking over the market cap sort of story.
We were massively overbought. I think the highest we'd been above our 50-day moving average since 2002. Oof. And the SOX index obviously went hyperbolic from trading at 3 or 4 times sales to 16 times sales in a year. Is that correction? Has the correction done enough to fix those ills? Like, are we ready to resume the upward trend now?
Well, I mean, I always like to say volatility echoes, so we probably still have some further selling to go from the systematic community, and a lot of the sell-side strategist notes this weekend warned that, yes, we still have an intact AI story. The fundamentals are there. It's clearly a positive for earnings overall, and it should bring indexes higher. But look, we haven't seen the dust settle, and we're going to have some sort of catalyst moments again, whether it's unforeseen or foreseen. We obviously have the Middle East situation, which is very uncertain. We're going to get inflation data. Markets are kind of looking still for an excuse to take profit, is basically where I'm going with this. So until we kind of get through this volatility echo period, which could be a couple more weeks, and we get something new in the AI story to latch onto that then again brings this exponential upside narrative back into the forefront, it's unclear whether or not we're going to make new highs anytime soon.
I mean, we do have an IPO coming up.
Well, that's another problem, right?
this
We've
week.
talked about supply and demand dynamics changing. Buybacks no longer as strong, and now we have more supply. And again, that has to be taken down. And that some of that story was actually why people were taking profits in some of the winners in AI.
Because apparently Meta reportedly maybe is looking at doing the same thing too, not just Alphabet.
Yeah, why wouldn't you come to market at a time like this? All right, Michael, thanks very much. Michael Ball is a Bloomberg MLive strategist. You can get the work of Michael and his colleagues by typing MLIV Go on your Bloomberg terminal. Now, oil paired gains after Iran signaled an end to its latest military operation against Israel, while warning it could resume strikes if Israel continues its attacks. Earlier, President Trump said the two sides were discussing an immediate ceasefire. Joining us now is Bloomberg Washington correspondent Tyler Kendall. So, Tyler, how tenuous is the ceasefire right now?
It feels incredibly fragile, Matt, at this point, because we saw the worst flare-up in fighting overnight since the ceasefire was announced back in April. And that is because, at the moment, this is all centered on Israel's front against the Iranian-backed militant group Hezbollah in Lebanon. And Iran has long maintained that any ceasefire needs to extend to the fighting there. Now, the U.S. and Israel both have said that this is a separate front, a separate operation, but it is becoming increasingly clear that it could derail the diplomatic efforts that this White House is trying to pursue. We should mention that last week, Israel and Lebanon did agree to an extended truce, but Hezbollah rejected the terms of that agreement, which in part spurred this latest round of escalation. President Trump is making it very clear that he does not want to see this renewed fighting. We got this flurry of posts on Truth Social earlier today where he demanded an end to the hostilities and did say that both sides were close to an immediate ceasefire. It does appear that some of those efforts did work. We heard from Iran saying that they have agreed to stop this latest wave of strikes, and also Israel saying that they have stopped their latest wave of strikes. But Matt and Danny, both sides still risk escalation here. We heard from the IRGC saying that they will continue to attack Israel if Israel continues its strikes in Lebanon. And according to Israeli media, Israel is holding firm that it is not done with its military objectives when it comes to dismantling Hezbollah, and we should expect those attacks to continue.
Tyler, though, doesn't this whole saga also just show us Trump's ability to dictate the terms of Israel and Iran and Hezbollah and Lebanon in this war? Doesn't it sort of show the limits in his ability to calm some of the tempers and to make sure that the other sides in this battle aren't actively engaging and derailing any sort of peace negotiation?
Right, it reminds us that the U.S. can't be alone in trying to put a deal forward, that there are all these factions that ultimately have to be part of any sort of agreement for an enduring peace. And this really has highlighted perhaps Israel and the U.S. being increasingly at odds on how to get to that endpoint, as Israel maintains that it still has these military objectives when it comes towards dismantling Hezbollah. We should say that the U.S. had long said before this conflict started that they wanted to see Iran's support of proxy militia groups rolled into any final agreement. And that is really coming to the forefront of the conversation, perhaps even more so this morning, as we heard from another Iranian-backed proxy group, the Houthis in Yemen, now threatening to ban any Israeli ships from transiting through the Red Sea, which is going to risk another bypass route around the Strait of Hormuz. It's all escalating the tensions here amid what has been reporting that President Trump asked Israel to call off its retaliation, and then we saw Israel move forward with that. We saw President Trump publicly in an interview with NBC News over the weekend saying that he would like to see Israel's targets against Hezbollah be more surgical in their approach. So a lot of different factions to watch here, Matt and Danny, at this point. Very unclear where the diplomacy actually stands.
Tyler, thank you very much. That's Bloomberg's Tyler Kendall in Washington, D.C. I want to bring you a check on Intel surging on just moments ago an information report that Google and NVIDIA are considering Intel as a backup chip maker. Google also planning to order more than 3 million TPUs from Intel. Joining us now is Bloomberg Intelligence Senior Analyst Anurag Rana. Anurag, I guess this is TSMC's woes being a benefit, reportedly, for Intel. Does Intel also have the capacity, though, to meet any shortfalls that TSMC might have?
Yeah, I was a bit surprised at that because, it seemed like TSMC was the only one who could do some of these, advanced level chip manufacturing. But if Intel has the ability to do it, I think this is going to be good news for the entire space because right now we are not constrained by anything but supply of chips, power, and everything that's hardware and chip related things. It's not dollars, it's not demand.
It's speaking of constraint, Apple has been for years, it seems, constrained in the AI race. They're now at the Worldwide Developers Conference, which we'll be covering all day, obviously, tapping Google essentially to build the structure under their AI product, which is really unusual, isn't it, for Apple?
Well, that's how they did with search. They don't have their own search technology. They are, using Google's search technology. So from Apple's point of view, they control one of the most important distribution systems in the world when it comes to consumer tech. And they will use whichever technology is best. So in our view, we like it because we think the probability of them succeeding goes up pretty much because they're using Gemini models and not their internal models, because we have not seen those internal models do anything so far of consequence.
And they didn't have the insane spend that others did.
That's a very good point. That's a very good point. But they don't really have the product yet, and I guess that makes this market ripe for competitors. What do you expect to hear from them today at the WWDC? What should we be watching for?
So for fun, for us, the fun is Mark Gurman always tells us what's going to come next. So he's already given us all the details in terms of the integrated Siri will be allowed to go out and tap into any AI app. So that's a very big thing. So you could call up on Siri and say, Siri, go to OpenAI and take care of this for me. That's a pretty good thing.
For free?
You should have the OpenAI app on your phone.
Okay.
So again, you're going to tap out after so many queries unless you have the premium package. If you have to upgrade using Apple App Store, maybe they make a little bit of money over there.
Yeah.
But Siri by itself will have similar capabilities, which will be powered by Gemini at the bottom of it. So, and again, if you just ask Siri, that would be a private cloud transaction, which would run on perhaps most likely Google Cloud Centers. So Google needs more capacity, which is what you're seeing right now. So there's, from Apple's vantage point, they have the distribution. They are now using the best models for people to use. And again, most importantly, they don't have to spend that much money to do it.
All right. Anurag, great having you in the studio. Anurag Rana, Bloomberg Intelligence Senior Analyst, visiting us from Chicago on this important day for Apple and really for tech after the big drop that we had on Friday. It was the biggest drop, as Danny pointed out, on the NASDAQ 100 at least, since Liberation Day, a 4.8% drop for the NASDAQ 100. And Jensen Huang says, buy the dip. It looks like investors, to some extent, listening because we see futures higher, 0.8% on the S&P, 1.8% on the NASDAQ. This as yields come in at 452, 453. Although oil is rising at $1.70 a barrel on Brent, it's only $94.80 a barrel. So it doesn't seem like oil traders are that freaked out by the shooting between Iran and
it was something like 4% higher this morning before the latest from the president in Iran saying that they were halting some of the action. Let's get a look at some of the other movers on our radar. AI companies Marvell and Flex surging. They will be added to the S&P 500.
Eli Lilly climbing after its next-generation obesity shot can help patients lose 30% of their body weight over about 2 years.
And again, Intel surging on that report we mentioned from the information moments ago. Google and NVIDIA considering Intel as a backup chip maker. Google also plans to order more than 3 million TPUs from Intel.
Coming up, SpaceX is gearing up to launch the biggest IPO in the history of the universe. We'll have more on that next. This is Bloomberg Open Interest.
6, 5, 4, 3, ignition.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Power Players is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving something.
Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Now to high interest. Look what's making headlines around the world. IMF Chief Kristalina Georgieva is warning that the world isn't ready for the shocks that are piling up. She spoke with Bloomberg's Francine Lacroix.
I'm concerned that we are not completely internalizing yet that this is how the world is going to be. We are not going to get to a place where shocks are gone.
For the entire interview, tune into Leaders with Francine Lacroix podcasts wherever you get your podcasts. Mexico's $500 billion pension system is becoming a major new funding source for private equity and private credit firms here in America. New rules allow more investment in alternative assets, and pension assets could reach 12 trillion pesos by 2030, drawing firms like BlackRock, KKR, Blackstone, Blue Owl, and Ares into a growing competition for capital. By the way, if you're wondering what 12 trillion pesos is, use the FE11 function on your Bloomberg terminal. Bending Spoons, the Milan-based owner of Vimeo, Evernote, and AOL, filed for a U.S. IPO, joining a wave of European tech firms and that are seeking American listings. The company reported a sharp sales jump with revenue over $600 million as monthly active users climbed to 500 million. Danny?
Bold as any company that wants to IPO, as all of the market gravity goes to one. SpaceX set to make its market debut on Friday in the biggest ever IPO. Joining us to discuss is Bloomberg IPO reporter Bailey Lipschultz and our chief Wall Street correspondent Sridhar Natarajan. Bailey, how do we even gear ourselves up for a historic week like this? And how does the market even ready itself for an IPO of this size to hit?
We have Matt Miller running around, clapping, getting people jacked up. That's how we get excited for this IPO.
Me and Jamie Dimon.
You and Jamie Dimon, Elon Musk, put him in the room.
Dream
No, I mean, I think the big question right now is investment kind of bankers are pulling these orders. So we already have reported that they already have more demand than there are shares available. That pretty much happens in every IPO, or should happen in every IPO. The big question now is, as they pull in the orders from international banks, as they pull in the orders from the retail community, how are they going to distribute, again, a $75 billion IPO, and what does the plumbing actually look like when we get to Thursday night when these shares being distributed and people are being told what they got, and how does it trade when it opens on Friday? Do we see investors pulling money in the coming days and weeks? Again, I've kind of been beating the drum that this has been the worst kept secret. We've known $75 billion, we've known $1.75 trillion as a valuation, so any professional money manager has been well prepared for a number of months for this deal.
And it seems also like everyone's coming to market now, Sri. Is that the case? IPOs ramping up to a level that's going to make these bankers a lot more money this year than they earned last year or any year since 2021?
Look, at least in the mega deal space, right? Because you know that after SpaceX, you're thinking about Anthropic and OpenAI, and some of these AI companies really do have enormous capital needs, and therefore you will see a race towards the end of the year to see who comes out first. Will it be Anthropic that gets to IPO first? Will it be OpenAI that gets to IPO before them? Because the bankers do say whoever's first out the gate definitely has the advantage, and that's why SpaceX probably coming in makes life a little bit harder for everyone who follows just because of its sheer size. Like you said, a $75 billion capital raise is no easy matter, even if there is enormous enthusiasm and even if you believe some of the staggering projections from the bankers.
But we have seen Alphabet do an $85 billion capital raise, no problem.
But a good chunk of that was an ATM, so it's actually not raised yet. So a good portion of that $80 billion headline number is not actually equity being traded.
That's an at-the-market sale.
That's an at-the-market sale that they can tap as much as they want. So there is a convertible aspect to it. Again, it goes back to pulling every lever that they can and want to pull.
So I don't know, I'll take the other side of Bailey's trade on the lack of enthusiasm. Still, even with the at-the-market, if you put that aside, a $40 billion raise being able to upsize it just in the last week, that itself is incredible, and to have pulled it off in such a stealthy fashion without having a major impact on the stock tells you that there is still good absorption capacity in the market.
But what about for everything else? I mean, I was talking to a private equity executive who was looking at IPOing a company, and their bankers were like, don't do it. Don't IPO now. Now is a horrible time to IPO any company that isn't SpaceX, Anthropic, or OpenAI.
Well, I think that anything with an AI flavor is performing well or trading well and can get deals done. We saw Sienna line up a $2 billion convertible bond that, when I talk to investors, that's going to price tonight. They're jacked up on that. That's a stock up more than 500%. But if you are a B or C list company that has a lot of debt from a PE perspective, it's a lot tougher.
Yeah, and if you're a private equity executive, it kind of sucks to be hearing this now 3 or 4 years in a row, don't do it. That's what they've been hearing for the last few years, and now with these big companies coming into play, life becomes a little bit harder for a lot of these private equity-backed companies, and that's not good news for a sector that's already been stuck with so many companies unable to find the right exit opportunity.
Sri, did your sources worry at all on Friday? Were you talking to people who were freaking out about the almost 5% drop on the NASDAQ 100 as we head into SpaceX IPO week?
I mean, you have to imagine that was a big cause of concern going into Friday evening, but as you wake up Monday morning and you see that there is some level of stability, at least in US markets, the worry is in the past. The worry is the worry of the last week, and that's been the case with this market. Every day we've had a massive pullback. It doesn't seem to persist, it doesn't seem to last, and that is giving bankers a lot more confidence than in usual circumstances when you see a 4 or 5% pullback in the market.
And are we going to look back at this period and say John Gray was right, that this was the year of the IPO, or is it the year of the IPO if you're just like a big AI-related IPO?
Both could be accurate.
I mean, 2020 was the year of the IPO.
Was the year of the IPO, and SPACs aside, there still was a lot of cash raised by a lot of companies, whereas this is very much a handful of huge companies.
All right, Bailey Lipschultz and Sri Natarajan, thanks very much. Fun roundtable idea. Coming up in the next hour, we're going to talk the economics of space with Everything is Flying author Ross Hamilton, and it's appropriate this week. This is Bloomberg Open Interest.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Get your your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Some of the movers on our radar this morning. Campbell's earnings, they beat estimates. The CEO signaled, though, inflation headwinds to come. Apparently, that doesn't matter. Shares are up 2.5% this morning.
Also, Corning shares are up after Amazon reported a deal for fiber needed for data centers. So not the same kind of fiber that Campbell's could give you.
Great connection, Matt.
But like the telephone lines.
Yes.
And Strategy bought more than 1,500 Bitcoin last week after a rare sale of just a couple dozen Bitcoins a few weeks ago. So Strategy is up on that, even though Bitcoin dropped below 60,000 at 5.8% is the rise in the pre-market.
Bitcoin trading just under 64,000 this morning. A check on markets ahead of the opening bell, and we are rallying after a steep drop on Friday that undid 9 consecutive weekly gains, but we're up by 2% on the NASDAQ 100. We lost more than 4%, so we haven't undone that yet. It was the worst day since Liberation Day. It began with stronger jobs data, but really devolved into something that hit the AI and chip trade specifically, just given how far it had run. Brent crude, it's higher by 1.25%, but it was higher by something like 4% early this morning after the exchange of fire between Iran and Israel. The president saying that there would be a stopping to that, and Iran seemingly to confirm that. Less than 4 minutes until the opening bell. We are going to begin the trading day with none other than Ann Berry as we start the week with a rally. You're watching Bloomberg Open Interest.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. We're looking at futures that are higher after the big drops that we saw on Friday. 2% plus on the S&P. Almost 5% was the drop on the NASDAQ 100. And right now you see futures higher, 0.8% on the S&P, 1.75% on the S&P, on the NASDAQ 100, and small caps are up as well. Down at the New York Stock Exchange, this is pretty interesting. This company began as a small soap maker in 1806, Colgate-Palmolive. A company whose name so many people, surprisingly to me, find hard to pronounce. It's a 220-year-old company, and they have some foundation that's a 40th anniversary of this foundation as well. But they have their chairman and their 3 former chairmen up there on the dais.
Oh, I think it's me. I say palm oil all the time instead of palm olive. It's me. It's me you're calling out.
Also, I think, has an issue pronouncing
Colgate palm oil is a thing and palm olive is not a thing, and that's why.
In any case, it's a very old company, so the kids have difficulties. Bach Financial here ringing the bell. It's out of Oklahoma, and up 60% over the past 5 years I was looking, so they're basically keeping up with their index but being outperformed by the Russell 1000.
So this morning here at the Open, I'm looking at all the tech stocks that are rebounding, and rebounding they are after the worst sell-off on Friday. Since Liberation Day, NVIDIA leads the charge after Jensen Huang says, hey, if you liked our stock before or stocks before, you're going to love them now. It's basically saying buy the dip, they're cheap. Micron's up 9.6%, Marvell up 10%. That gets an extra boost because it's also going to be included in the S&P 500 later this month. But Marvell sold off 16% on Friday. So we're just seeing dip buying across tech.
All right, Intel is also helping the recovery, surging on a report that Google and NVIDIA are considering Intel as a backup chip maker. Also, Google is planning to order more than 3 million AI chips from Intel. And because technology is so complex and numbers are so big these days, I have no idea if an order for 3 million chips is a lot or a little. But joining us is Threadneedle Ventures founder Ann Berry, who herself may have a clue. And also, before we get into that, Ann, what do you make of the sell-off that we saw on Friday? Like, at 11 o'clock, when I get off this set, we were down less than 2%, and then we finished the day down 4.8%.
You were done for the day, and then the news cycle changed. I think it was overdue. I just think we're in a really volatile moment. It's usually sentiment-driven, and I actually think, I have a thesis around this. I think people are starting to take profits because they're getting ready for the shake-up of the NASDAQ 100 that's coming with the SpaceX inclusion imminently, and the other IPOs that are coming. So I think people are being opportunistic.
Is this an IPO you even want to buy? I was looking at the statistic that basically said, if you, on average, if you buy an IPO on the first day of trading and hold it for 3 years, your returns are 21% lower than what you would have done if you just held the index. I know it's a little bit skewed. I mean, the S&P won't have SpaceX, but some of the other indexes would. I mean, just given the shakiness of the moment, is this even an attractive time to be buying into IPOs like SpaceX and the other big large language models?
Conventional wisdom would say no. But the reality is most of us are going to be buying into these anyway, right? Because of all the ETFs that we hold, because of all the tracker funds that we hold. So I personally decided to play SpaceX a different way. I bought EchoStar stock. Several months ago when that deal was announced that SpaceX was buying spectrum from EchoStar because I wanted some exposure to it. I would be nervous going in at this IPO. However, I don't have the same answer for OpenAI, Anthropic, and SpaceX because the one thing that SpaceX has that the others don't is Elon Musk. And if there's one thing we've seen is that retail investors want to get a little piece of Elon as much as they can. 30% of this IPO we think is going to go to retail investors out of the gate, but I think they're going to pile in, and they're going to pile in globally, not just
surely
here in the US.
Surely you're exposed to it somehow. You must own the Qs. I mean, at least
I own
in
the Qs, absolutely.
Yeah. So you will have, everybody's going to have SpaceX exposure, like it or not. Is this a disaster waiting to happen for passive investors? I mean, I keep going back to Keith Lerner put together a chart of the top 30 IPOs of all time, and in 1 year, the average drawdown was 55% from peak to trough.
Yeah, do I think this is a disaster waiting to happen? No, but I do think it's a time for folks who do both index investing and active stock picking to really decide if they want to start reweighting their portfolios, which is something I'm doing. I'm looking at selling my Qs to go and basically create my own weighted portfolio in the way that I think it should be weighted. The reality is so many of these ETFs are somewhat lazily constructed, right? They're weighted by market cap. And so I'm hunting around finding alternatives. There's one that I liked that was set up by the former president of Tesla called Vista Shares. And what his team did was go look at, for example, for a data center, what's the bill of materials? And weight the stocks by the bill of materials weighting that you see instead of just market cap weighting. So I'm looking for alternatives actually to just the Qs and the very basic index funds.
So Srini has a note out that he put just moments ago, and one of the big themes he has is that we've gone from token maxing to token panic. Just the idea that this stuff is too expensive.
Yes.
But he basically has this idea that it does take some of the steam out of the AI infrastructure rally, that we can only go so far because there's a ceiling on how much we can use this stuff.
Yeah.
Just because people are realizing the type of bill that they're going to be running up. Should that start to factor into any investment cases at the moment?
It started, look, Uber came out and said this, right? And it sort of started some of this momentum going and said, look, it is now becoming so expensive to buy these tokens that we're going to look at paring back. I think there's going to be a moment where there is this correction, Danny, but I also think this points to a broader operational issue in these public companies. Companies haven't yet figured out the highest and best use of the allocation of their tokens. And I'm seeing this in the businesses I'm very involved with. We've got this moment of experimentation where everyone's piling in every function for every use case is trying to figure out because there's a fear of missing out on the use case that wins. I think now is the time when people like the chief financial officers come in and say, no, you actually have to start showing by function returns on investment to your token allocations, and there'll be a much more disciplined use of these versus this free-for-all. But I think it's going to be painful for a moment, and then I think that's where we actually see the productivity kick in.
How are you using it, Anne? I mean, what are you doing with your bots?
Yeah, I'm doing a lot in certain spaces. In one company, and I'm careful how I say this, we basically eliminated the entire marketing function. And we're doing a lot with Claude in social media content creation, in CRM, email campaigns, basically using the Gen I and making sure that we're optimizing. I had this moment, actually, I was very excited. We finally got a sales lead come in where the lead said the source of finding you was ChatGPT, which was a huge win. So that's the kind of thing we're using it for. Another one is to find white space opportunities as you're looking at your existing clients, looking to get share of wallet. And another one, actually, one manufacturing business, it was actually one of our site leaders who said, you know, Anne, I would like more token allocation because I want to look at root causes when we don't hit our productivity or our customer fulfillment metrics. And I want to use Claude for that. So every function's using it. They're trying to figure it out.
Are there any legacy software that you're using AI in instead? Like, does that give you any insight to some of the SaaS apocalypse and the reality of that?
Yes, there's one actually. I'm not going to name names on this. I'm going to be careful. But there's one business where the CRM system is not yet AI enabled. And I'm tearing my hair out because I know what Salesforce can do, right? And so some of these software as services businesses that are serving small and medium-sized businesses that aren't there yet, they've really got to get their act together, and they got to do it quickly because it's super frustrating for the user.
I want to ask you quickly before we go about drones, because I saw it mentioned prominently in your note. Also, I talked to the CEO of Pelican, the box maker, and for them, drones is a huge new source of business. Right? It's no longer just diving equipment and camera gear. What's your take on drones and where the opportunities lie?
Yeah, I think there's two places. Look, the drones, unmanned systems are the future of military action. And I've basically become an investor in a military drones business by accident. I was an investor in something called Drone Racing League. It spun out its tech into a business called PDW that solves the military. It was cited in a number of reports in recent weeks as potentially being a recipient of White House funding because the United States is looking at what's happened. Iranian drones, also used by the Russians in Ukraine, they're inexpensive, they cause a lot of damage, and they're very expensive to intercept. And the US does not really have a solid drone manufacturing base. So I think looking there, places like General Dynamics are the obvious play, places like Kratos are very expensive, and then go subsea. We're now going to start seeing it with submarine equivalents, right? So there are businesses like Oceaneering International I've looked at in the past for oil and gas, single-digit EBITDA multiple. Now it has military applications.
Interesting. Anne, thank you so much for joining.
My pleasure.
Always wonderful to have you on. Threadneedle Ventures founder Anne Barry. Let's get a check on your equity markets about 10 minutes into your trading day, and we move higher after a big decline on Friday that capped 9 consecutive weekly rallies. We ended up falling because of that big sell-off. Tech goes through something that looks like a correction, and so we bounced back this morning, led at least when it comes to points by NVIDIA. NVIDIA adding nearly 11 points to the S&P 500, followed by Micron. Apple has its Worldwide Developers Conference today. We'll bring you any developments from that. Broadcom bounces back after its earnings-led sell-off. Intel also moving higher on a report from the information that NVIDIA and others are going to be looking, and Google are going to be looking to Intel to make up for some of the lacking capacity that is coming from TSMC. To the downside, I want to point out that you see names here that have either announced or floated in an idea of an equity raise. So Alphabet, we know about theirs. Meta, the reports on Friday that they would also be looking at tapping equity markets. And Ciena also this morning offering convertible bonds. Those shares fall by 5.3%. Looking at the individual indexes, it is tech that is leading us higher, again, after leading the sell-off on its worst day since Liberation Day on Friday, up 1.8%. Energy, as the price of oil moves higher, the latest in the Middle East, up 1.25%, as communication services and real estate find themselves at the bottom of the pile, Matt.
All right, so fascinating setup for today's market, for this week's market. And if the SpaceX IPO and the tech saga weren't enough, we head to Cupertino, California, where Apple is unveiling its plans to integrate AI finally into its products at the Worldwide Developers Conference. This is Bloomberg Open Interest.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
Good morning, this is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Every weekday, Bloomberg puts the spotlight on a different aspect of global finance. Flows, funds, and the forces shaping markets on ETF IQ. The future of money with Bloomberg Crypto. The players behind major transactions on Bloomberg Deals. Rates, risk, and the cost of capital on Bloomberg Real Yield. And personal finance, retirement, and wealth management on Bloomberg Money. A different topic every weekday, only on Bloomberg Television.
Let's get you some top calls. What the sell side is saying this morning. First up, Baird. They've upgraded Crocs, saying the company's sales trends look steadier in North America, and its Hey Dude brand. Hey Dude brand. Yes, Hey Dude. While spending...
Sydney Sweeney.
Wait, does she have something to do with Hey Dude?
Yeah, she does the ads for Hey Dude.
I had no idea. Well, here's the Sydney Sweeney impact. They say spending discipline and cash returns make the company's profit outlook more attractive. And next up, Barclays is upgrading Avis budget, saying that the company could save a lot of money by handling more work itself. Rental demand, they say, is also still looking strong and could lead Avis to raise its outlook. Shares up just over 3.5%. Finally, UBS is raising Cummins to a buy, saying AI data center demand will lift its power business, and a solid truck outlook and a new engine rollout will support stronger earnings. Those shares up 2%, Matt.
All right, very cool stuff. Now, Intel shares are soaring, helping lead the recovery in stocks this morning. The Information reports that Google has placed an order with Intel to manufacture more than 3 million of its specialized AI chips in 2028. Bloomberg Tech's Ed Ludlow joins us now from Cupertino, California. He's there ahead of Apple's Worldwide Developer Conference. But, Ed, I was trying to figure out, like, is 3 million TPUs a lot? Apparently, it certainly is. We're talking about enough chips
Yes.
for like at least 3 gigawatts of compute.
Yeah, that's the right way to think about it. I mean, nobody really knows what the current production ramp of the TPU looks like. The TPU is currently fabbed by TSMC, but it's designed by Broadcom, where Google holds the blueprint, the architecture, and the underlying software. And so, like, maybe the consensus in the market is that heading into 2027, Google was ramping to maybe like between 3 and 5 million units. So 3 million as a standalone order is a lot, but I'd say I think the Information report says specifically it starts in 2028, so it's a little way away. And I think it's split out over time. But the Intel reaction is completely logical, right? You know, Intel has been looking for some blockbuster name customers for its foundry business, where it becomes a contract manufacturer. It fabs chips for third parties. And yes, 3 million in that case would kind of fit the bill.
I mean, we're forecasting SpaceX revenue out to 2040, so 2028 seems like pretty soon.
Hey, just in all of that, I mean, does it also say something, considering this is the most advanced chip for Google, that presumably Intel, if it doesn't already, will at some point have the capabilities to produce it?
Well, I mean, the state of play for everyone is that demand for compute is running far beyond supply. You know, that is the state of play, whether you're a fabless chip maker like NVIDIA or you are TSMC that is currently trying to manage the demand of all of those customers and work out how you can output volume. So, you know, that is the reality that Google finds itself in. You know, the TPU, like the folks in the control room, the camera operators here in Cupertino are like, well, what's the difference between a TPU and GPU? Basically, the TPU is the special purpose tool if the GPU is a Swiss Army knife. And the net result is that they're accelerators. They run computations for specific AI workloads. They do the same thing. It's just that when you have a TPU, it works so much better with your own software for whatever the process is you're trying to run. It's a more efficient platform on a dollar per token basis or dollar per kilowatt basis. That's why it matters.
It's important to have a special purpose, I would say. And Apple stock It's doing pretty well, right? Over the last 5 years, it's up 150%. Year to date, we're looking at a 15% gain, roughly. How much does the AI story, its lack of really an offering, and now something new to come, affecting the stock price?
Yeah, Apple is the second best performing stock in the Mag 7, in part because investors look at it as AI adjacent. They give Apple a lot of credit for resisting the urge to spend tens of billions of dollars in development of AI and on substantive compute. But today really matters, and in simple terms, what we're expecting is a very big revamp of Siri, where Siri stops being a feature and it becomes a destination. A standalone app is probably going to be the main headline, but it's something that is literally just akin to ChatGPT, Gemini, or Claude as standalone apps, something you revisit, you do a project in it, or you do multiple step tasks, rather than like, hey Siri, phone mum. You know, that has been the extent of it so far. But the Wall Street's been very comfortable with that in more recent history to this point.
Ed, there's what we might get, and there's how the stock might react. What does history tell us about how Apple tends to behave?
Yeah, I mean, I was talking about this with the equities desk this morning, where, I think, the options market or the sell side would say it's hard to see a relief rally. Because of the year-to-date performance and more recent performance that Matt mentioned. It would have to be something pretty extraordinary outside of what Bloomberg's already reported we expect, or a piece of functionality, or a step further. The reporting is that this new iteration of Siri is powered by Gemini, Google's models, and Google's compute. But like, what if they went a step beyond that and there was something, deeper on a technology partnership side? But yeah, I don't think many people see a relief rally, and it can be a sell the news. But when you guys were talking with Anne, right, about legacy software and how AI might displace certain legacy software, what we have seen in prior WWDCs is when Apple steps on the turf of others, those stocks do tend to move, often negatively in reaction. So watch out for that.
Ed, thank you so much. Looking forward to your continued coverage there at Apple's event. That's Ed Ludlow reporting live from Cupertino. And of course, Bloomberg Tech kicks off at 11 a.m. Coming up, airlines are cutting profit forecasts as fuel prices surge. We're going to have the latest from the IATA conference in Brazil. This is Bloomberg Open Interest.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Versace in Beirut, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
now forecasting lower growth, principally as a result of the negative impact in the Gulf.
We start to see futures in jet fuel go down, right? It's going to take longer. It's not going to be quick, right? But things are coming back on track.
Supply will get very tight because it's been impacted by the crude supply and then by refining capacity.
If the fuel significantly spikes, we're going to have to raise ticket prices to compensate for that.
We are finding that our consumer has an insatiable appetite for premium experiences.
Time will tell. It depends on what's happening with the economy, what happens with oil prices.
Some of the airline industry's top leaders speaking to Bloomberg at a summit in Rio. IATA has slashed its profit outlook for the industry as fuel costs and the war in Iran take their toll on air travel. Joining us now is Bloomberg's managing editor for space and aviation, Benedict Kamel. Benny, it is kind of interesting to listen to the different executives there, the European ones, saying we're worried about higher fuel prices. Then you hear from Delta essentially saying our customer is buying a lot and everything is great.
Yeah, I mean, there is a bit of a split screen going on here. I mean, what is indisputable is that fuel prices are incredibly high. There was a short clip there from Willie Walsh, who is the Director General of IATA, and that organization came out with a pretty muted statement on Sunday saying that the profit outlook for the industry as a whole is basically has been cut in half. So we're going to see just north of 20 billion in profit for the industry as a whole, and coming into the year, the projection was north of 40 billion. So that gives you a sense of just how much has been sliced off from the industry because of what's been going on with fuel prices. And to your question, it now really depends on where you sit in terms of sort of what kind of customer you serve. If you're Delta, yes, you will have the more affluent customer. You will have people who might not care that much that their ticket prices have gone up a little bit. But if you're more on the lower end, if you're at the back of the plane, as it were, that's where things can get very choppy very quickly. And that's the part of the market I think that everybody is watching. Who will come out of the summer period intact and who might have to actually look for some kind of help. We've already seen Spirit go under, and the mood on the ground at IATA is that's probably not the end of it.
Benny, just got 30 seconds here, but how different is the story for the European airlines around you in Berlin and the U.S. airlines that are serving us here in America?
Well, U.S. airlines are generally pretty relaxed about what's going on, partly because they can sort of go with the flow. They don't hedge their fuel. In Europe, the picture is a little bit more diverse. One advantage that the Europeans have is that the Middle East carriers, which are sort of the bane of their life, the Emirates and Qatars of this world, they have not been able to operate at full force. So for the time being, the Europeans have a bit of a sugar high. They can pump more capacity into Asia, but they also said yesterday that will go away. So everyone is asking what's going to happen after the summer, and as we head into the dreaded shoulder period when business really slows down, that's when you're going to see who's left naked and who is actually doing okay.
All right, Benny, thanks so much for joining us. Bloomberg's Benedict Kamel runs aviation coverage for us out of Berlin. Coming up in the next hour, Dana Dioria on the tech reversal, plus Al Rabel on why he believes alternative real estate is entering a super cycle. And we discuss the economy of space with author Ross Hamilton.
Being called an ideological lunatic or a bunch of left-wing nut jobs?
I've been called worse things than that.
she owned the place.
23andMe, I think, is so incredibly valuable. We're coming back.
It had that kind of detective story feel to it. You know, when you're hot on the trail of something, you know that it's very exciting.
What magazines were you reading as a kid?
I don't think I was reading magazines until I was in them.
You are on the cover of all of these.
Oh, and there's many, many more, but we just don't have time.
Why should people trust you?
I don't think anybody should trust any company or entity completely with any of this.
It's very uncomfortable. Artificial intelligence is this force that is far bigger than we are.
I want to build better businesses around these brands.
The shock will never wear off.
So you're a brother and sister running one of the most powerful companies in the world. When you argue, who wins?
No one. The way I could see AI being banned or blocked is if something really went wrong. And if something really went wrong, then maybe it deserves to be.
So is it Paradise Ahead or Gattaca?
Maybe somewhere in the middle.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
ABC News. I'm Brian Clark. Iranian state media says 15 people were injured in the recent wave of Israeli attacks. Israel has not commented on whether anyone in Israel was hurt in Iran's attacks. Each side says their offensive attacks are over for now, as President Trump had urged the countries to stop exchanging fire earlier today. More from ABC's chief Washington correspondent, Jonathan Karl.
The president is saying that his peace deal is still on the verge. He's been saying that for now months, saying only subject to ignorance or stupidity getting in the way.
Tonight, the president's due to attend Game 3 of the NBA Finals at Madison Square Garden in New York City, and that creates a unique security challenge. Matt McCool with the Secret Service says
the Secret Service, the NYPD, and our public safety partners have worked closely together to develop a multi-layered security plan. You will see Secret Service, police, and special agents, transportation security officers, federal air marshals, and the NYPD officers throughout the area.
An outdoor watch party has been canceled. Fans are not allowed to bring bags into the game. They're being urged to arrive at least 2 hours early. President Trump continues unsubstantiated claims of fraud in the California vote counting. It's been nearly a week since primary day, and a progressive candidate has surpassed the former reality TV star Spencer Pratt in the L.A. mayor's race, says ABC's Trevor Alt.
We know Spencer Pratt had generated a lot of buzz and also a lot of controversy with his conservative run for L.A. mayor. It does appear, though, that this could be the end of the road. He's needing to finish in the top 2 of the primary, and progressive councilmember Nithya Raman has now surged past him. She has a narrow lead, about 3,100 votes. That's less than 0.5%, but she's gained on him every day since election night.
Trial begins for the man accused of starting the fire that turned into the devastating Palisades fire last year. You're listening to ABC News. Maine's primary election tomorrow has drawn nationwide attention. Democrat Graham Plattner is seeking the Senate nomination, but his background's being scrutinized amid reports of past wrongdoing. ABC's Selena Wang explains why this race is so important.
Maine is absolutely critical. I mean, this was really seen as the Democrats' best shot at taking back the Senate, because in order to do so, Democrats, they've got to hold on to every seat they have, and they have to flip forward. Now, they do see openings even in red states like Texas and Iowa, but Maine is really seen as a must-win state.
In discussing his past, Plattner has denied ever being violent towards women. He said that his opponents are weaponizing his past struggles as a combat veteran. 2 Americans, a pilot and co-pilot, were killed when their plane was attempting an emergency landing in the Dominican Republic. There were no passengers on board, but former MLB All-Star Yadier Molina said on social media the private plane was bound for Texas to pick him up. Ukrainian President Volodymyr Zelensky's put pressure on Vladimir Putin to meet to end the war between the countries. He told Sky News why he chose to send Putin a public letter.
I wanted very much to send him that to stop playing these games and answer. If it's public letter, he has to answer.
Schmigadoon won Best Musical at the Tony Awards last night, while Death of a Salesman won 6 Tonys overall. I'm Brian Clark, ABC News.
Hot summer days and high energy.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City. To our worldwide audience, we are streaming live on YouTube. We're also streaming live at Bloomberg.com, so check us out there. Stocks on the move higher here today. We'll get to that in just a moment. We're going to check in with Ethan Bronner, Bloomberg Israel Bureau Chief. He's based in Tel Aviv. We'll get the latest reporting out of that part of the world. Ed Ludlow, B-Tech co-anchor. He's at the Apple headquarters in Cupertino. They're having their big developer conference today. We'll get the latest there. A lot of AI stuff, I think, is what is expected. Kim Forrest, founder and CIO of Boca Capital Partners, will get her thoughts on these markets. And Rob Burnett, Bloomberg Intelligence Senior Energy and Commodities Analyst, on what's going on in the world of oil. A little bit higher here today on some skirmishes over the weekend, but paring back some of those gains as well. Right now, let's kick this whole thing off with John Tucker and a Bloomberg Business Flash. John.
All right, happy Monday, guys. This Bloomberg Business Flash brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% annually, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. Well, after Friday's more than 4% sell-off for the tech-heavy NASDAQ, dip buyers stepping in to some extent right now. Information technology among the best performing of the major industry groups. You have Intel and Micron, single best performing stocks in the S&P 500. You recall on Friday, AMD was down over 10%. This morning, the shares a bit of a recovery, up 3.4%. I'll just go right down the list. NVIDIA up 1% right now. Micron Technologies 7% higher, and Marvell Technologies up close to 9%. The Philadelphia Stock Exchange Semiconductor Index, the SOX, up 4.5% right now. New Jersey-based Campbell's third quarter adjusted earnings per share beating estimates. Camden, New Jersey.
Yep.
I don't know why they make soup in Camden, but those shares actually lower after the results. Meantime, Lori Calvasina at RBC Capital Markets keeping an eye out for any more sell-offs in the market.
I'll spare you all the math, but if you go back since the great financial crisis, if we get a peak-to-trough drawdown more than 10%, typically it goes to 14 or worse, and what we tend to see is that recession fears seep in.
Right now, energy is the best performing major industry group in the S&P 500. That is oil pushes higher. Brent, the active contract, up 1.4%, 94.40 barrel because of the tensions in the Mid-East. Overall, the S&P 500, 50 points higher. That's up 0.7%, 74.34 on the index. The Dow Jones Industrial Average up close to 200 points at 51,056, and the NASDAQ Composite Index is up just about 1% at 247 points. Did you see this? The hottest car in the U.S. right now?
Yeah.
It's a used car. Toyota
Hybrid,
RAV,
right?
The RAV4 hybrid, the
There you
Toyota.
go.
Kids like that.
Yeah, I mean, the reasons are obvious, but CarMax had advertised a 2024 RAV4 Hybrid XSE with 29,000 miles for close to $47,000. Wow. That's higher. The original price is $38,000, the sticker price.
I guess you can't get the new ones then, right?
Well, they're still, I mean, they're delayed. Let's just
okay.
put it that way. So, anyway.
People are driving really old cars around right now.
I did
Average
drive.
age is so
I
expensive.
drove the hybrid Subaru. It wasn't
Forester?
the Crosstrek.
Impreza?
I think it was the Forester. Loved it.
Yep.
And man, that thing. I drove that 200 miles. I didn't put any gas in it.
Nope.
It was awesome.
Yep.
I'm a convert. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Happy pre-Nix Day, Scarlett
Yes.
and Paul.
Absolutely.
Very excited about that.
Yeah, I'm getting out of Dodge as soon as possible to Penn Station. Get out of there. John Tucker, thanks so much. Appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Brokerage Studio, streaming live on YouTube as well. As John was just reporting, got some green on the screen here. Let's take a look at some of the stocks on the move today. We can do that with Tatiana Darie, strategist for Markets Live, Bloomberg News. She joins us here in our studio. Tatiana, what are you looking at?
Well, let me start with NVIDIA, up about 1%, was leading against in the S&P 500 earlier. It has a sort of a lot of things going on this morning. It signed a multi-year pact with SK Hynix to design the next generation of AI memory chips, which we all know are in very high demand. Sure. Separately, it's also agreed to deepen its alliance with Hyundai Motor Group to turn so-called physical AI and robotics into real industrial products. We know that's been sort of a key focus of Jensen Huang and the next big addressable market for chips. So the roadmap aims to be moving robotics from the research labs to actual factory floors. And not least because Jensen Huang also told reporters that the global tech sell-off is a buying opportunity. Maybe that's why we're seeing so much green on the screen here, saying that the building of the AI build-out has just begun. So it looks like some of those traders have been listening to what Mr. Huang has been saying in Seoul.
All right, good stuff. Next on your list.
I'll pick up on Campbell Soup, New Jersey-based Campbell. Jana just Googled it. It's an hour's drive from my house. Maybe I should pay a visit to understand what's going on there.
You get a tour of the soup factory.
Tour of the soup factory. Well, the stock is slightly lower, was up higher, so it has been swinging this morning after a pretty mixed earnings set. Well, net sales slightly lower than expectations. Adjusted EPS beat estimates, so that helped the stock earlier. But after the call, things have turned around here a little bit. Analysts at Piper Sandler saying that the reiterated full-year guidance looks achievable, but that margins are still pressured and they're down year over year. The company also eliminated its share repurchases, no plans to boost the dividend. These are things that investors are not liking. And I know it's leaving the S&P 500, not exactly on the day, but it is leaving, and I think Marvell is a company that it will replace it. So that's a
classic old economy, new economy.
Where we are right now.
Manhattan clam chowder, that's my go-to.
And they have the green, the iconic red cans, but the protein added soupy things. The green label, it's just, Andy Warhol would be spinning in his grave.
Exactly. I don't know. All right, how about Eli Lilly?
Eli Lilly. Well, the race for obesity drugs just got tougher after the latest American Diabetes Association meeting, where Eli Lilly presented data for the next generation weight loss drug that can help patients lose 30% of their body weight over about 2 years. And that's after peers, including Roche, had a tougher time at this meeting with their drugs less competitive on weight loss and with higher side effects. And this comes at a time when this pharma company are trying to challenge the dominance of Eli Lilly and Novo Nordisk in this space. And apparently the narrative is now moving from just an obesity pill to something more holistic of lifestyle, better results, more convenient, lower side effects. And Eli Lilly executives made sure to, convey the message that they're also working on that, in that the years ahead, they're going to move from a one-size-fits-all approach to something more tailored to customers' needs.
All right, good stuff, Tatiana. Thank you so much. Tatiana Darrier is a strategist for Markets Live. You can check out her work at MLiveGo on the Bloomberg terminal. And for more conversations like this, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market. You can subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Oil prices, they are moving higher, although not by large amounts. Brent is just below $95 a barrel, WTI holding at about 91 and change. And this comes as Iran and Israel have now ended multiple exchanges of fire, but I guess they're leaving the possibility of resuming attacks there as kind of a threat to each other. So let's bring in Ethan Bronner. He's our Israel bureau chief for Bloomberg News, joining us from the Tel Aviv newsroom. Ethan, just give us a context, the backstory here for what happened over the weekend and how the two sides have, at least for now, ended these exchanges of fire.
Sure, Charlotte. I mean, we've been talking in recent days about the fact that Hezbollah and Israel have been effectively at war. There's no real truce there in southern Lebanon, and that Hezbollah has also been firing into northern Israel. And that's a very sensitive point as we approach elections here. Prime Minister Netanyahu has promised the residents of the north that they would stay safe, and that was the point of this big invasion of southern Lebanon, and that isn't working. So the Israelis upped their attacks by going into southern Beirut, into this neighborhood known as the Dahia, where Hezbollah is based, and that led Iran, which views Hezbollah as a proxy, to attack Israel directly in northern Israel. And then this morning, here in the Tel Aviv area as well, we were driven into our safe rooms and bomb shelters the way we'd been a few months ago and a year ago. So then Israel went heavily into Iran, and that's what happened. Trump said, this has got to stop, and both so far have agreed to stop.
So what's the feeling within Israel as to the broader conflict here, Ethan? Is there a sense that the U.S. wants to end this Iran war, or is there a sense that, boy, this could just continue to drag on?
Well, there's definitely the sense that Trump wants it to end. He has his own midterm elections coming up in November. And of course, as we've talked often about the prices of fertilizer and oil and all kinds of inflationary impact that this war has had. There's no doubt about that. But he at least says he's also very eager to make sure that Iran doesn't have a nuclear weapon and that its highly enriched uranium is removed and all that sort of thing. So the Israelis are worried that he's going to, effectively end the war without those things happening. But, he and the prime minister speak often. They seem to have a good relationship. Prime Minister of this country says he's going to do it diplomatically. Let's give him a chance. And that's where it stands for now. Of course, the fact that the people in the north feel that they don't feel safe is making it harder for Netanyahu to see an electoral victory when elections come in about 90 or 100 days.
At the start of the war, President Trump and Prime Minister of Israel, Benjamin Netanyahu, are very close allies. I mean, the two went into this conflict together, very closely aligned. How has that relationship evolved as this war drags on? Because President Trump has had to intervene several times, and there are reports that he yelled at Netanyahu and lost his temper. Just walk us through what that looks like now.
Honestly, it's very difficult to give a comprehensive answer. There's no question that there's been a lot of yelling. There's also no question that they seem to agree. I would say that Netanyahu is probably his closest ally in the world. So the fact is that, yes, there's been a lot of back and forth, and Trump has his own needs, and the United States has its own needs, and Israel has its own needs. But for the moment, I do not see a major break between these two guys.
Ethan, thank you so much. Really appreciate your reporting. Ethan Bronner.
Sure, guys.
Israel Bureau Chief, Bloomberg News. He is based in Tel Aviv. Red headline crossing the Bloomberg terminal. FTX co-founder Bankman-Fried formally applies for Trump pardon. So I guess we've been expecting that for some time. So there you go. So we'll have more reporting on that coming up.
Or at least the reporting has indicated that
Yep.
was what he working towards.
Yep, so we'll see how that plays out. Green on the screen across the board, led by the NASDAQ. NASDAQ's up 0.9%, 235 points. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. You know, it's a bit of a rebound for risk appetite. I say a bit because we are pairing some of the earlier gains. And technology shares right now, they are leading the gains. Information technology is the best performing major industry group in the S&P 500. Communication services, right now that's at the bottom of the list. Information technology is followed by energy is the second best performing major industry group as we see oil increasing today. Brent crude up 1.3%. WTI right now up 0.9%, 91.36 a barrel. Best performing individual stock in the S&P 500, that belongs to Intel. According to the information, that publication, Google decided to tap Intel to make some of its TPUs, the TPU. I got to get all this straight. Tensor processing unit.
There you go.
Which they process large amounts of information at a sort of a, less flashy scale.
Their version of the GPUs that NVIDIA makes.
Okay. You bring up Intel's NVIDIA's GPUs. You know where that GPU, that designation came from?
No.
It came from NVIDIA. It was part of a marketing ploy.
Really?
Because they wanted to sound as important as CPUs, and graphics cards were,
Okay.
They were
Now
just
look
a
at
peripheral.
it.
So
Now everyone's
they
keying off
came
of
up,
that.
hey, let's try to sound important, so they came up with GPU.
It's all about marketing.
Marketing. This is the stuff I'm getting from my NVIDIA book that I'm reading, so it's fascinating. Anyway, I'll bore you later with more. S&P 500 up 48 points. That's a rise of 0.7%, 74 to 32 on the index. The Dow Jones Industrial Average up 156 points right now. The tech-heavy NASDAQ Composite Index, after the 4% decline that we saw on Friday, right now 1% higher. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Paul.
All right, good stuff. Thank you so much, John Tucker. Let's go out to Apple Park, which is the home of Apple's Worldwide Developers Conference, which is kicking off today. Apple is a stock that's quietly become the second best performer among the Mag 7 names this year, even though it doesn't really have an AI story of its own. Ed Ludlow is on site there at the Worldwide Developers Conference. Ed, what is the story that Apple is going to try to tell when it comes to AI? Because so far, there's been a lot of potential, a lot of promise, and it hasn't really delivered.
Yeah, I think the story is really simple, a big revamp and relaunch of Siri. And if you're listening or watching, you may well be familiar with Siri if you are an iPhone user. You may also not be, right? And the story is going to be Apple taking Siri from a feature where you give a single voice command. The example I've been giving all morning is phone mum, and then it phones mum for you, and it ends there, to something of much more substance where, per Bloomberg's reporting, there will be a standalone Siri app, much more akin to the ChatGPT app that you might have on your phone, the Gemini app that you might have on your phone, where it is capable of multi-step tasks, but also to follow you from device to device. You know, the whole hardware story of Apple has been about the installed device base. There's 2.5 billion devices around the world that extends from iPhones to Mac to iPad and everything in between. And the idea is that Siri is enduring, right? You can do projects in it. You can do multi-function tasks, just like we're all doing with all the various tools that are out there. I know, Paul has a window on his iOS screen dedicated to all the AI apps that he uses. The question, very simply, is this new Siri enough to get you to put ChatGPT to one side or Claude to one side and go with Siri?
So, is such an announcement today, an enhanced Siri, is that good enough for the marketplace, do you think, Ed? Is that going to be well received?
Yeah. I was really interested. I think Scarlett framed it really well. Apple is the second best performing Mag 7 name this year. Is that a surprise? She said with a lack of an AI story, but can't all things be true? I think the sell side, at least, but also those that are buying the stock, give Apple a lot of credit for being an AI adjacent name, where they say, actually, you know what, Apple's not spent tens of billions of dollars. It doesn't have the crazy CapEx figure that the hyperscalers do. And the street kind of likes that, if and only if the net result is that, Apple has its own AI platform that is worth discussion.
So when it comes back to Siri and rebooting Siri or relaunching Siri, the new and improved Siri, a lot of this is because Apple has decided to partner with Google and its Gemini technology. How is that supposed to change what Siri is capable of doing?
Well, the capability of it, and it comes down to that quite simply. Again, I'm just trying to go back to basics for the audience, but it's like right now I can say, hey, Siri, set a reminder for my flight at 4 o'clock to New York City, right? And it will do it. Done. Then I leave it. I've gone away. What Bloomberg is reporting is that this Siri standalone app, but also how it's integrated throughout OS on different devices, is more agentic. In other words, it's capable of multiple tasks. I was giving the silly example this morning of okay, Siri, check my calendar for Wednesday when I'm in New York City. Check Tom's. Can Tom be available to meet me on 6? And then send a memo to Tom. I don't know if he has a chief of staff anymore, but Tom Keen's chief of staff, set up the meeting and have it added both our calendars. That multi-step process and its ability to be personal to you, actually go inside of your existing iOS, whether it's on your phone or Mac OS on Mac, and do something of substance. The question around Google is, did partnering with Gemini as the underlying model, but also on the cloud compute side of Google, allow for that to happen?
This is going to be Tim Cook's final developer conference. Are we expecting any special occasion here?
It's hard to say. You know, the reporting that wild evening when the news broke was that the reason there's the September 1st handover is in part to get through this June WWDC moment. You know, John Turnus was in an event last night taking a lot of photos in exactly the same way that Tim Cook has historically done with creators and influencers and the press and stuff. But remember that he has historically been the hardware guy. And so, you know, if they absolutely crack and nail Siri today, it's not going to fix the state of the smartphone market in 2026. Longer term, it might make the consumer say, I really need to upgrade my iPhone because I want to have the full capability available through this Siri. But the transition, you know, it'd be just very interesting if Turnus has more of a presence on stage in the keynote, given that he has historically been hardware. This is all about software.
Yep. All right, very good. Ed Ludlow, thanks so much. Appreciate that. As always, Ed Ludlow, Beat Tech co-host. He's out there in Cupertino at the Apple HQ for their developer conference today. Again, this is the opportunity for Apple to reassert its position in AI, and we'll be paying attention to that throughout the day. Let's get back to these markets. Again, we got lots of green on the screen, led by the NASDAQ up 1.2%. Again, recall that the NASDAQ was down 4.1% on Friday.
Yeah, so we ended the week on a very, very weak note. And then, of course, you have the recovery, although it should be noted that overnight in Asia, Taiwan Stock Exchange, Korea Stock Exchange, jam-packed with those semiconductor companies, both plunged.
Yep, absolutely. So let's get a fresh look at it. Kim Forrest joins us here, founder and chief investment officer at Boca Capital Partners. She's out there in Pittsburgh. Kim, talk to us about how you're viewing kind of the tech space these days and maybe AI. I guess that's probably a pretty apt question given that this is the week of the SpaceX IPO.
Sure. I mean, it's all happening, isn't it? Ups, downs. It's like a telenova for tech, you know. Oh, and then we have the Apple stuff going on.
Right, on
Let's
top
throw
of
it
that.
all in the mix. Well, I mean, I think really AI is the big question. And you guys know I'm an ex-software developer that actually worked in AI in the dark ages. Just kidding. But there was AI before, you know, the last couple of years. And I've always been tremendously in favor of AI, but it has to add value. And it has to be at a price that people are willing to pay. And that is the big thing that's hanging over all of this. You know, the big four horsemen keep piling all the money they have into it. And now it seems as if Apple has picked a winner, Google. And that is kind of an interesting thing in the mix. But what people are really wondering is all of the chip makers and memory makers, are they really worth it? Are the sales going to come through? And I think the answer is kind of sort of yes, but it's never going to be the way you think or on the timeline that you think. So that is what makes investing in this area extremely difficult.
Absolutely. The long-term promise is there, but how we get there is still not clear. So when we have days like Friday where the NASDAQ plunged and there were lots of think pieces about how perhaps things had gotten too far too fast, how do you take stock of moments like that? I mean, in many ways, you could say that was a long time coming.
It was. And yet, guess what? Some value was wiped out because there were people that have bought in recently, right, at those tremendously high prices. And it's going to be a really long slog back there, potentially. Or we could have another, you know, May happen, right, where things just always went up. So that's uncertain. But I think you have to know that AI is for real. And even a company like Apple that has been shy on risking their entire future on developing AI themselves. I think it's brilliant what they did, by the way. They're a hardware company, not a software company. It's probably a divisive statement there, but they know who they are, and now they're going to deploy AI. And I think this is interesting, and the agentic aspect of this, being able to do many things or one thing after another, that's key. And I think that is the productive part of AI. So keep your eye on how they introduce it and how they are going to position this, because they're in the forefront now of the people delivering AI.
I'm sure you read through all 277 pages of the SpaceX S1. What is this company in your mind?
The future. Like, people who are buying it are buying the flying cars and moving to Mars.
Yep. And is that something that resonates with you? Do you feel like you have to have some exposure, or is it just, let me just see how this all kind of plays out here?
It's a little too far, even though I'm somebody on the street that thinks 3 to 5 years is my timeline, and that makes me like incredibly long term, right? And SpaceX is out of those bounds. They're more like 10 years. So we'll keep an eye on that space. But I also am looking for productivity, and not really sure how SpaceX fits into my whole productivity theme.
Right. I mean, SpaceX is about the future 10, 20 years down the road. What does this mean for other companies that pitch themselves as being in the space economy? I mean, is this a rising tide lifts all boats?
I think. And I think what this really demonstrates is that probably not final, but maybe in the last stages of the governments of the world, making their own in-house tech, and then allowing it to go out to corporations. And now we have the reverse. The corporations are going to be the drivers and of developing the technology, and the governments will pay for it. And will, instead of owning the rockets, they'll rent the rockets.
Yep. All right, Kim.
Wow, that could be a great name. Rent the rockets.
Rent the rockets.
Instead of rent the runway.
Rent the runway. Kim Forrest, founder and chief investment officer of Boca Capital Partners. She's out there in Pittsburgh, PA, talking these markets and talking tech. And again, tech leading the way back here today. The NASDAQ is up 1.3%. Again, a big sell-off on that summer Friday, down 4.1%. We'll have more coming up. This is Bloomberg Morning.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Dip buyers making up for some of the 4% tech sell-off that we saw on Friday. The leaders right now, individual leaders, Intel up 10%, also the most active. Google tapping Intel to make a bunch of its TPUs. Then you have Micron Technology, those shares up 8.6%. NVIDIA, also among the most active, up 1.2%. And Information Technology, the best performing major industry group right now in the S&P 500. This is a little off the radar. Tango Therapeutics jumping after the results of a study showed a combination of its drug and a Revolution medicine shrunk tumors in advanced pancreatic cancer patients. The shares of this, the ticker symbol TNGX, up over 32%. Meantime, yields remain elevated as oil suggests a higher rate of inflation. And Colin Martin of Charles Schwab says the new Fed chair, well, he's going to have to give up on the idea of an interest rate cut.
And I think if this was 2 months ago, maybe Warsh would try to influence the committee to lower rates, but that ship has sailed. There's going to be no support for that. We think they hold steady through year end, but we acknowledge that the risks of a hike have clearly risen.
2-year yields up a basis point. The 10-year is up 2 basis points. That's at 4.55 right now. Overall, the S&P 500 up 58 points. That's a rise of 0.8%, 74.43 on the index. The Dow at 51,000, up 132 points. The Nasdaq Composite Index 353 points higher. That is up 1.4% right now. If you're planning on going to the watch party outside Madison Square Garden tonight, forget about it.
They canceled it, right?
Yeah, they canceled it. It was a lot of fun. It was pretty cool. It was a very New York vibe thing, and, you know, great crowds. But no, the president is coming, so for security reasons, well, he says he's coming. That's been canceled.
He was invited by James Dolan, who's the owner of the New York Knicks and New York Rangers and MSG. So the president wants to be where the action is happening, and the action is happening here tonight.
Yeah.
But wouldn't you say to yourself, wow, my presence there, you know, is
electrifies the crowds? I think that's what he's saying to himself.
Well, I wasn't going to say that.
Are you suggesting self-awareness?
No, I'm just saying it's just like, you know, all the security apparatus that has to follow you around as the president of the United States.
It's not his problem.
Okay. I'm just throwing that out there.
Yeah.
You know, please post your comments online. Give us a call here.
I think that's safe to say.
We check the markets and other stuff right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett Paul.
All right, good stuff. Thank you so much, John Tucker. All right, we are looking at oil prices moving higher. And I only say moving higher because they're not really climbing, Paul. They're up like anywhere from 1.5% to 2%.
Yeah, we're off the highs. I mean, the WTI was a high of $95 earlier today. We're now just below 92.
Okay, so it's interesting because you have some attacks being renewed, right? You have Iran and Israel, some skirmishes over the weekend, and even at the peak of the day, oil prices remain below $100. So I think that's really interesting given how much has changed since the early days of the conflict. Rob Barnett is our senior energy and commodities analyst on oil. And Rob, let's start there. Why is it that even when there is a renewal of direct attacks on Iran and Israel from each other, oil prices don't seem to be going to the heights that they were earlier in the conflict?
We got to keep in mind that if you propose this oil price at the start of the year, it would sound pretty high. The oil price is up over 50% year to date. And so I think the market is trying to reconcile all of the headlines on ceasefires and peace and try to make sense of it all. I do think most analysts would have suggested much higher pricing given the circumstances that have unfolded, but it just hasn't played out. So the market is, I think, indicating that it's stressed but not completely broken right now, and that's how I kind of read the tea leaves of the day.
All right, Rob, let's say at some point cooler heads prevail and we get a real ceasefire, a real end to the war here. When are you and your energy buddies going to get this straight really open? How long is it going to take, do you think?
Well, I think a full reopening would take time. I think everyone has to get their heads around what does security look like going forward. There's been so many proposals out there. Are there going to be transit fees of any sort? Are we sure that the strait is going to be clear of mines? Are we sure that there won't be flare-ups or continued drone strikes? So in our minds, a full reopening is something that you have to be thinking about in terms of months, possibly even longer at this point. So I think the initial thinking when all of this started was that things would quickly snap back, because in some sense, this is the biggest supply shock we've ever seen in energy markets. But the market is actually showing that there are, when you let the price signal go through, the market's functioning, and we're seeing everything kind of hold together. But I think we're a long way from just simply returning to where things were before the conflict. And this is why we've been communicating on this idea that the floor price on oil is probably higher for longer versus where we were at the start of the conflict.
Rob, does OPEC matter in this environment? Not even OPEC, OPEC and its allies, because we had news that OPEC and its allies agreed on another modest symbolic increase to their oil output quotas for July. But so what?
Well, I think you perfectly described it. Symbolic is the way to think about this. So if you have oil that's captive in the Gulf region right now, even if you have a higher quota from OPEC, good luck getting it out to the market. So I think right now, any of the commentary around quotas from OPEC is not a key driver. It'll be interesting to see what happens with the group following the conflict. Will Iran is a member, right? So how is this group going to officially communicate once things settle down a bit? The UAE, as we've discussed previously, has noted that they have exited the group, and so I think its power or influence on a go-forward basis may be more diminished.
All right, Rob, as you may know, I watch Landman, so I consider myself an expert in all things oil and gas. What are our friends in the oil patch doing? Are they? I would think with $100 oil, they'd be drilling like crazy. What's going on there?
Yeah, so there is a lot of drilling, and very interestingly, you can get a lot more oil for less drilling today than 15 years ago. This is because of the shale oil and gas revolution, hydraulic fracturing, the application of technology to a business that is over a century old. And so you don't need to drill as much to produce more volume these days. And I think there is a challenge with mindset in the industry of returning excess cash to shareholders versus doing more CapEx. And we're keeping a close eye on this. One of the things I look at right now is, the performance of the companies that are exposed to this. So XLE, this is the State Street Energy Select ETF that tracks the big names in the U.S. oil patch, and it's up about 30% year to date. So they're clearly benefiting from the uplift in oil prices. They're not up nearly as much as oil, and so what's the disconnect is sort of how's the cash going to be used? Do the equity investors believe that the oil price is enduring? There's all kinds of questions that might be feeding into where the equities are at versus where the commodities at. But I think the biggest thing that the industry is going to be coming to terms with over the coming quarters is, do they continue with a mindset of returning excess cash to shareholders, or do they do perhaps what President Trump wants them to do and turn around and do more CapEx and try to grow that production base more? And I think that's going to be only determined over the next 6 to 12 months.
All right, Rob. Great stuff as always. Rob Barnett, Senior Energy and Commodities Analyst for Bloomberg Intelligence. The best hair on global Wall Street, that's for sure. S&P up 70 points, 0.9%. The NASDAQ leading the way up 400, 1.6% on tech-heavy NASDAQ, which was off 4% last Friday. More coming up. This is Bloomberg Morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, it is Scarlett Fu, it is Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. I tell you, we heard from a lot of the airlines over the weekend. I don't know. I think the airline business is good. Every plane I go on is packed, and that's.
But that's also because they've cut a lot of their capacity.
Yeah.
There are a lot fewer flights than there were before.
Yeah.
And they're struggling with higher gas prices, jet fuel prices.
Tom Keene was complaining earlier that, he flies over to Paris all the time because that's what Tom Keene does, and it's getting expensive to do that.
Yes.
And I need a flight there in October, so I'm going to have to bite the bullet there.
You're going to have to buy the ticket now.
Yeah, exactly. Benedict Kamel, Global Aviation Editor for Bloomberg News. He's based in Berlin. He joins us here. Benedict, what are we hearing from the European airlines these days in terms of demand, in terms of fuel costs? How's their business?
So right now we're in a bit of a, should we say, sugar high moment because we're in the middle of the summer period. Everyone's traveling, Tom Keene obviously to Paris, but everyone else also. And a lot of people are traveling at the front of the plane. So we've seen over the last couple of years, really since the pandemic, a migration of people going more from sort of budget-minded travel, back of the plane, stripped down economy, to premium, and then to business, or what you guys call first. That's been a process that's been pretty robust, and it's particularly robust in the US. I mean, we've seen some of the job numbers, we've seen some of sort of the general consumer sentiment, and that remains robust, and that is feeding through to the airlines. The picture is a little bit more varied over here in Europe. A lot of people are a little bit more anxious about will my flight actually take place? Talking about what Scarlett was saying, some airlines have taken out some capacity, so people are a little bit worried. Will my flight take off? Will it get me back? So we're seeing people booking later. They're booking shorter, both in terms of where they're going and in terms of duration. So there's a slight mismatch between what's going on in the US, which is I'm going, I don't care how much it costs, and in Europe, where people are a little bit more cost conscious.
How much are airlines eating some of the price increases, the cost increases, versus passing it on to consumers? Because as a traveler in the US, I feel like they're very much passing on everything to the consumer, and you see it in the fares. But I'm wondering if what kind of deterioration we're seeing on profitability.
So yes, they are still trying to pass on as much as they can. That is happening, and we've heard from various airlines around the globe saying, as long as the demand is what it is, as in robust, we can pass on some of the extra costs. But once we come out of this peak summer period and what's called the shoulder period, where people travel less, where the numbers aren't what they are now, that's when it will get trickier to really push through these hiring these increases. So that's sort of where the proof is in the pudding. You'll have to see, is the demand still robust, that people can absorb these extra costs? Now, again, it all depends a little bit where you are in the cabin. If you're booking an expensive ticket and it costs you a couple dollars extra, you're probably not going to mind too much. But if you are cost conscious to begin with, and everything costs extra, your ticket is more expensive, but all the so-called auxiliary costs are also more expensive in terms of checking in your extra bag, being able to select your seat, and so on. All of these things suddenly cost extra money. You might start having second thoughts, but for the time being, a lot of these costs are being pushed onto the consumer because they are really quite substantial for the airlines. Fuel is one of the biggest expenses that airlines have, and fuel has gone up exponentially around the world.
I was on a tour a couple of years ago in Ireland. My tour guide says there is no more shoulder periods. It doesn't exist. Fall and spring.
Everyone's just traveling all the time.
All the time, he said, and it's maybe a post-pandemic kind of thing. Hey, Benedict, talk to us about Airbus. I saw some news out that they are having some delays on their A320neo. Is that a problem for them? Is that a problem for the airlines?
It is a problem for both, yeah. So the A320 family is sort of the workhorse aircraft. The Boeing 737 is the equivalent, and that's a plane that's in high demand. And Airbus and Boeing, to some degree, have obviously struggled for years, really now, so ever since the pandemic, which, believe it or not, is 5 years ago, that they can't make them at the numbers at the end that the market wants. So everyone's clamoring for these planes. Everyone, partly because they are more fuel efficient, everyone wants cheaper planes that consume less fuel and therefore are cheaper to operate. They just cannot make them in the quantities they need. They don't necessarily have the personnel, they're missing parts. Sometimes it's really little things like a toilet missing that they can't fit, and therefore you can't deliver the plane. Or they might have engines, issues with engines and so on, and so that you're building what is called a glider. So a fully built plane, just missing a vital part, 2 engines. So that's what's going on. It matters for Airbus because of the importance of the A320. It's such a key product, and it matters to the airlines because that forces them to fly older kit longer. That's more expensive. It's more prone to defects. So there's a whole sort of chain that goes with that. So the quicker they can get their supply chain back in shape, the better, but they are still sort of caught in this rut. Airbus more at the moment, it seems, than Boeing. Boeing, believe it or not, have sort of gotten their act together over the last couple of years. They were a real basket case, obviously, for a number of years, but that has improved. It almost feels like the narrative has switched over from Boeing to Airbus, and people are looking at Airbus in a slightly less charitable way.
Well put. Benedict, thank you so much. Benedict Kamel is our Bloomberg Global Aviation editor joining us from Berlin on these airlines. Paul, I don't know when the next time you're flying is.
October.
October. Okay, so after the
no,
peak
what are we
season.
Doing? We're doing something.
Are we going somewhere?
Yeah, we're going somewhere.
Okay, so September probably.
Maybe, yeah.
All right, so still after the rush of the summer travel
Yes.
season, because it's been brutal for anyone who has to book with 2 weeks or 3 weeks notice.
Yeah, I want to adopt the European strategy. Just take the whole month of August off and just that's my
Oh, that'll
holiday.
be fun for me.
Yeah, it's my holiday. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment with the markets moving higher. The S&P's up 1%, NASDAQ up 1.7%. This is Bloomberg.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
Concern about rising prices spooking investors.
What does renewables investment look like in the U.S.?
More tariff talk coming out of this administration.
Breaking market headlines and corporate news from across the globe.
The president wants lower interest rates. He wants a rate cut cycle.
How do you broaden out the AI play?
Are people just looking for something to worry about when it comes to China?
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio and streaming live on YouTube. This is the second hour of Bloomberg Intelligence with Paul Sweeney and Scarlett Fu. We've got a lot coming up. We're going to talk about IPOs, big ones and some unexpected ones. Bailey Lipschultz is our senior equities reporter talking about the Vimeo parent, Bending Spoons. That's the name of the company filing for an IPO. Its sales are jumping. We'll dig into all of that. We're also, of course, are going to talk about SpaceX, the other big IPO that is pricing sometime this week. Diana Rosero Pena is our consumer staples analyst. She'll join us to give us her recap on Campbell's latest earnings. That stock is higher today. And it is Apple's Worldwide Developers Conference today in California. So we got to get on Anurag Rana, our tech analyst, to discuss how Apple is positioning its technology for this big event. And Claudia Lubis is our Bloomberg NEF oil associate talking about crude refining margins here for U.S. producers. We'll get into all of that later on. But first, let's go to Matt Piper for our Bloomberg Business Flash. Welcome to Bloomberg.
Hey, guys. Good morning. Thank you so much. Well, stocks are recovering a bit from their beatdown on Friday, even amid worries over the rally in tech stocks, with a flood of new shares from companies funding their AI ambitions, raising questions about buyer demand. Let's head to the Wall Street right now. The S&P 500 is up 81 points. The Dow Jones is up 250. NASDAQ doing the best of all three, up 443 points right now. Well, could there be a rebound in the AI trade today? It seems like there is after the sell-off last week. It does appear so. Micron Technologies, NVIDIA, Broadcom, all chip makers, they are all advancing this morning. Micron right now up 83 points. NVIDIA up by about 3.5 points. Broadcom, AVGO on the terminal is up by about 13 points as well. Now the question, are further declines possible after what happened on Friday? Cameron Dawson with New Edge Wealth sees it this way.
arguably you could say that the easy part is over, meaning the valuation reset is over, and now the question is, do you still see earnings upside for these semiconductors from here?
AI, the big name of the game, seems like every day these days. Well, let's go from chips to music. Any music fans here?
Bring it.
Spotify is looking to become a hub for live music. The streaming giant has approached concert promoters about licensing the rights to show live video of music festivals. So why pay for a really expensive ticket when you can watch on your sofa? Really, pre-COVID, a lot of people just still want to stay home a lot of these days. So Spotify's already started adding some videos from live events, including a Dua Lipa show in Mexico City. So if you're a fan of Dua Lipa, you can log on to Spotify and check that out.
You can go to a concert from your couch
Yes.
whenever you want.
Yeah, and it's probably $10 as opposed to $300. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper. This is a Bloomberg Business Flash. Paul and Scarlett.
All right, Matt, thank you so much. Appreciate that. Matt Piper, folks, he is a grizzled veteran of radio and TV, general news. Now he has to learn all this silly Wall Street stuff that we do.
Give him a day.
Okay, give him a day. We'll give him a day. Very good.
Give me another 20 minutes.
Lisa Mateo, she was like, what are you guys talking about when she first came here?
And look at her now.
That's actually great. I trained Lisa at CBS not to tell my own horn, and then she helped me get in here. So it's the circle of life. So I'll just follow in her footsteps.
Perfect. That's what we like to hear. Matt Piper, thanks so much. We appreciate that. Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio, doing that streaming thing on YouTube as well. As Matt was just reporting, we got green on the screen here. Let's take a look at some of the stocks on the move today. We can do that with Judy LeGroux from Bloomberg News. Judy, what are you looking at today?
Good morning. I am looking at 4 stocks. I'm going to sort of break the rules a little bit here. This morning, it was reported that Intel is in an agreement with Google. Google has offered to buy 3 million specialized AI chips from Intel for 2028. And so Intel stock is absolutely responding to this news. It's up 12% on the day. Its largest increase in about a month. And Intel has really been on a tear. Year to date, it has gone up about, it's doubled, quite frankly. So a really, again, interesting space to watch what has not been said about AI, of course. So that news is continuing to affect markets, which I think is incredibly interesting to see.
All right, good stuff. Thank you for that. What's next on your list, Judy?
Sure, Scarlett. Tango Therapeutics. So Tango Therapeutics recently announced the successful clinical trial for pancreatic cancer. The stock is up on the day 48%. And year to date, as of Friday's close, the stock itself had more than doubled. But today, the stock is up close to an all-time high price. It's on track, rather, for an all-time high price. And Mizuho analysts were really quite excited about this clinical trial. They called it, quote, a clear signal of synergy. And it's the drug itself actually is positioned for compelling sort of getting rid of chemo for some patients. And so that is definitely a game changer. And again, a space to watch there.
Stock's up 200% year to date, up 500% on a trailing 12-month basis. It's a binary when you go to those biotech stocks.
Absolutely.
Binary.
Absolutely.
One more.
Sure. Strategy. So this is, I'll call it, this is now 4 stocks I've got, so I'll call it 4.5 here. So we're looking at strategy, but we're also looking at it in tandem with Bitcoin. So strategy itself is up 5% on the day, and Bitcoin is up 4%, which is its largest gain since April. And all of this movement is really coming as a result of strategy last week selling Bitcoin for the first time since 2022. And that really moved sort of Bitcoin buyers and sellers, really sort of shaking up the market. And so now strategy this morning has announced that it had purchased $101 million in Bitcoin, according to a filing. So as a result of that, Bitcoin and strategy, you're seeing both up. So again, a lot of moving and shaking in crypto today. Definitely a space to watch as well.
All right, thank you so much, Judy. Judy LeGroux is one of our equities reporters here at Bloomberg. And of course, for more conversations like this, subscribe to our Stock Movers Reports, 5-minute audio reports on the biggest winners and losers in the stock market, available on Apple Podcasts, Spotify, or anywhere you listen. All right. A big week for IPOs, namely SpaceX pricing probably Thursday, potentially listing Friday, but that's not the only game in town. There's another company. Have you heard of Bending Spoons?
No.
All right, well, Bending Spoons has also filed for a U.S. IPO. Bailey Lipschultz has heard about it, and he has reported on it, and he joins us now. He's our senior equities reporter. Bailey, Bending Spoons, what is this company? And it's a reference to The Matrix, isn't it?
It's a reference to The Matrix, formed in 2013, and kind of the whole pitch is from the movie that it's kind of like the world is an illusion. But you don't know Bending Spoons. I don't think anyone really knows what Bending Spoons is. They're a Milan-based company. The things that you do know them for, they do own Vimeo, they do own AOL, they own a number of these other companies, and kind of their whole pitch is acquire a company, clean it up, fit it into the broader portfolio, maybe lay off some people, cut some costs, and really build out that way. I was talking to an investor this morning on the IPO flip, because that'll mean it kind of kicks off the process. I was kind of like, walk me through your quick thoughts on this company, and he was like, it's similar to IAC, the Barry Diller company, which got renamed to People, and he was like, again, we haven't quite done the work, we're all focused on SpaceX right now, but the broader pitch is it's a portfolio company to an extent, and what that could or could not mean.
I covered IAC since its beginning because I followed Barry Diller for 40 years. At no point in time did I know what IAC did. At no point in time did I know how to value it, but it was a bet on Barry Diller. What are these guys banking on?
I think it's the strategy really is just their ability to grow. To your point, Barry Diller is a name, and I don't think when you look at kind of the younger team, the crew behind Bending Spoons, led by CEO Luca Ferrari, great name by the way, is really just the notion that they've grown monthly active users across the platform of portfolios to about 500 million people in March. That's up from 111 million back in December 2023. Obviously, a big part of that is acquiring more platforms, but the broader vision is to kind of right-size this. The pushback that I've heard initially from investors, again, everyone's focused on SpaceX, when they look at Bending Spoons without having really dug too much into it is, how does AI impact the broader future? Is this a company that can pitch themselves as a company that can cut costs and lean into artificial intelligence? Or is it a company when you say, all right, well, what am I really using AOL or Vimeo for at the end of the day?
AOL still exists?
I thought the same thing.
Wow. I just did an AOL.com, and I'm wondering who, I mean, I guess some people still have AOL email addresses.
Emails, yeah, absolutely.
Including our next guest, which we'll get into a little bit later.
All right, Billy, SpaceX, what's the feedback? We're on day 2 of the roadshow, day 3 of the roadshow. What's the feedback here?
Yeah, it seems to be humming along. Again, we had put out, I believe, Friday. Time is a flat circle. Back to the Bending Spoons reference, The Matrix. It does seem to be going well. It seems like we're continuing to march along towards that pricing Thursday evening, trading on Friday. The pushback initially that everyone wanted to talk about on Friday and over the weekend was down 4% on the NASDAQ 100. Is that pressure selling? Is that bearish for this company? We're up almost 2% on the NASDAQ. So those concerns, at least for the moment, kind of brushed aside. I think the big question going forward is, what level of oversubscription do we get? Do we see anchor orders? Are we able to hear who those companies could be? I think the big thing when you talk about a $75 billion IPO, are you getting buy-in from the Googles of the world? Are they stepping up from a strategic perspective? Because not only does that kind of back the valuation that Musk is seeking at $1.77 trillion, from a trading dynamics perspective, if strategics are taking up a third of this, that means the float gets even smaller. No, we don't know.
We don't know that.
We don't know those specifics. I think that's something that's going to be interesting to track in the coming days, is how they allocate this book. Because if you sell to a strategic, you're essentially taking the float out even further, so less than 4% gets much tighter more quickly. And then you add on the fact that it's going to be added to the NASDAQ 100 early next month.
So that's sky high demand.
It gets more interesting. This is certainly going to be something that we keep a close eye on as the book gets built, as allocations are doled out.
I mean, is this a conventional IPO or a very unconventional IPO? It's massive. That makes it unconventional.
It's massive. It came out with a fixed price. It came out with a fixed price and evaluation. And I've said this, I think, for 2 weeks at this point. We and others had reported 5 months ago that they wanted to go public around $1.75 to $2 trillion. We had reported 5 months ago that they wanted to raise $75 billion. They came out with a fixed price. They came out with those metrics already drawn in the sand. When you're thinking through how this deal is going to come together, Musk and company can say, we told you what we wanted. If you came to Starbase back in January and you came to Hawthorne a few months ago, you knew what we were pitching. And the story is continuing to be, though, the big pushback and the big question mark is CapEx. If, as we reported, they're going to spend $360 billion in 2030, is $75 billion in IPO just the tip of the iceberg?
Right.
All right, very good. Billy Lipschultz,
Senior equities reporter, senior deals reporter on the IPO front for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. Getting back to earnings, Campbell's Soup, Camden, New Jersey-based Campbell's Soup Company, reported some numbers. Let's break it down. Deanna Rossetto-Pena, she covers a lot of these consumer names for Bloomberg Intelligence. What we learned from the makers of Campbell's Soup. Again, Manhattan clam chowder is my go-to. What are the folks in Campbell's saying?
Well, they're trying to be very conservative with how they communicate with everything going forward. Obviously, tariffs remain a headwind for them, especially in aluminum. They're thinking that that's probably going to abate over the next couple of quarters, but with oil at over $100 per barrel, that's probably going to remain a headwind in fiscal 2027.
So we talk a lot about soup and the condensed soup, but that's not the only part of their business. In fact, they have a big snack business as well. They have spaghetti sauce. So there's Rao's, Swanson. These are all brands within the portfolio. What brand has seen the fastest growth? Which one's lagging?
I would say Rao's and Goldfish has started to stabilize.
Wait. Goldfish?
Yes.
Paul's a big fan of the Goldfish.
Nice. There we go.
Pepperidge Farms.
You. All right, just making sure. Every day at 10:35, I go upstairs to the 6th floor to get my Goldfish.
Well, I guess they have to thank you for that.
They were not there today. Ken and I were crushed. Ken Fellio, Chief Technical Director. We were crushed.
We'll make it up to you guys tomorrow.
So talk to us about their other businesses.
Well, so the soup business was down 8% for the quarter. So that's that was obviously a headwind for meals and beverages. Salty snacks, it's not necessarily performing that well. So they mentioned that that's probably going to be a focus in the fourth quarter as well as in 2027. So, it was okay than expected. I don't think that the stock is moving that much. So yeah, it's business as usual, I guess.
So what is the tariff situation? What have they called out to people in terms of how that's impacting their business?
Yeah, so basically it was mainly on aluminum.
For the soup cans?
For the soup cans.
Gotcha.
Yeah, that was, General Mills is also in that headwind as well. They're experiencing that headwind. So it's obviously with the lapping of that and some rebates, that's probably going to set to normalize. But they're probably most worried about what is coming down the pipe with the Iran war and that disruption with fertilizers, as well as, again, oil at over $100 per barrel. That's probably going to be a little bit of a next wave of inflation going forward. And the problem with this is that, volumes are very, very affected with any, potential price increases going forward. So, similar to other packaged food companies, we'll see what happens over the next 6 months.
What's the story with M&A here for Campbell's? Because a lot of the food companies have been trying to trim down their portfolio, really focus on the best performing brands and get rid of some of the ones that are lagging behind. And we know that Campbell's recently purchased a part of Rao's that it didn't already own. So it is out there making moves.
Yeah, they're actually saying that, in terms of capital allocation, they're going to remain as is in terms of that they're not increasing dividends. They're probably going to stay away from M&A for the time being. They're trying to normalize earnings before they are investing in the business more. Rao's was a very successful M&A, I would say, compared to like other companies that have purchased things recently, like, Smucker and Hostess. But they're out of that equation for now.
All right, Deanna, thank you so much. Appreciate that. Deanna Rossetto-Pena, consumer staples analyst, Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. Are you a Campbell's household?
Oh, yeah. I grew up on this stuff.
Yeah.
I used to make Manhattan clam chowder, New England clam chowder, cream of mushroom. I was all about Campbell's.
Yeah, I know. I mean, that's the way to go. And I thought that was it, So when I'm looking at the FA function for the Bloomberg terminal for these guys, and it's, the revenue growth is like, 1%, 2%. That's
consumer staple.
Yep, it's consumer staples. And so but they have a big dividend. So there you go.
Yeah, this is what you get when you buy consumer staple. It grows with GDP. It's not going to outpace it by a whole lot because, these are the things that people go to day in and day out.
Yep.
Definitely not growthy.
Absolutely. All right, let's look at these markets here. Kind of a rebound here off of that Friday selling. I did not participate in that Friday selling because I was on the beach Friday afternoon.
But apparently people were selling some stock on Friday afternoon. Down 4.1% was the NASDAQ. Taking a little bit of it back here. The NASDAQ up about 1.8%. The S&P's up 1%. We'll keep an eye on that. 10-year Treasury yields, they're up a basis point. We'll call it 4.54%. I'm not refinancing the mortgage on the Jersey Shore compound anytime soon. My mortgage is 6%. It's now at 6.6%.
Ouch.
Is a 30-year fix. It's going the wrong direction there. What's going on? Bitcoin, it's higher. This is Bloomberg.
headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
This Bloomberg Business Flash is brought to you by Golden Crust Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k, tax and penalty free, go to goldencrust.com. goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Wall Street is looking solid despite the fact that investors are dealing with worries over whether the AI rally has run too far. The S&P right now is up 1%. The Dow is up 0.3%. The Nasdaq up 1.75%. Bitcoin has been rocky, but it's rising this morning. Right now, it is at 64,000 or 3.6% higher. This is after it slid about 60,000 over the weekend, below 60,000, that is. Money's flowing out of other investments like crypto and pouring into AI. Now, speaking of Bitcoin and crypto, just in, FTX co-founder Sam Bankman-Fried has applied for a presidential pardon more than 2 years after he was convicted over that huge multi-billion-dollar collapse of his crypto empire. Well, amid concerns of higher jet fuel prices with oil jumping, shares of United and Delta are sliding right now. They are both down more than 0.5%. United CEO Scott Kirby says wealthy passengers are still spending on air travel despite a 20% rise in airfare prices. Delta estimates it's been able to recover some of its jet fuel expenses by adding as much as 15% to ticket prices. Speaking to Bloomberg at the International Air Transport Association Summit in Brazil this morning, Southwest COO Andrew Watterson says their prices will likely rise more soon.
I think we're going to have a mix of revenue-enhancing opportunities, whether that's on the price side, capacity changes, or other fee changes. And so the big changes in prices, I think, happened in March, and now it's more incremental type changes you have to do to capture.
All again, thanks to those jet fuel and oil prices rising. Brent crude right now up $95 a barrel. West Texas Intermediate is at $92 a barrel. Tomorrow, economic data. The National Association of Realtors will release existing home sales data for May. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Matt Piper, and that's a Bloomberg Business Flash. Paul and Scarlett.
All right, Matt, thanks so much. Appreciate that. Scarlett Fu and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well, and streaming live at Bloomberg.com. Red headline crossing the Bloomberg terminal. Get this to you. Netanyahu says Israel holding fire in Iran for now. So some more, I guess, on the good news front, at least for the short term. We'll see how that plays out. Big day out in Cupertino, California here today. Apple's having the Worldwide Developers Conference. What that is, I don't know, a bunch of software guys getting together, I guess. But it's important because I think the market's looking for much greater clarity on what the AI strategy is going to be for Apple going forward. Anurag Rana joins us here, technology analyst for Bloomberg Intelligence. He's based in Chicago, but he's in New York today, which means there's a free meal somewhere in his horizon. That's why he's here, is my guess. Anurag, talk to us about Apple. What do you expect to hear from them today about maybe some changes in their AI strategy or their plans?
So this will be Tim Cook's last WWDC, and you know, he's going to go out with a bang because it's going to be an updated Siri. Mark Gurman's done such a phenomenal job of telling us what's coming, and when we think about Apple, it has been a laggard when it comes to AI-related search tools. So we're going to get a new Siri today. We're going to get a Siri app. We're going to get Siri be able to talk to third-party AI apps such as OpenAI, Gemini, depending on whatever the client wants or the user wants. And I think once this thing is in and included, I think it is going to change the narrative around Apple being way behind on AI.
What do we know about Siri? Is Apple open in terms of sharing numbers on how much engagement there is with Siri, how many minutes people use Siri for?
So right now, for the newer ones, we'll find out, when it launches, whether that's going to, drive engagement or not. Because right now, you don't have those AI capabilities. So what you have to do today is you have to open your phone, you have to go to the OpenAI app, and then you have to ask the queries. Now you can bypass that and ask that to Siri. The reason why I think everybody is optimistic that it's going to work this time is because the underlying technology that is going to power this is going to come from Google's Gemini. And I think that is partially the reason we are also excited, because if it was something that was inbuilt, one would have guessed maybe it's like the Apple Maps movement, stage that happened several years ago. But we know Gemini is working absolutely fine right now for the rest of the ecosystem. So why shouldn't it work on Apple's devices?
And just for the record, how much is Apple paying Google to be able to use Gemini?
Oh boy, I think Mark Gurman has reported, I think it's $1 billion, $2 billion, one of those two numbers somewhere around. So not much, unlike Microsoft and the others who are spending $100+ billion on CapEx every year.
All right, I misspoke earlier when I said Anurag's only here for a free meal. That may be the case, but you and the BI technology team are hosting a big-time conference tomorrow
here in New York, the world headquarters, generative AI forum scaling across industries. Dude, you've got like serious speakers here. I'm talking Hewlett Packard Enterprises, Marvell, Broadcom. I mean, all these big time tech folks. What's the story about what you guys are doing tomorrow with this conference?
Yeah, and we also have the JP Morgan CIO. So the big thing for us is a lot of our conferences are built on, what's happening on the tech world. Right now, we have a little bit of that as well, but the big focus is how is it getting diffused across several industries? Because unless that happens, a lot of this CapEx is not useful, because unless the banks are using it, the hospitals are using it, the retailers are using it. So that's what we try to uncover tomorrow, is to try to learn from them, how are they adding more AI capabilities across their entire ecosystem.
In terms of, sorry.
I was just going to say, I'm looking at this list. This is darn good. John Chambers,
of Cisco.
Well, he's going to do it remotely because he was supposed to be here, but he couldn't make it. But he's going to talk about how the AI infrastructure build is, in some ways alike the internet build-up, and why is it different as well. So we are really looking forward to that.
How do you expect to be surprised from these guys who will be talking tomorrow?
I think the biggest thing we want to know is, given the rise in token cost, how are they making sure that people just don't go nuts with the use of AI, and making sure they're using the right kind of hardware, the right kind of models, don't use AI when it's not necessary. So there's a lot of that needs to happen on the back end, because, to be very honest, publicly traded companies don't have unlimited capital. They have to make sure that their margins just are not, cash flows don't get negative. So it's very different compared to a private AI company. So these guys have to be more judicious about it.
So yesterday on the beach, Jersey Shore, sitting with 3 people, late 20s, early 30s, one at Google, one at AMD, and one at Citi. And fascinating discussion all day. We didn't talk about the Knicks at all. It was about how they're using AI, and they say it is AI all the time. It's being forced down upon them on all parts of their workflow. One person said they're getting funding to implement AI in their business where they couldn't get funding before. But now that you say, oh, I'm using AI to achieve this goal, the money's there.
Yeah. So there are 2 things that need to happen. One is you have to be able to justify whether it's leading to increased revenue or a decrease in cost. One of the things that we have talked about is it's going to change the way employee pyramids are within a company. So let's say, for the sake of discussion, if you are a research analyst and you have 5 associates, it's possible down the road you may not need that pyramid with only 4 associates. So the big question is, how is it going to drive productivity across every functional area?
All right, Anurag, great stuff. Again, tomorrow hosting this big investor conference on AI. So that's going to be some good stuff, some great attendees there. So that's why he's here. So it's not just
the free meal, although that might be part of it.
Yeah, so Anurag Rana, senior tech analyst for Bloomberg Intelligence, he and the team, they do fantastic work on AI. You can find all that at BIGO. That's where you go. Let's get back to the oil business here. It looks like we've got a little cessation, a little bit between Iran and Israel. That was announced here this morning. Looking at WTI crude oil, up 1.3% to just under $92
Not much impact there from that headline.
No, because I think we've seen this before, from all parties.
Yes.
Let's check in with Claudio Lubis, oil associate at Bloomberg NEF. He's based over there in London. Talk to us, Claudio, about the downstream part of the energy chain and the refining markets here. Presumably there's less oil coming through the global system. What's it mean for some of the refiners?
Great to be here, Paul. So I think the impacts on the oil refining segments vary across regions, depending on how much they rely on Middle Eastern crude. So just to contextualize, right now, the conflict in the Middle East is trapping around 14 to 15 million barrels per day of crude flows. That's over 30% of global seaborne crude trade. And over 80% of this goes to Asia. So Asian refiners are amongst the most impacted, given the supply chain constraints that they face. And they'll either need to scramble for alternative crude supplies, a lot of which are increasingly coming from the US, or risk lower run rates, which we're starting to see play out right now. And another region where refiners are impacted is the Middle East, of course, given the direct operational risk. But where it starts to get really interesting is when we start to look at refiners across the Atlantic basin. So that's those in US, in Europe, and even to an extent West Africa, specifically Nigeria's Dangote refinery. And refiners in these regions don't really rely on Middle Eastern crude as much. So they're not as exposed to supply chain constraints and can actually capture some upside from higher fuel prices and higher margins in order to run harder.
That's a great trip around the world to explain how refiners are looking at things. Let's stay on the U.S. specifically. Not so long ago, as of May, we had seen that U.S. crude refining margins have doubled because of the Iran war. What does that look like now?
Yeah, for sure. I think U.S. refining margins have definitely shot up since the start of the war. If we look at the often touted 3-to-1 crack spreads, which you both may know, current levels are around $45 per barrel, and that's around 1.5 to 2 times pre-war levels. And just to give a context here, I think this relatively elevated levels is driven by a couple of factors, right? You have dwindling inventories for refined products, particularly diesel and gasoline. So if you look at diesel, current stocks are right now down 20% since the start of the year. For gasoline, it's down 10%. So these are way below seasonal averages. And this is despite oil demand remaining relatively robust in the US. Refiners in the US are also running very hard right now, where nationwide average run rates stand at around 95%. And in some regions like the Gulf Coast, so Texas and Louisiana, it's at 98%. So essentially operating at full capacity. And there's also that element of increased product exports overseas for key fuels like diesel and jet fuel, which could have otherwise been consumed at home. So I think back to your question, I think these are exactly what's driving the dynamics around relatively elevated refining margins.
All right, Claudio, thanks so much. Appreciate it. As always, Claudio Lubis, oil associate, Bloomberg NEF. He's based over there in London. He's a product of the Colorado School of Mines, which is an awesome school in Colorado, particularly if you're into that whole geology thing. And that's what the energy industry is all about.
So perfect entree into Bloomberg NEF.
Yeah, absolutely, absolutely. So good stuff there. Mike McGlone, Bloomberg Intelligence Commodity Strategist, always says, cure for high prices is high prices.
Yeah.
We haven't seen that. We haven't seen that demand destruction.
It feels like the market's kind of made peace with the fact that oil prices are going to be higher for longer. The conflict itself the renewal of hostilities doesn't necessarily drive prices higher because everyone's thinking, at the end of the day, Iran and the U.S. don't want to resume full-blown conflict. They are working towards some kind of a peace deal.
That's the thinking. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this Bloomberg Business Flash is brought to you by Eisenamper. Most advisors tell you what happened. Eisenamper tells you what to do about it. Assurance, tax, outsourcing, and advisory services built for businesses that cannot afford to guess. EisnerAmper.com is where to find it. Stocks right now looking good so far after Friday's sell-off. The S&P is up 0.9%. The Dow Jones is up 0.25%. The Nasdaq up 1.6% right now. The 2-year yield is up 0.2%. The 10-year yield up about 0.5 percentage points right now. All this even though investors are grappling with fighting in the Middle East, with Israel's prime minister just saying they will hold fire in Iran for now, and worries over the rally in tech stocks. Lori Calvasina at RBC Capital Markets is keeping an eye out for any more sell-offs. Speaking of tech, Apple's stock right now is up more than 2 percentage points. Apple's developer conference kicks off in just over an hour, where it is expected to take another shot at AI, as everyone else is, unveiling a revamped Siri that was delayed last year and other new features, all part of what's called Apple Intelligence. Apple uses this event at its California headquarters to showcase new software and technology in the operating systems for iPhones and other devices. And by the way, guys, this is the last one featuring CEO Tim Cook before he turns his post over in September. Kind of retirement, kind of not.
Yeah.
He's still on the board, but, big day for him. I'm sure it will be. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Matt Piper, and that is a Bloomberg Business Flash. Paul and Scarlett.
All right, thank you so much, Matt. Tim Apple, as President Trump like to call him, right?
Tim Apple, yes.
But I mean, he answered to that, and it kind of works because Tim Cook equals Apple. It's become kind of synonymous, really. All right, thank you so much, Matt Piper, with our Bloomberg Business Flash. This is a big week for IPOs. We talked earlier about Bending Spoons, a company that owns Vimeo and AOL, getting ready to file for an IPO. We're, of course, awaiting details on SpaceX, which, Paul, is supposed to price on Thursday and is supposed to begin trading on Friday on the NASDAQ under the ticker SPCX. But SpaceX's IPO has renewed all kinds of enthusiasm for all things space related, the whole space economy, rocket companies, all of that. So let's get into this industry with Greg Pendy. He is a director and equity analyst over at Clear Street. And Greg, it feels like there is a repricing of the space industry because of SpaceX. What was the narrative before SpaceX's IPO? What is it now?
Yeah, thanks for having me. I think what investors are starting to appreciate, one is you have a very flagship company within SpaceX, which hopefully sets a bar in terms of valuation, but it also draws a lot of awareness to what's going on in the sector. So, to give you an example, as people are looking at SpaceX, from our view, when we think about a name we do cover, Rocket Labs, we're starting to realize that with it, by looking at SpaceX, you're realizing how tight the launch market is right now, with the Falcon 9 relatively booked throughout 2007. So as that message gets out there from SpaceX, people can then look at Rocket Labs and see how compelling the opportunity is within launch for a name like that. We're also realizing when we look at SpaceX, just how big the Starlink service is. And again, when we look at our coverage, a name like AST Space Mobile, a different approach in going to the market. They have over 60 MNO partners, including AT&T, Verizon, and Vodafone. But we're starting to realize just how disruptive, and it's really highlighting direct-to-device is for a world where we depended on cell towers being within range, and space really can fill that gap.
What is what's the market like for space? What are the economics about the space business these days? What do people need to know?
So that's an excellent question. So I think most recently, we just saw Planet Labs report a very strong quarter, in our opinion, on the first quarter. This is a company that's already poised, we believe, to achieve the Rule of 40 this year. That's your year-over-year revenue growth plus your EBITDA margin. It's a very big mark that people have often cherished with the top software names. We also believe and project that Planet Labs will generate free cash flow this year on top of the prior year. So really a developing business model there.
We also believe that Rocket Labs, if you were to take out the heavy investment that they're putting in with their Neutron rocket, is close to adjusted EBITDA positivity. So you're starting to see some business models really evolve here, both from a financial perspective, but then also offering very compelling disruptive growth potential down the road.
So Greg, there's clearly a lot of enthusiasm, and I'm sure much of it's justified, but there's some, I'm sure, that's also a bit ahead of itself as well, because even if SpaceX raises a ton of cash, which pretty much we know is going to be the case, and puts it to good use, it's still going to take a lot of time to build all these things.
Yeah, no, that's a great point. So within the space economy, we are seeing the early stages of build out in the names we do cover. So when you think about Intuitive Machines, which we cover, a name we're very, very excited about, it's been our top pick for most of the year. We're only at the early stages of them building a satellite constellation around the moon. So you're going out, now we're talking about the lunar economy. A very disruptive and aggressive timelines to build out a permanent presence on the moon, but it is something that both the government and a lot of the space companies are very serious about. So these are longer term investments. Finding that recurring model for Intuitive, though, we thought that they had a game-changing acquisition earlier this year of Lanteris, which really brought forth EBITDA profitability.
Another topic I think we're all learning about as we kind of go through the SpaceX is space-based data centers. What are the companies that you cover? What are they saying about that business?
Yeah, so it's a hot button with two of the names we cover. So we cover Planet Labs, which is working with Project Suncatcher, that's Google, to develop space-based data centers. It's a 2027 story in the beta testing for them. So their biggest near-term catalyst is the OWL satellite this year, which is a big improvement in resolution. But they do have plans to start really developing that in 2027. The other name I would point people to is Intuitive Machines. Their Lanteris 1300, which was developed for the Lunar Gateway, actually is one of the most powerful solar arrays in space. And when we think about space-based data centers, one of the key advantages is the fact that you're getting 24/7 solar power. The drawback or the challenge will be launch costs. So when we read through the white paper on Project Suncatcher, it wasn't really looking for parity to terrestrial data centers until the early 2030s.
How do you think about the exclusion of SpaceX from the S&P 500? Is that a good thing or a bad thing for the rest of the companies in the industry?
Well, you know, for the companies in our industry, we believe that one of the most supportive things has been sort of ETFs within the sector. That's an area that we've seen within our names. I can't really speak to the S&P 500's decision on that. I will say that we've said SpaceX going public will actually not only draw attention, but it creates a very strong valuation argument for the names we do cover.
How are your companies, these space companies, how are they valued by the marketplace?
That's a great question. So when we think about valuation, what's different about the space sector is you have to anchor your valuation year differently for each company based on where the payback really falls. So for example, with Rocket Labs, they're making a big bet on their Neutron rocket, which is expected to only see its first launch in the fourth quarter of this year after heavy investment over several years. We believe that 2030, if they can achieve our estimate for 20 Neutron launches, then that's a year you want to anchor the valuation. If I go to AST Space Mobile, they won't really get to commercialization under our estimates until mid-2027. So you have to kind of look out to 2029 when they have a decent amount of subscribers, we believe, that you can anchor the valuation there on 2029.
All right, Greg, good stuff. Appreciate getting a few minutes of your time. Greg Pendy, Director and Equity Analyst at Clear Street, joining us live here in our Bloomberg Interactive Broker Studio. Trying to get a little bit smarter about this space economy because SpaceX is scheduled to price its mega IPO Thursday after the close, begin trading Friday. So we're all trying to get a little smart in that business.
Right, of course. And of course, for those investors who can't get access to SpaceX and want it, there are a world of other companies that they could potentially invest in. We named a couple of them: AST Space Mobile, Intuitive Machines, Planet Labs, Rocket Lab USA. So you have your pick.
Yep, and the value of spectrum, you need to know how to value spectrum.
and folks that have invested in cellular telephones in the past, those companies, they have a handle on that as well. So there's a lot of moving parts on SpaceX. We'll stay on top of that story. This is
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu and Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City. Streaming live on YouTube, streaming live on Bloomberg.com/video. That's where you'll find us. All right, the big take stories, you know we love them. Fascinating topics, deeply sourced. Lots of pretty graphics for me that it makes it much more understandable. Our next one is on taxes. Now stay with me because this headline will get you. The top 1% reap most from tax loophole costing $48 billion. The ETF industry is exploiting the tax rate at an unprecedented scale. Zach Miner, one of the two reporters on this story from Bloomberg News, joins us here in our studio. So Zach, talk to us about what loophole you guys found in your reporting and kind of how's it work and who's benefiting?
Sure. So this is a loophole that's been around for a long time.
Okay.
Basically, since the ETF industry started, the people who set it up realized that they could take advantage of this kind of obscure chapter of the tax code that no one ever really used for anything and use it to avoid taxes. Now, that used to be a relatively small phenomenon because the ETF market wasn't all that big.
Yep.
Now it's very big. And part of what our reporting shows is not only is that cost today to the government quite significant, but changes being pursued by the Trump administration now could almost double it just in the next few years because they're essentially opening up this loophole opportunity to mutual funds as well as ETFs.
How does it work in layman's terms? I am the ultimate layman, so
Sure.
lay it on me.
Yeah, so an ETF it's just kind of like owning a stock yourself. If you buy a stock and it goes up in value and you sell it, you owe capital gains tax on the gain, the difference between what you got for it and what you paid. The funds work the same way. If an ETF makes a gain, they're supposed to essentially send you a tax bill that you have to pay tax at the end of the year. But ETFs are able to use this loophole where they say, well, we didn't actually sell it. We just swapped these securities off to a market counterparty. So rather than sell it for cash, we gave somebody securities and they essentially withdrew from our fund the same amount so there no cash changed hands and therefore there's no tax.
Who does this? I mean, do all ETFs do this?
All ETFs do it all the time. That's just kind of how they're set up. I should say, sometimes they sell stuff. They sell their losses, but they don't sell their gains. And that's just the normal way it's worked for decades. But what's different is that as the industry's gotten so big, it's kind of gone from being a pretty small little leakage of taxes to actually a pretty big one.
So these gains, are they gains at the ETF level or at the investor level?
They're gains at the ETF level.
Okay.
So one question you might say is like, well, wait a minute. If the ETF doesn't send me a tax bill, I'm still going to have to pay tax when I sell my ETF. That's true. So some of this is just kind of a deferral, right? You get to postpone your tax bill until however long you own the fund. But in a lot of ways, that actually becomes avoidance because, for instance, if the ETF did short-term trading and had short-term capital gains, that magically becomes long-term capital gains to you, which are less expensive.
So, I mean, again, all we read about it for the last dozen years about how big the ETF market's getting, the inflows. We got Eric Balchutis coming in here every week telling us it's just the same story, gajillions of dollars flowing into ETFs. Has this gotten the attention of tax authorities, of Congress, of anybody who should be paying attention to this?
Yeah, so Senator Ron Wyden, the Democrat from Oregon, back when he was Senate Finance Chair, kind of floated a proposal to, hey, let's just close this one off. It never went anywhere, and he actually dropped it when he updated his reform proposals last year. But he says he still wants to do something about it. The problem is there's so many ETF investors, right? You're talking about 20 million Americans or something like that. And so even though most of them get very little from it, there's a lot of people out there who would be, concerned if their taxes were going to change.
It just seems like, again, $48 billion a year, that's not chump change, And it seems like somebody would want to get their hands on it if I'm the government, like the IRS. But again, is it also because maybe the administration's not pushing forward? Is there a sense that maybe the political environment's not right for this type of thing?
Yeah, I mean, it's not a super high profile issue, and it's one that, Republicans generally aren't looking for ways to raise people's taxes.
Right.
And so, they're in charge right now. So if a different Congress, maybe if they had something they wanted to spend money on, they might look at this again.
All right. Nobody likes a tax loophole more than me. I mean, I think I'm like most people. You feel like your government's getting too much already. But if you're one of those folks that like to read about taxes and loopholes and big dollar amounts, take a look at this big take story. Zach Miter and Suru Matu, they are co-reported this story. Zach Miter, reporter on the investigation team. Thanks so much. Appreciate that. Zach's at Bloomberg News, joining us live here in our Bloomberg Interactive Broker studio. You can read this story and all the big take stories on the Bloomberg terminal and at Bloomberg.com/big take. Let's get back to it. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on SiriusXM channel 121. Access the world's only global audio business, coast to coast, 24 hours a day. Bloomberg Radio on SiriusXM channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories and global business headlines are coming up in just a moment. S&P's up 56 points. That's 0.8%. The Nasdaq's up
355. That's 1.4%. Looking at the bond market, up a couple of basis points on your 10-year, 4.55%. WTI crude oil, it's up $1, and we're just below $92 per barrel. Tom, the Upper East Side, looking for a Bitcoin quote up 3% to just under $64,000 per token. More coming up. This is Bloomberg.
From ABC News, I'm Chuck Severson. Iran and Israel say they have stopped attacks that reignited over the weekend in Jerusalem. ABC's Tom Sufi Burridge.
Iran retaliating after Israel launched strikes Sunday against Iranian-backed Hezbollah in the Lebanese capital, Beirut. Israel saying it was responding after the militant group fired into Israel. After Iran's initial missile barrage late Sunday, President Trump getting on the phone with Israeli Prime Minister Netanyahu. Over the weekend, the president warning Israel not to retaliate against Iran.
15 Iranians were injured in recent Israeli attacks, says the head of Iran's emergency medical services to the semi-official Tasnim news agency. Investigating a mass shooting over the weekend, police in Toledo, Ohio. 12 people injured, at least 2 people are being sought. ABC News Chief Justice correspondent Pierre Thomas.
It was the city's annual Old West End Festival, where hundreds come out to celebrate the beginning of summer. Children playing, good food, dancing in the street before the chaos. Angry residents who had to cancel Sunday's planned festival events, saying this tragedy is not a reflection of who they are.
The New York Knicks watch party outside Madison Square Garden is not happening tonight for Game 3 of the NBA Final. The NYPD says it's because President Trump is planning to attend the game. Matt McCool with the Secret Service.
The Secret Service, the NYPD, and our public safety partners have worked closely together to develop a multi-layered security plan. You will see Secret Service police and special agents, transportation security officers, federal air marshals, and the NYPD officers throughout the area.
Hours before the Titan security, 5 people were slashed yesterday at Penn Station, one of the nation's busiest train stations, just below Madison Square Garden. 1 person in custody. An offshore magnitude 7.8 earthquake hit the southern Philippines today. Officials say at least 32 people were killed, more than 200 others injured. You're listening to ABC News. Maine voters cast ballots tomorrow in perhaps the most watched primary election in the country. Democratic candidate Graham Plattner expected to win the nomination and take on Republican Senator Susan Collins. But Plattner is on defense over allegations of physical and emotional abuse against ex-girlfriends. ABC News senior White House correspondent Selena Wang.
I was actually in Bar Harbor, Maine, where he held a rally over the weekend. He was basically saying, the state of Maine has had my back, as I've opened up about my past, and as every single piece of that past and journey, in his words, he said, gets dug up, litigated, and weaponized. Those were his words.
Maine's Senate race could decide which party controls the Senate next year. The TSA is investigating a stowaway case that originated in Texas.
According to a criminal complaint, 25-year-old Abdul Rahman Oriyomi got onto a Los Angeles-bound United Airlines flight in Houston without a boarding pass.
I think this is a pretty significant breach,
says security consultant Mark Matranya.
It's the multiple layers and failures to even get on the plane.
Oriyomi is thought to have walked past a distracted gate agent without scanning a boarding pass before flying off to L.A. Jim Ryan, ABC News.
Target is recalling Up and Up fragrance-free and Up and Up fresh cucumber scented baby wipes. It's linked to bacterial contamination that can be life-threatening. Chuck Sievertson, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
They're buying the dip on hopes for Iran. Where have we seen this movie before? Welcome to the Monday edition as we open the week with this familiar feeling, even after Iran and Israel exchanged fire overnight. Iran, though, says it's done. The S&P 500 and NASDAQ are back on the upside today. We're going to get the latest from Bloomberg's Tyler Kendall, who's live at the White House with analysis from our political panel. Rick Davis and Jeannie Shanzano are with us. Nathan Dean joins from Bloomberg Intelligence as the House takes up reconciliation today. Will they vote on it tonight? We'll talk to Nathan in just a moment after we start with Wall Street. Markets on the rise, as we mentioned, and Charlie Pellet has the latest from World Headquarters in New York. Hey, Charlie.
Well, hello there, Joe Matthew. Happy Monday. Certainly investors keeping an eye on any and all developments out of the Middle East, but also we're seeing a tech-led rebound today. S&P 500 index up 0.8%. NASDAQ right now up 1.4%. The Dow higher, a little changed, up 0.1%. But look at the NASDAQ 100 index. It is surging 2.1% after Friday's swoon. The Bloomberg Mag 7 index up 0.3%. The SOX, which is the Philadelphia Stock Exchange's semiconductor index, it was down roughly 10% Friday. It is up now by about 6.8%. All of this with the VIX holding above 18, a 10-year at 4.55%, the 2-year 4.15%, the 30-year above 5%, again 5.02%. Gold up 0.3%, 43.42 the ounce, while West Texas Intermediate crude now up 1%, 91.50 for a barrel of WTI. Barrel of Brent 94.64. Brent crude is up 1.7%. Bitcoin at 63,872, up 3.3%. So after a down Friday, a major sell-off, and now we're looking at an up Monday, just what is it that the market is wrestling with? Chris Harvey is head of equity and portfolio strategy at CIBC.
We're trying to price in two really diametrically opposed views. One is, can oil go to 125, 150, right? Will the Fed start hiking rates? Or are we in the process of a melt-up where we get resolution in Iran? We can talk about not so much easing, but pricing out that hike.
Chris Harvey of CIBC. By the way, he raised his price target on the S&P 500 index to 8,020. And he did touch on oil. West Texas Intermediate crude now at 91.43 a barrel, up by about 0.9%. Also helping markets, NVIDIA CEO Jensen Huang called a global tech stock sell-off that began last week a buying opportunity, saying the build-out of AI has just begun. NVIDIA shares are up now by 1.9%. So again, recapping here, we've got the Dow, the S&P, NASDAQ. They are all advancing. S&P right now up 57, a gain there of 0.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. That, Joe Matthew, is a Bloomberg Business Flash.
Okay, Charlie, many thanks. Charlie Pellet will be back with more on the markets in about 15 minutes' time, coming off the weekend with the voice of Wall Street and the New York subway. We thank you, Charlie. He, of course, has always put his finger on it. Is the Ayatollah buying the dip? Did he hear what Jensen Huang said? The timing of this whole thing was remarkable. I woke up this morning like you did with a doom scroll. First thing I do every day is I look at the app and I go to Daybreak, D-A-Y-B, go, and there I see futures are falling because Iran and Israel are shooting at each other. Oil's on the rise. Great. We're going to pick up right where we left off on Friday. But then over the course of a couple of hours, everything changed. The President of the United States gets on social media, not happy with what he's seeing. Israel and Iran must immediately stop shooting, he said. That was at 5:36 a.m., followed an hour later, 6:34 a.m. Both sides, Israel and Iran, are looking to do an immediate ceasefire. That was right after Iran, through state media, suggested that it, in fact, was done with the job. Iran, Israel pledged to end attacks that threaten peace talks, the headline on the terminal. Israeli Prime Minister Benjamin Netanyahu holding a news conference saying Israel will hold fire for now. Iran saying the same, even though all options are on the table. And that was enough to turn futures around. Pretty remarkable. Just in time for the markets to open. Usually it's just the president doing this. Now Iran is sending statements through state media before the opening bell on Wall Street. Did the Ayatollah buy the dip? Jensen Huang talking to reporters in Seoul. We're at the beginning of it. And whatever happened to the stock market, he says, you should be very happy because now you can buy it at a discount. Everybody should be very excited. And here we go. You heard what Charlie said. NASDAQ's up 1.5% right now. NVIDIA itself up almost 2%, approaching $209. Micron's up almost $100 a share. It's funny how these things work. Now, the president, of course, has been talking about Iran a lot. He spent the weekend at Bedminster. He did that wild interview with Meet the Press. Did you guys see this? Ripped his mic off, walked out of the interview. But he's been talking peace. He's been talking optimism. That's the whole bead on this story. So when the market has a puke like it did on Friday, you better believe that something positive is going to be said by somebody before the bell rings on Monday. Today it happened to be Iran. Pretty amazing. Here's the president from the last couple of days weighing in on all of this.
Iran is very much...
Now, maybe we don't have that. They'll take my word for it. He's been talking a lot. Tyler Kendall knows this. She covers him at the White House. Bloomberg's Washington correspondent is on the North Lawn as we speak and kicks us off here on a new week in Washington. Tyler, it's great to see you. I hope you had a good weekend. The president was awfully busy on social media. He was traveling. Of course, he went to Wisconsin. He did the interview on Meet the Press. What is the line from the White House this morning? Does the president believe he stopped hostilities with his post on Truth?
Well, Joe, at this point, the White House has long maintained that they think diplomacy is still a viable option. We heard President Trump in this interview over the weekend saying that the sides are making progress, and then out on Truth Social again this morning. But of course, this came amid what was the biggest flare-up in fighting overnight since the ceasefire began back in April, with Iran and Israel trading strikes against each other. Now, it does appear that there has been some progress, at least for now, because we did get confirmation both from Iran as well as from Israel that they will stop this latest round of strikes, but that doesn't mean that escalation has been taken off the table. In fact, you had the IRGC in a statement earlier today via Iranian state media coming out and saying that if Israel continues its front against the Iranian-backed militant group Hezbollah in southern Lebanon, then Iran will strike back. And Israel coming out, Israeli Prime Minister Benjamin Netanyahu saying in this televised press conference earlier today that Israel is going to continue until its military objectives and aims are achieved when it comes to dismantling Hezbollah. The thing is, the U.S. and Israel have long maintained that this is a separate front, though we do know that going into this conflict, before it even started, the U.S. had wanted to see Iran's support for proxy militia groups rolled in to any longer-term deal. And we're seeing how this has the potential to derail these U.S.-Iran negotiations because, Joe, as you well know, this is becoming a huge sticking point here. As Iran maintains a ceasefire needs to extend to Lebanon in order for there to be a broader U.S.-Iran deal. I'll leave you with this. Our analysts at Bloomberg Economics say that the escalation that we saw over the weekend could mean one of two things. One, Iran may be flexing its muscle amid the ongoing negotiations. Or two, this really could be the start of perhaps a wider escalation spiral.
Yeah. Pretty remarkable rhetoric, Tyler. Following what you just said, the president telling an interview, I call the shots. He called Prime Minister Benjamin Netanyahu yesterday, telling him to not respond to Iran's missile attack. And we know what took place overnight. How is the White House managing what appears to be some sunlight here between the president and Netanyahu?
Well, a White House official does confirm to Bloomberg News that the pair of leaders did have another phone call earlier today, though we do not have details on how this phone call went. But it is becoming clear that there are increasing differences between Israel and the U.S., though President Trump, again in this interview on NBC News, said that he would like to see Israel take a more, quote, surgical response towards its targets related to Hezbollah. But then he also maintained that he still has this very strong relationship with the Israeli Prime Minister Benjamin Netanyahu. The thing is, we know that Netanyahu is dealing with his own domestic pressures when it comes to this conflict, and Israel has maintained, again, that this is a separate front and that they haven't achieved their full military objectives when it comes towards its operations against this Iranian-backed militant group. Joe, I'll also throw one other angle that we should keep our eyes on here that dovetails with this, which is Iran's support for proxies around the globe. And that's that we got an update from another proxy earlier this morning, the Houthis in Yemen, who are now threatening that they will ban any Israeli ships from transiting a key corridor in the Red Sea. This is a strategic passageway that has been used as a bypass to the Strait of Hormuz. The statement from the Houthis didn't go so far as to say they're banning all commercial shipping, but it does pose a more heightened risk on what is already a very fragile scenario when it comes to broader shipping in the Gulf.
So it's back to the future in the Red Sea, it sounds like. Tyler, I've got to ask you about this wild interview on Meet the Press. Not the fact that the president, walked out on it, but what he said about the anti-weaponization fund. If it was up to me, he said, I'd pay them the kind of money they deserve, referring to January 6 rioters. If they get it approved, that's great. If they don't get it approved, I'd be disappointed. Was there any follow from the White House in terms of what the official position is here of the administration on creating this fund? They tried to write language in Congress last week that would ban such a thing, but it didn't happen. He could still do something here, right?
Yeah, he could. He did acknowledge, Joe, that it would, of course, though, take an act of Congress in order to establish this. So that's one thing to watch. Didn't go as far as we've previously seen when it comes to threats to lawmakers to make good on his agenda, as we really have seen a bolstering of confidence, I think it's fair to say, among some Senate Republicans who either aren't up for re-election or lost their primaries and are able to push back on some key parts of the president's agenda, though that also extends to some other more broad-based moderate Republicans. I'm thinking about the Senate Majority Leader, John Thune, who he himself also expressed concerns when it comes to this fund. Our eyes are going to be trained on the House this week and what happens there. We do know that a measure has been floated on a bipartisan basis. I believe it's Congressman Brian Fitzpatrick, Republican from Pennsylvania, alongside Tom Suozzi, a Democrat from New York, who are looking to get a legislative vehicle through that would put more guardrails and firmly ban such a fund from being created. We'll see if the president's rhetoric gets a little more heightened if that does end up moving forward.
Really interesting. The president also alleging that last week's California primary was rigged. Is that the official White House position on this, Tyler?
According to the president, of course, there has been some different angles here when it comes to that race and what's ultimately historically a long time to count the ballots in that state. We have heard from state officials that have acknowledged that it is a longer timeline, but it is just how that jungle primary ultimately works with the top two candidates advancing and being in such a big state. So definitely another thing to watch for, but I think it's key that the rhetoric may heat up around this once we move past primary season, because we are getting closer to November and the midterm elections, and there are a lot of headwinds facing this White House at the moment.
Well, once again, Tyler, I think the president's listening to us. While you were talking, he just posted on Truth Social, not possible for Spencer Pratt to have lost the LA runoffs after the big lead he had. Third world nation rigged elections. Yeah, Spencer Pratt didn't make the runoff. We'll have more on that a little bit later. Tyler, thank you. Get inside, take some antihistamines. It's like snowing pollen in Washington today. I'm Joe Matthew in the nation's capital. Glad you're with us here on Balance of Power. Much more to follow. Our buddy Nathan Dean is going to chime in next as we turn to Capitol Hill, reconciliation and anti-weaponization. All ahead here on the fastest show in politics.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks higher, buyers stepping in after that AI-led sell-off. The Dow, the S&P, NASDAQ, all advancing. Right now, the S&P 500 index is up 68 points. That is a gain of 0.9%. The S&P now at 74.52. The Dow above 51,000, up 134, up by about 0.3%, while NASDAQ is now higher by 430 points, up by about 1.7%. Tech, the big story today, we've got the NASDAQ 100 index rebounding by 2.3%, and the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 7%. 10-year at 4.55%, with the 2-year 4.15%. The 30-year holding above 5%, 5.02% now on the 30-year. Gold is up $12 the ounce to $43.41, up by about 0.3%. West Texas Intermediate crude up 1%, $91.50 for a barrel of WTI. Brent $94.61 a barrel, up by 1.6%, and Bitcoin just below $64,000, up 3.3%. Apple investors are monitoring developments at the Worldwide Developers Conference, now underway in Cupertino, California. The event is showcasing a highly anticipated update to its Siri digital assistant, along with other AI features. Apple shares at the event up now by 2.4%. Recapping, S&P 500 index up 0.9%. The NASDAQ 100 index is surging 2.3%. The SOX up 7%, with a 10-year currently yielding 4.55%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That's Joe Matthew. This is a Bloomberg Business Flash.
All right, Charlie, thank you, sir. Feels a lot better than it did on Friday, although we'd have to do this a couple more times to make up for some of those losses. Charlie Pellet will be back in about 20 minutes with another read on the markets. That's the way we do it around here on Balance of Power, and I'm awfully glad you joined us here on the Monday edition. I'm Joe Matthew in Washington. We're all going to be looking at New York tonight. Wonder if Charlie's going to the game. New York gearing up for the Knicks' first NBA Finals home game in 27 years. That alone would bring a bit of a ruckus to the neighborhood. But can you imagine what's going to be happening in front of Penn Station and all around Madison Square Garden around 5 o'clock? You know, they're told to get there 2 hours early. There was supposed to be this big watch party out there. That's, you know, what would be normal for a game like this. And fans have been told to stay home. They canceled the watch party outside Madison Square Garden. This is, of course, because the President of the United States is going. And, you know, by God, you had the stabbing in front of Penn Station. Can you imagine security tonight? With the President attending Game 3, now fans are encouraged, or in fact advised, to arrive 2 hours before tip-off and prepare for airport-style TSA-like security. Good luck bringing all your signs and banners in, because they're going to search you. 6 people were injured in this stabbing. Did you hear about this that happened inside Penn Station over the weekend? So, yeah, now, of course, Mayor Mamdani is going to be there, too, which is kind of fun. He's the president, of course, will be in the skybox, right? You'll have every camera in the room trained on him at some point. Mayor Mamdani told reporters that he will be in a, quote, very different section, unquote. And I'm curious to find out which one that is, because the cheapest ticket in the house, and producer James will keep me honest on this because I bet he's got a more up-to-date number, but as what I saw as of this morning, $3,745. Does that sound right, James? 107 times as expensive as the Knicks' previous trip to the NBA Finals, which was in the last century when we partied like it was 1999. This is going to be a riot. Join us on the late edition of Balance of Power, because we'll show you whatever's going on outside or inside, for that matter. I still think it's funny to consider the idea of the president sitting courtside. Now, all of this is happening this evening as we watch the crane finish its work looming over the south lawn of the White House, building this thing that we call the Claw. Producer Tim was riding his bike over there over the weekend and texted me a picture. They got the lights up on this thing. It's like, I mean, this is wild. So Dana White says the lights are going to be so bright at the UFC fight for President Trump's birthday next Sunday night that it's not only going to attract gnats and moths, but also they're expecting bats will be flying over the octagon. What kind of dystopian scene are we creating here in front of the White House? To the point a federal lawsuit was filed over the weekend seeking to halt the UFC fight. Now that they've built all this, kind of like with the ballroom, the lawsuit arrives, arguing the event violates National Park Service regulations prohibiting sporting events on federal park lands. The White House calls it obstructionist, baseless, dilatory. I'm going to give you a sneak preview. Oh, there it is. Look at that. Good job. Good job, Sam. There's the view of the White House. We're going to go over there Thursday morning is our plan. That's when they're going to let the press onto the South Lawn to take a look at this thing. And, you know, President Trump said he might not ever take it down. If you're looking at it now, you can imagine a speech being delivered from that stage, right? All right, James got a new number. It's a little more than I said. $3,899. That's for 2 seats? That's for 2. Oh, okay, no, that's for 1. Sorry. Standing room only. You know, it was not lost on us when Bespoke asked on Twitter last week, if the Knicks broke the queues, you got to raise the money somewhere. I'm guessing Nathan Dean's watching this from home. He's going to have the kids out there, right? They're going to get the snacks out. Maybe he'll tell me, like producer James, that he's a Celtics fan. There, I said it on the air. Bloomberg Intelligence senior U.S. policy analyst, the newly promoted Nathan Dean. Congratulations and welcome back.
Oh, thank you.
You're a team leader now.
I'm a Bulls fan. So.
You are? Well, of course you are, Chicago boy.
So it pains me that New York is doing well here, but it's great to see New York in the playoffs.
I should have just thought for 1 second. Crazy idea. You're watching this tonight?
No, I'm...
Wow, not even watching it. All right.
You know, we've got football practice.
Okay,
so.
Well, all right. See, America's dad shows up for work again. Get the orange slices ready. What are we thinking today? So the House lawmakers come back to town. The Senate did its job, and they're going to start marking up this reconciliation bill today. How soon could they vote on it?
I think they vote tomorrow. I mean, look, the name of the bill is get it done and get it off to the president, because then you got other things to work on. So, you know, the biggest thing that we're seeing right now with this reconciliation bill is the actual private prison stocks. So like Geo Group and Core Civic, these things are up almost 20% since early March.
Because they're going to get a piece of that money.
Well, I mean, there's 2 thoughts here. One is that there's this idea that the Department of Homeland Security is going to go out there and buy assets, take it off their books. They've talked about this in their earnings calls a little bit, but the other one is that this solidifies the funding and solidifies the immigration policy for the Trump administration through the rest of his term, and so it sort of builds like a status quo where these companies, like right now, Geo Group is forecasted to go up about 13%. Consensus is 13% growth over 2025. This solidifies a lot of their revenue streams, so that keeps them in a good story until the end of the Trump administration.
Wow, isn't that something? And you're getting phone calls about prison stocks. Doesn't that say something about where we are here in the process? This is as good as done, though, right? I mean, should I assume that because the speaker has some restlessness in his conference?
Yeah, I think there is this restlessness out there, but look, I just think it's done because we've seen Senator Cornyn, you know, primaried, Senator Cassidy primaried, Representative Massey primaried, and you know, a reconciliation bill that's $770 billion for the Department of Homeland Security is not something that I think a lot of these lawmakers are going to really try and stick their neck out and fight the president on.
Interesting. Kevin Kiley is an independent from California, but he caucuses with Republicans, skeptical about supporting the bill without changes to agencies' enforcement policy. And I'm wondering if this is just a last gasp before a bill like this passes, that you would expect this, or if there could be some wrangling on the floor when...
Well, I think, obviously, look, I mean, there's going to be wrangling on the floor because you're going to try. Like, these lawmakers should at least try. But the thing here is that this is the last, I think, legislative attempt to really drive a lot of these policies through the rest of the administration. Because, look, Reconciliation 2.0 passes. I don't think Reconciliation 3.0 is in the cards, despite the fact that we're going to go through the motions and try. You've got a crypto bill and a housing bill, and if the Democrats take the House, that's largely it. I mean, yes, there are things like highway authorization and NDAA, but this is like the last major legislative achievement for the president here. And so I think that, you know, folks like Representative Kelly out there, they're going to try this, but ultimately the avenues of trying further down the line, those are going to disappear.
You know, this anti-weaponization fund that just won't die. had several opportunities. We thought it was buried last week when Todd Blanche talked about it. Then the president said, well, you'd have to ask the lawyers, I'm not sure. Then there was an attempt to legislatively knock it down. Didn't work, and the president showed up on Meet the Press and really embraced this idea, said if it doesn't happen, I'll be disappointed.
Yep.
There are lawmakers with legislation, D's and R's, ready to strike this down or prevent it from happening. Will there be, or is there legislation that would create such a fund? Because this is bogging things down here.
Well, at the end of the day, you need the president's signature.
Yes.
And, you know, there's not a veto-proof majority of this out there, so let's game it out.
You think he would have vetoed reconciliation if that amendment had been on it?
You know, if it had made through, then there is a scenario there. Because look, I mean, if the Department of Homeland Security funding, I mean, it's just another way of doing appropriations.
Yes.
They could probably do this another way if they didn't want to do it via reconciliation. There's not a lot of outs in that bill. And so from the president's perspective, you know, this anti-weaponization fund, it's always there as a possibility. And look, I mean, we have a midterm election that comes up in November. After that midterm election, President Trump doesn't have a lot of levers from the congressional side that he has to care about all that much.
Yep.
So, you know, it's never gone. I mean, it's just, is it gone today? And I think it is gone today. But again, we'll see what happens in a couple of weeks or months.
Then there's the matter of FISA, and this is going to feel a lot more urgent by the end of the week. Friday is expiration, right? FISA 702, and, you know, we talked about this quite a bit last week. Bill Pulte, the home builder turned Fannie, Freddie, and FHA administrator, was tapped by the president, a man with no experience, to become DNI. And you're seeing all the Democrats peel off of this and a lot of Republicans at least expressing concern. You see Chuck Grassley posting on X that Democrats are putting American safety at risk right before, letter B, numeral 4, World Cup plus America 250. There's something to be said about this. There are some big events coming up right now, and a very delicate time to let FISA expire. Could that happen?
I think there's actually a chance it could.
Yeah.
I actually do. I mean, we saw a couple of senators over the weekend say, look, you should start preparing for a world without this. Look, the Democrats are very angry about Bill Pulte. And when the President Trump is saying out there that, you know, Acting Director Pulte's #1 role is to conduct mass firings of intelligence analysts,
yes,
you know, that's something that the Democrats can actually play with politically here. And I just don't see them, you know, look, there are always going to be discussions over another small extension. That's the best game scenario here for FISA, is another small extension, kick the can and have a fight another day, try and get it closer to the midterm so it becomes such a political issue that you actually don't want to vote on it and just extend it. But again, there is a chance. And so, we don't have odds on it, but it's something that we're going to be paying attention to.
This isn't in front of people like a government shutdown when TSA agents aren't getting paid. A lot of people don't even know what FISA 702 is, so you wouldn't get that pressure at home, right?
Exactly. That's the perfect point here. I mean, when you have a shutdown or a TSA, you know, my constituent can understand that.
Yeah.
When it's FISA and you're talking about surveillance powers, half of my constituents understand that.
Wow.
So
his phone's always ringing, and we love hearing about at least this side of the conversation. Nathan Dean with us from Bloomberg Intelligence. They better win tonight, right? If the president's in the skybox, Nick's got to win.
Yeah, they got to win.
Or it's going to be on Truth. I don't know. We'll find out together. I want to see where Mayor Mamdani is sitting. Nathan Dean, he'll be coaching his own game, and for that we salute him. We'll assemble our political panel next, right here on Balance of Power, only available on Bloomberg.
12:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks well off session highs. The Dow, the S&P, NASDAQ holding on to gains. This is dip buyers step in after that AI-led sell-off on Friday. The S&P 500 index up now by 46, up by about 0.6%. Tech names leading the way higher. NASDAQ up 336 now, up 1.3%. The NASDAQ 100 index is advancing by 2%. The Bloomberg Mag 7 index up 0.4%, while the SOX, the Philadelphia Stock Exchange Semiconductor Index, up now by 6.3%. All of this with the VIX holding above 18, a 10-year at 4.55%, the 2-year 4.15%, and the 30-year 5.02%. Gold is up 0.3%, 43.42 the ounce. West Texas Intermediate crude oil 91.24 a barrel. Brent crude 94.40, up by 1.4%. And Bitcoin, meanwhile, up 3%. 63,680 now on Bitcoin. Data due out Wednesday is expected to show inflation back above 4% for the first time since the spring of 2023. Airlines, meanwhile, do provide an excellent glimpse into the global health of the economy, also in the United States. And Bloomberg's Lisa Abramowitz caught up with Southwest Airlines Chief Operating Officer Andrew Watterson at the IATA annual general meeting in Rio de Janeiro.
March saw a big inflection upwards, and so March, even though the war was kind of hot and heavy at that point, we saw a big acceleration of both business and leisure travel demand. So the U.S. economy is roaring, it seems to us.
Southwest Chief Operating Officer Andrew Watterson. And airline stocks, however, sputtering today. Case in point, Southwest down 0.7%, Delta down 0.8%, UAL down 0.2%. American, however, is advancing by just about 1.4%. Sources tell Bloomberg Airbus has been notifying some customers of delays on A320 Neo series jets that are due to be delivered in 2027 and 2028. ADRs of Airbus down 0.8%. Recapping stocks higher. S&P up 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. That's Joe Matthew. This is a Bloomberg Business Flash.
All right, Charlie, thank you. Nice to see stocks pointing higher, but a far cry from making up what we would need to gain to take care of the losses on Thursday and Friday. Tough slog going into the weekend, and there are a lot of questions about the direction this market is heading, and of course, so much of it pegs off what's happening with Iran. You saw it all take place this morning, and we walked through that earlier in the hour. Starting deep in the red, then one headline flies, people start paying attention. Iran says it's done shooting at Israel, and we've got a rally. This just repeats day after day after day, with the president saying that we are on the verge of a peace deal, essentially on the daily. And a market that's still pretty close to all-time highs. I mean, we're at above 7,400 on the S&P. I realize we had some real pain last week in ending the rally. But you've got some stocks that are climbing back here. Keep pointing back to Micron. It's up $88. It was up almost $100, almost matching the loss from Friday. Of course, it would need to do that again and again. NVIDIA rising 1.5%. Micron's up 10% right now. A lot of the Mag 7 are lower. Apple is not one of them, though, and I want to point this out because at the top of the next hour, our very own Ed Ludlow is going to join us from Cupertino. You know, this is a big day for Apple. Tim Cook's last WWDC. Always made me feel like we were talking about a radio station with that. But yeah, he's going to, I guess, roll out some AI stuff today and make Siri actually work. Imagine. What the analysts say would lead to a re-rating in the stock. It's up over $5, almost 2% right now to $313. Apple is in the news, and we're going to have a lot more on that coming up at 1 p.m. Eastern Time, which incidentally is when that Rules Committee hearing begins. They're going to start marking up reconciliation in the House. It is Iran, though, that we want to stay focused on because anything could happen today. Anything could happen tomorrow, send this market back down or on an even bigger rally here. As we watch shares in a lot of the defense contractors head lower, Raytheon's down, General Dynamics down, Lockheed is down. Oil prices, on the other hand, have been moving higher, despite the end of shooting, at least temporarily, between Israel and Iran. First time we've seen since the ceasefire, Iran shooting a couple of dozen ballistic ballistic missiles at Israel. If you went back a year and told somebody that was going to happen, they would have said World War III. Of course, Israel responded. They even put jets in the air and hit a couple of targets in Iran. The president on Truth Social early this morning, he started at 5:30 a.m. demanding an end to the shooting. Both sides, an hour later, he said, after he called them to immediately stop shooting, the president says Israel and Iran are looking to do an immediate ceasefire. Final negotiations on peace are proceeding, subject to ignorance or stupidity getting in its way. Iran then said it was done shooting at Israel, and blammo. Stock futures turn higher, and we're off to the races for a new trading week. I asked it earlier, is the Ayatollah buying the dip? It didn't come from Trump this time. It actually came from Iran. And so we assembled our political panel for their take on everything going on here. Today, Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Rick is our Republican strategist, partner at Stone Court Capital. Jeannie Shanzano, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center and Democratic analyst. What's your thought on this, Rick? Is Israel starting to realize that it can play this game the same way Donald Trump can?
Yeah, this is definitely every man for himself at this stage. I mean, we have this, three-part negotiation between Iran, Israel, and U.S. going on all the time. And then you add the Houthis, you add Hezbollah, you add Lebanon's government. I mean, it's just a seven-dimension chess game. And look, I mean, Bibi Netanyahu's been very, very clear on his objectives. He is going to dismantle, if not rid, the region of Hezbollah. He's already done Hamas, and later he'll set his sights on Houthis, who popped up this week too, because here now they're stopping transit of Israeli ships through their strait. So, I mean, I think we're in this thing for a long haul. You can trade against these comments if you want, but you better get used to uncertainty in the Middle East.
So we're not closer to peace than Jeannie? Is the president's optimism not founded?
No, it's not. You look at what happened this weekend, wasn't a surprise at all, because before his last sort of dust up with Benjamin Netanyahu, if we can call it that, on the phone, when he told him not to retaliate, the Iran held back. This time, they didn't hold back. And this becomes then a serious threat. I think one of the most serious threats to Israel that we've seen in decades, because for the first time, you have a power in the world that is saying, we are not only going to defend ourselves, we are going to defend the region. In fact, we are not going to stop this war until the region is defended. And so that's why they keep telling Donald Trump that Lebanon has to be part of the end to the war. And of course, that puts the U.S. and Donald Trump in a horrible situation, because he has no control here unless he is willing to tell Iran, or to tell Israel rather, that we're going to restrict arms sales, we're going to restrict sharing of intelligence unless you stop those attacks. And of course, for Israel, that is a non-starter. So what does Donald Trump do? He consistently goes out and says, we're close, we're close, we're close. The only people saying we're not close to a deal are the people involved in it. Israel, Iran, the Hezbollah, and the rest. So he can say what he wants and try to, get some optimism in the markets, but it doesn't get us any closer in the world of real politics to where we need to be for a real ceasefire.
Well, and Rick mentions the Houthis declaring a ban on Israeli ships in the Red Sea. So it's back to the future in the Red Sea, Rick. This is going to keep Israel engaged, will it not?
Oh, for sure. This is really, to think that anything has actually changed fundamentally in the region, is, I think, a miscalculation. The Israelis have a plan, and they're going to rid their region of terrorism. Just make sure we're all on the same side. I think Israel is the one ridding the region of bad elements like terrorist groups of Hezbollah and Hamas. It's not Iran stopping the fighting in the region. They've been promoting it. So let's just be all clear who the bad guy is here. And yet, at the end of the day, you don't get stability with this kind of a strategy. And Trump desperately needs stability because he's got a different problem. He isn't worried about terrorism in the U.S., and he is trying to help Bibi Netanyahu. But he needs $2.90 gasoline back here before Election Day. And in the current scenario, he's nowhere near that.
Well, that is true. As we take a look at the latest from AAA here, we're at $4.16. And of course, we've seen this float up and down, but holding above $4 now for a good stretch of time here. Jeannie, there's another complicating factor in potentially prosecuting this war, and that's what could be the expiration of FISA 702 on Friday. And I don't want to conflate this in a way that I shouldn't, but Rick just mentioned the prospect or the threat of domestic terror. We've obviously got a massive security situation happening in New York tonight around this game. World Cup's coming just days from now. And Democrats are not on board with renewing the warrantless spy powers because Bill Pulte has been put in place as an acting, at least, DNI by the president. How concerned are you that this, in fact, will expire? What will it mean?
I think at this point, it looks like it could expire on Friday. And if we don't get a deal, it is a huge, huge threat to our national security. We are at war with Iran. They are a huge engager, if you will, in cyber attacks around the world. This is what helps us identify those. This is what helps us respond to those. So you've got the danger of FISA expiring, and you've got the president appointing somebody not at all qualified to lead the intelligence in the country. And so in both of those scenarios, it looks like the president is intent on killing FISA. Otherwise, why would he have nominated Bill Pulte? And I would just go back for a minute in the region, and let's be very clear. 3,500 Lebanese have been killed since the quote-unquote ceasefire by Israeli attacks. 1/5 of the population has been moved as a result of those attacks. So these attacks go both ways, and both sides have an interest. And so I don't want to let that slip by, because it's really important that we be honest about where these attacks are coming from and who the culprits are on both sides.
Well, you know, the obvious question about the timeline here seems to be going out the window a bit. Rick, I want to go back to your initial comment. Should people start bracing for an indefinite conflict in the Middle East? The president's obviously looking to have this done in time for the midterms, but based on reality, based on what you're hearing, this could be months or years, correct?
Well, the one person, Donald Trump, who's really trying to push to an end game here, and he's got the one vested interest in it, as you point out, you know, the elections as a deadline, is even himself saying, well, you know, maybe we can get a ceasefire by September and then start layering on, you know, other negotiations to get control of the nuclear material. I mean, the reality is he's already declaring this to be something that isn't going to happen, probably buttoned up and signed and sealed and delivered before the end of the year. And that's if they meet some of these milestones. Yesterday was a big setback for these milestones. Because as long as there's shooting going on, it's going to be awful hard to get an agreement. And I think part of what we learned, too, is we're now, you know, sort of dealing with the IRGC, the military in Iran. The president resigned. Not exactly sure what the condition of the Ayatollah is. And the person who said that we were going to stop shooting and, you know, cease fire was the head of the IRGC, not any civilian government or mullah. So it's still a situation where we're not even sure who the counterparty is that we're dealing with in Iran.
Boy, the president demanded an end to the fighting this morning, as I mentioned, Jeannie. It was an interesting sequence. And in our remaining moment here, to what extent did he affect outcomes, or was Iran already planning to stop shooting at Israel? To the extent they're fighting with each other, how is the United States helping to direct this?
Yeah, I don't think we know. It's such a good question, and I don't think we know yet, because I think the problem for Donald Trump is almost an intractable problem. Iran is saying, we will strike a peace agreement with you if it includes the entire region. if you control Israel. Now, how can Donald Trump control Israel? It has to do with arms sales. It has to do with intelligence sharing. And of course, from our perspective, from the U.S. perspective, we want to deal with Iran, but we don't want to waste the political calculus of hurting a relationship with Israel prior to that agreement. So which comes first is really the big question here. And Donald Trump is sort of caught in the middle at this point.
The sharpest panel in the business, Jeannie Shanzano and Rick Davis, on our Monday edition here on Balance of Power. Many thanks to both of you. They will be back in our second hour. Kaylee Lyons will join us as well, and we'll invite our global television audience to the fastest show in politics. This is Balance of Power on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
Israel and Iran stop shooting for now. Welcome to the Monday edition as markets cheer the direction of headlines today from the Middle East after President Trump demanded an end to fighting amid a fragile ceasefire. I'm Joe Matthew alongside Kaylee Lyons in Washington. Kaylee, it was the first time Iran fired ballistic missiles at Israel since the ceasefire. the stopping of the fighting, at least for now, seems to be giving markets a lift.
Well, that is certainly so. A rebound in technology stocks is helping the overall market as well. But you're right, it is a stoppage of a ceasefire break, it seems, at least for now. Though Israeli Prime Minister Benjamin Netanyahu, in a video statement, did say that while Israel is currently halting its attacks on Iran, it will respond with great force if Iran attacks it again. It just underscores how fragile, to your point, all of this remains, even as President Trump contends that he still thinks Iran is desperate for a deal, and that process can move forward if there is no, what did he call it, stupidity?
Or ignorance, I think that's right.
Yeah.
So it's a shooting ceasefire still. We survived another weekend with shots fired. The ceasefire, though, technically remains in place, and the markets have been clawing back a bit today, Kaylee, but there are big questions now that the Houthis are also banning, apparently, Israeli ships from the Red Sea about how long this can last.
Yeah, the market right now, though, does appear that it's looking through at least the latest tensions, maybe seizing to the idea that for now, the shooting ceasefire seems to be going back to just more of a ceasefire. But of course, they also have other narratives to contend with. As I mentioned, you're seeing a rebound in tech. It'll be interesting to see if Apple can fuel that further, as the keynote at the Worldwide Developers Conference is happening at this hour. This is going to be the AI one. And so we're going to check in with Bloomberg's Ed Ludlow in just a minute. But first, let's check in with Charlie Pellet on the overall markets up in New York. Hey, Charlie.
Hi, thank you very much, Joe and Kelly. Happy Monday. We got Apple shares up now by 2%. The Dow just turning negative. Do want to begin, though, with crude oil. You guys were discussing the so-called shooting ceasefire. Oil remains higher. It is not pulling back. West Texas Intermediate crude, 91.25 a barrel. It is up by 0.8%. Barrel of Brent also higher, up by 1.4%. 94.39 for a barrel of Brent crude. So right now, we've got crude oil trading higher. The Dow turning lower, down 24 now, drop there of 0.1%. We are seeing dip buyers come in, especially for tech names. The S&P up 43 now, up 0.6%. NASDAQ is advancing by 1.3%. The NASDAQ 100 index up by 1.9%. The Bloomberg Mag 7 index up by about 0.3%. We are seeing a surge for the Philadelphia Stock Exchange's Semiconductor Stock Index, also known as the SOX, up now by 6.2%. The VIX holding above 18 with a 10-year at 4.55%. The 2-year 4.15%. The 30-year 5.02%. Kaylee mentioned the interest in tech names. This after NVIDIA CEO Jensen Huang called global tech stocks of the sell-off that began last week a buying opportunity, saying the build-out of AI has just begun. NVIDIA shares, they're up now by 1.5%. And speaking of tech, Alphabet's Google recently placed an order with Intel to manufacture more than 3 million of its specialized AI chips in 2028. That according to the information. Intel up 11.4%. Alphabet down by 1.9%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. Joe and Kaylee, that is a Bloomberg Business Flash.
Okay, Charlie Pellet, thank you so much. Charlie, we'll be back in about 20 minutes with another read on the markets. It has begun. We start this hour in Cupertino, where the latest WWDC is just getting underway, and in fact, it is Tim Cook's last, which has a lot of people looking closely, but it's not only because of the turnover at the top, it's because Apple is preparing to seize onto AI and do it a bit more effectively than it has in times past. Bloomberg's Ed Ludlow joins us right now, of course, the co-host of Bloomberg Tech, and is actually at the Apple plant in Cupertino, where the headlines are about to start flying. Ed, if you follow the conventional wisdom, this is a seminal moment in the emergence of this technology because Apple already has hardware in all of our hands. It's just a matter of getting the software to work. What can you tell us?
Yeah, the headline will be, per Bloomberg's reporting, a standalone Siri app that takes Siri from being a feature to a destination, right? Something akin to ChatGPT or the Claude app, where you are capable of conducting multi-step tasks, something more agentic. Bloomberg's reported that it will be Google's Gemini model that underpins at least this initial new era of Siri. The kind of pre-recorded, polished keynote is underway, but IRL, Tim Cook took to the stage. He was welcomed onto the stage by software chief Craig Federighi. It will be his last as CEO. September 1st, he becomes executive chair, but his 15th all told, and an important moment of transition for the company. But Siri needs to work.
Well, and does a standalone Siri app, Ed, drive people to buy more iPhones?
Yeah, you know, I wrote about this for the Tech in Depth this morning. No is the short answer. You know, most forecasters see a contraction on a unit basis in the smartphone market this year, although on a dollar basis growing, of course, because of higher prices, input cost, memory being the principal issue. And it's actually Android weakness, not iOS weakness, that's weighing on smartphones in aggregate. But longer term, there's definitely this educational piece, which is, do I need the latest generation iPhone to get the most out of whatever the new AI capabilities Apple unveils today are? And longer term, going into 2028, 2029, all of the market participants I speak to say, yes, that will become a defining feature. Like, you know, right now Siri is, hey Siri, phone Kaylee lines for me, and it will do it. Great. But what if it was much more than that? You know, it was more integrated, not in just my iPhone on iOS, but macOS as well. You and I could set meetings, share notes, do something of more substance like we can do today with some of the other tools. That really is the test.
Well, that's going to be a big test for John Turnus as well. Will it be up to him to implement whatever's rolled out today?
Yeah, again, so this started with an in real life appearance from Tim Cook, standing ovation, applause. But I think that there has been a lot of fanfare literally in this 24-hour period around John Turnus. Everyone wanted to have a photograph with him. And there is an expectation that even though he's a hardware guy, Apple is in the business of selling devices. So to answer Katie's previous question in the context of John Turnus, there's a great belief that he will get it right, that if they do nail Siri, in the end, it will be a big driver of device sales. That's the whole point.
All right, Bloomberg's Ed Ledlow live in Cupertino for us. We'll be checking in with Ed later on this hour as we get more headlines out of the keynote address at this year's WWDC. Thank you so much.
Do you talk to Siri?
I don't talk to Siri that much.
I don't talk to Siri either. But this would presumably mean that we will.
When I talk to Siri, it's not on my phone. We have like an Apple HomePod in the kitchen, and it helps me turn the kitchen lights on and off. And
all right.
That kind of thing.
So imagine if Siri could do more than that, I guess is the prospect today. We'll find out together here. We'll get back with that as soon as we can.
Yes, but first we also need to go to the White House, as there's plenty of news on that front to digest as well. As we mentioned, Israel and Iran have stopped firing at each other for now. Yeah. We'll see how long that holds. It does, though, seem that is really the desire and the outcome that President Trump has pushed for, as he's continually pushing for a deal with Iran, though the U.S. is still obviously maintaining its naval blockade in the Strait of Hormuz. This is all things that he discussed in a Meet the Press interview with Kristen Welker, recorded on Friday, aired yesterday. Listen to what the president said.
We have the ultimate blockade. I don't consider that a war. My red line would be if I think I wasn't going to make a deal or if I wasn't going to make a deal fast enough. So we're having very good negotiations with the people that are leading the country now. We'll either have something done fairly quickly or we'll finish it out militarily.
So for more, we go to Bloomberg's Tyler Kendall, our Washington correspondent, live at the White House. So, Tyler, I guess it becomes a question of fairly quickly. The president was pressed on the timeline, and he continually pointed back to wars of the past that lasted years. So where are we now a few months in?
Well, Kaylee, at this point, we got a lot of fast-moving developments and headlines earlier this morning after what was considered to be the largest flare-up in fighting overnight since the ceasefire was announced back in April. This White House maintains that diplomacy is still a viable option and that they are making progress in the talks. We did hear from Pakistan's foreign minister earlier today urging all sides to come to the table and negotiate. Pakistan, of course, a key mediator in this conflict. And we did get some movement in the right direction earlier today. As you mentioned, President Trump out with a flurry of posts on Truth Social urging an end to the hostilities and that there would be an imminent ceasefire between Israel and Iran. Shortly after, both sides did confirm that they will stop firing at each other, at least for now, because the IRGC came out with a statement saying that the ceasefire will only hold if Israel stops its operation against the Iranian-backed militant group Hezbollah in Lebanon. But then we heard from Israeli media essentially saying that Israel at this point doesn't have plans to stop that specific front in this war, which both Israel and the U.S. have said is a totally separate operation. But Joe and Kaylee, as you both know, it does risk derailing the U.S.-Iran talks because Iran has now maintained that a ceasefire needs to extend to Lebanon. It is an interesting development in all of this, considering that just last week the U.S. did help to broker a truce between Israel and Lebanon, but ultimately those terms were rejected by the Iranian-backed militant group Hezbollah.
Tyler. Thank you so much. Live from the White House, Bloomberg's Tyler Kendall, as we add the voice of Heather Conley. With the American Enterprise Institute, former Deputy Assistant Secretary of State for the Bureau of European and Eurasian Affairs in the George W. Bush administration. Heather, it's great to have you back. Thank you for joining us. I don't know how long we can keep this back and forth kind of whiplash.
Lather, and repeat.
It's been incredible to see it unfold even within the pre-market hours this morning, to go from the depths to now stocks moving higher on hopes for peace. The president's post on Truth Social, 5:36 a.m., Israel and Iran must immediately stop shooting, in quotation marks. He signed it, President Donald J. Trump. Is that why they stopped?
Well, no. I mean, Iran needed to, I think, exert itself here. As we've talked about, the negotiations now have been stuck for weeks. And in some ways, Iran needs to help move that impasse. And Lebanon is the perfect connectivity for them to do it. So they don't want a sustained conflict. They want to demonstrate that they can continue to have ballistic missiles hit the region, that their demands need to be respected. And by linking Lebanon with the conflict in Iran, it places Israel in a terrible predicament. And that predicament really increases the tensions between the United States and Israel, which is not good for both countries. So they're playing a very crafty game. And the president, you know, using social media to say stop, these two have vested interests in continuing. That's the problem.
Well, and it's not just on social media. The president also has suggested in interviews, including one over the weekend with the Financial Times, that he's in charge here, not Israel, and yet Israel still retaliated against Iran. How willing do you think Benjamin Netanyahu is? How willing is he to go against the wishes of President Trump?
So Prime Minister Netanyahu has a terrible line to walk here. He has to defend and protect Israel from missiles that coming from Hezbollah, from Iran, from the Houthis we saw. And as he does that, again, this is why when the Iranians linked Lebanon to resolution of this conflict, they widened it. You know, I think he will craft this very careful line because he knows he needs the United States, he needs their support, but he must take action to defend his country. Please also remember there's a very important election that's going to happen in Israel in October. Public opinion has, you know, this is not going to be a good election for Prime Minister Netanyahu, and people want some action here, although the Israelis understandably are very tired of this conflict.
Well, enter the Houthis once again, who you just invoked, essentially announcing a ban of Israeli vessels in the Red Sea. Is this the most likely reason why hostilities resume? Would this be a whole new shooting war between Israel and the Houthis?
Well, it's going to be, it's really the card that hasn't been fully played. If you think about, Iran could have used this lever with the Houthis very early in the conflict. I think they held it back. Houthis were certainly damaged in the conflict in 2023, 2024. But
Reports said, though, we left a lot behind that we did not destroy.
100%. And we weren't effective at eliminating that conflict. So this is really, I think, for Iran, invoking the Houthis is really a power play with the Gulf states, because as you've seen, the Emiratis, the Saudis have used pipelines to try to get and divert the energy to the Red Sea. If the Iranians can bottle that up through the Houthis and you still have this blockade, it just puts more pressure on the region to try to cede to Iranian demands. So these are all interlinked. Let's see how much. The Iranians have to be careful as well. Egypt is part of this negotiating team. This impacts Egypt terribly economically. So lots of careful balancing acts to come.
Well, and so when we consider the Houthis, or with Hezbollah and Lebanon as well, how much control does Iran have in the decision making? Should we assume that that link between them and proxies that they have funded is that ironclad, where they can say, you know what, leave the Red Sea for now, we'll let you know when it goes? Or could the Houthis still decide to act kind of independent of Tehran's wishes?
Kayla, it's a great question. I mean, we can't give too much credit for the Iranians for full control over this. And I think, in fact, the Houthis were damaged somewhat, and they also don't want to have everything taken away from them. So I think there's some judicious use, but Iran does have enormous sway in support of Hezbollah and Houthis. And as we've seen over the last 48 hours, Iran's ballistic missile program is still quite lethal. It can hit, so it hasn't been degraded as much as we had hoped after the initial conflict in February.
Our Republican strategist Rick Davis suggested in a conversation earlier today that Iran is bracing for the long haul. Do Americans need to start getting that into that mindset? I know the president says we're on the verge of peace every 24 to 48 hours. This could be months. This could be longer.
Yeah, Joe, but the president does such an excellent job of verbalizing, and the markets respond to him. So,
right.
I mean, that is a huge
that probably
win
won't change
for him. You're right. I mean, the reason that I think energy prices are remaining in a reasonable, China has pulled they're not importing. They've stopped. So there's so many different mechanisms here. Iran does have huge economic pressures building on it. The attack on this Indian tanker that just went through Oman, empty tanker, they need storage before they shutter wells.
Yes.
They're under pressure, but they see that they now have leverage over the United States in Lebanon to get Israel to stop, certainly in the Strait. And the Iranian elite, I hate to say this, are enjoying using this leverage over the United States. So yes, they think they have time, and they want these economic pressures to build in the region and in the United States so that we will cede to their demands. So I think we'll be back at this conversation quite a bit. We are very, very stuck in this moment.
Well, and because we are stuck in this moment, and this moment is taking up so much oxygen, a lot of us are paying less attention to the conflict between Russia and Ukraine. But Russia is feeling that economically as well. Bloomberg reported last week that the Russian finance ministry told Vladimir Putin that this is becoming unsustainable financially. Could we see an end to that conflict, some kind of negotiated outcome there before we actually end up with a negotiated outcome in the Middle East?
So I think these both are going to be working on parallel tracks. The senior Ukrainians believe that they can continue to apply what they call long-term sanctions, which are their drones that are just attacking Russian refinery capacity. There's energy, fuel shortages within Russia because they're doing such an effective job that they sense that there could be some movement. Look, the Russian technocrats that have been managing the Russian economy brilliantly over the last 4 years to manage all this, they've run out of tricks. And now the pressure is on Vladimir Putin. But Putin, I don't think, will be dissuaded. He believes he can still achieve these gains. And what he said during the St. Petersburg International Economic Forum, he's saying that they're winning on the battlefield, although the Ukrainians have now claimed over 600 square kilometers. They're gaining ground slowly. They're hitting Russian supply lines. It will continue to be very dynamic, but I don't see any give right now in Vladimir Putin's view. He thinks he can still keep marching forward at great cost, unfortunately.
All right, Heather Conley, thanks for being with us.
Great to be with you.
Non-resident senior fellow at the American Enterprise Institute. Thank you so much. And we want to get a quick check on the markets now as we're seeing this tech rally underway, helping lift broader equities higher. Let's turn to Charlie Pellet for a check up in New York. Hey, Charlie.
Hi, thank you very much indeed. Dip buyers coming back into the market. The Dow, however, does remain lower. Tech-related names are higher. Right now, Dow Industrials down 11, down 0.1%, down 57 points. S&P 500 index higher by 38. The S&P up 0.5%. But we are seeing NASDAQ surge 1.2%. The NASDAQ 100 index up 1.8%. And after Friday's rout, semiconductor names are pushing higher. The VIX, the SOX, the Philadelphia Stock Exchange's semiconductor stock index up now by 6%. The VIX closing in now on 19. A 10-year at 4.55%. The 2-year 4.15%, with a 30-year 5.02%. Gold at 43.47 the ounce, up by about 0.2%. Crude continues to push higher. West Texas Intermediate 91.33 a barrel, up 0.9%. Barrel of Brent right now 94.42, up by 1.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. Kelly and Joe, that is a Bloomberg Business Flash.
All right, Charlie Pellet, looking at the markets as we kick off a new trading week. Thank you so much. Of course, it's a new working week here in Washington as well, after the Senate in the early hours on Friday passed a $70 billion budget reconciliation bill to fund ICE and CBP for 3 years. We now look to the House this week to get a sense as to whether or not this will easily get across the floor in the other chamber. And I'm pleased to say joining us now is the chair of the House Oversight Committee, the Republican congressman from Kentucky, James Comer, here with us on Bloomberg TV and radio. Mr. Chairman, thank you for being with us. Welcome back to Bloomberg. And we do want to talk about the investigation your committee just released into fraud in Minnesota. But if we could begin with reconciliation, what is your understanding of when exactly you will be voting on this package and whether the votes will be there, attendance-wise and, frankly, policy dispute-wise?
I think policy-wise, we're in good shape. Attendance is always an issue when you look and see that the Democrats usually vote in bloc against anything that President Trump wants. So it's imperative that the Republicans are here because we usually lose Massey on these kinds of votes. But it's my understanding that tomorrow the leadership, the whip office thinks that enough members are going to be here to where we can, in fact, pass what the Senate passed last week on reconciliation. I don't think there are very many major policy disagreements. We all can find fault in these bills, but what I always say about Congress, the biggest problem with Congress is there are too many congressmen. It's very difficult to get 218 votes in the House and then 60 votes in the Senate. But I think we will get 218 this week.
Yeah, the math is kind of sticky, Mr. Chairman. Thanks again for joining us today on Bloomberg. You mentioned Tom Massey. There's also Brian Fitzpatrick, who's voicing concerns still about this anti-weaponization fund that the president says he prefers. He said he'd be disappointed if it did not see its own creation. How many members does he speak for, or is the congressman from Pennsylvania on an island inside your conference?
No, there's a lot of heartburn over that weaponization fund. I don't think that there are many Republicans that dispute that the government has been weaponized. I don't think there are many of us that dispute that there are people who are victims of weaponization that probably deserve some type of compensation. But there were just so many question marks about how it was created, where the funding came from, who was going to determine who received compensation and who didn't. It was just not something that I think was rolled out very well. So I'm pretty confident that's not going to be a part of any legislation moving forward anytime soon.
Do you support the idea, Congressman? Or it depends on how it's made up?
Well, I have a lot of questions. So right now I'll hold off any support or anything like that. I have a lot of questions, but you can look at my interviews over the past 3 years. I don't think there's anyone that has been more critical of a weaponized government than I have. There are instance after instance where I've given interviews on national TV complaining about the Department of Justice or some other government agency, usually in the intelligence community, that has weaponized or abused their office. So I do believe that that's a problem. It's just a matter of how you create a fund. I think that needs to be debated in Congress. I think it needs to be transparent. And I think we need to be crystal clear on who will be the decision makers on who receives any type of compensation in the future.
Got it.
Well, and to your point on your concern about intelligence being weaponized, Mr. Chairman, that's why you have expressed some criticism of FISA, specifically Section 702 of the Foreign Intelligence Surveillance Act, warning that it can be abused, that there potentially is risk to civil liberties. That, of course, is a live question this week, as those authorities are set to expire on Friday. We are seeing in the Senate that being held up by the president's tapping of Bill Pulte as the acting director of national intelligence. Knowing, Mr. Chairman, he is someone that used non-public mortgage data to go after perceived enemies of the president. Are you concerned that those abuses could happen as he's helming DNI?
I think there's always going to be a concern that abuses can happen throughout history, regardless of which party's in power. There have always been instances where no-name bureaucrats, we often call them deep state bureaucrats, abuse their power. So, yes, I'm always concerned about that. I don't know this particular nominee. That's something the Senate decides, not the House. So I don't really have a say in that. So, I haven't put a lot of thought into that. But at the end of the day, I don't think that's a good reason not to vote to extend FISA. I would prefer warrants. I believe that that's something that's very important. Warrants for Americans. I know that's something that we fought for in the House. But at the end of the day, I do have confidence in Kash Patel and John Radcliffe and a lot of the guys that are leading our intelligence agencies right now to do the right thing. And we've got a lot of bad actors in the world, you know, whether you're talking about people from China or talking about people from Iran, there are hotspots all over Russia. There are a lot of people that are, as we speak, trying to do things to disrupt our government, to disrupt our economy, to create havoc. And I think the intelligence community should have all the tools at their disposal to be able to identify and protect Americans.
Sounds like you don't believe that it will expire, Mr. Chairman. Correct me if I'm wrong. I'm wondering what would happen if it did.
Well, I think we've already heard from Marco Rubio, who I think is doing a tremendous job as Secretary of State, that this would create a lot of problems for our intelligence agencies that are, you know, as we speak, trying to monitor some of these bad actors. So I hope that it doesn't, but I know there's a lot of concern in both parties about warrants for Americans, as there should be. That's a constitutional right. So hopefully we'll get these resolved, and hopefully we can give our intelligence agencies the tools they need to protect America.
Mr. Chairman, Kayleigh mentioned the work you're doing on the committee around fraud in Minnesota, and we do want to talk about this because you dropped a more than 200-page investigation here in which you allege the governor, Tim Walz, and the Attorney General, Keith Ellison, allowed fraud to occur. We saw you pull them both before the committee back in March. I believe it was early March. What's the end game here? Will this investigation lead to a piece of legislation?
Yeah, we're going to vote on a lot of bills this week that are going to put more guardrails on federal funds going to states. I think that's one reason you're going to see through J.D. Vance's task force on fraud, through our work on the House Oversight Committee, you're going to see just many, many people, hopefully, get indicted and prosecuted for welfare fraud in lots of different areas, Medicaid especially. One reason is because this is federal money that's sent to the states. And I think if the states if it was 100% state money, I think they would stay on top of the fraud a little bit better. But because it's federal money, and they don't want to do anything to disrupt the money, if you say, oh, we've got all this fraud here, that might trigger what we're seeing now in Minnesota, where President Trump put the brakes on certain different types of Medicaid funding into Minnesota until they get the fraud under control. So what our investigation did, we had whistleblowers come in who were predominantly Democrat career state employees in Minnesota that have been saying this fraud's been taking place for years, and they had under oath told us that they had warned Tim Walz and Attorney General Keith Ellison, and they didn't want to do anything about it. And I think that's criminal. I think that's something that every hardworking taxpaying American is sick and tired of, sending money to Washington, now their hard-earned paycheck, and then seeing it lost to fraud and fraudsters. There's always going to be fraud, but to know about it, to have these state employees blow the whistle and say there's fraud happening here with this particular program, whether it's the daycare, whether it's the hospice program in California, whether it's the Medicaid fraud in Minnesota, and for the leaders to not do anything, that's what our investigation was focused on. And we had enough testimony and enough evidence, emails, depositions, to determine that the governor and Attorney General knew about it, yet did nothing about it.
Well, and can you actually quantify it? In the report, you write about an estimated $300 million in federal child nutrition funds and potentially $9 billion in Medicaid-related funds, pulling that estimate from the Department of Justice. Were you able to independently confirm those figures, or are these just estimates?
The 300 million's confirmed, and you know there were reports when the fraud was being uncovered, media reports that range anywhere from $1 billion to $18 billion. But we are confident it's over $1 billion, which is that's real money in Kentucky. I don't know that it reached 18 billion because I don't think that would have been 100% of every dollar that went to Medicaid, and a lot of the money did reach the people that it was intended to reach, but a lot of it didn't. And that's where we come in. We want to make sure that every penny that is entitled to someone who's truly disabled, who's truly Medicaid eligible, gets their benefits. And what we're seeing is because Medicaid dollars are being wasted by such a large amount in all 50 states, that a lot of programs that are funded by Medicaid are being cut now. And we believe that we could sustain the current levels of Medicaid spending in America if we eliminated fraud. And the only way to eliminate fraud is to hold people accountable for defrauding the government. And that's what we're trying to do. And we're seeing that in Minnesota. There have been over 36 people arrested in Minnesota. And I think that's just the tip of the iceberg.
Mr. Chairman, thanks for coming to talk to us today. James Comer, is Chair of the House Oversight Committee, Congressman from Kentucky. We thank you for the time. As we assemble our political panel now to weigh in on everything that we just heard, we covered a range of topics. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us now. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Rick is our Republican strategist and partner at Stone Court Capital. I want to go back to what we heard from the chairman, Jeannie, about the anti-weaponization fund. Fascinating, as he made very clear that this was toxic. So he didn't use that word, but this was a non-starter for a lot of members not named Brian Fitzpatrick. What did you make of that?
Yeah, if I heard him correctly, I think he said there's a lot of heartburn. And then when you asked him if he would vote, if he would vote against it, he wouldn't rule it out. And I think that is what is so astonishing. Because on the one hand, he said there's lots of examples of weaponization, but they do not feel comfortable with the way this was rolled out. So I thought that was fascinating, that while there's consternation or heartburn, as he said, they haven't ruled it out. And of course, what we're talking about is a president who basically sued himself, won, and the taxpayers are paying for it on top of a shield by the IRS. So stunning that it would not raise even more heartburn and be immediately codified as a non-starter.
Well, of course, the president suggested in his Meet the Press interview this weekend, Rick, that he still supports the idea of the fund, talked about people's lives who have been ruined, that he knows that Congress would have to act. He'd be disappointed if they didn't do so. But if the chair of the Oversight Committee, James Comer, is suggesting unease around this, is that basically telling you that this would never actually get through Congress if the president were to pursue that?
Yeah, I think that the evidence was the way the administration kind of bent over backwards to try and turn off the heat by saying they weren't prepared to do it at this time. They didn't give it up, but it's only going to get harder and harder, right? I mean, you have a 2-vote margin in the House, and you've just heard a committee chair, talk about the fact that he probably might vote against it. You've probably got 25 other guys who have a lot more reason to vote against it than he does, and I think they'd be lining up to do so. So the House is just a non-starter if the administration tried to implement this, because they would actively go out and have legislation to deny it. And then the Senate's presented with a different issue. Not let's include an opposition to it in a clean bill, but let's actually deal with this House bill that now says we're going to ban it. And I think you'd see a lot of people coming out of the woodwork in the Senate to vote for that bill, do something offensive rather than defensive. So really yeah, but this Congress is all but done. And who knows what the makeup of it's going to look like after the midterm elections.
Do they have the votes for reconciliation today, Rick, with this anti-weaponization fund in mind? And by extension, FISA, it's kind of the same conversation. Is Bill Pulte going to create enough heartburn to keep FISA from being renewed?
Well, I was really impressed that the chairman didn't seem to think there was a problem getting FISA done, except it expires on Friday. And there's no vote planned. That's pretty cavalier for an important piece of legislation like that actually has been kicked and kicked and kicked down the road. My guess is they may kick it down the road again, some kind of a short-term fix. Don't have to deal with any of the opposition. There's a lot of it in the House Conservative Caucus. They want warrants for this kind of thing. They want to attach other things to it. So my guess is the most we can hope for right now is just some kind of an extension that can whip through the House and Senate. On reconciliation, it's clean now. But as you point out, I mean, 2 votes and you've already got people grumbling. There are 16 House members who are retiring from the House of Representatives and not seeking future office. Every one of those could be a vote against reconciliation.
Wow.
It's a lot of YOLO members. We talk about them in the Senate, but as Rick points out, there's a lot in the House. Just on this FISA issue, Jeannie, even if we were to see a short-term extension, it becomes a question of what will unlock the long-term nod from Democrats so long as Bill Pulte is still in there as acting director of national intelligence. Is it going to take the administration nominating someone for the full-time position before any Democrat is going to cast a vote to extend FISA powers?
Yeah, I don't know about any Democrat. I think we could see like a Fetterman.
Okay, maybe
or
not John Fetterman.
Exactly. But I do think for the most part that is absolutely the case at this point, that Democrats feel, and I think some Republicans feel, like the president is keen on dismantling FISA. Why else would he have nominated Bill Pulte and then talked openly about the fact that we're going to get rid of some of the dead wood and so on and so forth? So for people who are serious about protecting the nation's intelligence community and who feel that a time of war and when FIFA coming and all of these threats, that we need this FISA to be renewed, and you know, why he threw the monkey wrench of Bill Pulte in just says to people he's not serious about this renewal. And so I do think they're going to wait and see, does he pull Pulte down, or does he in fact nominate somebody else who at least has some experience in intelligence?
The president talked a lot about the anti-weaponization fund in his interview with Meet the Press, which then devolved into a back and forth once again about election integrity. The president restating on a program that aired in June of 2026 that the 2020 election was rigged. He went even further to say that the primary in California just last week was also rigged. Then the back and forth with the host, Kristen Welker, began until the president literally pulled off the mic and walked out. This is what happened on Meet the Press.
Your elections are crooked, and you're crooked, and Meet the Press is crooked, and so is ABC, and CBS, and CNN.
But Mr. President,
you're one-sided crooked networks. All right, let's call it quits, because I've had enough. Thank you, darling. Have a good time.
Mr. President, let's please. I traveled all the way to Wisconsin.
I've sat in the rain with you.
I know. I traveled all the way to Wisconsin.
On and off in the rain, and I've given you enough time. You ought to straighten out your press, because you know what? A country can never be great with a dishonest
Listen,
press.
we traveled all the way to Wisconsin for this interview.
When the president said that last week's California primary was rigged along with 2020, Welker said there was no evidence. He said, all I have to do is look. Rick, if we're still having this debate this many years later, and the president is expressing anger on the level that he did on a Sunday morning program, what does that tell you about the way he's looking at the midterm election cycle and the primary campaign we're still in?
Yeah, first of all, I got to say, the idea that somehow you traveled all the way to Wisconsin is somehow a compelling reason to continue the interview is like baffling to me. Wouldn't she walk there? I mean, what is that all about? Yeah, but look, I mean, we know the president has had a lot of anxiety about these elections, and he may or may not have any ability to articulate what he really thinks. There are a lot of conservative Republicans who don't like the way California administers its elections. Same-day registration, you know, there's harvesting of ballots, there's all these kinds of things. They can't count very quickly. And you would think a country with or a state with the resources that California has would actually be able to implement its election process better than this. That being said, it is an old harp that he likes to play. And frankly, I think most of the voting public have just already come to the conclusion that he's wrong on this, and they tune him out when he starts to say these things.
Well, when it comes to California specifically, when Kristen Welker pointed out to the president that Republicans were doing well, the president said, effectively paraphrasing him, not as more votes come in, and that is indeed the case in the LA mayor's race. Jeannie, Spencer Pratt looked like he was going to advance to the runoff. That is not to be. Now it's going to be another Democrat going against the incumbent, Karen Bass. But the fact that he came close, what does that tell us about the politics of the moment, and specifically the populism of the moment? Yeah,
no reprisal of the hills, Kaylee. It's over for Spencer Pratt. And by the way, I would say Kirsten Walker did sit in the rain. That was very loud rain. So I give her props on that with the president.
They had a roof.
They had a metal roof. Go figure. But I do think it says that people are very unhappy, and the leadership out there has been very frustrating. Now, in a state like California, in a place like LA, you'd have to do a lot more work than Spencer Pratt was able to do in a short period of time. But I think it is just indicative of how unhappy people are. And I would just say, let's not forget, Donald Trump's very open about his attacks on the press. He says his strategy is to attack the press because then when they say things, people don't believe them. And that is, of course, a concern for anybody who cares about democracy, because the facts are clear that there was no stealing of the 2020 election. So we should be very, very clear about that, as much as he wants to pull off his mic and run away from the pounding rain.
All right, Jeannie Shanzano and Rick Davis, our Bloomberg Politics contributors, thank you so much. Now, as we were talking with Rick and Jeannie, a red headline did just cross the terminal that President Trump's $100,000 fee for H-1B visas has been thrown out by a federal judge, a U.S. district judge in Massachusetts, who called it an unlawful tax that must be vacated. That would be a win for big U.S. technology companies who rely on H-1B visas for a lot of their skilled foreign workers. Of course, the president and the administration is likely to appeal that. But speaking of big technology companies, it's one that is in focus today, specifically Apple, out in Cupertino, where this year's Worldwide Developers Conference is underway. It's all about AI and Siri, and the keynote address is going on as we speak. So let's check back in with Bloomberg Tech co-host Ed Ludlow, who is out there in Cupertino for us. Ed, what are we hearing?
Yeah, we got confirmation of a new generation of Siri AI, and Siri is a standalone app. And if you guys bring the stock ticker up, really interesting, we got both buy the news and sell the news within minutes, right? So the moment Siri AI is confirmed, the stock shoots up to a session high, 2.7%. I think we've come off that, now back towards session low, 1.4%. But it was spot on, basically, in line with what Bloomberg's been reporting. Much higher levels of capability and functionality. Siri is a much more useful assistant, and what's happening right now is Mike Rockwell, one of the VPs at Apple, is kind of demoing use case after use case after use case. But the confirmation part is that there is a standalone Siri app, and that Siri is capable of doing so much more than the "Hey Siri, phone Katie" lines.
Yeah, Apple shares up about 1.2% now. Ed Ludlow. And you know what's also lower is Alphabet. Google's down about 1%, even though Apple's going to be using Gemini here as the foundation of its AI. Is that because this was already baked in, or because Google is simply replacing its business that it already had with Safari? What do you make of it?
Well, again, that would enter the sort of buy the rumor, sell the news trade, other than I'd note Alphabet was significantly lower for much of the session anyway. But yes, Gemini is underpinning both the on-device and overall foundation model that Apple's relying on, running on both device and in secure cloud. And that is an important breakthrough, as Apple had framed it, in them being able to make Siri more useful.
Well, so when we consider the usefulness of Siri and the way in which that drives demand, we got into this earlier, how much this can kind of drive an upgrade cycle. Do we have any sense as to how expensive these new products with this highly powered, more highly powered standalone app of Siri will be? Like, what's the cost association to the consumer, knowing obviously the AI development in itself is going to be a higher cost for these companies?
Yeah, it's probably the bit that has not yet been said, which is Siri AI, how reliant or literally tied to the latest iOS and also latest hardware is it? One of the things that Apple was stressing earlier in the presentation is that the new generation of iOS 27, is available and applicable to many prior generations of handset, and that got a great cheer in the room. But always the honest answer, we don't know yet if there's going to be but by the way, in order to unlock Siri AI's full potential, you have to have the absolute cutting edge and latest generation of handset. That's an interesting point of view. But again, if it does drive an upgrade cycle, that's not happening in this calendar year, probably not next year either. It's into 2028 when most of the industry sees the consumer waking up to how much AI they can actually use on device.
Apple shares now up only 1%, just about $310 as the Dow Industrial Average turns negative. The NASDAQ is up about 1% as well. Ed, thanks for being there. We need Ed Ludlow on that wall in Cupertino, and we'll have more as we learn it from the WWDC. Important conversation coming up with Denver Riggleman, the former Republican congressman from Virginia, is running an AI company now. And remembering, of course, that he did intelligence on the January 6th committee, has some pretty strong feelings about the anti-weaponization fund that we've been talking about in Washington today as well, with the likes of James Comer a bit earlier this hour. Before we get to Denver, let's check Wall Street, though. A little bit saggy here at the moment. Charlie Pellet, he's got the latest on the markets from New York. How's it look?
Thank you very much, Joe Matthew. Indeed, saggy, referring to the Dow, 50,800 where we stand right now. We are lower by 66 points, giving up earlier gains, down now by about 0.1%. S&P, NASDAQ 100 index, all moving higher. Got to begin with the rally in tech names. We are seeing a comeback today. Dip buyers back in the market, with NASDAQ now higher by 281 points, up 1.1%. The NASDAQ 100 index up 500 points. That is up 1.8%. Keeping it all in context for us, the S&P up by 0.5%. The SOX, the Philadelphia Stock Exchange's semiconductor index, it is up now by 6.1%. You recall Friday it was down by roughly 10%. The VIX closing in on 19 again, with the 10-year at 4.55%, the 2-year 4.15%, and the 30-year holding at 5.02%. Spot gold, little changed, up 0.1%, 43.34 the ounce. West Texas Intermediate crude up 0.5%, 91.02 a barrel on WTI. Barrel of Brent 94.23. Brent crude up by 1.2%. Bitcoin up 2.5%, 63,358. American companies are spending more on LGBTQ causes and Pride Month events this June. It is a notable turnaround after years of retreat and anti-DEI backlash. Case in point, MasterCard increasing spending, including paying for about 100 employees and executives to march in Pride events this year. American Eagle Outfitters among companies boosting contributions to various lesbian, gay, transgender, and queer causes, and Levi Strauss donating $100,000 to human rights group Outright International. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Okay, Charlie, thank you, sir. He'll be back at the top of the hour, 2 p.m. Eastern, as we kick off Bloomberg Business Week daily with the latest on the markets. Our early rally seems to be running into a bit of a challenge here. As we wait to hear from the House of Representatives on what happens next to the reconciliation bill, the Rules Committee is said to be behind closed doors at this hour to pick up the legislation passed by the Senate and potentially get it to the floor, most likely by tomorrow, where it is expected to pass. This is funding for ICE, Customs and Border Protection, and it's been held up a bit by a debate over the president's anti-weaponization fund that he told Meet the Press just yesterday. It was something that he would be disappointed if it did not see the light of day. Knowing there was a grand debate in the Senate, Kaylee, about all of this, and they didn't have the votes. It came down to one vote in an amendment, which would have banned such a fund, using taxpayer money to make up, I guess, pay damages for people who have been purportedly weaponized by the government. Didn't pass the Senate. It is still a live issue, however, in the House, and a lot of Republicans don't want this.
Yeah, and you have some Republicans, like the Republican congressman from Pennsylvania, Brian Fitzpatrick, willing to actually pursue a codification of the idea that a weaponization fund cannot be put into law. The question, of course, is going to become whether the kind of mass support for it is there. But the chair of the House Oversight Committee, James Comer, did suggest to us that there are a lot of Republicans who have, what did he call it, heartburn?
Heartburn on this one,
about this. So
I wonder what Denver thinks about this. We have a lot to discuss with Denver Riggleman, the former Republican congressman from Virginia who did intelligence on the January 6th committee. And Denver, it's great to see you. Welcome back to Bloomberg TV and radio. Of course, I know that you've been traveling literally the world raising money for your company, Rig Technology, which I'd love to hear more about. But as far as this story is concerned, as somebody who knows more about January 6th than most, the idea, maybe you can speak to the mentality that somebody like Brian Fitzpatrick has in publicly crossing the president, knowing what happened that day, the idea of paying people with taxpayer dollars who attacked law enforcement and in many cases serve jail time for it. Does it give you heartburn?
Oh, it's much more than heartburn. It's great to be back. I missed you guys. I think Brian is actually sane. I think that's the issue that you have, you know, with other Republicans that are maybe for this weaponization fund. But there's a few things I want to point out, and obviously you both can ask me any questions. I will answer them. First of all, the number 1.776 billion, 1776 being sort of the rallying cry for QAnon during the stolen election conspiracy theory. So when you're looking at the weaponization fund, I think people have heartburn for two reasons. I think those two reasons are that most of that money will go to Trump donors or recidivist criminals. And that's really what it comes down to, is that this fund is about codifying conspiracy theories. So when you look at, I started this warning, I feel like Cassandra, you know, you're talking about August of 2020, Tom Malinowski and I first submitted the QAnon resolution about that violence could happen based on these type of conspiratorial, you know, this conspiratorial thinking theories. And this downstream effect now is you have Donald Trump and the Welker interview, listening to that when you replayed it, you know, it's sort of stunning. It's much more than heartburn. It's disgust. And it's also this impending fear that the same things we warned about in 2020 with violence in the elections in 2026 and 2028 could come to fruition based on this radicalization path that we're seeing. And I think we have to be very specific and blunt about what we're seeing. It was almost disgusting to me to see people laugh it off or to try to diminish or sane wash what he's saying. What he's saying is that the election was stolen. It's going to be stolen again if he loses. And people that believe this become radicalized, that somehow they have to protect our Constitution by listening to a madman spout lies again. It's just a rehash. And I think that's what scares people. And lastly, I think that it's been institutionalized. You have institutional capture where there is no checks or balances on Trump's craziest thinking. And when you see people like Bill Pulte, Tulsi Gabbard before him, you see the real weaponization is what scares me.
Well, on your point on Bill Pulte, and I ask you this as a former intelligence officer, what's the greater risk, that you have an acting DNI who might be able to use intelligence against certain individuals who are perceived by the president to be enemies of his, or that because Pulte was tapped as acting DNI, FISA Section 702 doesn't get extended and goes dark after Friday?
Gosh, that's fantastic questions. As you know, I actually built FISA packages. I'm happy to talk about this, but I think there's a couple things here. When you have somebody like Bill Pulte, you already had, again, I said I felt like Cassandra, you already had a Trojan horse in Tulsi Gabbard. Bill Pulte continues that. You have somebody that has only ever told anybody what people want to hear. Intelligence, being ODNI, is about truth, facts, and data. When you have somebody like Bill Pulte, who was a Twitter influencer and really a Nepo baby, you have somebody like that that's in charge at 38 years old with no experience, and you have this active appointment for 210 days. What it is, it's an end run. It's an end run around the Senate. The Senate has to identify and choose somebody with significant national security expertise. It's almost as if our institutional credibility is a form of sovereign capital. And once you start giving away that capital and the trust in those institutions, we have a complete breakdown of not only our financial system, but any system of trust with our allies. And I think that's what scares me, right? Bill Pulte is so woefully underqualified. I mean, that would be like, honestly, a bit like asking me to dunk a basketball, right? It's never going to happen. So that's the issue that we have right now, is that we have people that are unqualified, sycophants, yes men and yes women, that are looking at foreign interference in elections that's going to be made up. And it just continues with that $1.76 billion fund, is that Bill Pulte can now make up foreign interference in elections that could affect some of the executive orders or things that Trump does in the 2026 and 2028 election.
Really remarkable. Institutional credibility is a form of sovereign capital. I'm going to have to think about that. Congressman, were you surprised by James Comer's response to the anti-weaponization fund? He seemed less concerned about FISA, but is clearly turned off here. The president has found the line, it seems, for many in his conference. It was January 6th that did it, huh?
Well, they have to, right? Listen, it's so cynical, right? And it's almost like a form of weaponized ignorance. When you talk about institutional credibility, you can't have it when facts and data point to something specifically as truth. And you have congressional representatives They're so worried about re-election or polling in their specific districts that they're willing to give up the truth and facts to the American people for their own hide. So they get invited to Mar-a-Lago, they get invited to parties. It's so, you know, and when you look at Brian Fitzpatrick, right, and you look at the bravery of some of them saying this is ludicrous, it's beyond ludicrous. It's the self-dealing we've seen throughout the Trump administration. And again, I think we have to get to a point where adults are back in the room. But again, our institutional credibility is shot when people like James Comer do what they do.
And finally, Congressman, we just have a minute left here, but you obviously are now running in Rig Technologies, an artificial intelligence company. And I wonder if you feel like this administration is doing enough to create guardrails around it, because you're focused on cyber specifically. How great is that threat? Are we doing enough about it?
Yeah, when you're looking at, you know, I think people need to look at NSPM 11. I think that was just released on June 5th. It was a great question, by the way, and I've read NSPM 11. I think what's interesting is there's some good things there about AI, specifically with China. Now, I would argue we don't know that there's no guardrails for China, but I can actually argue that point that might be a good point. I think the issue that I have, and it's a great question, is that they're talking about ideological bias in that, and that people can be fired for that. And I think, again, we really have a community or an administration that has no guardrails themselves. So I think that's what scares me.
All right, we'll leave it there. Looking forward to having you back soon. Denver Riggleman, the former congressman and now CEO of Rig Technology, thank you for being with us on Balance of Power. I'm Kaylee Lyons, alongside Joe Matthew here on Bloomberg TV and Radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, we are across Bloomberg platforms. Carol Masser, Tim Stenivek, live here at Bloomberg headquarters in New York City. Man, what a week. We're going to get inflation reads. We've got a big Apple event. We're going to talk about that in a moment. We've got the World Cup getting underway. And then, oh, yeah, wait. What's that other thing that's going to happen?
Excuse me, are we in New York City and is there a basketball game tonight also?
Oh, wait, there's
Are you
that.
kidding me?
Wait, and I thought you were going to go to dun-da-da-da.
No, I'm going to the Knicks.
What about the SpaceX IPO?
Yeah, well, you already said that Friday, all day Friday. That's
I
what we
didn't
have.
say that.
Oh, I thought you said it.
No, I'm so glad you don't listen to me anymore.
Pretty sure
I'm just kidding.
I don't
It's
know.
a crazy.
I can't hear anything right now, so I don't know what's going
We're
on.
having a few technical things, and as a gem, as he always is, Tim finding his way through it all. Having said that, we got a lot going on throughout the week. We've got a lot going on this Monday. We're all in on the Mag 7 because we're definitely seeing them move in today's trade. But we're going to get into one of the big tech names, and we're talking about Apple. It is holding its Worldwide Developers Conference. You've been there. I've been there. It's a big event. It's folks all thinking about the Apple platform. Also, there's our Ed Ludlow.
Yeah, we're going to go to him in just a few minutes. We're also going from Cupertino to Rio de Janeiro to hear from the CEO of one of the world's largest mining companies. Gustavo Pimenta is going to be joining us. Our own Lisa Abramowitz, I should say.
Yeah.
The CEO over at Vale.
That's a way to pick up some miles, right? Go from Cupertino to...
Yeah,
Brazil.
Lisa's been there all weekend. The weekend coverage from the airlines was amazing.
All right,
Yeah.
so good stuff in case you
Really
missed
great
it.
stuff.
Check it out on the Bloomberg. Hey, in the meantime, we've got someone who is an award-winning Michelin chef, has a podcast. She's talked to Francis Ford Coppola, Paul McCartney, Martha Stewart, many, many more. Tina Fey also. It's all in her new book. Ruthie Rogers is joining us from London.
We should have done this from the restaurant.
Hey, team, are you listening?
Are you listening?
Are you listening? All right, all of that coming your way over the next 60 minutes. First up, though, let's get to it. The trade on this Monday. Let's turn it over to Charlie Pellet.
All right, thank you very much. Right now, Apple up by 0.5%. The Dow in the red. S&P, NASDAQ 100 index, all moving higher. Chip stocks, they are poised for the best day in a year after Friday's rout. That's all a part of the tech rally we're seeing right now. Keeping it all in context, we begin with the S&P up now by 0.6%, up 46. The Dow narrowing its losses, down now by 5 points, just about unchanged. NASDAQ is up 1.3%. The NASDAQ 100 index up 2%. And the SOX, the Philadelphia Stock Exchange's semiconductor index, it is up now by 6.8%. That, of course, follows Friday's rout of roughly 10%. A 10-year right now at 4.54%. We do have the 2-year currently yielding 4.15%. The 30-year at 5.01%. Gold up $14 the ounce, $43.43, up by about 0.3%. And West Texas Intermediate crude oil up 0.7%, $91.16 a barrel. Barrel of Brent, $94.27 on Brent, up by about 1.3%. So bottom line here, Wall Street staging a comeback, a Monday comeback as dip buyers emerge, lifting stocks amid renewed enthusiasm over AI and bets that a solid economy will keep powering corporate America. And of course, NVIDIA's CEO Jensen Huang calling a global tech stock sell-off last week a buying opportunity, saying the build-out of artificial intelligence has just begun. We've got NVIDIA right now taking part in this chip rally. NVIDIA shares are up by 2%. Also today involving chips, Alphabet's Google recently placed an order with Intel to manufacture more than 3 million of its specialized AI chips in 2028. That, according to the information citing sources, the media outlet reported that Intel is receiving orders from firms like Google as the Taiwanese semiconductor manufacturing struggles to keep up with demand for its manufacturing capability. Right now, we've got Alphabet shares lower by 1.1%. Again, Intel surging now by another 12.8%. Among some of the other chip names, Micron is up 10.5%. Advanced Micro Devices up 5.3%. NVIDIA, meanwhile, up by just about 2%. Some of the other stories that we're following for you at this hour. Marvell Technology and Flex will both be joining the S&P 500 in the latest quarterly rebalancing, replacing Poole and Campbell's before the start of trading on June 22nd. Shares of Marvell and Flex, they are both advancing today. Apple investors, meanwhile, monitoring developments out of the Worldwide Developers Conference, now underway in Cupertino. Apple shares just turning negative. We've got Apple down by about 0.3%. In the drug industry, Eli Lilly has presented data showing its next-generation shot can help patients lose 30% of their body weight over about 2 years. Again, 30%. Companies are looking to challenge market leaders by offering treatments with benefits beyond just weight loss, such as convenience, fewer side effects, and improved results with serious health conditions. Recapping, S&P up 45, up by about 0.6%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, Apple investors have spent nearly 2 years clamoring for the iPhone maker to make a big splash with artificial intelligence. So the question is, are we getting it? We do already have some headlines that have crossed the Bloomberg and are on our live blog about Apple's annual Worldwide Developers Conference, which is underway in Cupertino, California. And that's where we go and where we find our own Ed Ludlow. He's co-host of Bloomberg Technology, Bloomberg Tech on Bloomberg TV at 11 a.m. Wall Street time, Monday through Friday. Ed, good to have you here with Tim and myself. 1 p.m. keynote. It has been underway for over an hour. What's new and interesting, and are we getting answers when it comes to AI and Apple?
What's new is Siri AI, a rebrand. It comes in the form of a standalone app. That is new. It has more of a chatbot style interface. That is new. And these are the features that Apple for a long time was promising that eventually Siri would be able to deliver on. Like the share move in the moment was so interesting because a lot of this, right, Bloomberg's Mark Gurman has reported this would happen. He basically nailed every single detail. But on, the pre-recorded, it's a pre-prepared, pre-recorded keynote. The moment Siri AI goes up on the screen and even confirmation it's a standalone app, the stock goes to a session high 2.7%. We're now softer by 0.5 percentage point. And so I don't know whether you guys would call that sell the news kind of situation, but really interesting to see like Apple demoing things that everyday people would actually use, things that are actually useful, rather than some kind of hype or hyperbole.
Like what, Ed, when it comes to AI and the way that Apple has embraced or has not embraced AI at this point?
Yeah, so one of the key features of this, or at least the key points of technology, is that Siri AI is interoperable between the different OSs. So you can use it on your iPhone through iOS, carry it over into a piece of work or project on Mac OS, iPad OS, etc. You get the idea. That is useful because if you are on an Apple device user and you're using its operating system for your email, where you work, your photos, you can drag it around. And like that actually is something that they demoed quite a lot. What is interesting about this, like you guys know what Mark Gurman's like, right? How he would describe things. And I'm trying to play it straight down the road. But the thing that's really interesting about it, and they kind of flicked at this in the Top Live blog, a lot of this functionality, it's already available in the market that Apple's trying to go after, which is, Gemini can do a lot of this, and ChatGPT, not just as underlying technology, but as tools. They already do a lot of that interoperability. But yeah, it was quite convincing.
All right, convincing, quite convincing. That's a big step and an endorsement. What's missing, though, here?
Something just barnstormingly new. Again, with the added context for your listeners that if you think through the lens of why the stock's behaving the way it is, this is kind of selling the news. A lot of what was announced has been out there. So, for example, this generation of Siri AI, the underlying foundation model is in cooperation with Google and Gemini. A mix of Apple's in-house models and Gemini as a model. We knew that was going to be the case, and it's been confirmed as being the case. But it does seem to be like something that's allowed Apple to make Siri more interesting. And what they're doing in each of the phases of the presentation is basically saying, like, how would you sit at your Mac, or how would you spend time on your phone and actually use it? And, you know, it's just kind of logical stuff. For example, if you're writing an email, open Siri in its chatbot form alongside the email draft, and it will tell you whether it's good or not in exactly the same way as Microsoft's Copilot currently works in Outlook or Gemini works in Gmail. That already exists, but at least it's comparable and it puts Apple in the game.
In another world, Ed, like maybe a generation ago, we'd be speaking about the new version of Mac OS. In this case, it's Mac OS 27. It's Golden Gate. They always name it after some sort of landmark in California.
Yeah.
Is there anything notable that makes the Mac ecosystem work better? You know, you already talked about Apple AI, and I think that's a big part of it, but makes the Mac ecosystem work more well with the iPhone ecosystem and the way that the operating systems are typically unveiled at these events?
Yeah, again, don't underestimate the Siri, that they've been able to make Siri across the board, that you can jump from one OS to another. Like, people really cheered that on. You know, what you're getting out, it's still called Mac OS, but this year onwards, it's iOS 27, iPad 27, Mac OS 27. It just gives them the same calendar year or generation year, which developers, I've spoken to a lot of developers today, they actually think that's tangibly useful. But with Mac OS, retaining the name Golden Gate, what they have done across the board is basically go under the hood and try and fix things that make the system really just perform better. So I'm going to give you one tangible example because it's one that resonated with me, which is AirDrop across the board is now 80% faster. How many times have you kind of been there awkwardly, like, okay, I need to get photos from you onto this device, and you sit and you're like, is it coming? Is it coming? Is it? And then it happens. You know, little fixes like that, optimizing the system, making it much faster. With the consumer and the developer, that really resonates.
Speed and seamless.
I love that. Finally news you can use, right?
Exactly. Ed Ludlow, thank you so much. Bloomberg Tech co-host out there in Cupertino there, of course, at the Apple Worldwide Developers Conference. Just a few heads also crossing. Apple says new Siri AI launching in beta later this year. Says Siri AI will not initially be available in the European Union. Also says Siri AI and new AI features not yet coming to China. So, and that stock is bouncing around right now. It's a little bit lower after rallying earlier, Tim.
Okay, so that's a little bit of the tech talk for this Monday. Now to a little bit how tech is changing how we work and who actually, Carol, gets to work.
Yeah, I mean, listen, this is such a big topic. Just ask anybody who recently graduated. So let's get to it. Because that recent round of graduates, man, and commencement speakers who have been talking a lot about artificial intelligence in their speeches to the class of 2026. And as they did so, often to a not very receptive audience. First up, you're going to hear from Gloria Caulfield at Tavistock, followed by Scott Borchetta, CEO of Big Machine Records, and then you've got the former CEO of Google, Eric Schmidt, wrapping it up. Listen up, everybody.
The rise of artificial intelligence is the next industrial revolution.
AI is rewriting production as we sit here. I know it. Deal with it. Like I said, it's a tool. Hey, like I said, you can hear me now or you can pay me later.
So today we stand on this edge of another technological transformation. I know what many of you are feeling about that. I can hear you. There is a fear .
Talk about reading the room
Who can blame
in the
them?
wrong way. Yeah, exactly.
Truly, they're the ones trying to get jobs right now, and you know they're hearing that entry-level jobs are being hit by AI.
Yeah, Business Week, Bloomberg Business Week has done a whole bunch of stories about the recent grads and how they are having trouble finding jobs. So it's not easy. Again, that was the former chairman and CEO of Google, Eric Schmidt. Before him, Scott Borchetta, CEO of Big Machine Records. And then Gloria Caulfield was kicking it off. She's VP of Strategic Alliances at Tavistock. Let's get into the labor market. With us is Corey Cantega. He's head of Economics Americas at LinkedIn. He joins us right here in studio. Corey, good to have you here with us. Are those leaders right? Are they not reading the room well?
The labor market right now is running slow. There is an open question about to what extent is that AI? And I think those leaders, from their point of view, they're just looking at the opportunities. But there's also risks, and I think that's what the students are responding to. So you have two folks who are trying to have a conversation potentially there, but they're really just talking past each other. Because on the opportunity side, we see lots of jobs being added. We see that AI hiring is outpacing the overall labor market by 30%. But when you look at the areas—
What types of jobs?
AI engineer, forward deployed engineer, AI integrator. These are roles that are about building and maintaining and supporting the AI ecosystem. And of course, there's a ton of data center jobs that go along with that too, about 500,000 that we've seen added over the last few years. So on that side, there's lots of opportunity. A lot of growth in the US right now is being driven by AI capital expenditures. There are a lot of jobs being added to the AI ecosystem. But when you look outside of AI, when you look outside of a few areas like healthcare, there's just no momentum in the labor market. We see hiring 20% lower than what it was prior to the pandemic. And if you don't already have a job, it's really difficult to find one. And that's what I think a lot of grads are experiencing and feeling. And when they're told that it might be AI is the reason you can't find a job, of course they're going to react that way.
Where's the area, at least, of where students do not want to be? Like the majors that are not getting jobs, the careers that will no longer exist because those jobs are being taken by AI. What are those?
We don't know what those are yet. Often when we have a conversation about AI, we just forget about the economics and throw it out the window. Just because AI can do something doesn't mean that it will. It's really going to depend on those costs and benefits, which is why when you hear economists talk about, well, what's AI going to do, what's going to take over, at the moment it's too early to tell. There are, of course, some areas that we see are particularly weak on LinkedIn, like back-end developers. And we see forward deployed engineers is very strong. So those folks who are focused, they're software engineers, they're solution software engineers, but they're much more focused on AI integration. Whereas back-end developers, they're focused on that classical cleaning up your coding base, fixing bugs, all of those things that AI is actually quite good at. So there are obviously some areas where we see the tasks that you need are shifting, but that doesn't necessarily mean they're being wholesale displaced.
I feel like for a liberal arts student, you're like speaking a different language with all of these forward deployed engineers.
I was thinking, like, I would have been probably screwed.
Yeah, I'm thinking.
You'd be surprised how many art history majors end up in the Goldman Sachs Research Institute. A lot of
I wasn't art history, I was economics, but I think about anything that's data intensive. I mean,
but even doing that research today with LLMs, able to do research?
Yeah.
A lot of jobs today, which are very data-oriented, data-focused, they're actually more accessible to people with liberal arts degrees. If you can use LLMs well, you know how to prompt them, you know how to vet them and evaluate the outputs, that actually has made these occupations more open to you.
Well, I think of one of the conversations we had at Bloomberg Technology in San Francisco that said that maybe the liberal arts, I can't remember who it was, but it was...
Well, Daniela Amadei at Anthropic has talked about this a lot, and the importance of liberal arts.
Well, and that's what I'm wondering, if we're going to circle back to this just being curious and discovery. I mean, it's part of what I like about journalism is there's something new thrown at us every day, and we get paid to kind of research it and find out about it. But you have to kind of figure out how to ask the right questions and so on. How do you see it, or is it, again, too early to know the impact of AI on the labor market?
One of the big concerns that I've seen folks express, particularly around education, is the development of critical thinking skills. Mm-hmm. If we offboard those onto some automated tool, you need experience to develop judgment, to develop that human judgment that takes place in a lot of roles. And you see this when we think about, well, you ask employers why they're not hiring. So, well, I can't really use junior folks right now. I need people who have judgment, but you need to build those people.
Right.
Those people have to be developed over time. So if you're an employer going out and saying, I'm not going to hire entry-level workers, well, eventually you will have a problem.
Right. Can't go up the ladder if all those rungs at the bottom don't exist unless you can jump pretty high. Corey Katanga, thank you so much. Head of Economics Americas at LinkedIn. Come back soon. The Global Grab, when we come back, specifically when it comes to critical minerals, we've got the CEO of one of the world's largest mining companies. We head to Brazil, Rio de Janeiro, in just a moment when Bloomberg Business Week Daily continues.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Dow Industrials back in the green, barely up under 0.1%. Little changed on the day, higher by 4 points. Both the S&P, NASDAQ 100 index, they are all advancing. Chip stocks poised for the best day in a year after Friday's rout. Indeed, dip buyers back in the market. So here's where we stand. S&P right now at 74.29, up 45 points. On the S&P, that is a gain of about 0.6%. Dow Industrials flat on the day, higher by 9. NASDAQ up 313. That is a gain now of 1.2%. The NASDAQ 100 index up by 2%. All of this with the SOX up by 6.7%. The VIX below 19 now, and a 10-year at 4.54%. The 2-year 4.15% on the 2-year. The 30-year 5.01%. Spot gold trading higher by 0.4%, 43.43 the ounce, while West Texas Intermediate crude gaining today up 0.9%. WTI 91.32 a barrel, Brent 94.25, up by 1.3%. A rally for Bitcoin, 63,563 on Bitcoin. It is up by 2.8%. As we've been reporting, Apple makes it official. It has unveiled the next generation of its AI platform, including an update to its Siri digital assistant. Apple shares down now by 0.8%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is one of the big narratives of the last year, a signature policy of the second term of the Trump administration, and that is shoring up supplies of critical minerals and commodities, including iron ore, pellets, copper, and nickel. It's become, Tim, though, really a focus for countries and governments around the world.
On that, we're going to head to the Bloomberg News Bureau in Rio de Janeiro and to one of the co-hosts of Bloomberg Surveillance, Lisa Abramowitz, sitting down with the CEO of one of the world's largest mining companies, Gustavo Pimenta, the CEO of Vale. Lisa, take it away.
Thank you so much, Tim, Carol. I am here in our beautiful Rio office with Gustavo Pimenta, the CEO of Vale, the world's biggest iron ore miner and one of the biggest iron miners just in general around the world. At this critical time, as Tim and Carol were just talking about, there has been this rush to any kind of critical minerals and to secure it for security reasons as well as the infrastructure build out. How much more demand have you seen just recently?
Look, the amount of demand, first of all, good to see you, Lisa. The amount of demand is super constructive. It's historical for us. I think across all the critical minerals we are seeing and a very strong support from clients all over the world, from countries in terms of looking for security of supply. Iron ore continues to be strong. If you look at copper, nickel, so across the board we are seeing tremendous amount of demand for all of the mining that we produce.
The bulk of your customers typically come from China. Have you seen more interest recently from the United States?
We are. China continues to be a strong market for us, very relevant for everything we do, but we are seeing growth outside China. We are seeing growth in Southeast Asia. We are seeing growth in the US, Europe. So there is a diversification going on these days with other markets looking to amplify their access to critical minerals.
People talk about a commodity super cycle. Iron ore hasn't participated as much in terms of the price gains, and there has been a sort of plateauing in demand from China. Where are the growth opportunities specifically when it comes to iron ore?
So we continue to be very optimistic about iron ore. If you step back and look at the overall demand, we have population growth, we have industrialization, we have other markets growing. Certainly China probably has plateaued and reached their overall peak in terms of production. They are doing more than 1 billion tons of crude steel production annually. We think they will continue to be at that level, but we are seeing growth in Southeast Asia. India is growing substantially. We're expecting India to double the crude steel production in the next 10 years. Even the US is growing. So we are seeing more demand outside China. China will continue to be the key market for all of us, but we are seeing greater demand in other markets as well.
You've seen your copper production increase, I believe, 5 to 10% of total revenues over the past 5 years. You've talked about wanting to double it again over the next 10 or so years. What does that entail in terms of investing in existing mines, in terms of acquiring new assets? What exactly are you looking at?
Look, we are very optimistic also about the copper demand. I mean, the electrification of everything, which is a secular trend, data centers, all of AI, this will require an enormous amount of supply from copper. we in Brazil are sitting in a tremendous endowment. Vale has a great endowment, especially in the north of Brazil, to produce more copper. We've been doing, last year we did about 380 kilotons. We want to double this to about 700 kilotons. There is an enormous opportunity for us to accelerate the development of the critical minerals and the deposits that we have in the country.
Well, does that require acquiring other companies? Does that require investing large sums in existing mines?
So for us, it's more about brownfield, because the unique advantage of Vale is the fact that we operate with very efficient capital intensity for the projects, because I have the rail, I have the port, I have the entire infrastructure. So for us, it's more about developing near mines and the brownfield around our existing operations. So it's less about M&A, but more about unlocking the potential that we already have.
What about rare earths? Brazil sits on the biggest reserve of rare earths behind China. Are you planning to expand into that at all?
Look, we've been studying if this is something that would make sense for Vale. We do have certain opportunities in Brazil that we are assessing. For us, there are some questions that we have to answer in terms of scale. Can we compete with some of the international players like the Chinese? So this is something that we are currently assessing. I would say our biggest bet is to focus on what we are good and have scale. At this point, iron ore, copper, and nickel, but we're keeping an eye open for other opportunities.
Are there any countries or players in countries that would be interested in assisting you to build that out, given the fact that there has been this focus by the U.S. on developing national security and sort of getting reserves?
Certainly, a lot of investors, international investors, local investors that want to partner with us. And we have a few examples here in Brazil and outside where we are working together to unlock, because it's a lot about accelerating the development of what we have, especially in the critical minerals agenda. So we are certainly open to discussions with partners that are willing to come and co-invest with us.
What about the price of oil, given the fact that you have to move all of these very heavy materials from one place to your major customer, which is over in China? Has that hampered demand at all?
No demand, no impact on demand. I think what we had, since we are more distant from our end user or end client, which in this case continues to be China, our most relevant consumer, especially for iron ore, we had an impact in the overall cost for our transportation of the iron ore. Now, but when we look at the overall pricing for commodities, and in particular case for iron ore, price has increased more than the impact that we had in our cost, because the marginal producers have been impacted more than Vale. Vale has long-term affreightment for our vessels. We are hedged on the fuel cost. So the impact for us hasn't been negative. In fact, we had a margin expansion as a result of the conflict. But we continue to monitor that very closely.
Is there a limit to how much customers will accept in terms of price increases?
Look, certainly we'll have to see. I think at this point there is no impact in demand destruction. We are not seeing. The markets continue to be solid, strong. Clients continue to produce. We'll have to continue to monitor to see to what extent they can absorb the price increase. But at this point, we are not seeing impact in the overall demand.
You have a pellet manufacturing place in Oman,
Yep.
and it has been taken offline as a result of simply not being able to ship the pellets out from the area due to the conflict there. What is your plan in terms of reopening that?
Look, we are ready to reopen. Certainly, we are monitoring the conflict, and we want to make sure our people are safe, and that's the most important thing for us. It is very well located. Oman has a special strategic location, even within the Middle East. We have a great asset. It's a pelletizing facility, which is very important for decarbonization, for a lot of the energy transition discussions that we have. We are, in fact, as we speak, doubling the capacity of that facility. At this point, we're waiting for the conflict to end or to reduce in terms of the potential impact for us to resume operations. We continue to be very optimistic about the Omanian operations that we have, and we think that could be a hub for a lot of the clients that we have in the region.
So this hasn't pushed out your ambitions at all for the region or curtailed them in any way, the fact that the conflict has kept going?
Not particularly with Oman. We continue to be very committed, and we think it's a great market for us to have, to serve India, to serve other markets, even Southeast Asia. So it's a very strategic asset that we have.
Are you still confident about your full year forecast for costs? Do you expect that to stay where it is?
So, as we mentioned before, I mean, the overall expectation for the year is great, actually. I mean, we had a very strong first quarter. Production across the board, and all commodities are trending very nicely. We had a record production in copper, nickel, and iron ore. in the Q1. So I'm very optimistic about the full year performance. We did have an impact in the overall cost base given the fuel cost, but overall margin has expanded. So I continue to expect a great year for us.
You've been in the business a long time in terms of commodities and energy production in general. Do you have any analog to this period in terms of the super cycle that you're seeing and the demand level that you're seeing from clients?
Look, I think what we've seen for iron ore back in 2010, 2014, that period with the super cycle is what we're seeing in the critical minerals. But the more I look into, the more we discuss with clients, I think the opportunity this time around is even greater. So I think we are in a unique moment of our history, Vale, particularly because, look, we are located in a country that has an enormous endowment, very well positioned from a geopolitical standpoint. I mean, we do businesses with the US, with Europe, with China. We have an enormous endowment. We have the infrastructure all in place. And the demand is growing across the board on all critical minerals. Even iron ore continues to be very strong. So we are very optimistic. I think it's great to be a miner these days. So we are very excited with that.
Gustavo Pimenta, thank you so much for being with us.
Thank you.
That is the CEO of Vale, Gustavo Pimenta. And Tim, Carol, I'll send it back to you.
All right, we'll take it. Hey, Lisa, thank you so much. Safe travels back here to Bloomberg headquarters in New York City. If you missed any of that interview, be sure to check it out. It'll be on the Bloomberg and also at Bloomberg.com, but really plays into what has become a very strong narrative over the last year. If you think about national security, whether it's rare earths, whether it's critical minerals, you see nations, you see governments thinking about what they need to make sure that they have what they need in terms of manufacturing, because if you think about something like rare earths, right, and semiconductors in pretty much everything we own, it feels like, but all of this is very, very important. And we're seeing that even with oil, right, and energy as a result of the U.S. war in Iran.
Well, Carol, speaking of what people need, it looks like investors need chip stocks today because they are out there and they are buying them up. Chip stocks are poised for the best day in a year after that rout that we saw last week. The stocks right now up more than 6.9%, close to 7%, with some stocks in there making big moves in the double digits.
And I will say a big reason why is Intel. If you take a look at that name specifically, it is soaring in today's session. Just quickly, on a percentage basis, it's up more than 13% today, 112.52. We know the stock has been on fire this year. It's up more than 200% as we speak. But the reason for the bump up today and really helping to lift the overall chip trade is that Intel has gained on a report after the information posted that Alphabet's Google will rely on it for more than 3 million specialized AI chips in 2028. So Google deciding to tap Intel to make some of its tensor processing units after months of testing the chip maker's technology, that according to the information.
Okay, so I'm also looking at shares of Apple because they're actually lower today as the company continues with its Worldwide Developers Conference. Shares of Apple were up as much as 3.3%, now down about 1%. A little bit of a lukewarm reaction to this new Siri and AI platform.
Yeah, stock up about 12% year to date. We're going to talk more about Apple, too, at the top of the 3 p.m. hour. Meantime, we are a little bit more than an hour and a half from the closing bell. Coming up next, we're going to talk food, comfort. It's all in a new book.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks holding on to gains. The Dow barely. It is up now by just 1 point, swinging between gains and losses. S&P, though, let's keep it all in perspective. Up 40 right now to 74.23, up by about 0.5%. NASDAQ, though, on the NASDAQ 100 index, that is where we are seeing substantial gains. Tech stocks are staging a rebound today. We are seeing a comeback as dip buyers emerge. S&P up 0.5, NASDAQ up 1.1%, the NASDAQ 100 index up now by 1.8%. All of this with the stocks up 6.3%. The semiconductor index was down roughly 10% on Friday. We've got the VIX holding above 18, a 10-year at 4.54%, the 2-year 4.14%, and the 30-year 5.01%. Gold up 0.2%, 43.37 the ounce. West Texas Intermediate crude rallying up 0.5%. That's 91.02 a barrel. Brent 94.07. It is up now by just about 1%. Marvell Technology and Flex will be joining the S&P 500 in the latest quarterly rebalancing, replacing Poole and Campbell's before the start of trading on June 22nd. Shares of Marvell, they are surging 12.6%, all part of a broader chip rally today. We've got Flex shares up now by under 0.1%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, she is an award-winning chef, co-founder of a Michelin-starred restaurant, author of 13 cookbooks, a native New Yorker, has a podcast where she talks with the likes of Paul McCartney, Tina Fey, David Beckham, Mel Brooks, Martha Stewart, Francis Ford Coppola, Mark Carney, Bob Iger, Johnny Ive, whose comfort food, by the way, is peas.
Okay, I like that.
Who would have known? She has also, full disclosure, talked with Michael Bloomberg, of course, founder of Bloomberg LP and Bloomberg Philanthropies. She has talked with many, many folks. All of it comes together in a great book. It also comes together like a great meal with amazing company. Her new book is entitled Table 4 at the River Cafe, which, as we understand, is a highly coveted physical table located near the restaurant's open kitchen. Here to tell us about it and more is Ruthie Rogers, co-founder of the River Cafe in London, host of her podcast, Ruthie's Table 4. She joins us from London. We are so delighted to have you. We know it's a little bit later there in London. Congratulations on the new book. And we were thinking about where should we begin? And if you had to pick one single thing, Ruthie, as to where you are today, why you got there, your restaurant, iconic, well-known in London, award-winning. You've got now a 5-year-old podcast. What might that thing be?
I think that, from the very beginning, we started with the values of a restaurant. What is a restaurant? Why do people go to restaurants? What do you look for in a restaurant? And I was just downstairs just now, and I see that the way people are greeted, the way people are made to feel welcome, of course, the food. We change the menu for every meal. We write a menu. We, rather like you do at home, we see what is fresh, what we have, we bought the day before, and what, of course, always what is in season in the Italian market. So I think every day is a different day. We have great people working here who we, the whole kitchen is open, and so there's a kind of way that we all work together. And I think, we want really people to come to your restaurant and leave, I always say, quite simply happier than when they arrived.
Mm-hmm. So tell us about, for people who haven't been to the restaurant, the coveted Table 4.
Well, you know what? Michael Caine always used to sit at Table 4. Mm-hmm. But then, when Nancy Pelosi came in, we sat at Table 1. And there might be a table somebody who prefers table 10, which is near to the entrance. Table 4 is slightly also a pun on the word for. So it's a table number, but it also is a table for Michael Bloomberg, a table for any of the other people who are in the book. Because what we wanted to do when we had to stop the restaurant because of the pandemic, we wanted a way to reach the people who ate in the restaurant. How could we reach them? We thought about reading a recipe every day. And then that segued into the story, because when you think about when we talk to people through the lens of food about their memories, it's very thoughtful. It brings back, if I asked you, did your mother cook? Did your father cook? Did you go to restaurants? It brings up other stories.
I love that aspect. Being from a large family, food was a big part. My mom loved to cook, and especially around holidays, birthdays, a relative in town, she would cook and make sure there was things for everybody who liked, even if she had to do like 5 different vegetables to make sure everybody was happy. But we would sit, Ruthie, at that table for hours. And I feel like that's where you're coming from.
Yeah, the best things happen around a table, I think, and the sad things happen around a table. But I think it is around a table that we all meet. It doesn't matter. We could have a sandwich around the table or a drink around the table, but there is something of that conversation. And when we interviewed Elton John and David Furnish, the woman who worked for his chief of staff, who said she'd worked with and heard so many interviews over 25 years, but it was only when Elton started talking about potting peas with his grandmother, or how they tried, the people who use food, to seduce, to impress, to give joy, to share. It's, and I'm also, I meet a lot of women who don't cook or men who don't cook, and that's fine. It's not about the cooking, it's about somehow being together.
Well, let's talk about the podcast a little bit and the way that these interviews have come together in this new book. As Carol mentioned, a host of names. These are not your favorites. These are just some of the interviews that the publisher picked. We should
I
note.
have to make that really clear because so many brilliant people are not in the book, but they'll be in volume 2.
Well, what is the connection between the podcast and the restaurant and the way that you try to bring what you bring to life in a restaurant to an audio format that you invite people to sort of be at the table with you?
I think there are 2 things. I think a friend of mine came into the restaurant the other day and he said, I'm having trouble with one of my children. I'm not sure that I can join this crowd. Look at this room, Ruthie. There are so many people at this table looking so happy and celebrating. And I said, if you went to every table in this restaurant, everyone has a story. Everyone has a story. It could be a happy story that daughter might have graduated, or they could have been fired that day, or their mother might be sick, or, there's so many stories that people have. And I think what I wanted to do is talk to people and have their stories told, as I say, through the lens of food. And you discover we have different sections. We have the chapter of food is family. And so we have the McCartney family. We have the Beckham family. We have the Harry Russell and Matthew Rice. We have, and that's families. We have the art, food is art. And we have Tracy Emin, and we have Johnny Ive, who's a designer. We have the political art is politics. We have, as you said, Mark Carney. And it's not about famous people. It's not about celebrities. It's about people who have stories that we all want to know about, And so I think it's quite democratic,
Yeah, it is. And the approach is really fun to kind of go through. I want to ask you, though, I think your first podcast was back in September of 2021. Jake Gyllenhaal, was it Jake? And if so, why? How did that come to be, and why Jake being the first?
Well, Jake is a really good friend. I've known him for a long time. And I said, would you do this with me? Because I don't really know what I'm doing, but we're going to try and do this podcast. And it really came from my husband and I used to give evenings, one every year, in which an actor or a singer or a writer would perform in the living room of our house. And we would give the money to charitable cause we believed in. And one night we had Ian McKellen. And Ian, he told an anecdote, he sang a song, he recounted something that had happened to him in the theater. He did a sonnet of Shakespeare. But the last thing he did was to get one of our cookbooks, the first cookbook, and read a recipe for a soup. And I always say a recipe is half science and half poetry.
Right.
And to listen to a recipe is actually, there's something rather beautiful about listening. So I said to Jake, help me out here. And so he did one, the first one, I think, and it was Wes Anderson, who's another good friend, and Ed one.
Listen, Ruthie, we have to jump and go. 10 seconds, though. What's your comfort food?
My comfort food would be probably pasta with tomato sauce.
A good one. Ruthie, thank you so much. We've been looking forward to catching up with you. Ruthie Rogers, co-founder of the River Cafe in London, her podcast, Ruthie's Table 4, her new book, Table 4 at the River Cafe.